coupons are the same as fixed deposits or interest on fixed deposits is a much deeper and fundamental question. Are bonds the same as debt? Is a fundamental question which I think perhaps needs to be debated a bit more. But that's the only point where maybe
that's a more minor issue. I would assume that going by the positive response to the tax, removing the taxes on withholding and capital gains for debt investors, the same would come for equities. Is that a good assumption?
No, that's not a good assumption. On the debt side, there is strong precedence that in order to support index inclusion, even countries like China have actually given exemptions. So that the funds that come through India, because see, for the country, this is really cheap capital. So one of the concerns and one of the reasons we are having to issue FCNR and sort of explore how to, because our balance sheet is strong, but there is some liquidity stress and we are trying to counter that. The whole reason for that is that a reasonable part of our current account was financed by capital which is very costly. So if a private equity fund brings in $1 billion and then compounds at 15%, most people say not, and 10 years later takes out say $4 billion, that's a lot of outflow.
Yes.
And whereas if you get money through the bond funds, there is a 7% flow and it's reasonably sticky. So if we can somehow encourage that to happen, and index inclusion, and we do the necessary stuff, which I think seems to be happening in terms of having much more efficient clearing, having better technology and all that. So all of those things are starting to fall in place. And so if that index inclusion happens, there is a significant flow that can happen. From an FPI equity perspective, does that mean that a significant amount of new money will come in? As I was saying earlier, I don't think it is tax driven.
Yeah, what equity investors look for are very, very different. Yes. Let me come to the growth story, therefore. Even when earnings were not doing well, like in 24 and 25, we saw GDP growth doing well. How are you looking at the current year? The RBI is standing at 6.7. Most estimates in the street are with the 6 handle. I am at the 7 handle. Where are you?
I would be higher than that. So our full year forecast was 7.5. When we noticed that because then this war was going on and on and on, and we waited that, okay, it's going to end, and didn't. We said that, look, let's assume a higher price of oil, $85, $90, and then that means...
The United States renews its blockade on Iranian ports after another day of exchange attacks against Iran. Trump plans to reverse his 20% tariff decision following backlash, says attacks on Iran will continue till he says enough. Stocks on Wall Street closed today's Tuesday's trading session higher, and S&P 500 also sees a bit of a pressure. Overall, on Wall Street, we saw the trading session Nasdaq, which advanced solid gains. Big bank results as well as cooler than expected inflation reports boosted risk appetite amid West Asia tensions. Markets in Asia-Pacific region also open higher, tracking cues from Wall Street. The GIFT Nifty is indicating a flat start with a positive bias for the Indian market. Brent crude prices climbed above $85 per barrel as U.S. President threatened additional military strikes on Iran after reinstating a blockade against Tehran in the Strait of Hormuz. Meanwhile, gold prices hover near the $4,050 an ounce mark, holding on to gains following a softer than expected inflation report. And in key earnings to watch out for, numbers from HDFC Life is expected to see a decline in VNB margins due to GST impact. The retail APE is expected to climb 5% from a year ago. Hello, good morning. You're tuned into Power Breakfast on CNBC TV 18. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Now, in terms of what's happened overnight, we have a lot of commentary that's coming from President Trump. We'll take you through all of that. But let's look at the impact that's coming on the Asian markets. Now, today, Asian markets have opened up fairly on the positive side right now. So when you look at the Kospi, the Nikkei, the Taiwan Index, Hang Seng, all of them have opened up with a gain in the trading session. Kospi at one point of time was also up 6%. The small cap index in South Korea, that's the Kostak, that was also up 4%. And Kospi still holding on to that gains. Nikkei also holding on to gains of almost 1%. What we saw coming in was that the CPI index that fell 0.4% in June in the US market. And that is something that we should watch out for going forward. But as of now, in terms for the Asian markets, we're seeing positive opening coming in there. And Nifty implied open. What's the indication for our own markets? We have a 25-point uptick that the Nifty implied open is indicating. It's a slight bit of a positive bias for the Indian markets is what we're watching out for. Now let's move on and talk about what's coming on the West Asia front. A lot of overnight cues that have come in as well. US President Donald Trump has abruptly reversed the course on announcing that end of the 20% fee for commercial ships transiting to the Strait of Hormuz. And this came in hours before the US reimposed a blockade on Iranian ports. Furthermore, he spoke with leaders of Saudi Arabia, UAE, Qatar, Bahrain, Kuwait, among others, who indicated that they did rather invest heavily in US than pay a transit fee. Listen in to why he took the call.
I was called by different people, different countries, kings and emirs and all of the people that we all know and we all love, and they've been very strong partners. And they said, we'd love to do it a different way. We'd love to invest in the United States with billions and billions of dollars and continue our record setting, because there's never been a time like this for the United States, with the factories, with the plants, with everything else. And we would like to invest tremendously in the United States as opposed to charging a fee. And I like that, actually, because I don't think anybody should be able to charge a fee for the Strait or for any other Strait relationship in terms of other sections of the world. I don't think anybody should be really in that position. But we were doing it as a reimbursement. The Gulf states are going to invest a tremendous amount of money into the United States, and that was very satisfactory to me.
Moving further, President Trump also threatened to expand U.S. strikes on Iran and, targeting more power plants and bridges in Tehran, and does not agree if they do not agree to a deal amid the continuing disputes over Strait of Hormuz, then this is what they're going to be facing. Listen in.
They'll continue until I say it's enough. I mean, they'll continue. They've been, the word the military likes to use is degrade. They've been degraded to a very low level. I'll save the energy targets for last, but ultimately we'll hit energy targets, yeah. But we're going to hit them very hard tonight. We're going to hit them very hard tomorrow night. We're going to hit them very hard the night after. And then next week it gets really bad for them, because next week comes the power plants. Next week comes the bridges. We're going to knock out all their power plants. We're going to knock out all their bridges unless they get to the table and negotiate.
Meanwhile, Iran has announced its full withdrawal from the Memorandum of Understanding due to U.S.'s violation. And Iran's Deputy Foreign Minister said that Iran will exercise full sovereignty over the Strait of Hormuz, no matter the costs that come in. He added that the U.S. will not only has violated the agreement, but completely dismantled it, especially with the naval blockade on Iranian ports and ships and customers. Now, elsewhere, U.S. President Donald Trump met with Iraqi Prime Minister in the White House. Trump called him a fantastic champion, and Iraq's Prime Minister has pledged to boost the economic ties between two nations and Iraq's oil output as well. Now, on that note, we are talking about oil, we're talking about commodities, we're talking about what's happening in Strait of Hormuz. So time to get on board Manisha Gupta, who's here to take us what are we watching out for in terms of the world of commodities. Good morning, Manisha.
For that, I'll start with the crude oil prices, where you, as mentioned, that there have been various statements coming from U.S. right from threatening additional military strikes in Iran, reinstating blockade on Iran, also attacking Iran power plants and bridges next week in case Iran does not come back on the negotiating table. US's plan to impose 20% fee on cargo transiting Strait of Hormuz also has been dropped. There is some conversation about investments from Gulf countries into US is what the President Trump is looking at. Having said that, we still are holding above $85 a barrel. It has been nearly 15% of gains in last three trading sessions for the crude oil prices, with markets believing that if this multi-day campaign of West Asia conflict continues, you could be looking at higher highs in case of prices. But the street is also reacting to the U.S. inflation data at 3.5% in the month of June is lower than anticipation, lower than last month as well, and that's a bit of a positive. That has led to the dollar index coming below 101. And then the street is also looking at the Fed Chair Kevin Warsh reiterating the Fed's commitment to restoring price stability. All of that has led to some bit of a gain come back in metals. So gold gained 1%, silver 2%, palladium 5%, and copper is now trading at a 3-week highs as well. Of course, there are some supply concerns also coming in for copper, but the decline in US dollar, the decline in US inflation have been supporting factors for metals in the overnight trade.
Okay, that's a word coming in the world of commodities. Thank you so much for that, Manisha. But on that note, we're going to slip into a short break. After the break, we'll come back. We'll set you up for trade, tell you the important cues to watch out for the Indian markets. Stay tuned in.
Growth. Let's assume that this skirmish ends again and the oil prices start averaging 70 again. There's no reason from a 12-month forward perspective that we shouldn't be at 7.5% growth.
Okay.
Look, the momentum going into the war, which we have discussed on your show earlier as well, was extremely strong. So cement volumes are doing well. I mean, can you believe, while I understand GST cuts are not in the base, but 25-30% growth in car sales. See, as much as just the car sales and the production itself will be a big boost. What is important is to understand the people who are buying it. Yeah. They must be seeing significant growth in revenue to be committing to a large capital purchase. The cement volume growth. So all of these things point to a very robust economy. I mean, 18% credit growth is not coming from the supply.
Welcome back to Power Breakfast on CNBC TV 18. Now, how did those overnight cues impact our Indian market? What are the important cues you should watch out for, stocks that you should keep an eye out on? We have a team of research here to set you up for trade. First up, we have Sonal, who's here to take us through the important market cues that we're keeping an eye out on. Good morning, Sonal.
Morning, Winnie. Well, yesterday our markets defended that 24,000 mark, but let's begin with what happened in the global markets. If we talk about the US markets, Nasdaq, Dow, S&P, they closed in the green. The futures are flattish as well for now. But if we talk about what led to that, despite what happened with IBM, was annual consumer price inflation, which actually slowed in the month of June to 3.5%, which compares with 4.2% in the month of May. So rate hike fears, they were done away with in the markets. However, let's talk about IBM also, because the stock fell sharply. It was the worst day on record for that particular stock. The company issued second quarter earnings warning, and that is something that spooked that particular name. Asian markets are higher in trade. We do have KOSPI, which surged 6% at a point in time, continues to be higher. Small cap KOSDAQ higher in trade. The GIFT Nifty absolutely flat, but for now it is indicating a positive bias, up around 15 odd points. Crude oil prices continue to trend above that $85 per barrel mark. Trump abandoned the Strait of Hormuz fee, but the strikes continue, and that is something which is keeping the supply fears in place. For our own markets, as I said, they closed above the 24,000 mark, but of course there was a lot of pressure for our own markets, and market closed between the expected range of 24,000 to 24,100. It was the expiry day as well. Market breadth was firmly in favor of declines. The Midcap index did not do so well. The ratio was at 1:2. The crude spike and rupee depreciation also weighed on markets yesterday. So these are two macro numbers that we'll be tracking very closely. In terms of cash market flows, DI AIs bought again 3,000 crore rupees. FIIs continue to sell. They sold around 740 crore rupees. They also sold around 1,700 crore rupees in index futures, and their longs have now dropped to 8%, while shorts are at 92%. So for Nifty, now the important range to track will be, in terms of support, 23,950 to 24,000, and the resistance continues to be at 24,300 to 24,350.
Okay, Sonal, thank you so much for that. But let's move on and talk about important stocks that you should watch out for today. We have Upasana to take us through that list. Good morning, Upasana.
Good morning, Winnie. Well, first up, let me start with LTTS. It's reported its Q1 numbers, and the numbers are marginally ahead of the street estimates. Now, CC revenue growth stood at 1.5% versus the estimates of 1.1% that we were working with. EBIT margin also saw an expansion of 50 basis points and stood at 15.7 versus the estimate of 15.5%. Tata Elxsi is the next one on our radar. Overall, it's been a steady quarter for the company. CC revenue growth stood at 1.3% sequentially versus the estimates of 1.2%, so largely in line on that front. And EBIT margins for the company declined by almost 340 bips sequentially. This is mainly due to the wage hikes undertaken, is what the company has indicated. Next up is Bellrise Industries, and focus on the back of the QIP. The company launches QIP and sets the floor price at 231 per share. Next up is Capacide Infra, also in focus on the back of that work order. Now, company has secured a 482 crore work order from 25 Downtown Realty. This is mainly for the civil work of a super high-rise category building in Mumbai. Signature Global also in focus as the company came up with its Q1 update. It looks like a weak update as the pre-sales is down 25% on year-on-year basis. Collections have also taken a hit and down about 28% on year-on-year basis at 670 crore. And lastly, coming to PDS, company again in focus today as well, as the company has announced a strategic partnership with Busana Apparel Group to expand its global apparel manufacturing platform. So all in all, these are the stocks that will be on our radar.
Okay, Upasana, thank you so much for that. But let's move on and talk about the cues in the world of F&O. Sudarshan is here to take us through that. Good morning, Sudarshan.
Good morning, Winnie. So it's been in the last 3 to 4 days, we have seen heightened strikes from both the sides, US and Iran, that have led to a sharp spike in crude. Now, crude continues to hold to the levels above $85 per barrel. Now, another macro cue that we have been tracking over the last few days is the depreciation in rupee against US dollar. Rupee is now back above the level of 96, and that's the lowest level that we have seen in last 2 to 3 months. Now, today, IT companies will also be in focus after a sharp fall that we have seen in the IBM stock in the US trading session, and the stock has fallen almost 25%, the biggest fall that company has seen on the record. GIFT Nifty so far is indicating a flat start. Let's see how exactly it shapes up. But for the range, if you talk about Nifty, major call writing that we have started seeing in the range of 24,200 to 24,300. But at the same time, put writers believe that 24,000 should be protected. Talk about FI flows, they were sellers both in the index futures and in the stock futures on the weekly expiry day, and they have reduced long positions by around 5,340 contracts and also added short positions by more than 5,000 contracts. Now, PCR, because of major call writing, Nifty put call ratio has come down to 1 versus previous day's level of 1.43. In the options data on the put side, if you see 24,000 and 24,100 have seen maximum increase in the open interest, while on the call side 24,100 and 24,300 have seen maximum increase in the open interest, and also premium for both these call options has seen a fall. So first support for Nifty, I'll look around 23,984. That's a 100 DMA. If we fail to hold that, next support comes around 23,830. Resistance, if you talk about 24,300, continues to remain a major resistance. One stock remains the band, that is Keynes Technologies. On the stocks that I'll keep an eye on, first one is Tata Elxsi on the back of Q1 earnings, and also stock was seeing addition of fresh shorts. Biocon has been seeing fresh long addition, and there have been some major market investors that they have invested in the block list, and Polycab ahead of earnings has been seeing fresh longs.
Okay, Sudarshan, thank you so much for that. That's the cues in the world of F&O that you all should watch out for. But let's talk about the US market, and the stocks on Wall Street closed higher on back of softer than expected inflation print. Both the S&P 500 as well as the Nasdaq advanced on solid bank results. Now we have CNBC's Brandon Gomez, who's here to give us a wrap on what happened on Wall Street.
I'm Brennan Gomez. U.S. markets were up across the major indexes in Tuesday trading after a light inflation reading and a rebound in chip stocks. The Dow added 10 points, the S&P 500 was up 28, and the tech-heavy Nasdaq gained 234. Consumer prices rose 3.5% annually in June, less than expected, as energy prices eased. The index fell 0.4% from May, marking the largest monthly drop since April of 2020. Of course, CPI was flat for the month and rose 2.6% annually. Inflation remains above the Federal Reserve's 2% target. And IBM had its worst day in the stock market since 1987 on Tuesday, when shares fell 23% after preliminary results for the quarter missed the top and bottom line. CEO Arvind Krishna blamed the poor performance on weakness in the software and infrastructure business, as customers shifted their spending toward hardware purchases such as memory chips. That's what's happening here in the U.S. Back to you in Mumbai.
Thanks so much for that. But back home, we had ADRs of Infosys as well as Wipro that tumbled 8% and 4% respectively. Now, this is tracking, obviously, the weak IBM results that we saw. Shares of Indian IT companies will also be in the spotlight today. The IT index is the second best sectoral gainer so far in the month of July, with 9% advance. Q1 results of TCS, HCL Tech, both reported better than expected numbers that came in earlier this week as well. But let's move on to the US inflation print, right? And this is coming in for the month of June. The consumer price that rose by 3.5% annually, less than expected as energy prices eased. We have CNBC's Rick Santali, who's joining us to give us more details on this one.
June release of the Consumer Price Index, expecting a headline number to be negative 0.1%. This is 4 times more negative, minus 0.4%. That would be the biggest negative drop that we've seen since 4/20, since basically COVID timing, which really affected, of course, all of the inflation data points. So that goes back, basically 6-year low. And if we look at the CPI month over month on the core, also under expectations, comes in at goose egg, 0. 0 would be the smallest amount. It would equal Jan of 21. To find a smaller change or a more negative change, or minus 0.1%, that's May of 2020. And if we look at the year-over-year numbers, year-over-year headline, 3.5, 0.3 less than expected, much less than the 4.2 in the rearview mirror. That would be the lightest since March of this year when it was 3.3. Year-over-year core, 2.6. 0.2 less than expectations, 0.3 less than the rearview mirror. 2.6 equals March. 2.5 brings you to February of this year. Quickly, if we look at the indices, 1913 this started CPI, and the indice comes in at 333.95. That actually goes back a month. It's not a new high. Usually every month we make a new high. So that's very good news. And if you look at the core index, started in 1957, very similar, 336.06, a little bit lighter than the historic high of last month. It's nice to break the chain. Usually these indices make new all-time highs every single month.
Okay, thank you so much for that. But on that note, we're going to step into a short break. After the break, we'll come back with more news and updates. Stay tuned in. Welcome back to Power Breakfast on CNBC TV 18. Now, India's landmark trade agreement with the UK has come into effect today, paving the way for duty-free access to 99% of Indian exports while lowering tariffs on products such as whiskey and luxury cars. Abhimanyu is here to give us all the details on this one. Abhimanyu.
The India-UK trade deal coming into force aims to boost bilateral trade to over $120 billion by 2030. The average tariffs on UK's exports to India will drop from 15% to 3%, and duty-free access will be granted to over 99% of India's exports to the United Kingdom. The Double Contribution Convention, or the DCC, will save over $500 million a year for Indian working professionals currently employed in the United Kingdom. High export growth is expected in sectors like textiles, footwear, processed foods, cereals, marine products, automobiles, and machinery. Also, India's export share in the total imports of United Kingdom was just 1.6% in 2025, which indicates a huge potential for overall growth in exports. Now, for context, in 2025, the UK had imported goods worth $928 billion from the world, but had only imported goods worth $15.2 billion from India. Also, cars like Aston Martin, Bentley, JLR, McLaren and Rolls-Royce are set to get cheaper in India as import duty will be cut in India on 3.78 lakh conventional engine passenger cars from UK from 110% to 10% over a period of 15 years. Now, the duty cuts on cars will be spaced out over a period of 15 years and India is expected to have over 1 crore cars being sold at that point of time. Also, no duty cuts will be given by India in the first 5 years of the trade pact for British EVs, hybrids and hydrogen-powered vehicles priced below 40,000 British pounds to protect the mass market in India. India is also slated to cut the current 150% import duty on UK's whiskey and gin to 75% immediately, and gradually it will be dropped to 40% in the 10th year of the deal. Now, the duty cuts are expected to increase overall FDI in the liquor sector and bring British expertise in spirit making and quality control. Also, no duty concessions will be given by India on optical fibers, bundles and cables, smartphones, diamond, silver, TV camera tubes, base stations and plastics. India also reserves the right to retaliate in case a carbon tax is imposed in future and it impacts exports adversely.
Abhimanyu, thank you so much for that. But now taking a quick detour to the world of sports. The Spanish national team is through the FIFA World Cup 2026 finals. A dominant 2-0 win over France in Dallas has put them just one match away from glory. Mikel Oyarzabal found the net first, and with Pedro Porro doubling the lead shortly after halftime. France, meanwhile, had no answers for the tournament's toughest defense. And with France's leading scorer Mbappe failing to find answers to his Barcelona's counterpart's defense. Now all eyes will shift to the next semi-final, England versus Argentina, to see who meets Spain in the finals. And with that, we're absolutely out of time on this edition of Power Breakfast. Nifty implied open is indicating a bit of a muted to a slight but positive bias start. Keep an eye out on that. But with that, we'll have Bazaar Morning Call up next to take you through all the market action.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi, good morning.
Hi, good morning. One would have thought that after Trump relented on that 20% imposition of whatever, the fee, you would have seen crude prices come down, but they're still where they were, where we closed off yesterday. So that's one point. And of course, software all the way. So much to track there.
Well, that's right, Reema. Overnight, post that sharp drawdown that we saw on IBM. Obviously, you'll be the expert on this, but so many various comments coming in there that India IT services are actually different from that. Some believe that that short-term rally could be coming to an end. So let's see how that goes. I think that's going to be the index to track, and you've got a very busy day.
I thought you'll talk about France and Spain.
I mean, I missed the game. That alarm, you keep it, watch the first half, and then couldn't stay up. But Spain pulled it across, and I believe that, they outplayed France, which is a wonder because I thought France will pull it through.
I thought France was.
Well, I thought Spain. I actually
Who do you think today?
About 3 weeks back saying that Spain will win the World Cup. But I've not watched a single match.
Who do you think is going to win tonight?
Somebody told me put money on it. I said, well, no way, because I don't know. I mean,
I always thought France was the dominant team.
England or Argentina?
I don't think anyone thought Spain was going to be.
My heart says Argentina. My head says England.
I think it's going to be England. Well, who do you go with, Prashant?
I mean, it's a stuck with Spain, I guess.
Everyone's guessing.
All right, well, let's just take a quick sort of look at where we start this morning. And this is where we're at. I mean, oil's at about $86 just under 86 this morning. Trump has basically backed away from the plan to impose a 20% charge on shipments via the Strait of Hormuz. So that is the first item out there. And then he said that I've decided to replace a 20% reimbursement fee with trade and investment deals that the various Gulf states will be making into the U.S. Well, what it suggests is the first imposition of the 20% was not well thought through. And of course, I mean, this basically is just backing down from that and sort of, putting something in there. 20% is a defined and a number that you can focus on. Whereas this, of course, is, the broader point is that he's kind of backed away. I'm assuming a lot of pushback from allies in the Persian Gulf, etc. And of course, it's been framed as that, well, this is better, more investment into the US, better than this 20% reimbursement fee. Anyway, oil prices did come off a little bit, and then they, of course, did not after that. So still about 86 or so. Trump has said that the attacks on Iran will continue until I say enough. So typical Trump. Trump going to say that he's going to save the energy targets for last. And this is the thing. In asymmetric warfare, we don't know, and this is the reason why that dragged on for so long. But the next round of big escalation in oil could be if energy targets are hit. And if you remember, we got to about 120 plus last time, which was the peak when energy targets were hit. No one thinks that that's going to happen. I mean, not in the least President Trump and the U.S. as they head into the midterms. And that's the belief. And I think that's the reason why oil prices are still at 86 and not even higher, because markets, of course, believing that, there's going to be escalation over the weekend, and during weekdays, he's going to sort of walk it back in some ways, although still there are these attacks which are continuing. Iranian officials also from their side declared that the MOU with the U.S. is no longer valid. So that's the info coming through. Now a bit of macro data in the U.S. So you got the U.S. June CPI numbers, which surprised on the downside. And on the back of it, U.S. bond yields plunged. The 2-year was down about 9 basis points. The 10-year was down about 4 or 5 basis points or so. July, what the Fed will do in July? Well, the probability of a rate hike is now fallen from 43% before this to 16% now. That's pretty substantial. Although Fed Chairman Kevin Warsh, when he was asked about this, he said, well, it's one data point. He didn't want to overread or cherry pick data. So, we'll see. But this is where we're at. Equities also did well. NASDAQ was up 0.9. The S&P 500 was up about 1/3%. And of course, IBM was the stock the day in that sense down over 25% last night. And the CEO basically blamed, essentially what the CEO is saying is that customers of IBM are not spending on software, they're spending on data centers. I mean, that's a long and short of it in one simple line. That's not great news. By the way, if you look at US software stocks, Accenture, Cognizant, Globant, all of those names, they all sold off initially, but then they rebounded. I think, an aggregate index of software stocks in the US actually ended higher last night. I mean, if that is any consolation, but I think that debate will continue. I'll just tie in the levels here. The Nifty supports are 23,800 and 23,600. These are the two numbers on the downside, and 23,800 has acted as a support many, many times. And I think the last big move on the upside on the Nifty started once the Nifty defended the 23,800. So that's the first logical level to look at. On the upside, 24,300, which has been this resistance for a long time. And we've sort of bobbed up and down since. 24,530, of course, is the recent high. So just working with near-term levels, some pivots around very close to where the Nifty closed off yesterday. GIFT Nifty will give you a quick sense of how we are starting, and then we'll pick it up from there. 20 points, so it's kind of undecided this morning. It's a slow, small start, at least on the Nifty. Nigel has walked across with F&O data and the positioning. Nigel, take it away.
Well, today's going to be an interesting trading session because yesterday towards the end of trade, we had the weekly expiry that played out. And if you look at the Asian markets, well, the Kospi has actually bounced back up. And remember, the Kospi has actually been underperforming where Indian markets have been more or less stable. So it'll be interesting to see how that goes. Overnight, the CPI print, as you mentioned, in the United States, that was lower than expected. And also you had US banking earnings. They were solid, actually. Goldman Sachs, JP Morgan, as well as Bank of America, all of them delivered solid results. Now, the stock to track today is going to be all those tech names because IBM was down more than 20% overnight and our IT stocks will be in focus. The experts believe that the Indian IT services companies, their business model is very different from the stress factors that we saw in IBM's results. So yesterday, the index was down close to 100% or thereabouts. Maybe the bulls will fancy their chances if we see a deep gash at the start of today's trading session. So recovery from the lows is going to be interesting to see. The Indian rupee, that weakened yesterday, and that's a little bit of a concern because you don't want it to go back towards the 97-odd mark. And in the backdrop of this, with the Indian rupee weakening all the way from around the 94.5-odd mark, yesterday the FIs were sellers, but not too large, close to around 740 crores or thereabouts. But keep in mind, we had a couple of large trades as well that did play out. So you'll want some stability on the rupee, and you'll hope that the FIs, they were large sellers, the selling reduced and they turned buyers. You're hoping to get them getting back to their buying ways. But if the rupee weakens, then it's going to be very, very tricky. So let's see how that goes. For yesterday, at least, you had the institutions that were net buyers because, the DI buying outweighed the FI selling. Though, as I said, there was a large trade as well. What did the FIs do on index futures? Well, after a while, they went ahead. They added some short positions. Close to around 5,000 contracts were added. On the long side, though, they unwound close to around 5,000 contracts. But now the short positioning is back towards the upper end of the range at around 92% or thereabouts. Moving to stock futures then, no different out there as well. So the FIs added shorts, both on index as well as on stock futures, as the screen is telling you on the screen. The clients, well, they're doing the exact opposite. They covered some shorts yesterday, and the swing factor out there was close to around 11,000 contracts because they added close to around 8,000 longs and they covered close to around 4,000 short contracts. Positioning on index futures, that should come up for you on the screen. On the client side, well, they aggressively net long, 1.9 lakh contracts on the long side, while the FI short positioning, that's moved to around 2.65 lakh contracts on the short side. Moving to the options data then, the 24,100 call, that had added a good amount of open interest yesterday. 50 lakh shares getting added there, premium at around 130 rupees. But even on the downside, that's added on the 24,000 put odd mark, we had good amount of open interest build up and the premium holding at around 170 rupees. So just looking at the options data, looking at the recent high and lows, you're getting your levels. Resistance comes in at around 24,250 going by the options data and going by the recent high as well. For starters, we may start around the 20 DMA, which by the end of today, you'll want that to get comfortably taken out. That's around 24,100. While the recent low, that's around 23,800. That becomes the crucial support zone. The Nifty Bank, very close to the 20 DMA. You'll want that number to get taken out in today's trading session. 20 DMA and then get back to its winning base and get past that 58,000 odd mark, heading towards all-time highs. So tech, top of mind today, and intraday recovery is what the bulls would like to see. Start in the green, you want to build on from there.
Thank you very much for that. While many of the software names sold off in the US, what did well were the security names. And one of the other points that Arvind Krishna, the CEO of IBM, said is that as these companies are testing new AI systems, security is becoming a big issue. And you can see that a company like Palo Alto was up nearly 7% overnight. CrowdStrike was up nearly 12%. So security is also emerging as a big theme. And that perhaps explained why the overall software index in the US, along with chip makers, did pretty okay. But let's get back to the latest from West Asia. Let's understand why US President decided to abruptly reverse course when he announced on yesterday, the end of the plan to charge 20% fee for commercial ships transiting through the Strait of Hormuz. Just hours before, US had reimposed the blockade on Iranian imports. He said he spoke with leaders of Saudi Arabia, UAE, Qatar, Bahrain and Kuwait, amongst others, who indicated that they'd rather invest heavily in the US than pay a transit fee. Listen in to why he took that call.
I was called by different people, different countries, kings and emirs and all of the people that we all know and we all love, and they've been very strong partners. And they said, we'd love to do it a different way. We'd love to invest in the United States with billions and billions of dollars and continue our record setting, because there's never been a time like this for the United States, with the factories, with the plants, with everything else. And we would like to invest tremendously in the United States as opposed to charging a fee. And I like that, actually, because I don't think anybody should be able to charge a fee for the Strait or for any other Strait relationship in terms of other sections of the world. I don't think anybody should be really in that position. But we were doing it as a reimbursement. The Gulf states are going to invest a tremendous amount of money into the United States, and that was very satisfactory to me.
Okay, in an interview with Fox News, President Trump also threatened to expand the U.S. strikes on Iran next week to target power plants and bridges if Tehran does not agree to a deal amid continuing dispute over the Strait of Hormuz. Listen in.
They'll continue until I say it's enough. I mean, they'll continue. They've been, the word the military likes to use is degrade. They've been degraded to a very low level. I'll save the energy targets for last, but ultimately we'll hit energy targets, yeah. But we're going to hit them very hard tonight. We're going to hit them very hard tomorrow night. We're going to hit them very hard the night after. And then next week it gets really bad for them, because next week comes the power plants. Next week comes the bridges. We're going to knock out all their power plants. We're going to knock out all their bridges unless they get to the table and negotiate.
And I think these continued tensions, these threats, keeps the Middle East tensions simmering, which is why crude prices, too, haven't relented too much. Still around $86 per barrel. A quick check on Asia before we proceed. There is a big rebound taking place. The Korean markets are up 7%. Taiwanese markets, Japanese markets holding up in the gain. But Kospi is the one racing ahead. Shanghai is flat. China has posted their Q2 GDP growth at 4.3%. This is the slowest GDP growth since 2022. So Q2 GDP for China at 4.3%. And it's also come in below Beijing's full-year growth target of 4.5% to 5%, which anyway was the least ambitious goal in a decade. So that's Asia this morning. The Gift Nifty will also come up for you on your screen. Let's get in on the show. Ed Yardeni, President of Yardeni Research. Ed, thank you very much for joining in. June CPI data that took everyone by surprise. Consumer prices declining in June for the first time after 2020. You would have thought that inflation is peaking up. And plus, you've got this PCE data, which is perhaps painting a little bit of a different picture. So take us through your views on inflation and what Kevin Warsh, his first testimony. What did you learn from it?
Well, I think Kevin Warsh didn't say much new. He did reiterate that he still believes that AI is going to make a tremendous difference in boosting productivity, which will boost real economic growth without boosting inflation. Quite the opposite. Productivity is very disinflationary. So he continued to argue that this will be a very important factor. But in the short term, he acknowledged that the Fed hasn't managed to get down to 2% on its inflation target for over 5 years. So he reiterated that he's committed to bringing inflation down to 2%. And the Fed, therefore, remains in a tightening stance. They're certainly not going to be lowering interest rates. But on the other hand, I think everybody who thought there might be a rate increase in July, and we thought that was possible at the end of the month, well, that's just not going to happen because of this remarkably moderate CPI inflation rate. There is another inflation measure called the consumption deflator. That has been running a little bit hotter, and that's really the one that the Fed tries to get down to 2%. So I think the Fed's just going to maintain a tightening stance. Doesn't mean they're going to actually raise rates. And meanwhile, we may very well get lucky here and see inflation continue to moderate. Of course, in July, we'll get, in the July data, we'll get a pickup in inflation again, and maybe some pickup in AI-related inflation. But all in all, the bottom line of it all is what we see in the bond market. Bond yields in the 2-year treasuries have come down because there's not going to be a rate increase anytime soon.
Yeah, got that. The other news point, Ed, hi, good morning, was this IBM bit, right? That corporates perhaps will spend on data center equipment, and they're going to take that money away from software spending. What did he make of it, and the reaction post that?
Well, I think IBM was a remarkable event here. I mean, they've never seen a one-day plunge where the stock gave up 25%. And yet the stock market didn't seem to pay much attention to it. I think IBM has actually been viewed as a play not on AI, but on quantum computing. And I think when suddenly we got this news that the underlying business had some issues, everybody kind of focused on that and forgot about all the excitement about quantum computing. I think this is actually a good opportunity to buy IBM. I think they are going to be leaders in quantum computing. But for the here and now, what we're seeing is thanks to the perception that the Fed's not going to be raising rates anytime soon, and expectations that if oil prices go up, they won't be up for long before they come back down again. Anyways, we're seeing semiconductor stocks making a nice rebound here, which is still a vote of confidence in the AI trade.
Hi, Ed. Morning. Good to see you, Ben. What about gold? At one point of time, all that glittered was gold. Gold has pulled back, and we're not seeing any big pop over the last many trading sessions, actually. To be fair, 5,500, and now it's at around 4,100. Earlier, you were a little bit bullish on gold's prospects. Do you believe that it's providing an entry?
I'm still long-term bullish on gold. I think that the stock market's going to hit 10,000 on the S&P 500 by the end of the decade, and gold is inversely correlated on a short-term basis with the stock market, but on a long-term basis, the trends are pretty similar. So that kind of speaks to rebalancing. As people make more money in stocks, they tend to diversify their portfolio and to go into gold. Speaking of diversifying in portfolio, central bankers are still committed to buying gold. China's central bank has continued to buy gold, and yet we have seen gold weaken. When you look at it on a chart on a technical basis, this level is extremely important. $4,000 per ounce is kind of a critically important level. I think it's going to hold, and if it does, I think we'll get to 5,000 by the end of the year. The high so far, the record high was about 5,600 at the beginning of the year. But all in all, I think gold is really kind of a diversifier in portfolios. It certainly hasn't been acting the way you would think. With a war breaking out, with some inflation picking up, to see gold go down has got everybody scratching their heads.
Ed, just one quick point. The market here, I mean, in India has been doing a little better, right? If foreign flows have come back. IT stocks have been doing well. It's not as if there's suddenly a growth, great growth visibility for IT stocks, or management is sounding very positive or any of that. Maybe at the margin you can argue, but it depends on who you ask, how you look at it, right?
Sure.
But what has happened definitely is that Korea has sold off. Korea is down some 25% from the highs. The argument being that was sucking in all the money, and as that starts to underperform, maybe, I don't know, it's technical or whatever, and maybe, it's back at being about 6 times earnings, forward earnings, Korea. So it's at a low once again. So if this memory strength continues, who knows, and it'll start to doing well again. But for now, I mean, some of that money is coming and looking at stocks in India. Does that sound plausible?
It sounds very positive to me. I think everybody's kind of confused about AI and whether it's for real, whether it's ever going to, if it's a real business, will have a positive rate of return. What about competition from cheaper models out of China? But at the end of the day, I think this is all about processing as much data as we possibly can. We've been doing that since 1965, having this digital revolution. And we've come a long way, and I don't think that's where. I think this is all legitimate. I think we are going to see that AI is a big productivity booster. It is a big business, and that it won't destroy jobs, and it won't destroy companies that are in the software industry. And for a while there, the software in the United States, software in India, call centers, and all that was all suddenly viewed as being potential roadkill for the AI trade. But I think people are becoming a little bit more realistic that on balance, this is probably a good development for companies across the board.
Yesterday, Jamie Dimon in the JP Morgan conference call said that AI has helped the bank cut up to 40% of the jobs in certain roles, though he did add that most of these people were offered positions elsewhere in the company.
Exactly.
Yeah, thank you. Thank you very much, Ed. Always a pleasure listening in to your views. All right, let's tell you the interactions lined up on the show today. 9 a.m. We'll be joined by GB Giri of IFL Capital to put the focus on the IT sector, assess the earnings so far, and a lot of banking numbers will also be coming out today. 9:20, Nimesh Chandan of Bajaj Finserv, AMC, will be our market master for the day. 9:30, we bring you a discussion around ethanol's growth story. Following that, the management of Route Mobile will be chatting with us at 9:40 as they acquire an AI customer engagement business called Helter. 9:50, we'll be joined by Nitin Agarwal of Motilal Oswal Financial Services to put the spotlight on the banking numbers. Towards the end of the show, in our very special Indianomics, Lata will speak to Vice Chairman of Goldman Sachs on the US markets and Kevin Warsh's innings.
Time to slip in a quick break. We've got a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment. But we're looking at Ather, Biocon, J&K Bank, L&T Tech Services, Capacite Infra, Kirloskar Brothers. All of them reacting to positive news flow. On the flip side, tech stocks, Veldrise, Tata Elxsi, Signature Global will get plunked back today. They could start off in the red. Take that break, come back. We get into further detail on all of these stocks.
Welcome back. Let's talk stocks. Our entire research team is standing by with CNBC TV 18's top stocks for the day. But let me begin this one with IT stocks. They will be scrutinized after IBM lost a quarter of its value, 25% lower on IBM yesterday, the biggest single-day fall since 1968. And let me quickly run you through the reasons. One, the company said, and Arvind Krishna, the CEO, said that the clients shifted away from their software spends to purchase servers, storage, memory chips ahead of expected price increases. The company also went on to say that the company did not adapt and move quickly enough, and the deals that they expected didn't close on the timelines they were expecting. And security is also becoming a bigger issue with new AI systems. So companies are focusing on security rather than upgrading the existing legacy systems. So these were the reasons cited. across the board. There was a deeper sell-off at one point of time. Many software names, services names were down 5 to 10%. But by the end of the day, they were down between 2 to 5%. Now let's get to the impact on the Indian IT companies. If you scrutinize it very carefully, the reason for IBM missing expectations was an account of the mainframe business. This is the hardware part of IBM's business and the associated software costs with it. And Indian IT companies they don't do too much work on the mainframe business. So IBM has this hardware business, which is their mainframe business, and that is the reason why there was such a big on estimates, because their mainframe business, infrastructure business, declined by 7%. If you look at the other two businesses of the company, consulting was flat and software was actually okay, stable, up nearly 5%. Maybe it missed expectations. But, analysts are still saying that, what the company had to say about CapEx reprioritization, money being shifted to hardware, memory, servers, chips is real. It's crowding out the otherwise enterprise budgets. And this has been impacting Indian IT companies along with generative AI. But, should we expect such a large impact on Indian IT companies? I think it's going to be more of a sentiment impact. And you can see that in the way Infosys and Wipro ADR closed down. They were down about 3 to 4%. And also bear in mind, Indian IT companies in the month of July itself have been on a pretty good run. They've been up nearly 10%. So you could expect some impact there.
Well, absolutely, and I think we'll see software stocks in the US sold off and then rebounded off the lows. And
it's the mainframe business which was impacted, infra, not so much the services business.
The basket of stocks, actually ended higher, the US software names, if that is a signal for Indian software names. But, back to Rima, because we've got earnings here. L&T Tech and Tata Elxsi should be in focus. Rima, take it away.
Well, L&T Technology, green. Numbers were stable, ahead of expectations on revenues and margins. Constant currency revenue growth, 1.5%. Margins expanded 50 basis points to 15.7%. And in the conference call, the company said expect better growth from here on. They reiterated their margin guidance of mid-16% by Q4 FY27. But analysts want to see the stability in performance, that the company can continue to deliver on this. Which is why many of them still have a neutral call. JP Morgan and Nomura. Tata Elxsi's margins were a shocker, very disappointing, coming much lower than expectations. Revenue growth was in line, 1.3%, but margins contracted by 340 basis points on a quarter-on-quarter basis at 21.2%, lower than expectations. Kotak has cut earnings by 10 to 14%. JP Morgan has cut it between 1 to 13%. So Tata Elxsi margin miss is going to hurt, perhaps going to hurt the stock today. And also remember, in this quarter, there were no wage hikes. In Q2, the wage hikes come into effect, which basically means that even if you want to recoup some of the margins, it's not going to happen in Q2. Perhaps in Q3, you will see that margin recovery. So that's about Tata Elxsi. But let's move on and go across to Sudarshan for Ather Energy and Biocon.
So first, talk about Ather Energy. Hero MotoCorp board has approved investment up to additional rupees 1,000 crore, and that will be done via equity issuance or via other securities that can be converted into equity shares, and it will be done via preferential basis. Remember, as of June 2026, Hero MotoCorp already holds stake of around 30% in Ather Energy, and it's part of promoter category. And remember, today Ather Energy board is also going to consider fundraising. So let's see if the approval is likely to be for Hero MotoCorp's 1,000 crore board approval. Now coming to the Biocon, yesterday, if you remember, Mylan has approved, or Mylan has sold its entire 5.64% stake in via block deals. And if you talk about the block deal data, we had some major buyers amongst mutual funds, insurance companies, and even global pension fund. If you talk about mutual funds, all the major names were there. ICICI Prudential Mutual Fund, HDFC, MF, Kotak Mutual Fund, AB Sun Life, MF, ICICI Prudential Life Insurance Company, Bajaj Life Insurance Company. And if you talk about global pension fund, it's Norges Bank for Government Pension Fund Global. So all these companies have participated in the block deals, and I'm going with green for both these names.
Got it. Okay, all right, sir. Thanks a lot for that. Let's go across to Vivek. Belrise as well as J&K Bank, both of them are on his radar. Morning, Vivek.
Well, good morning. So Belrise Industries is in focus. The company has gone ahead and launched a QIP for a fundraise. The company is looking to raise up to 1,200 crore rupees via this particular QIP. The company has also kept itself the option of upsizing this particular fundraise in case there is higher demand. The indicative issue price for this particular fundraise is at 220 rupees a share, a little over 5% discount to yesterday's close. Equity dilution at 1,200 crores will be 5.8% of the total post-issue equity capital. Why is the company raising funds? Well, the company, number one, is looking to go ahead and do debt prepayment as well as repayment. The company is also looking to target certain organic as well as inorganic growth opportunities, and the company will also use part of the funds for working capital proceeds. J&K Bank, well, the company is looking to monetize a part of its stake as far as its holding in PNB MetLife Insurance is concerned. The company is looking to sell close to 0.5% stake, and with this, the stake of J&K Bank in PNB MetLife, which is at a little over 3%, drops to 2.5%. The stake sale will be done at 117 rupees a share. The company will, J&K Bank will realize proceeds of a little over 120 crore rupees from this particular stake sale.
All right, Vivek, thanks a lot for that. Well, let's hop across to Vinny, who is joining us to tell us about some more stocks in news. Vinny, you know, I thought I was looking good in this white jacket, but I think I come second best. No two ways about that. Tell us about the stocks.
Nigel, thanks for that. And, you know, second best or first, we are maybe, standing on the podium together. But talking about some of the names that are in focus today, we'll keep an eye out on Capside Infra. We'd expect green here. They've secured a 482 crore order. And this is for civil work rights for high-rise categories. This is from 25 Downtown Realty. So maybe that is the reason we'll see some bit of a positive up move here. Signature Global on the flip side, Q1 business update that came in. Pre-sales were down by 25% on a year-on-year basis. We're seeing the collections down by 28% as well, coming in at just 670 crores for Q1. Average realizations, that's seen an improvement. That's at around 17,093 rupees per square feet in Q1 FY27 versus for FY26, it was an average of around 15,250. So improvement in average realizations, but overall pre-sales collections were down. So maybe some bit of a red here. Now, Kirloskar Brothers, that's the last one. The company's subsidiary has secured a significant order from SEPEM Offshore Construction SPA, which is for around 149-150 crores is the order size. And that is why this one could also be in focus with some bit of a green.
All right, Vinny, thanks very much for that. So lots of names, individual names, and more coming up in a bit from now. Well, I'll just recap these. Stocks with positive news are Ather, Biocon, there's J&K Bank, L&T Tech Services, Capside Infra Projects, and Kirloskar Brothers. Well, stocks on the negative side, IT stocks are there. There is Bellrise, Tata Elxsi, and Signature Global, which should be in focus as well. Well, let's focus on commodities for a bit in terms of what's top of mind. Manisha, good morning.
Morning, Prashant. Thank you for that. I'll start with the crude oil prices, where we have seen 15% of gains coming on this week itself. It's trading at a one-month high, and we are holding above $85 a barrel, as markets do believe that the U.S. president will stand to his one thing, saying that this is going to be a multi-day campaign, the strikes of from U.S. on Iran. U.S. has threatened additional military strikes on Iran, reinstated blockade for Iran, and has warned of attacks on Iran power plants and bridges next week if Iran does not come back to the negotiating table. The important one or development, of course, has been the U.S. dropping plans to impose 20% fees on cargo transiting via Strait of Hormuz. Instead, it would be Gulf countries which would be making investments into U.S. That's a developing story. We'll keep an eye on that. But in the meanwhile, the traffic for Strait of Hormuz is dropped to a single digit yet again in last 24 hours. The other thing that the street is watching out for is the U.S. inflation data. We have seen 3.5% for the month of June, which is lower than last month, lower than the forecast, and the first decline in 5 months. That clearly has supported the metal prices. The dollar index has fallen below 101. The Fed Chair Kevin Walsh reiterated Fed's commitment to restore price stability. All of that has supported metals. So you saw gold prices gain up by 1% overnight, silver gained 2%, palladium, platinum up by 4 to 5%, and copper is now trading at a 3-week highs as well. The markets are looking at stronger gains continuing in case of metal prices, not just in the New York session, but Asia has started on a positive note as well.
All right. Well, Manisha, thanks very much for that. We'll take a quick commercial break here. We'll connect with Deepak Krishnan of Kotak Institutional Equities to talk about the defense space in some detail. Kotak has initiated coverage there. Stay tuned. Coming up. Welcome back. There's 25 minutes to go for the pre-open session. Let's talk about the defense space. I think we can all argue that it's a space which will see secular spending. The government, of course, is the big driver here, and import substitution has been, shown to be working in a tremendous way over the last 5-6 years. I mean, that DAP policy of 2020 onwards, I think the sector is completely re-rated. Deepak Krishnan is with us, analyst at Kotak Institutional Equities. Kotak, of course, has initiated coverage on the aerospace and defense sectors. Deepak, good morning. Good to have you with us here. Thanks for joining us, Prashant here. I see, let's just sort of distill it down to stocks, and maybe we can broaden that discussion out from there, right? But the sharp point is that you've initiated coverage on 5 names as far as the sector is concerned, but you've got a constructive view on only one, right? So this is, and you acknowledge all the attributes that I mentioned too, and a lot more. But the problem is valuations now. Deepak, let's just start there, and as I said, maybe we can broaden it from there.
Yeah. Hey, morning, Prashant. I hope you can hear me fine. Yeah. So essentially, we've initiated coverage in 3. We used to cover Bell and Cochin in the past as well. Your point is right. It's more on valuations. We don't doubt the structural growth story, both the domestic optionality that is there, exports with Europe increasing GDP spend to 5% of defense of the NATO countries, as well as, drones, counter-drones sort of being a key growth driver. If you look at it historically, we've seen Indian companies, growing EBITDA in the 25-30% CAGR. We broadly think that sort of the range continues. But say if you look at forward multiples of Indian companies versus global peers, Indian companies are closer to at 50 times 1 year forward versus global peers at roughly, 40-50% lower. So it's primarily a call on valuation, but on the industry per se, we remain quite constructive.
I looked at the 10 companies for which you've put out earnings estimates. I think for the past estimates are 21 to 26, and then you project to 26 to 29. And I think for 7 out of those 10 companies, Deepak, if I look at EBITDA growth, the CAGR, forward CAGR is lower than what we've seen between 21 and 26.
Yes, so you are right. So if you look at it on aggregate basis, it was closer to 40% PAT growth, except BDL and Cochin. All the others have historically done way better. It's just that the base catches up. Few of them have a few order issues or, backlogs not being that strong as to what it were. Some of these orders may be potentially coming this year, next year, and then flowing through after. So that's the primary reason why you sort of see a potential deceleration. It's a function of a higher base as well as a stronger execution that you've seen over the last 5 years.
Got that. Let's just get some, maybe for the lack of a better way, narratives, and let's address them, right? One is that larger defense companies, just because of the sheer size, perhaps you'd get more a normal kind of growth, earnings growth, etc. But now you got to maybe shift to smaller companies, especially smaller private companies, where there is opportunity. These are companies which are suppliers to the larger companies in that sense. And there is a whole vast list of names there. Do you buy into that? Or you think, in defense, the ones which do the best are the big, in the US, as they call the primes, so to speak? Go on.
No, I think the market's sort of changing. You're seeing, drones, counter-drones, some new age technologies picking up, which were not historically there in the past, where you were largely focused on, say, aircrafts and big naval programs. So I would say the private sector share should keep on increasing. The newer areas, you would continue to see private sector gaining share. So probably I would say the next decade or so maybe belongs more to the private sector, with public sector holding steady in the areas that, they have natural forte or they have natural monopoly. So I would say incremental share moving towards private sector, more in the new age areas.
I see. In your coverage universe, Deepak, are you looking at enough of those companies, the private sector, if the money is going to move incrementally, and I think markets reward incremental change, will you be looking to initiate more there in the private space?
Yes, sure. So I would say, the smaller electronic names, they're well discovered. That's one area that's of a lot of interest to investors. Smaller companies, potentially if the missile sector opens up, some news flow a couple of days ago that could open up, as well as probably drone, counter drones. Those are 3 areas where we think smaller companies, disproportionately benefit.
I see. Got that. Any risks to this entire? I mean, the basic bedrock of the belief that, well, spending is here to stay, and anything which can change all of this. Any risks, basically? Yeah.
Yeah, so I don't think near term, given the global situation, you're seeing wars across multiple geographies and continents. I think the spend is here to stay. As long as, if there is not, I wouldn't say even if there's fiscal pressure, probably defense is sort of one of the imperative areas. So maybe near term for the next 4 to 5 years, lesser probability that this spend really sort of comes off. We think that the momentum that was there, so you've got a big bump of 20% last year. That momentum continues maybe at 11% CAGR for the domestic market, which is slightly higher than the 9.5% that you've seen over the last couple of years. So I think here for now, the momentum definitely is there to stay.
What is that 11% number, Deepak?
So 11% is what we think the defense, capex number grows over the next, 4 to 5 years. So from the FY27 high base of 2.2 trillion. So last year it was about 1.8, 1.9 jump to 2.2. And we think, that's about a 22% jump. Now we think that this grows at about 11% CAGR, the overall defense capex budget. Historically, this number has been in the range of, say, 9.5 for the last decade or so. So we think that the momentum, even after, a strong year this year, will continue for the defense space.
Got that. And you said in the areas to pocket, the areas to focus on, one is, you said drones, counter drones, etc., right? And the other is the avionics, the electronics part of it, which is named...
Electronics as a market sort of picks up across the board. You see it in naval programs, you see it in missile, you see it in, land as well as air systems. So the usage of electronics as such going up, that is a kicker. And then we think that, from a domestic market perspective, missile stockpiles, replenishment, and say potentially from a global, say, Europe opportunity perspective, maybe, artillery replenishment. Those are all sort of opportunities that exist in the market.
Yeah. Got that. Drone makers specifically, do you have a view, Deepak? I mean, one view is that it's too commoditized, at least there are 300, 500 drone makers. So how will you make money? But on the other hand, you also have a situation where the government is now saying, it used to be lumpy. You would get one large tender order and then nothing for a few years. But I think now they've kind of said, well, that 20,000 crore we'll spend, 2,000 crore each increment. So it's kind of more, there's visibility. How would you think about it? I'm not talking about your coverage universe, but just that topic. Yeah.
So I completely agree with your view. So what we've tried to do is distill the government's document, which is TCPR, which indicates what is the future procurement for drones, at least the government vision document. That shows about 8 to 10 categories, hundreds of drones across each of the categories. So maybe the lower end surveillance drones and those kind of markets, you may see higher competitive intensity. But just the recent tender, 30,000 crores tenders for 87 drones, the MALE and the HAIL category, which is, medium altitude, long endurance, and high altitude, long endurance. Those could be niche areas where, companies that sort of win a large part of these upcoming tenders could create a niche for themselves. So maybe the lower end is commoditized. The higher end, definitely there is scope for, fewer companies to sort of come up as champions. It's still early days. I don't think we are right there completely in terms of technology, but it shouldn't be far away that we catch up.
Yeah. In these sort of MALE and HAIL kind of segments, we don't have companies yet, right? I think there's field testing, etc. going on, but I don't think we have. But that'll be a big area, you're saying?
Yes, so that should be the big area. This tender itself, which is coming through right now, 30,000 crores for 87 drones. The winners of these could be the early beneficiaries in that area. And then, after that, that's sort of the area where potentially people could differentiate themselves.
Yeah. Absolutely. Now, one other area is and I've heard this from many, is shipbuilding. And there is, of course, the defense aspect of it. There is a Garden Reach and Masgaon and Cochin. But have you sort of looked at this in any big... this is, again, once again, the government essentially laying it out, saying that, well, and I think there is capital support from the government now. At least 50% of ships should be Indian-made. And then the private sector comes together, as we've seen in defense and other areas as well.
No, sure. I think commercial shipbuilding is a good optionality that exists for all these players. Potentially among these, probably Cochin Shipyard sort of has an edge, given that they're a Ministry of Shipping entity and have done multiple such orders in the past. There's a clear roadmap till 2047 as to, ships that want to be, done by Shipping Corporation, Dredging Corporation, and the various sort of government entities. So that gives a decent roadmap. there's also a lot of excitement or optionality potentially there if Korean and Japanese shipyards sort of come through India and start manufacturing some of the larger vessels. So both these opportunities do exist. I think you may see initial rounds of potential tendering or awarding happening this year towards the end. Maybe that's the first catalyst that the market is waiting for. But the Shipbuilding Financial Assistance Scheme, very solid scheme, aided by all of these large procurement programs from government entities, should give a decent runway of growth. Hopefully, we are at the start of that, with this year at least seeing the initial set of orders coming through.
Absolutely. For investors, Deepak, just a quick word there. Sorry, I'll come to the structure in which investors should. Just aerospace, right, is another area. You spoke that commercial shipbuilding perhaps is a good optionality for some of these companies. What about commercial aviation? Again, I don't think there is a defined capital outlay or support from the government in that area, but there's a lot of activity which is happening, right? Now we've got some listed companies solely providing to the two large OEMs, Boeing and Airbus. Any thoughts?
No, sure. So we sort of agree with that, but these would be more like tier 1, tier 2 vendors, except Tata, which is sort of making certain aircrafts in the country. So this would be slightly different from a shipbuilding market, but we think this also, given just the backlog that both Boeing and Airbus have, and Indian companies gaining share, most of these companies have order book visibility anywhere between 6 to 10 years. So the runway for growth for commercial aerospace is there. The only nuance is that these are more tier 1, tier 2 vendors rather than maybe complete manufacturers. There could be few like Tata which have certain JVs. That's how I'll sort of put it across. I see. Now how, for those who can, they can buy single stocks here, you can buy, but my point is, in many of these, in sectors like this, there are smaller vendors. If you're looking for absolute outsized returns, right, and there are funds which invest in private companies, defense, what's the way to do it for those who can? Because, you buy some of these well-discovered larger companies, you will get market. Maybe the best is behind. I think that is your view as well, and you'll get more moderate kind of returns. For those who can, you think, and there's a fair bit of stuff happening in the private space, I'm sure. What's your advice, Deepak? So I think smaller companies in niche areas and potentially where they would see an inflection in earnings coming through, large products getting approved, where you could see structural growth coming through. I think that's a sweet spot. There are, I think, smaller listed players also doing multiple, deals and all of that being there. There are, potential IPOs that are also coming through, and then there would be on the private side. So I think smaller companies that have products approved or on the verge of approval, which could see an earnings inflection, that should sort of be the sweet spot. It could be both smaller listed names or on the private side. Great chat, and good speaking with you, Deepak. Good primer. It's a good report. Thank you very much for coming on and speaking to us about it. Thank you. Okay, well, that is Deepak of Kotak Institutional Equities with a view on the defense space and different segments across the board. And of course, in a way, differentiating between some of the larger players and some of the smaller segments, smaller players as well. We'll take a quick commercial break here. We focus on what happened yesterday with volume buzzers. Hormuz should help us with that. We'll also have Sudarshan Sukhani and Mitesh Thakkar for some technical trading ideas. Stay tuned.
Welcome back. Hope you're having a good morning. Well, India's landmark trade agreement with the UK has come into effect today, paving the way for duty-free access to 99% of Indian exports while lowering tariffs on products such as whiskey and luxury cars. Abhimanyu joins us to fill us in with all of those details. Abhimanyu?
The India-UK trade deal coming into force aims to boost bilateral trade to over 120 billion US dollars by 2030. The average tariffs on UK's exports to India will drop from 15% to 3%, and duty-free access will be granted to over 99% of India's exports to the United Kingdom. The Double Contribution Convention, or the DCC, will save over $500 million a year for Indian working professionals currently employed in the United Kingdom. High export growth is expected in sectors like textiles, footwear, processed foods, cereals, marine products, automobiles, and machinery. Also, India's export share in the total imports of United Kingdom was just 1.6% in 2025, which indicates a huge potential for overall growth in exports. Now, for context, in 2025, the UK had imported goods worth 928 billion US dollars from the world, but had only imported goods worth $15.2 billion from India. Also, cars like Aston Martin, Bentley, JLR, McLaren and Rolls-Royce are set to get cheaper in India, as import duty will be cut in India on 3.78 lakh conventional engine passenger cars from UK from 110% to 10% over a period of 15 years. Now, the duty cuts on cars will be spaced out over a period of 15 years and India is expected to have over 1 crore cars being sold at that point of time. Also, no duty cuts will be given by India in the first 5 years of the trade pact for British EVs, hybrids and hydrogen-powered vehicles priced below 40,000 British pounds to protect the mass market in India. India is also slated to cut the current 150% import duty on UK's whiskey and gin to 75% immediately, and gradually it will be dropped to 40% in the 10th year of the deal. Now, the duty cuts are expected to increase overall FDI in the liquor sector and bring British expertise in spirit making and quality control. Also, no duty concessions will be given by India on optical fibers, bundles and cables, smartphones, diamond, silver, TV camera tubes, base stations and plastics. India also reserves the right to retaliate in case a carbon tax is imposed in future and it impacts exports adversely.
Thank you very much for that. Now, Hormus joins in with the big movers from yesterday. Hormus.
Good morning, Rima, and plenty of them. And yet another day when Kalyan Jewellers continues to remain the most traded stock on the Nifty 500. Even in yesterday's trading session, 14% of those shares were marked for delivery. But for the rest of them, the delivery volumes were well below their 20-day average. Look at their index heavyweights as well. HDFC Bank, Reliance Industries, ICICI, all of them had delivery volumes that were lower than their 20-day average in yesterday's trading session. These were, of course, the top 5 on the Nifty 500 on the most traded list. Of course, plenty of stock-specific action in the broader markets yesterday. Concor was one such name. The 4th straight day of gains for the stock, the biggest since June of 2024. The premiums on the 500 call option went almost tripled in value yesterday. The volumes were the highest since November of last year. Over 1.5 crore shares were traded yesterday. The 20-day average of just 18 lakh shares, a third of those were marked for delivery, so close to 44 lakh shares for delivery, and the 20-day average of 10 lakh shares. And the stock has been a big underperformer. The last 5 years, the stock is down 7% and is down around 20% on a year-to-date basis as well. Divi's Laboratories too saw its 4th straight day of gains yesterday. In fact, it has gained in 7 out of the last 10 trading sessions. The premiums on the 7,000 call option was up 120% yesterday. The volumes were the highest in 5 months. 11 lakh shares were traded, almost 4x its 20-day average. 40% of those marked for delivery, so 4.5 lakh shares for delivery. That too was more than double the 20-day average as well. The stock ended at a 52-week high in yesterday's trading session. And the big underperformer yesterday was Bajaj Consumer. The biggest single-day fall since March of 2020 is the 2nd straight day of losses after its results. And volumes on Tuesday were the highest in 3 months. And if you can see the last 4 days, there has been a consistent increase in volumes for Bajaj Consumer. Even yesterday, there were close to 44 lakh shares that were traded. The 20-day average is only 8 lakh shares, or close to 9 lakhs. So it was 5x its 20-day average yesterday. 37% of those shares were marked for delivery. 16 lakh shares, which is also 4x its 20-day average on the delivery front. And the stock, despite this move yesterday, still up over 120% on a year-to-date basis.
All right, Hormus, thanks very much for that. Well, interesting names, and of course, I mean, the price action, volume action behind the moves that we saw yesterday. We take a break, we're back. The pre-open rates will be with us. GV Giri of IIFL Capital Services. or, on everything markets, his view on sectors, etc., and a little bit more focus on IT, given, of course, all the news flow from overnight. Stay tuned. Welcome back. I think we're just about to kick off the pre-open rates, and an eye on equities, but maybe an eye on the rupee as well, as we start to get the first ones. But mutual funds and what they bought and sold in the month of June, Hormuz has got it, and Hormuz, take it away.
Some interesting insights emerging from this data from Prime Infobase from what mutual funds bought and sold in the month of June. Starting off with the largest fund house, of course, SBI Mutual Fund. The common trend among most of the fund houses this month has been the fact that they have doubled down on a lot of these private financial names. And even here, they have increased their stake in HDFC Bank and ICICI Bank, also doubled down on Bajaj Finance, and NHPC is an interesting addition in this in terms of increasing stake. Adani Enterprises too have features in this list. They have decreased their stake in a lot of these metal names, Tata Steel, Hindalco, NTPC, also reduced their stake in Adani Power. Fresh buys in a lot of the smaller names, CMR Green, of course, a recent listing, Bosch Home, Vintage Coffee is one such name, and West Coast Paper is where they've bought fresh stake, and they have exited their holdings in Nazara Tech and Rolex Rings. For HDFC Mutual Fund, well, they have increased their stake in Indigo, JSW Infra, Eternal, Acme Solar, and Craftsman Automation. And here too, there have been a lot of selling in the metal names, Tata Steel, Jindal Steel, Hindalco. Fresh buys in names like NSDL, Corona Remedies. They have made complete exit from a lot of the demerged entities of Vedanta. Of course, this is not concentrated selling, but just the demerger playing out here. Oil and gas and iron and steel are the exits, along with names like Just Dial. Kotak Mutual Fund has increased their stake in Bajaj Finance, Ajanta Pharma, Maruti, Emcure, and Lenskart is where they have doubled down again. They reduced their stake in BSE and capital goods names like GE Vernova, and they have also included fresh buys in CMR Green, another recent listing, and made an exit from names like Quality Walls. ICICI Prudential has also increased its stake in HDFC Bank and Vedanta Aluminum as well. Of course, Nigel has been speaking about the fact that how it's the biggest value creator, or set to be the biggest value creator among the demerged entities, and they have reduced their stake in the oil and gas and the iron and steel names. They have made fresh purchases in a name called Pondy Oxides and Turtlemint Fintech, and made exits in names like West Coast Paper and auto ancillary names like Jamna Auto and JTE KT. Axis has also increased its stake in HDFC Bank and Bajaj Finance, Indigo, Eternal, reduced their stake in TCS and Infosys, made fresh buys in PN Gadgil, and made a complete exit from most of the other demerged Vedanta entities. And lastly, LIC, where they have increased their stake in Eicher Motors and Naveen Fluorine finds the name here. They have reduced their stake in MCX and Infosys made fresh buys in names like Ather Energy, which has already doubled so far for the year, along with names like Quality Power and Aavas Financiers, and made a complete exit from CMPDI, which is the demerged one of Coal India's units, and names like Piramal Finance and most of the other demerged entities of Vedanta as well.
Okay, all right, Hormuz, very, very interesting list there. Thank you very much for that. You know, just in terms of fresh buys, right? I mean, Bosch Home Comfort stands out. Maybe we can pull these stocks up, the intradays up. That's basically, yeah. So that is Bosch Home Comfort for you. I think, you know, that's SBI who's sort of come in. CMR Green Tech comes across in many portfolios. There is CMR Green Tech. Pondy Oxides is an interesting one. This is an ICICI Pru as a fresh buy. Pondy Oxides. I think it's a name which we've heard from Sanjay Parekh of Soham earlier. I think you know, some exposure there. This is not new, but Turtle Mint Fintech is a new listing. It's not exact. It's in the same space as PB Fintech, but of course a very business model. Turtle Mint Fintech, of course, I mean, you know, from the last round of funding privately, I mean, the IPO happened at a much lower valuation, and stock's not done well since. So that is interesting. Quality Power, of course, I mean, it's owned by many, and I think this time you got LIC, which is added Quality Power, but lots of interesting names, especially on that fresh buys list, and lots of people do use these as indicators and ideas. And maybe as things to look at a little more deeply. Sudarshan Sukhani is with us, and so is Mitesh Thakkar with what they'd want you to do as far as trade this morning is concerned. I think GIFT Nifty is indicating a 20-point start higher, but we've got the pre-open rates now starting to come through. So it's about a 30-odd point higher start. That's the indicative open. Mitesh, what would you do?
Yeah. Good morning, Prashant. So, you know, on the index, honestly, and I've been maintaining this for the last many days, nothing much. I would want to buy if we get to the lower end of the range, which is below 23,900, around 23,850. And on the upside, I don't think we have the required strength to get past 24,350, 400 in the near term. So it's still, for me, it's just a range market. It's a market which will be sideways and not give you much of a direction in this.
Sudarshan, what about you?
Good morning. The Nifty is now again in a trading range, but it's going to break out of this range sooner or later. It's a matter we can't decide and tell on which day and what time that will happen. So I am a buyer in the Nifty. You buy at current levels, keep a very tight stop at 23,950. That's about 100, 120 points away from where the expected open is. And wait patiently. You know, we can't decide the breakout point and the time, but we should be long.
Okay. Good morning, gentlemen. Let's talk about stocks then. Some trading ideas. Sudarshan, you want to go first?
Well, BHL is a buy. It's a stop with a stop under 395. MCX is a buy with a stop under 2840. Steel Authority SAIL is a buy with a stop under 165. And the only intraday short, or rather a short, is Jubilant Foods. Keep a stop above 430. But as I've explained, we are in a very tight range and we can expect a blowout someday or the other. Focus on the long side.
Got that. 3 buys, 1 sell for Sudarshan. Mitesh, what's your mix looking like?
Yeah. I have 2 buys and 2 sells. On the buying side is Container Corporation, I think, had a good price and volume breakout. It's also moved over its previous high. Keep a stop at 484. Look for a target of 515 years. And also on the buying side is L&T Mindtree. Yesterday was a negative day for the stock, and it's basically, you know, showing signs of an uptrend. So if you get a slight more dip or a pullback, it will give you a fresh entry point around 40.50 to 40.30. Keep a stop below 39.85, and 41.50 should be the first target on the upside. On the selling side is Grasim and Asian Paints. Asian Paints would suggest selling with a stop at about 2681 for targets of 2560. And Grasim is a conditional sell. If it breaks the levels of 3095, 3093, which was yesterday's low, then go short with a stop about 3120 for targets of 3040.
Okay. Thank you very much for that. Let's get in GV Giri, President and Head of Research, Institutional Equities at IIFL Capital Services. Giri, morning. Thank you very much for joining in. So far, at least from the earnings season, it's been all about IT. The financial numbers will also start picking up from today because today we've got a whole host of numbers. You've got HDFC Life, Angel One, HDFC AMC, ICICI Lombard, ICICI Pru Life, Union Bank. And then on Saturday, you've got HDFC Bank, ICICI Bank, Kotak Mahindra Bank and Axis Bank. So finally, I think the baton will shift from IT to banking numbers as well. But you want to take us through your read on Q1 IT tech sector and at the IBM sell-off and the impact that you all picked up at IIFL on the Indian IT sector.
See, till now, the impact hasn't really fully filtered through. As we go along, I expect that the IT sector will see substantially greater stress. Just today, Demis Hassabis of Google, who founded DeepMind, has written an article about how AGI is coming faster than we expected. Elon Musk has written that programming as a concept is dead. Now imagine Indian IT companies all being implementers. Now implementation is a very generalist thing. I think the Indian IT companies will reinvent themselves in some new form. But until such time, I would probably like to place my bets on the smaller IT companies like Persistent and Coforge. I think the 1Q results haven't really shown yet the signs of stress that the sector is going to see.
You should watch Persistent because I think for Persistent, IBM is one of their large clients. So just for today, you'd want to see if there is a sentiment impact. The company doesn't disclose who the large clients are, but IBM should be one of their top clients. And even in the past, HCL Tech had sort of struck some deal with IBM. They had bought, HCL Tech had bought some work that they do for IBM. So there could be a sentiment negative impact on these two IT names. So other than Persistent, Coforge, no other recommendations on IT names to buy?
No, I think I'm much more positive on, relatively at least, mid-cap IT than I'm on large-cap IT. Large-cap IT has the problem of also having to defend margins in the 20s, whereas the mid-cap IT companies have to only defend 17, 18% EBITDA margins. So that's one more issue. So there are many things, there is a substantial existential threat coming. There is a large change of business model needing to be done. There is margin defense needing to be done. So I would, and a lot of increase in competition. So smaller companies are now finding it much more easy to come out with products which are very domain specific. So the large companies will have to be multi-purpose. I don't know how it will play out for them, but I'm not willing to ignore the fact that there are opportunities elsewhere. So look for the stuff elsewhere outside IT.
The wait for AGI, but interesting you point us to that article and we'll be sure to read it. As you say, something will just come through now. Giri, hi, morning. Last time you were on, you were saying that oil prices falling is the biggest positive for India. Since then, we've got this one more flare up and oil's back at about 86, 87. And maybe at the margin, this upward uninterrupted momentum has been broken. What's your sense? Any way to call it, one way or the other?
Yeah, I think we are unlikely to see a stable progress towards a stable trough. I think it will be an uneven progress and some of these flare-ups will be there, but it might be quite tempting to lose sight of the big picture, which is that because of China transitioning very rapidly to green energy in transportation, and globally there being a movement towards a green energy anyway, the fact is that there will be a structural demand weakness and demand growth weakness in crude globally. And that will keep a lid on crude structurally in the long term, in the medium term, like in the 3 to 5 year time frame. But in between, if these kinds of spikes happen because of Iran and US or now Russia and Ukraine also, don't forget about that, then the warring parties have a big headache because they are facing midterm elections. And till now, Trump was able to control the narrative on the Iran, US and Israel war. But now the Ukraine-Russia has also become a headache because Ukraine seems to have taken out a quarter of Russia's refining capacity. And therefore, the price gap between petrol, diesel on one hand and crude on the other hand has widened considerably. And people in the US in the petrol pumps pay the petrol price. They don't pay the crude price. So Not only is the crude price higher, but the petrol price is even higher than it ought to be at this crude price. So Trump faces a significant inflationary risk. So the clock is ticking for him. On the other hand, the Iranian economy is also in tatters. And how long can their leadership remain in bunkers and underground and not meet? So this has to come to an end sometime. In the meantime, the Indian economy has shown a lot more resilience than we feared it might. For example, there was a big LPG shortage, but the government increased the LPG production by prodding the oil companies, and the companies in various industries found workarounds and figured out ways in which to move to induction furnaces and alternate processes. So they managed. So the economy proved to be more resilient. The underlying demand conditions were strong, or at least strengthening after a full year of RBI rate cuts last year. So there were many things working for us. And if this war comes to an end, as I think it will, now there is no real firing going on. There is only threats and counter threats and some weakish sounding threats, and those are also being rolled back. So I don't expect this to carry on like this. If the crude settles between 70 and 80, and we have demonstrated resilience, that's okay. In fact, I think that once the cartel breaks, as I think it will, the crude will actually plummet below 60. That should solve all problems.
Got it. Enough. Demand is down, supply is plentiful. Giri, stay with us. We'd like to squeeze in a couple of more questions with you, but Biocon should be in focus, and there's a very interesting debate. And one is a bullish argument, the other is a more bearish, more measured argument. And I think the bearish one is being put forward by Bernstein. Nimish has got both. Nimish, take it away.
Hi, Prashant. So, as you rightly pointed out, Biocon will be in focus today as well. The post-market data suggests some marquee investors have bought in the block deal while Milan was a seller. But Bernstein has put out a note. They have a bearish argument on Biocon. They have an underperform rating with a target price of 326, a significant discount to current price. Now, they've identified a couple of reasons why they continue to be bearish. The note says that while the block deal did give an exit to the existing investors, it hardly changes the financials for Biocon. While the street is anticipating or penciling in a resolution to the financial stress as well as leadership changes, nothing is going to change for the next few years. And they've identified three reasons for that. One, the innovative spends on biologics and contract research, is not getting converted into top line, which can support the balance sheet, which has got a leverage of over $1 billion. So that's the first argument. The second is they believe that the recent policy changes has lowered the competitive barriers, which would mean that Biocon will require at least 3 to 4 years to go to to cross the $2 billion revenue target that they have spoken about. And third, the succession plan also is anchored towards more of scientific-led and not in terms of sharper commercial and capital allocation-led. So these are the three arguments for their bearish argument. DAM Capital, however, is bullish on the stock.
Nimesh, Nimesh, sorry, yeah. Stay right there. Just come back and look at Biocon. But let me just quickly address market open. 24,100 on the Nifty, about 0.25% higher. The Nifty Bank is up about 0.4%, 57,700. And you got the mid-cap index up a third, the small-cap index. So it's not a bad open at all. It's a pretty decent start. Nifty heat map gives you a quick snapshot view of where the Nifty stocks are starting at. That should also provide you with the IT stocks and where they are landing. The Nifty heat map will be up on your screen now. Yeah, there you go. So 35 up and the rest are lower. And I think it is the IT stocks which are taking a bit of a hit. TCS, Tech Mahindra, HCL, Infosys, Wipro are the losers. Prima.
Well, the Nifty IT index is down 1.5% at open. Remember, this was an index till yesterday was up nearly 9 to 10% in the month of July. So unwinding some of the recent gains. On the way down, it's Tata Elxsi straight away 5% lower in pre-open. It was down nearly 10%. The problem for Tata Elxsi is a big margin contraction. Margins down 300 basis points plus on a quarter-on-quarter basis, and half of their revenue is coming from the automotive business, where they do work for companies like JLR, and automotive R&D spends have been under pressure. So you can see that with KPIT's profit warning, and now even for Tata Elxsi. Other than that, TCS is seeing some profit booking after 2 days of good gains. KPIT Tech is falling in sympathy with Tata Elxsi, and again, the automotive linkages between the two. Mphasis, Cyient, Birlasoft, Mastech, many of these mid-cap IT companies are weak in trade. On the flip side, though, it's L&T Technology Services, where the quarterly performance was good, better than expectations on revenues and margins, and that's the stock which is holding up in the green. Outside of that, I don't see too many gainers, at least in IT. The other gainers include Shriram Finance, that's the top gainer, Bajaj Finance, HDFC Life. So it's all about finance. I mean, the NBFC complex, life insurance complex, Axis Bank is doing well, Asian Paints is higher, ICICI Bank in the green. And on the way down, IT names, top 5 losers are the IT names, Hindalco, Eternal, Dr. Reddy's, ONGC, also in the red.
Well, a few stocks that deserve special mention. Landmark, just take a look at that stock. Yesterday it was up 10%. Today it's seen some follow-through buying, up another 10%. So massive move on that one. Capacite Infra, they backed a 482 crore consortium project from 25 Downtown Realty. That stock is well moving on rather large volumes. So both of them spiking up. I think there's a domestic brokerage that's come out with a note on Philatex India. Explains why that stock is popped up in trade. PDS seeing some follow-through buying after yesterday's trading session. We'll try to get the management during the course of the day. But that one is well up close on 5%. And Carousel, that's the other big mover today. But Landmark, that's the stock of this week, up more than 30%. The street likes the quarterly update. Stock flying away. And I think KEC International as well, there's an order win that's coming in there. So that as well, up close on 3%. A good start to today's trading session.
Absolutely. 90 points higher, 24,140 is where we are starting at this point in time. Let's just quickly put up Biocon, and Nimesh only got to present the one half of the argument, and it'd be unfair not to put the other half. Biocon is starting but slightly lower, sideways. Nimesh, back to you.
So, while I spoke about the bearish argument from Bernstein, DAM Capital has also put out a note, and they are bullish on the stock actually, and they have a target price of 495. Now, the DAM argument is that the Milan block yesterday has actually removed the overhang on the stock. However, there are 3 more investors who may look to sell, but the timing is going to be uncertain. But they believe that the Biocon's biosimilar business has turned the corners, and from here they're going to see a big momentum, which is going to build up from here on. In fact, they're expecting a 15% revenue CAGR between FY26 to FY28 and a 26 to 27% EBITDA margin. So, DAM is bullish on earnings, and they believe that the overhang is finally out of the way, hence they continue to be bullish on the stock. But the bear argument is also equally strong from Bernstein, and they believe that while the block is done, financially nothing has changed for Biocon, at least in the very near term.
Got it. Thanks very much, Nimesh, for that. Well, that's Biocon for you. And Nimesh Chandan is now with us, CIO at Bajaj Finserv's asset management company. He's right here in our studios. Nimesh, great to have you with us here. Thanks very much for joining us. Nimesh has presented the question on a platter, Biocon, as an idea. And there are many who believe that this is at a stage where, they've got the R&D capabilities, etc. A lot of, but again, it's also not a business that everyone understands easily because it's technical and, so just any thoughts on this one and that space, which is, R&D and innovation is getting rewarded all around the world in all segments, all sectors. Here's Biocon, which at least bulls believe is very much doing exactly that. What's your view?
So more than commenting on the stock, I'll just talk about the sector. We have been positive on pharmaceuticals now for last 3 years. And this is one sector which has quietly given fantastic returns over the last 3 years. And everything seemed to have incrementally worked in its favor. Whether you look at US generics, where more opportunities, plus the rupee depreciation now also helping in terms of revenues and profits. The Biosecure Act, which has helped a lot of CDMO companies, CRAMS companies increase their business, and there is a huge potential going forward there. And domestic pharmaceutical numbers are also doing very well. So we are seeing good growth, healthy growth in the pharma space in the domestic market also. So overall, very positive. And this is one sector whenever people want to go defensive or are a little worried about the short term, they go and hide in pharmaceuticals. Earlier, it used to be FMCG or IT. Now it is pharmaceuticals. So I think a lot of positives there. And the space is so huge. For a bottom-up stock picker, there is enough and more to be taken. Just full disclosure, we have some investment in Biocon also.
Okay. Nimesh, hi. Good to have you here with us in the studio. Take us through just some of your portfolio bets, the contrarian ideas, and what are you most bullish on?
So there is enough and more to play. The only sector probably we are underweight on right now is IT. Otherwise, there is so many opportunities across the board. In terms of cyclicals, we are bullish on metals, we are bullish on financials, we are bullish on industrials. As more smaller sectors turning around, for example, hotels or pipes and textiles. These are some of the smaller sectors also doing very well, available at attractive valuation. In terms of mega trends, we have healthcare sector as one big sector where we were overweight on. Incidentally, consumption, discretionary spend has picked up very well. And you would have seen, as a bellwether, say automobiles, the Vahan data, despite fuel price hikes, despite companies taking model-wise price hikes, the demand is very good. The growth is in double digits and in 20s in some segments. So consumer discretionary is a beautiful place to be in. Real estate, the numbers are fantastic. You see the updates from many companies, the leaders. This is one sector which is growing and consolidating. The leaders are increasing market share, or the organized guys are actually taking more market share. So, I mean, I'm overflowing with ideas.
All right. Take us to the piece with regard to the real estate basket then, because those stocks have corrected a large deal from the top. And now, as you said, the operational performance of some are looking pretty good. Geographically, what do you prefer out there?
Well, we actually prefer the large national players rather than specific geographies. But at least I can say the worries that people had over Bangalore real estate, I think, are receding now.
Okay.
People are expecting a big disruption in IT immediately because of AI and then firings in that space. In fact, we've seen hiring, those lesser ones, but not really seeing any trouble there. So at least Bangalore, the worries have gone down. But these national players which have strong brand are able to, one, immediately sell their projects quickly and raise financing at very good levels.
Correct.
And many of them have actually cleaned the balance sheet. Some of them are actually sitting on net cash. So this is a beautiful setup where they are trading much below their NAVs. Sales has picked up, balance sheets are clean, and the larger players are actually taking more market share. So I think it would be better to focus on, among the listed space, the larger ones and the mid-cap ones rather than the extremely small-cap ones. Those may be on a bottom-up basis where you see a sharp difference in terms of their valuations.
So you look at stocks like probably a DLF, Shobha, because it has that Bangalore play as well, maybe an Oberoi and Godrej Properties. Would that be more or less?
All of these included.
So all of these included. All right. The point you're making with regard to real estate, some believe that maybe the ancillaries as well will do well. By that, I mean, maybe the ceramic companies could do well because, that move from unorganized to organized is likely to continue. And in a challenging environment, normally the organized players do quite well. The price difference between the two as well, organized as well as unorganized, that's reduced. Do you think that, in fact, ceramics is a place that you're like, maybe cement, Nuvoco out of nowhere, the stock that listed at $550 came down to 300 rupees. Suddenly a couple of days of good numbers and the street likes that as well. Would those be areas as well that you look at, cement, ceramics, I don't know, Bathway, other such stocks?
So whenever the real estate cycle starts moving, in a couple of years, you start seeing demand for the other sectors also, the ancillary ones, the home improvement ones that will come. And we have already started seeing signs. Some of them, if I can use the word anti-fragile, whenever there is trouble, either on the raw material side or in supply side or so, the leaders in these segments actually increase market share. They use this time to actually increase the market share. The price differences between unorganized and organized goes down. Yes. And the sheer scale or economies of scale that they have, they are able to manage much better than the smaller players. So I think, this is a good time to actually look at even the tiles, the paints, the ceramic companies where valuations are attractive, businesses have good brands and good cash flows and are increasing market share.
You said you're brimming with ideas. Nimish, tell us, give us a few.
So on a bottom-up basis, Prashant, there are so many sectors which are now starting to do well. And this is not something about what has happened in the last quarter or last month. We've been saying that from January 2025, there has been a structural change in economic policy and fiscal policy, where you are seeing income tax rate cuts, GST cuts, wealth effect coming because of gold, interest rates going down. All this is now actually boosting demand in the economy. And on the external demand side, the FTAs are coming into play. Rupee depreciation, while it is inflationary for the domestic market, it is a great export trigger. And I think it can lead to a manufacturing renaissance in the country. So you're seeing strong growth on the export side, or prospects of strong growth on the export side, when these FTAs also roll out, and demand in the domestic already picking up. This is also a time when the animal spirits are high and companies want to do capex because they are seeing that demand. They're seeing the visibility of demand. So I don't know. I've been trolled a lot about being so bullish, but there are enough and more to play companies here.
No. I mean, I think some of what you're saying is playing out as we speak, has played out in a big way. The other kind of theme, I'm not sure if this is the right way to put it, is these turnarounds. Things which have not done well for years. Somehow, many across the board, right? These are smaller companies, and are we in the? Is it a market phase thing, or these are idiosyncratic and all well-deserved appreciation of turnaround efforts or whatever?
Last 2 years, every commentary ultimately came down to what is in momentum, what is in earnings momentum, and people just crowded on that side. Whether it is a global AI trade or semiconductors or so. Everybody's crowded on one side. On the other side, there are so many sectors, because they went through a temporary downturn, they are trading at extremely cheap valuations. Many of them are at 5%, 6% dividend yields and cash flow yields. So there is actually a chance that we will see the contra sectors actually playing out now. Even FMCG, the numbers are not bad. I mean, people are worried about Super El Nino and numbers going down, but the companies are doing well. The reports, at least the updates that are coming, are very good. So retail, FMCG, these companies can see a sharp turnaround. And digital consumer, we went through this hype curve when they were extremely valued, then they came down sharply because, again, threat of AI or so. Those are placed well. And see, people look at just the PE and think about what should be the valuation. But I think about the longevity of growth, not only high growth, but longevity of growth. And whenever people are chasing high growth and giving it high valuation, they forget that a company that is growing in mid-teens also over a 3-year period, which will give you a 50% kind of a return. And if it's trading at extremely cheap valuation, it's a good buy for investors.
So broadly as a thesis, I mean, what's the average P multiple for your portfolio? I don't know if that's the right way to look at it, but...
So we have different portfolios. One is growth, quality and contra. So these are our multi-cap kind of funds that we have. So growth obviously has...
Contra, that's interesting. Growth we can, I can assume that, but on contra?
So you can imagine we have a large allocation to cement, to metals, to textiles. So our valuation is lower than the benchmark there. But I would also look at PEG, where I see a turnaround in a business like what you said. Today, a turnaround company may be looking at optically a trailing 50p. But when you look at 2 year forward, it may be at 15p. So those kinds of companies we are betting on when there is a turnaround sharply. And we've been underweight on IT. Recently, we've reduced that underweight a little bit because now the valuations are, people seem to have overreacted a little and the valuations are attractive. Same with FMCG. It's a good space to be in now. Valuations have corrected very sharply. And together as a portfolio then, you have consistency of earnings, you have quality of earnings, you have good dividend yields, and it balances out the volatility that we are seeing in the market now.
So you're cutting your underweight on IT by purchasing with stocks? What theme?
Very selectively. So what we did was we looked at each company's business lines and which can be affected by AI, which are the clients which can be affected by AI, and then come to the worst case scenario for each. Not all large cap companies qualify there, but selectively some large cap companies you know which are showing some momentum in earnings growth also. So those we have picked up. But overall sector, we still remain underweight.
You name them with due disclosure?
We went we reduced our underweight this month, so it's not disclosed yet.
Right, but this is large cap purchases, and for those select
some large
companies,
and some mid, I would say.
Some large. The downside is limited from here on, according to your analysis. Okay. And
I thought Nigel was going to jump in metals and cement. Nigel,
I was waiting for my.
I thought you were going to see a smile.
I mean, I'm always the patient one. So, Anivesh, what about metals? As Rima said, we spoke about one global-facing theme, which was, the IT pack. What about metals? All that glitters was metals earlier, and suddenly that's taken a bit of a backseat. Because now we're entering into the monsoon period. The stocks had run up a good deal. And now, if there is no war, then that supply restriction on aluminium side goes out a little bit because of availability of gas, because, hopefully no smelter gets hit. How are you positioned on metals and what do you like? Ferrous, non-ferrous?
So the top-down story for metals is in two parts. For all the geopolitical tensions that we have seen in last 4 years now, since the Russia-Ukraine wars and all, defense spending for every major geography is going up. And that's a good demand driver anyway. Many of these metal prices 2 years back were actually trading at 10-year averages or 10-year lows. And now they have just come up. So there is price buoyancy, there is demand because of defense. The third angle, which may play in the short term, is a lot of countries will move from securing their supply chain. So from just in time to just in case. So now you know that the trade routes are not as reliable. I better keep inventory rather than have just in time. I mean, 20% of the world's oil and gas is coming from Strait of Hormuz, and much of it actually on the eastern side for Asia. People actually calculated that a lot, forgot to calculate that 9% of the aluminium is coming from there. Helium is coming from there, which is required for semiconductors. Fertilizers are coming from there. People did not calculate that. So I think now people will be more conscious about these things and start stockpiling energy on metals and all. And again, for Indian players, low-cost producers who have actually international parity in terms of prices. So there's a lot to be gained even with rupee depreciation and the operation expansion that they have.
Just one last question, Dinesh. We were discussing how government prioritizing a sector and diverting spends and focus and energy has tended to work very well for sectors, right? I mean, there's EMS and there's defense and so many others. One area where is energy security, and there is where ethanol comes in. We've got a discussion lined up next with the two experts on the other side. But any thoughts? I mean, all the debate about fuel efficiency and what it does, and I think we've had the government presenting its stance. But as an investor, any implications of this? I mean,
I don't get into the debate on ethanol.
Forget all that. I'm just.
But I concluded one thing, that sugar is sweet.
Sugar is sweet? No, you literally
You should look at sugar
is
stocks.
sweet. I don't know what you. Do you like the space?
We like the sugar space, yeah.
Why is that?
So we are seeing better pricing coming in, and the diversification into power, ethanol, all these are helping sugar companies. So
the best way,
and valuations are at a low.
So the best way to kind of even get exposure to that, which is essentially sugar as a
sugar.
Yeah. Nimesh, thanks very much for joining us. Great speaking with you. It's a pleasure having you here. And I think we have the ethanol discussion, Nigel.
Well, that's right. Thanks a lot, Nimesh, for joining in. Well, let's get straight to that discussion then. We have Mr. Deepak Balani, the DG ISMA, as well as Prashant Biani, VP Institutional Equity at Elara Equities, who joins us on the show. Hi, Mr. Balani, as well as Prashant, for joining in. Well, Mr. Balani, let me come across to you first. Grain-based ethanol has overtaken sugar-based ethanol. Is this a worry for the sugar sector? I wanted your initial take.
Good morning, Prashant. Thank you for having me on your show. See, absolutely not. We must understand the ethanol program started with sugar sector as the foundation. But that was the time when the requirement for E10, E12, E15 was way below the current requirement. Way back in 22, 23, the requirement of ethanol was mere 500 to 600 crore liter. And we must understand that there is a certain limitation of how much sugarcane can give as per the ethanol is concerned, because first we have to take care of our domestic consumption, and only if we have the surplus, we basically divert it to ethanol. So, the entire program was brought in because to come out of the cyclic problem, the payment to the farmer. But ultimately, we have a certain limit beyond which I don't think sugar can go. So ultimately, government had to bring in other players, specifically the grain feedstock. So I believe it's a good strategy, because now that we are looking at a requirement of almost 1,200 crore liter with an increase of almost 5% year-on-year basis, and plus E85 being rolled out. So we are looking at a higher consumption going forward. So grain-based is basically complementing the space where sugar sector cannot provide the ethanol beyond a certain point. So I believe these are complementary to each other, and we must not look at the ethanol as grain and sugar alone. It is a combined effort of the entire industry who has put up so much of capacity and providing a great impetus to the energy security in the country.
Okay, Prashant and Mr. Balani, thanks for joining in. Prashant here. Prashant, if I can ask you just to, how much is it sugarcane based? How much is it ethanol based right now? What's the mix right now?
At the moment, okay. So are you asking me, or
why don't you take it, Prashant? Go on.
Sorry.
Yeah, so right now the contribution of grain-based ethanol is around 70%, and sugar contribution has reduced to 30%. It used to be around 50-50, and to some extent the mix of sugar was higher as well earlier. But now, because of higher feedstock price, but ethanol price is not getting increased, has led to contribution of sugar getting reduced.
Saying that the mix of ethanol is 70% grain and 30% sugar.
Yes.
Oh boy, that is a big change, right?
Yeah, it is, and it is primarily because the feedstock, sugar-based feedstock, are no longer that lucrative as it used to be, and that is why the contribution has reduced.
And the pricing, Prashant, what is it at? I mean, how does that differ?
So it is between 60 to 70, depending on the type of feedstock within sugar. But as I was saying, the prices have not increased in the last 2-3 years, and that has been the ask for the industry, that your sugarcane cost is increasing, but prices are not. So I think the industry has been taking it for the last 2-3 years with the government. Hopefully, some breakthrough we can expect this season.
Right. Deepak, just one thing you mentioned briefly with E85 coming. Because just explain that. I mean, I think we are at E20, right?
Yeah. So you may be aware that last month, on the 4th of June, the Maruti Suzuki launched its first flex fuel vehicle. We must understand what is a flex fuel vehicle. Flex fuel vehicle is a vehicle which has a flexible system and can take any blend of fuel from E20 to E100. So Maruti was the first OEM to launch, and then we also have seen the two-wheelers for Hero MotoCorp and also Yamaha launching their flex fuel vehicle with the capability of taking any blend. Now, subsequently, government to supplement this effort by OEMs has also launched E85 fuel. That means it will have 85% ethanol and 15% petrol. And these blend, this E85 is only meant to be for the flex fuel vehicle and not the existing vehicles. So the OEMs have started rolling out the flex fuel vehicle. You must understand that in Brazil, today we have almost 90% of their entire fleet is flex fuel vehicle, which gives a customer a pure choice between E27, which is their base blend, and E100. So what we understand is this with E85 being rolled out, and government may also come out with E100 in future, and with E20 as the base blend, we might see the consumption going up in times to come. But this will be very gradual because this is only for the new vehicle and that's also flex fuel vehicle. So this is not going to see a sea change or a major change in terms of consumption. But having said that, if it goes as per the organic growth, it might see some increase in the consumption of ethanol in years to come.
Prashant, do you see more sugar mills diversifying into grain-based ethanol? I think Triveni is trying to do something like that. Are there any other companies, and if you could name them?
So there are, I think...
Yes, I'll come to you, Prashant, but if you could just take this one to begin with. I'll come to you, Mr. Balan.
I think there are 5 to 6 plants which are of multi-feed variety. Of late, we haven't seen anyone switching to multi-feed because everyone is focused on their own expansion, what they have already done. Incremental expansion in ethanol, whether it is single feed or dual feed, is not happening right now.
Okay. So this is not going to be moving to ethanol-based, grain-based ethanol is not going to be a big opportunity for sugar companies, at least as of now?
So whosoever has expanded, but right now, incrementally, no one is looking to expand their capacity further. Everyone is focused on first peaking the capacity utilization, which right now hovers between around 60-65%. Capex right now is not on the anvil for sugar companies.
Mr. Balani, you wanted to come in on this point.
See, basically, very rightly said by Prashant. See, basically, what is happening is that we already have a huge capacity in the country. Both grain and sugar combined, we have a capacity almost 2,000 crore litre. However, the consumption is only 1,100 crore litre. So it doesn't really make any sense for any mill to now have any more capacity on ethanol unless the existing capacity is utilized. Having said that, a lot of sugar mills have set up their dual feed distilleries because mainly the sugar-based ethanol is mainly produced during the season, which is 4 to 5, 6 months. But during the off season, there is a possibility of making ethanol from the grain feedstock. So that is a good strategy. But that strategy as of now is on hold because unless we see the consumption going up, I don't think it makes any sense in putting up more capacity.
And what are the demand projections of ethanol from current 1,100, 1,200 litres? Because that has implications for the capacity utilization of sugar mills, Mr. Balani.
Yes. Sugar mills, for the sugar-based feedstock, we have a capacity almost 900 crore litre. Grain feedstock has almost 1,100 crore litre. So, to be able to utilize this capacity, we want the consumption to increase exponentially. And that is where E85 and maybe E100 will play a major role. We are making a case to the government where, for example, we are asking the government to maybe adopt a Brazil kind of a scenario where every ICE engine, basically ICE engine is, there is some modification to the ICE engine which makes that engine as a flex engine with a capacity of taking higher blend. So if every ICE engine, perhaps starting 2027, could be a flex engine, perhaps we can see an exponential increase in the consumption of ethanol and the capacity utilization in years to come.
Yeah. Right. Deepak, it's pretty large numbers, right? So you're basically saying that capacity right now is almost double of what demand is for ethanol, sugar plus grain combined.
Very rightly said. In last year itself, that means current ethanol year, the tender from the OMCs, we saw in October last year, while the requirement by the OMCs was almost 1,048 crore litre, we saw both the sugar and the grain distilleries offered almost 1,800 crore litre. So we already saw almost 700 to 800 crore litre, which was bid extra beyond the consumption. So I believe that is a huge gap. And if this continues, there will be a lead to a lot of underutilization of capacity. And that is why we are making a case to the government, and government is completely aware of this also. Because as sugar industry alone, we have invested almost 40,000 crore in putting up the capacity. I'm sure grain distilleries have also put up huge capacities, huge investment. So it's paramount that the government will look into, increasing the ethanol consumption in the country.
Prashant, one stock in the sugar space that you're bullish on?
We are bullish on Balrampur Chini. They have diversified away from sugar and ethanol into polylactic acid as well. And that plant is starting in Q3 this year. So I think Balrampur is something which we can look at. It has diversified away from the cyclicality of sugar and ethanol. That is our top pick in the sector.
All right. The top pick is Balrampur. Well, gentlemen, we'll leave it there and we'll continue to have these conversations because I think important to get that perspective. Deepak, thank you very much for joining us. Prashant, thank you very much for being here on the program as well. We'll take a quick commercial break here. We'll come back with the management of Route Mobile to talk about their recent acquisition and the outlook going forward. Stay tuned.
Welcome back. Route Mobile is in focus as the company plans to acquire an AI-driven omni-channel customer engagement business of Helter Technologies. It's a small acquisition. The company's payout is going to be about 34 crore rupees. To discuss this in greater details, we have with us Vinay Binyala, Chief Strategy Officer and IR at Route Mobile. Thank you very much for joining in. It's a small acquisition, but if you could just begin with the rationale behind this and what it brings to the table for Route Mobile.
Sure. Thanks for having me on the show, Rima. And as you rightly mentioned, we have signed the definitive agreements with Delta to acquire the AI-related consideration from the company. The primary motive behind this entire acquisition was we serve a lot of enterprise customers, not only in India, but across the globe. And we provide them with omni-channel communication technology. So we service their communication requirements across channels, including SMS, WhatsApp, RCS, and email. And what we are seeing as an immediate requirement in the market from these enterprises is an ability to create an AI layer which can automate several of their customer engagement processes. So there's a significant demand for automating components of the customer journey. And that is where we believe the Heltar platform fits in extremely well. It creates a layer on top of our communication channels, and we can create interesting customer engagement, customer journey automation solutions for our enterprise customers. So that is the real key driver behind the transaction. And as you rightly mentioned, it's not a very large deal. It's more of a capability acquisition. We will take over the existing customers that the company is servicing, and which again makes it an interesting to look at, because despite the small scale that they operate at today, they have been able to onboard certain large enterprises as customers. So that serves as a proof to the quality of solution that they have created.
Can you tell us the large customers that Helter Technology caters to today?
Unfortunately, we don't disclose customer names either for Route Mobile nor for our subsidiaries. I will not be able to list them out, but these are well-known brands in the country.
And all domestic companies? Large?
Currently, they are servicing domestic customers, but our intention is to take this solution global. We have a significant presence in the Latin American market, Middle East market, Africa, and as well as certain Southeast Asian countries. So the idea is to immediately start expanding this solution into these markets.
Okay. So now, historically, for a company like Route Mobile, SMS was your key cash cow. You enabled SMS transaction between a customer and a bank, and say a company like a Myntra, Flipkart, or any of these companies, right? You were the loop, the SMS loop. Now, all communication moved to WhatsApp, email, RCS, etc. So this acquisition is not helping you migrate to WhatsApp, because I presume that is already now embedded with all your large enterprises. With this acquisition, you are adding an AI layer. Can you give an example of what kind of work this AI infrastructure or AI layer that this acquisition brings on board?
Sure. No, that's the most interesting aspect of it, because we already have the channel infrastructure in place. We are catering to some of the Fortune 500 companies as well globally. And the idea was to create this additional layer which sits on top of the channels. So what this layer does essentially is, if you look at any customer journey today, for example, for example, a food delivery company where you place an order for let's say a cake from a nearby bakery, and you try to do a follow-up with this business over chat initially. So when you're chatting with these businesses, today it is largely based on options that you choose, and it's more static in nature. It's not really AI-driven. It's more options that you choose, and there's a set of options that you get as a response. But what this platform does is, it collects the context of that organization. It creates a lot of intelligence around that context. It leverages AI platforms in the backend and generates responses to the customer very specific to that context of discussion which is going on. So it's creating a much better customer experience. It is automating the entire journey for the customer. It is reducing the reliance on human agents to some extent. And it's improving the performance of the entire customer support teams that function within the organization. This is one of the simple use cases where, for example, if I am a customer agent supporting you from the food delivery company, this solution can provide the entire context till the point it was automatically able to service the customer, and it can loop in a human agent if required, if the automatic intelligence is not able to go beyond a certain point of supporting the client. So it creates a very interesting solution for the enterprise. We can refocus their resources on the right kind of requirements.
So new products today is about 9% of your overall revenues. When do you think that hits 15-20%, Vinay?
So we don't really disclose a defined timeline to it, but it's a big push internally. So, we have very, very strong drive for the non-SMS solution portfolio because it not only creates diversification away from SMS, which is the biggest channel of revenue for us and across the industry today, but it also helps us create solutions which make the customer stickiness increase. Because once we start deploying these complicated, more complex solutions which integrate into the CRM, integrate into the core banking systems of the enterprise, the solution becomes that much more sticky and the replaceability of us as a vendor reduces. So it's a big focus area for us. It's a big drive where, we have dedicated teams within the organization which are trying to drive higher growth on the non-SMS portfolio.
How much do you make on an SMS transaction? How much do you make on your WhatsApp transaction with a static response in the example that you were giving with the customer exchange between the company and the client, consumer? And how much would you make with this AI layer added on top?
Sure. So I think SMS unit pricing varies by country. So every country has telecom operators who dictate the pricing, and we typically build our markup on it when we charge the customers. So it varies by every geography, and even within a geography, there might be minor differences when there are multiple operators. When it comes to WhatsApp again leaves out the pricing for every market that they are active in. We would have our markup on the WhatsApp cost as well. The AI layer which sits on top of these channels, we are exploring, and the acquired business also has various models in which they engage. So there could be a one-time fee which will be charged for the chatbot creation. There will be per transaction fees. Wherever there is AI utilization, we would charge them additional cost for the AI utilization. We could design bundled packages, where we would have a certain estimate of what kind of volumes the enterprise would require, and we could arrive at a bundled pricing for the solution. So it's an open field right now where, depending upon our estimates of what consumption is likely on these channels by the enterprise, we could define the pricing model. Plus,
no, but broadly, can you tell us the markup that Root Mobile charges, say for like-to-like in India, the markup that you charge on an SMS versus a WhatsApp plus with WhatsApp plus AI?
So that's a bit of a competitive advantage that we don't disclose market by market. But typically, if you look at the gross margin that we report, we operate at 22 to 23% gross margin, which is the markup that we are applying on the cost of income. So that is the blended across all products. It could be SMS and WhatsApp.
Vinay, thank you very much for joining in. I'm sure you'll be doing a lot more acquisitions. You've got cash of about 1,400 crore rupees and you've only deployed about 34 crore in this one. But thank you for explaining it. Moving on now to our special segment, Quarter Se Quarter Tak. We'll bring you the earnings expectation from every sector. And today, Ananya joins in to tell us how Q1 FY27 will be for the banking sector. Over to you, Ananya.
So Q1 for the banks, if you see strong credit growth, we can see, but there was a funding gap was the key concern here. Now, system credit grew 19% year on year compared with deposit growth of 13%, pushing the credit to deposit ratio to 82.6%. Now, if you look at the whole sector, small finance banks led loan growth at 25%, while PSU banks saw the widest gap between credit and deposit growth. Now, CASA ratio throughout the sector declined, indicating that incremental funding is becoming more expensive now. Now, the street expects banking sector net interest income to grow around 11% and PAT by about 9%, with private banks likely to outperform the PSU banks. Now, margins remains the biggest swing factor. Most large banks could see a NIM pressure of up to 10 basis points sequentially due to sticky deposit cost and faster growth in lower yielding corporate loans. Now, the most interesting part, the RBI's relaxation of FCNRB and ECB norms should gradually ease funding pressure, with benefits likely becoming visible from Q2 onwards. Now, among PSU banks, SBI remains best placed. Indian Bank looks resilient, while PNB's profit growth is largely base driven. Now, among large private banks, Axis should lead earnings growth. ICICI remains the profitable benchmark, if you see, while HDFC and Kotak will be watched closely for margins in this quarter. Now, mid-sized banks such as Federal Bank, DCB Bank and City Union Bank should deliver stronger growth. Small finance banks remains the fastest growing cohort, led by AU Small Finance Bank, although elevated deposit may keep margins under pressure. Now, overall asset quality throughout the sector remains stable, with MSME, commercial vehicles and agriculture as key watch areas. Now, here the quarter should therefore be steady but margin sensitive with healthy credit growth and gradual funding relief likely from Q2 onwards.
Got it. All right. Thanks a lot for that. Well, let's welcome on the show Nitin Agarwal, Head BFSI Research at Motilal Oswal Financial Services, who joins us on the show. Hi, Nitin. Good morning. Always good to have you on the show, Nitin. We've got a couple of quarterly operational updates that have already come in. Now, going by what you have initially seen, could you tell us what are the trends? It appears the private sector credit growth has outpaced the PSU banks this time around. It appears they're pulling back some market share as well that they lost earlier. So how do you see this play out, and where's the scope for surprises as well as misses, going by the initial operational updates that we've got?
Yeah, hi. Thanks for having me. So clearly, yes, you're right. Private banks have done better in this quarter, and we have seen a fair pickup on both the deposits as well as advances. PSUs, on the other hand, had a very strong run in the last fourth quarter of the last fiscal, and there is some pullback that we have seen on their business data. So some of them have been reported a decline on a sequential basis, and growth also has been fairly marginal versus private banks. And overall, for the year, while we are looking at a 14.5% loan growth for this year, but private banks, we are projecting somewhere closer to 16.5 range. So private banks will continue to do better as we move forward from here.
So Nitin, hi, good morning. And that's the big debate, right? Last 5-year returns for the private bank index, PSU bank index. I mean, if you look at the CAGR, it's starkly different. I mean, big difference. You're saying that is about to change?
I think, yes. See, one reason is also because PSUs will always want to play either for valuations or for earnings growth. And when you look back, the entire rally over the last 4 years was driven by the normalization of valuations, and the earning growth for every single year over the last 4-5 years was running ahead of private banks. But now with ROAs optimized, private banks catching up, and the asset quality in the unsecured segment is also coming back on track. So the private banks' earnings are now going to grow faster than PSUs right from FY27. And while the valuations, given all the derating that we have seen in the entire space, looks fairly comfortable. So there is a strong case.
Yeah, there are still those who push back, saying that maybe there is a bit of a fundamental issue with PSU banks with their lower cost of deposits, etc. Lower cost funding, rather, which they've been very aggressive, and there have been big market share gains in categories like home loans and other areas as well. So that will keep private banks on the back foot. Do you buy into that? How will you respond, rather, Nitin?
We have been more selective on PSUs. That's not that we are negative on the space. I think the PSU banks as a whole will continue to do fairly decent when it comes to credit growth or even the profitability. Most banks will sustain 1+ ROA, and that will translate into 16% odd ROE for the sector. So we remain positive on that. But given that private banks relatively look better in terms of earnings growth as well as the valuations that they trade at right now. So which is where our preference is a little more over PSUs as of now.
All right, we've spoken about the credit growth side, but what about the deposit mobilization side? I think you're factoring in a bit of a miss on deposit mobilization, both for SBI as well as ICICI Bank. Tell us, what are you estimating, and could there be a bit of a miss on that front?
Yeah, so as you know, the RBI has now been releasing the fortnightly data, which is aligned to the quarter end. So this is the first time that we have done this business update reconciliation, as almost 70% of the banks have already reported the business update as per the outstanding banking credit and deposits. And ICICI and SBI are the other two large banks which are yet to report. So basis the reconciliation, we believe there is a small chance, or fair chance rather, I will say, that SBI may miss the deposit growth estimate that we have put out. While it does not have any kind of respect to how the full year number pans out, but for this quarter at least, I think there is a possibility of a slight miss to our numbers on the deposit growth from SBI. And this is something that we have seen across PSU banks, wherein the business numbers have been a tad softer than what we projected.
All right. Nitin, stay with us. Just a quick word on the listing, which is on your screen. Kusumgar is listed. It's as I read it, a specialist manufacturer of engineered fabrics, high-performance woven, coated and laminated synthetics. So looks like they're into specialized textiles. I think the management was up there very strong. I mean, 40% higher. from the issue price, 595. And there are some, estimates from and recommendations from brokers coming through this morning, pegging target prices even higher. So looks like it's a strong growth company with future prospects where growth is expected to come in as well. You'll, by the way, hear and look at the volumes, 6 million shares. Right at the word go. So humongous interest right on the, a lot of buying on listing, I guess, for those who could not get allocation as far as the IPO is concerned. You'll hear from the management and their future prospects on Chartbusters at 10:30. So stay tuned for that. Nitin, just to come back, in terms of, let's just look at some segments, right? Housing finance as a space, right? Again, I mean, the view is that maybe once again that it should come back into focus. Just your thoughts here.
Yes, we are seeing some recovery, at least on a selective basis. And say, for example, if you look at the private banks, ICICI Bank has shown some pickup on the mortgage lending growth last quarter, and we're expecting some further recovery this time as well. And but overall, there is a lot of competition, which is where the yields in this space continues to remain under pressure. PSU banks, about the credit growth that you touched upon, they are competing aggressively, not just in corporate lending or mortgages, but that competition is now getting extended to SME or even the vehicle finance. And which is where I think from this quarter, what we are watching out more is on the margin as to how the trajectory is over there and not the asset quality as much. So I think margin is the most important variable that we are watching at from this quarter perspective.
Okay. What about the for those who have exposure? But my question actually is on the segment microfinance, Nitin. What's your view there?
I think the segment, after having seen an extended painful cycle, is now seeing the normalization. Most lenders are very close to the normalized run rate on the collection efficiencies. And while 1Q is always a seasonally lean quarter, we expect trends to pick up, and over the year we are expecting a double-digit growth, maybe somewhere between 10 to 15% growth for the industry. So most lenders should see a comeback on their growth and profitability in this year.
Got that. Just a couple of other things. There is this RBI proposal for a one-time nod for mutual funds, insurers, pension funds, on them being able to acquire stakes in banks. I don't know if you've gone through it. Is it important, and any implications to your mind?
I will have to look at that and see through as to what all repercussions it may have.
I see. So RBI is proposing a one-time approval for subsequent major stake acquisitions in the same bank. So prior RBI approval for initial major stake acquisition is needed, but for subsequent stake increases, I think they're easing the approval process in some way. So we'll have to kind of look at this in some more detail. Nitin, we'll leave it there. Thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC TV 18. 140 on the Nifty, 24,200, almost 24,200. The listing, of course, is doing very well. That is Kusumgar. As I said, you'll hear from the management a little later. Well, the F&O stats and what's happening, the BSE on the BSE. Mangalam is here with all that. Mangalam, take it away.
Well, it's Wednesday, which means it's one day to go for Sensex expiry, which happens tomorrow. And today, the markets have bounced back fairly smartly. If you look at the Sensex as well, it's up by nearly 550 to 600 points. So doing extremely well for that index right now, almost 500 points. And this despite Brent being higher at $86 per barrel and the rupee being slightly weaker as well. So no, real worries as the market's climbing those walls of worry. And the top contributors today come in from the banking space. So we have ICICI Bank, HDFC Bank, Reliance 2 ahead of its numbers later this week is pulling its weight on the frontline index out here. The key to track will be if you look at the intraday chart of BSE IT. Yes, they've been draggers for most part of today's trading session so far, but there has been a smart recovery in the IT index as well. So from lows, the IT index is up around 1.2, 1.3%. Now the deficit is just about 0.33%. The Sensex has crossed the 20-day moving average, the 100-day moving average. So this 77,000 to 77,150 mark is extremely crucial as a support for the frontline index. And as we speak, we have a lot of options which are active ahead of expiry tomorrow. So the 77,500 call has a premium of almost 300 rupees, telling you upwards of 77,800 is where we are likely to see some sort of resistance. In fact, if you add the action on the 77,600 call as well, that tells you that between 77,800 and 77,900 is where we are likely to see some sort of supply emerge, but no problems with support. 77,500 put also fairly active at 250 rupees, and we have the 77,200 put active at 150 rupees. So between 77,050 and 77,350 or 250, that 100-point band is crucial support. So sum and substance of it all, between 77,250 to 77,850 is where the Sensex is likely to trade for the next couple of sessions.
Thank you very much for that. Get into a break. On the other side, Manisha will talk commodities. Stay tuned. Welcome back. Up more than 0.5% on the benchmark indices. Banks are pulling their weight. The Nifty banking index is up 650 points with the index level above 58,100. But as promised, let's talk commodities. Manisha is now joining in. Manisha, hi, good morning.
Morning, and thank you for that. You know, I'm talking about something very interesting today. I'm talking about tokenized commodities that are traded on-chain, on blockchain. And we have seen this volume gain up quite strongly in 2026. And that is because there's just so much happening in West Asia and sense of conflict. Weekend is buzzing. And where do you trade all of those commodities on a weekend? Well, you do that on blockchain. And that is exactly where we're looking at a number kind of very, very strongly increased there. So this is a 24/7 crypto rails, which are able to trade round the clock on the weekends as well. And we have seen commodity trade gain up onto this one. So when you look at the on-chain tokenized real-world asset tokenization, the tradable volume onto that is $33.5 billion as of now. Within this, when you look at commodity total market valuation, well, that stands at around $4.7 to $5.3 billion. The peak that we have seen in this year has been at around $5.8 billion therein. Within this as well, this is spot markets, by the way. And when you look at derivatives, well, there the volume has been much on the higher side. In the first quarter itself, we've seen market at around $524 billion in sense of trading volumes therein. The weekend commodity volumes on the decentralized exchanges has surged quite a bit and has gained 9 times in 2026. Within this, when you look at commodities, gold clearly has a 95% of a market share that they're in. And within that space as well, it is a duopoly really, because you have Tether Gold and Pax Gold, which have the major volumes coming in. Tether, of course, has been the market leader, and we've seen 54% of market share from them. And Pax Gold holds around 46%. And as I said, 95% of all tokenized commodity trading as of now is basically gold. Silver, when you look at the overall tokenized market onto that one, stands at around a tall $434 million therein. This sector is led by Kinesis Silver. Tokenized version of iShare Silver Trust also is doing quite well. So these are the two ways if you were looking to trade tokenized silver therein. The silver futures on hyperliquidity also have done quite well. Nearly $1 billion of a daily volume is this one, is also being clocked onto this one. And then you have crude oil, which is traded the highest, by the way, during the weekends therein. And here as well, oil coin is something that you need to watch out for, because that is a leadership coin into the markets there. We're looking at very strong volumes onto this one. It is physically backed by oil reserves as well, so something that the markets trust right now. And then you have copper on chain as well. Here as well, the tokens on the physical shortage narratives is what the markets seem to be trading at this point in time. You have tokenized copper on blockchain, which is backed by 1:1 ratio. So every 1 kg of copper is backed by 1 kg of physical stock therein. The industrial warehouse receipts is how it works on. And then you have Fluid, Borderless, ERC20 tokens on Ethereum, which work quite well for this one as well. Now, as we are looking at tokenized commodities doing quite well, there is CME now planning to bring round-the-clock trading when it comes to 1 ounce of gold contract. All the other contracts will continue to trade only from Monday to Friday. No weekend trading on that. They will shut down on 5 p.m. on Friday. But this is one small contract that the CME recently launched, is what they're bringing in for a weekend round-the-clock trading as well. So this is going to be continuous. Successful self-certification with CME, or rather CFTC, has been done already for this one. It's going to be a continuous round-the-clock weekend trading as well. And what the markets are anticipating is that the launch on this is happening on 24th of July. And after that, you will be looking at a constant trading in case of gold. Interestingly, CME was trying to come out with a similar contract for crude as well, which CFTC as of now have stayed. But markets clearly looking forward to 24th of July, where you will have 1 ounce gold contract on CME trading round the clock.
Okay, all right, Manisha, thank you very much. Very interesting information there as far as some of these precious commodities go. We'll take a break. We're back. It's a special Indianomics. My colleague Lata speaks with Robert Kaplan, Vice Chairman of Goldman Sachs in U.S. markets, and Kevin Warsh's innings. Stay tuned, coming up in just a bit.
Welcome to a very special Indianomics. Global markets woke up today to a barrage of important news from the United States. US June CPI has come in way lower than market expectation at 3.5% and represents the steepest single-month fall since April 2020. In geopolitical news, President Trump walked back on his threat to impose a 20% tariff on ships using the Strait of Hormuz. Thirdly, Fed Chair Kevin Warsh, in his testimony to the House, said he is determined to stamp out inflation. Sounded hawkish. Of course, there was other news, like the fabulous banking results from Goldman Sachs, JP Morgan, Citi, and a disappointing one from IBM as well. But to parse all this news for us and more, I have with me a very special guest, Robert Kaplan, the Vice Chairman of Goldman Sachs and a former member of the Federal Reserve Bank of Dallas. Robert, thank you very much indeed for joining us.
Great to be with you.
And very kind of you to come over to our studio.
It's a pleasure.
Well, let me start with the most important news, this very sharp drop in June CPI. Yeah. How does this move the needle for the Fed?
It helps. We had expected the CPI reading to cool, didn't know how much. The reason it matters, Fed has not reached its inflation target for 5 years, and they're getting very frustrated by that. And Kevin Warsh is saying, we're not going to let it go on. But I think in a perfect world, they'd love to assess more information before they act. A cooler CPI reading gives them breathing room to take it, to not act in July and keep kicking the can, so to speak. But they'll need to see continued improvement, or else eventually they may have to take some action.
Okay. Yeah, Kevin Warsh himself, when confronted with the numbers, said that this is just one reading. Right. I won't cherry pick. And then, parallelly, we are having this crude price go back to the $85 mark. So if you were a voting member, what would you do? Would you let go July, but you definitely see scope for a rate hike later?
So the most important thing I'd be trying to do in my former seat is figure out what's going on. And there's a number of things. Oil is only part of it. You and I have talked about, we have a historic infrastructure CapEx boom. At the same time, we have tariffs, we have limitations on workforce growth, and so it's creating supply constraints. And my guess is the infrastructure part is somewhat inflationary. All right. Then you've got the war in Iran and the oil price spike, which creates another issue, and it bleeds into other items. So I want to see how the war in Iran unfolds, whether the oil price can recede a little bit. I want to see how this CapEx boom plays out. If it weren't for those developments, I think the Fed was thinking that the inflation rate was going to cool more, but I don't think they know yet. So at the Fed, you don't have to prognosticate, but you have to be a risk manager. And so what I'd be doing, yes, I would not act in July, but I'd be vigilant and on my toes meeting to meeting. If inflation stalls and we're still above target, there'll be a point at which I'll believe we need to act.
Okay. I want to come back to many of the themes that you have started, especially the CapEx boom, which perhaps is not only in the United States, but is massive in the United States. Let me come to the other event that markets will have to react to, the Kevin Warsh testimony, first testimony to the House.
Yeah.
Well, actually very strong statements that, he wants to stamp out inflation so as to save the economy. What did you make of all those phrases? How should the market react?
So I didn't hear anything new on the stamping out inflation part, in that I think he realizes as Fed chairman, you have a number of tools. One of them is what you say, and he wants to be clear and sound hawkish. And ironically, by sounding hawkish, it may give him more breathing room not to have to act. Eventually, his actions are going to matter more than his statements. The most significant thing he said actually was not on that to me. It was what he said about the balance sheet. And he noted that the average maturity of treasuries is about 4.5 years, but the Fed portfolio is more like 6.5 years. And he said over several years, we're going to probably try to bring that back closer to the average maturity. That to me was the most significant new thing I heard, because that has implications for the longer end of the curve, which I actually am more nervous about than I am about exactly what the Fed does.
Oh, actually, that you're taking away my, following questions, because there is also a committee is appointed under Raghuram Rajan on the balance sheet
That's
issue.
right.
I'll come to that in just a minute, but more the immediate news that has come to us overnight. There is also the Russian sanctions bill that has been trimmed a bit. From 500% tariff threat, it's 100% tariffs, especially on the oil-consuming countries, China, India, Slovakia, and Azerbaijan. The others are smaller, but China, India would be big, and it would impact inflation in the US itself. Do you think this is only a negotiating threat, or should the countries take it seriously?
Well, the Trump administration wants to see the Ukraine-Russia war end. That's the overwhelming point. This is a piece of that puzzle. Obviously, Ukraine is fighting back, is making some progress. I think the thought in the U.S. is if they make it harder for Russia to continue the war, maybe that will push the parties to settle. I think that's what's going on here. Whether this is a prolonged or sustained economic effect, I don't know. But I think it's a tool to try to bring that war to a close sooner rather than later. And I think that's mainly what's going on there.
Well, we in India, people I spoke to, the market men, aren't yet reacting to this 100% tariff threat simply because, after all, they didn't go with those threats on China as well. It was brought down. There is an inherent U.S. disadvantage if tariffs are so high. So is that a safe bet to take?
I think it is wise to realize there's rhetoric and there's what actually happens. And what we're seeing is there's usually a difference between the two. So yes, for those who say don't overact, I think that's wise advice.
Okay. Well, now, before I come to the longer-term questions, yet a short-term one, not all that short-term. How important is the November 8th election, the midterm elections? Would that influence... would that be influenced by the continuation of the West Asia war or crude prices? Would the Republicans want both these out of the way?
Yes.
Lower crude prices and no war before the election?
Yes, they would want all that. And, I'm not a political expert, but there's a concern that we have a very large population of low, moderate income consumers in the United States who are struggling to make ends meet. Lost 25 to 30% purchasing power. They don't own financial assets. More affluent consumers are doing better, and the oil price spike really hurts them. And so it's very unpopular. The administration's very aware of that. Would they love to see, they want to do what they need to do in Iran, but they're very sensitive to the political impact. And I think they're prepared there will be some negative political fallout in the fall election as a result of it.
Is it a safe bet to say, therefore, that before the fall election, the administration, and the president in particular, would like to see the war end?
Yes, if on appropriate terms, yes. But I think he's saying by his recent actions, the terms have to be appropriate.
Okay, fair enough. An unfair question. Where would you see the U.S. yields, by the end of the year, 2026?
So this is the challenging part. There's what the Fed does, and I think you'll see the Fed actively debate, do we move, do we not move between now and December? The market is pricing in 1 or 2 moves. It's possible it could be 0. And I don't know. But it'll work itself out, and the Fed will do its job. The part that's different is the long end of the Treasury curve, which actually is not driven by the Fed.
Yes.
I think a little bit, but it's mainly supply-demand of Treasuries and the budget deficit, and the war is a part of that. And I think that I'm more nervous about affects mortgage rates. And you see the 10-year has been very sticky, and it's backed up in the last week into 460.
Yes, 4.6.
And that's the part that I think I'm confident Kevin Warsh and the Fed will do its job, but I think the market wants to see more evidence that we can get our fiscal house in order. Okay. You bet. And the jury's out on that, and I think that I'm more sensitive to.
Okay, well, before my market viewers get angry, let me ask you about the stock markets as well.
Yeah.
There is this worry about chip stocks. US, by the way, in spite of the plateauing of the last 1 month, the US equity markets have had a very good run.
Yes, they have.
Would you worry about any bubble-like nature in, say, tech stocks or chip stocks?
So let me answer it this way, and I'll be careful not to get into particular company or sectors because I work on a number of them. We've got GDP growth in the United States is plus or minus 2% real. It's solid. It's not spectacular. What is noteworthy is corporate earnings of the S&P are growing double digits. Why? Part of it is this AI CapEx boom and increasing concentration in the hyperscalers whose margins are very high, and it's bringing up S&P earnings. But also, the rest of the companies are going to use AI and other productivity techniques. So maybe we started the year, rounding, where maybe we thought S&P earnings would be 315, maybe revising up to 325 could get to 340. But over the next 3 or 4 years, earnings are going to continue to grow and maybe get in excess of 400, and then ultimately over the next 5 to 7 years, 500 per share is not unreasonable. In that regard, I think a lot of the run-up in the stock market, at any point in time, you may say it's overvalued, but I think the earnings drivers, there's a lot are fundamentally supporting firmness in the stock market, and we see that continuing.
Oh, yes, that means US exceptionalism should continue. Well, I have more questions for you on whether this capex boom is a global growth story, is the US economy overheating, and what are the implications of the balance sheet adjustments? All very important long-term questions. Those questions to Robert Kaplan after the break. Bazaar viewers, you will get to view the entire conversation, very important conversation, after market hours.
Well, IBM fell a staggering 25%, its worst day on record since 1968. The software maker flagged soft demand, delayed deal closures and changing AI spends for a muted show. As a result of which, the IT stocks in India got dented as well. The IT index trades with a flat to negative bias, though off lows, is still sitting with a cut of 0.5%.
Tata Elxsi delivers a margin miss in the April to June quarter. A 340 basis point drag led to a deal transition and customer-related cost. Weak demand amid persistent global challenges caps the growth in the automotive segment. The stock sees selling pressure in early trade.
Hero MotoCorp stays its course, plugs in a fresh 1,000 crores into Ather Energy. Move underscores Hero's long-term EV strategy. Ather Energy, as a result of which, up 8%.
Capacide Infra backs a 480 crore order from 25 Downtown Realty. The order involves civil work construction in Mumbai's Mahalakshmi area under the super high-rise category. The stock sees steady gains.
A second day of gains for Landmark Cars. The company has delivered its best ever first quarter performance with double-digit growth. The company's vehicle and after-sales segment led the way. Stock up 12% today after a big surge yesterday.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. As always, I'm Nigel and with me is Manglam. Manglam, green on the screen, 24,250. That's the next level of resistance, but a green-looking screen, some stability in crude oil prices. The rupee is showing some signs of stability as well. But I think the tech index, and that's the swing factor today, started off with a cut of 1.5%, pulled back 1% from the lows.
Doing good for the market. Had someone read the headlines yesterday and said that we'll be up around 150 points in the morning. Well, we would have taken that with both hands. 24,200 on the frontline index. The important part, however, is that the broader markets, we have around 2,200 stocks which are advancing for about 700 stocks which are declining. There's been no major shift in the macros. Brent is still holding around that $85 per barrel mark. The rupee is still weakened past that 96, but there is no further worsening from here, and that's something that the street is liking. Let's welcome Rajesh Palvia for a quick technical check on the market. Rajesh, from lower important support levels, we've recovered a fair bit. The only question is that, there is supply at higher levels as soon as we move towards the 24,250, 24,300 mark for the Nifty. Do you think there is enough for the market to break out, or will continue to be in this range?
Morning. So this is the fourth day where Nifty is, again witnessing the same kind of behavior. 24,000 is acting as a support area, and 24,200, 250 is, supply zone. Even looking at the data since opening, the major call put activities taking place at 24,200 strikes. So the kind of put addition which we are observing since opening on 24,200, which is giving us some confidence that, yes, put writers are confident at 24,200 strike at this moment. So if Nifty crosses about 24,250 zone, I think some short covering action we could see during the day itself, and then possibly again we may revisit to 24,350 or 24,400 kind of trajectory in the continuation of this pullback. But looking at the volatility across the global market, the news flows, which is keeping traders a little cautious at this moment. But again, broad-based market is giving us sign that maybe we could see a breakout in next couple of trading session for this range. And if that happen, I think we could see good amount of rally to unfold going forward. So one should remain on the long side of trade till we are trading about 24,000 level on the closing basis. Targets are 24,400 for near-term perspective. Bank Nifty is again, move back to 58,000 mark. So looking at the strength again, coming back on the banking stocks as well as Bank Nifty, I think here 57,000 and 57,300 are acting as a major support area. So here also one can remain on the long side of trade till we are not breaking below 57,000 level on a decisive manner. Bank Nifty may also, show some amount of rally towards 58,600 to 700 zone. Some of the pockets where, strengths are clearly visible in today's session. Cement space is looking attractive. Banking space is showing sign of strength as well as pharma. So I think these 3-4 pockets are clearly giving us sign that, we may see further more continuity in this sector for trading point of view.
Got it. All right. Give us a couple of stock names then.
So first stock is from the banking space, that is Bandhan Bank. Stock is showing a very strong, buying action since last couple of days. And looking at the near-term, short-term structure, stock is now negotiating with its multiple supply zone on daily, weekly time frame.
Oops. All right, we've tried.
Any move beyond 220 can take this stock further higher to 235 to 245 kind of zone. So Bandhan Bank, one can keep on their buying list. On the downside, 210 needs to keep as a stop loss. Targets are 235 to 240. Another stock where we are focusing is on the cement space, that is Ultratech Cement. If we analyze the derivative data, there is a long built up on a weekly chart. There is a breakout on the falling trend line on weekly chart. Stock is comfortably holding about to near-term, short-term moving averages. So we expect that, Ultratech can also extend its gain, and possible target towards 12,200 to 300 we can see in next couple of days. So one can buy here also with stop loss of 11,600.
All right, we take that point. Thanks a lot for joining in and giving us your stock calls as well as your calls on the index. Let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Anant Chaudhary joins in with a stock. Anant.
The stock that we are discussing today is a leading player in electrical consumer goods. Its key verticals include switchgears, cables and wires, lighting, and consumer appliances. We are talking about Havells India Limited. Havells went through multiple transitionary issues in FY26, such as loss of summer sales due to prolonged monsoon, change in BEE norms in RAC and fence, more than 40% inflation in copper and aluminium prices, and of course, the impact of Middle East war. But FY27 could be a turnaround year due to favorable base and El Nino effect, which should drive steep growth in summer products. Also, there is a price hike of 5 to 20% across products, while Havells is also expected to gain market share from the unorganized players. Havells has entered the battery energy storage system segment through a strategic partnership with a Norway-based company, Pixie, to develop and manufacture energy storage solutions in India. The partnership targets residential, commercial, EV charging, and grid scale applications. India's BESS market is expected to reach 10,000 to 12,000 crore by FY30, driven by rapid renewable energy adoption. We believe, along with mid-teen revenue growth, EBITDA margins also likely to expand for Havells in next 2 to 3 years. Stock currently trades at 35 times on FY28 earnings, well below its long-term average multiples, which gives a decent margin of safety to investors.
Right, we take that point. Thanks a lot for joining in. With that, we step into a short break. On the other side, this listing of the day, we have, the management of Kusungar joining in, a strong listing up 40% from its issue price. They discuss the growth outlook after a short break. Welcome back. Looking good for the markets, and it's looking even better for the new listing of the day. Kusumgar, the synthetic fabric manufacturer, made a strong debut on D Street, listing gains of over 35%, and from there on as well saw a further up move, and the stock is up around 195 rupees from its issue price, closing in on that 46% growth. The last time the management joined us, they gave us a target of almost 2,000 crores in revenue by FY30, with margins staying at current levels, implying asset turns of around 4 to 5 times. Let's discuss further from what the company is likely to do. We do have Mr. Kothari joining in, Ankur Kothari, who is the leader at the company. Ankur, congratulations, strong listing, but it also means big responsibility for all the shareholders. You've guided for a path to 2,000 crores by FY30 for the company, with margins staying stable. I just wanted to understand, let's talk more of the near-term numbers now that you're listed. We'll speak about that as well. FY27, what is it that you're targeting in terms of revenue and margins? If you could give us a sense on that. And the last time you joined us, you said that, defense orders weren't picking up because of the tariff uncertainty. Now a lot of that is behind us. Have they picked up? And what is it that your defense orders on hand are right now?
Sure. So thank you, and thanks for the kind words. As far as FY27 is concerned, I think what I spoke, the last time we met, I think I would maintain that. There were a couple of challenges that we had in the last year around some defense orders getting postponed, and also because of the Trump tariffs. Now that they both are behind us, I think we are set to resume the kind of growth trajectory that we had been seeing over the last 5-6 years, and I think that should guide you to where we could get to. There is always a little bit of uncertainty, element of uncertainty in some of our business verticals. So it's difficult to guide a precise number, but I think I can comfortably say that we should resume the kind of growth that we were having earlier before last year.
All right. Hi, Ankur. Congratulations. Solid listing, and as Mangalam said, now the market capitalization post this kind of pop, I think, is around 6,500 crores, which is quite interesting. Now, I'm looking at an MK note. They have come out with an initiated coverage today itself, and they are factoring in very, very large numbers. So let's not talk about the near term. For the timing, let me give you a little bit of a long rope. In FY29, they are factoring in revenue number of 1,650 crores from around 700 crores that you did in FY26. Do you think that's possible? Point number one. And point number two is, if you look at it on a trailing basis, then it appears very, very expensive, the company, at around 65-70 times PE. But what they are factoring in is 100 crores of net profit becomes 308 crores. Are you on board with both these two numbers? Do you think that's the aspiration and it could be possible?
Yeah. I think the aspiration for us, in the midterm to long term, is to continue coming out with products especially for the aerospace and defense industry, right? I think the market tries to, it's difficult for the management as such for us to, provide a guidance on pricing or whether one is right or the other, is right. I think what the trajectory in the profitability, the growth trajectory and the profitability that we have shown is something that, I think is being assumed will continue. Personally, we are hopeful. There are two elements of uncertainty in our business, right? And these uncertainties could be positive or negative, and one has to somehow, it's difficult to arrive at a realistic assumption. One is around product development and approval cycles, and then the other is when do the orders, especially on the defense side, when do they materialize? I think they are assuming a particular case scenario, which is probable, but it's difficult to say whether that's something that will happen or not.
Right. You said growth path is likely to resume. I'm looking at the same note, and they are anticipating a 34% revenue CAGR, 35% EBITDA CAGR, and 45% plus net profit CAGR. Do you think those assumptions are achievable? I'm not asking you whether, you have set targets on numbers or not, but people are looking at these and they are making projections. It's your job to then direct them whether these projections are fair or are they undershooting or overshooting?
So to be honest with you, I think the environment that I am in today, are these numbers possible? For sure. But is that the median path? It's difficult for me to articulate that at this point in time. But clearly there has been a background to this. There has been a lot of work that has gone into building this company and its capabilities. So we are hopeful that we can get there for sure, or why not even overshoot them. But not all of this is in our hand. So while it's probable, I'll not be able to say whether that's something that we will definitely achieve.
Okay, all right. Let's focus on a couple of other aspects then. I'm looking at the note and they are saying that the A&D segment that contributes around 45 to around 50%, that's the best margin business for you. And they see huge scope out there. They go on to make the point that you're still at single-digit market share in the domestic market, in the A&D vertical. And they believe that you can size it up considerably from here on. What is your calculation in terms of a market share domestically, in the A&D vertical, and where do you see it headed?
So I've not been able to look at that note, to be honest, though, it is in my inbox, and at some point in time, I'll be able to take a look at it. If you take the overall aerospace and defense industry, of course, we'll be, in the low single digits, I would presume. So, theoretically, there is a large scope out there. I think it would be more pertinent for us to say, what's our area of competence, right? The things that we do and we do well. I think in all of those areas, I would say we are reasonably positioned as, as at least one of the, if not the market leader. So just to understand, make it clear, right? Kusungar's larger growth does not come from attaining larger market share. It comes from continuously introducing new products, right? So if you take the broader aerospace and defense materials play, there is a lot that can be done, several things that we are working on. So I think that, is something that's a nuanced take that one would have to understand over a period of time.
No, we completely understand. And, it is a nuance that obviously we will understand even better as time progresses along. And, the history of this company is in public domain for people to, track as its listing journey continues. And just wanted to understand two things from you. You had earlier said that, in your aerospace business, the parachute material is something that you've been pioneers of or leaders in. Your contribution to massive, programs like Gaganyaan, etc., were fairly noted. What are the new areas where development is currently underway? And at what point do you expect some sort of breakthrough? And every time a breakthrough happens, what is the, sort of revenue share jump that we get from that breakthrough?
I think that's a great question. And that's actually at the heart of what the business is about. In the last couple of years, for example, we have had, major, breakthroughs and then, large business coming out on stealth solutions, right? Honestly, I cannot really expand more on that. Some of it is still developing. But on the stealth area, we have done very well. And that's something that we believe will continue to do well. Another couple of areas that we are working on is lighter than air materials and lightweight materials. So both of these work is going on. Both of these have linkages to aerospace and defense materials. And that's where we are hopeful we'll continue to see growth in the future. Again, timing of product development and approval is obviously there is an element of uncertainty around that.
All right, Ankur, just to clarify, the aspiration is that the net profit number could triple in the next 3 years. That would be fair, right?
Aspiration, for sure, but that's not the guidance that the management is committing to.
All right. We'll take it as an aspiration for now. You go, have a good day. Wishing you and the team all the very best. It would be a long, long journey to listing. And since you're listed now, we'll interact even more often. All the best. Have a good day. Catch up soon. And celebrate your listing today.
Appreciate the support, appreciate the kind words.
No problem. I'm just saying celebrate your listing today, but once you go back to your inbox, read what the brokerages are saying about you as well. And then maybe, get a fair idea of what the street is anticipating. So keep talking. And from Nigel and my side, we'll tell you, we will keep punching you for more and more and more on all sides, qualitative and quantitative from the shareholders' perspective.
Looking forward to on these exchanges. Thank you.
All right. Thank you. With that, we'll take a short break, come back, get you more on the markets and stock-specific action. Stay with us.
Welcome back. Let's focus on Hyundai Motor. The stock gets a bit of a boost from brokerage house BofA Securities. Sudarshan joins us to fill us in with all of those details. Sudarshan?
BofA Securities today has upgraded the Hyundai stock to buy and target prices increased to 2,400 rupees per share. It believes that new SUV cycle, export mix and margin repair that company might see, it may help company to post 29% EPS CAGR over FY 28-29 after 3 years of decline that company has seen. And new launches that company has made over the last few quarters, as per BofA Securities, those are underappreciated, and mid SUV plus compact e-SUV can add market share in the range of 1 to 1.5 percentage point, with potentially more from MPV hybrids post FY 27. It believes that there can be a recovery even on operating leverage front in H2 FY 27. Lastly, on valuation part, it believes that once the earnings rebound, the current valuation of 23x FY 28 PE ratio, now that can be reasonable, and that is one of the major factors why it has upgraded the stock.
All right, take that point, Sudarshan. That stock is up around 4% as we speak. In fact, as we speak, the market's doing extremely well as well, particularly on the mid-cap end of things. L&T Tech Services continues to extend its gains after its numbers. We have a lot of these chemical stocks buzzing as well. Aarti Industries, for one, has moved to the high point of trade. In the pharma space, we have Mankind, which has spiked to the high point of trade as well. So across the board, there are gains right now. 2,126 stocks in the green for about 800, which are in the red. With that, we're out of time on this edition of Chartbusters, but you don't go anywhere. From the team of Chartbusters, it's handing it over to the team of Trading Hour, which comes up after this short break. From Nigel and me, thank you for watching. Good morning, hello and welcome. You're watching us here on Trading Hour. We come to you live from the CNBC TV 18 Motilal Oswal studio. I'm Mangalam Malu, with me Hormaz Fatakia, as well as Ritu Singh joins us from Bangalore. Looking decent for the market, up around 135 points for the frontline index. The Nifty doing well. The one thing that we'll be tracking as we move along today's trading session is obviously how the IT pack performs from the day's low. We've seen recovery already. If it continues to ameliorate from here on, and perhaps at some point move into the green, we'll see further support coming in for the frontline index. While we monitor the macros, the Nifty fair well away from the 24,000 mark, which is a good thing. Hi, Ritu.
Hi, good morning, Mangalam. Welcome back to the show, and good morning to you as well, Hormaz. Looking good for the markets for now, holding up above that 24,100 mark. The ITS, that's one index we'll keep our eye out on. For the macros as well, it's a tough setup. You have the crude hovering around 85. You have rupee, which remains above 96. But that said, look at the breadth of the market. You have almost 2.5 stocks that are, or rather, you have more than 2,000 stocks that are advancing for about 834 stocks that are declining on the National Stock Exchange. The volatility index also, pull that up as well, 13.1. That's where it's at. The FMCG pack is seeing some weakness, but what's doing relatively better is the banking pack, trading with gains of about 570 points, and the PSU banking pack in particular doing pretty well today. But as always, let's put the spotlight on individual movers and shakers, and Hormaz is here with that list.
Well, it's been a fairly resilient week for the markets, make no mistake about that. And even as the index was down 150 yesterday, it's up almost a similar quantum in today's session. So we have almost reclaimed everything that we had lost in yesterday's trade. The Nifty is back around that 24,200 mark, nearing that 24,250, 350 supply zone. That is going to be the next important level to watch. We have one more expiry coming up tomorrow. That is something that you'll keep an eye out on. As you mentioned, the Nifty Bank, well, it had closed below the 57,500 mark yesterday. Of course, not for too long. Back above 58,000 today. Bulls will be happy looking at that screen. 600 points higher on the Nifty Bank, and that is the index that has been instrumental in ensuring that the Nifty is managing to hold on to that 24,200 level, at least as of now. And of course, the recovery in the IT names as well. Oil prices remain where they are. There has been no significant movement there as well. 85.50 is where Brent continues to trade at, even after Donald Trump went back on his 20% toll promise. But of course, that remains another key monitorable. Earnings are now going to be coming in thick and fast, picks up pace as the week goes by. And look at the divergent reactions today on Tata Elxsi down 5%, but LTTS is up 9% now. Another positive earnings reaction. And Aditya Birla Money, among the top losers on the small cap index today, 8.5% lower after its results. You take a look at the newsmakers. Ather Energy is now having a market cap in excess of 50,000 crore rupees at its intraday high. Of course, it's come off slightly, still around about 7% higher. Philatex India, of course, the India-UK FTA taking effect, 10.5% to that one. KEC International after an order win, and Hyundai Motors after an upgrade that came in earlier in the day from BOFA, the stock doing well for itself. Two stocks extending their gains today. Both of them saw double-digit gains in yesterday's trade. Both of them are seeing double-digit gains in today's session as well. Nuvoco Vistas is up 11% now. Another strong move after its quarterly results earlier in the week, and Landmark Cars came out with its business update yesterday afternoon, and since then it's been one-way traffic for that stock as well. Look at the PSU banks, as Ritu was highlighting. Every single constituent of the PSU bank index is trading with gains coming in anywhere between 1.5% to 2.5%. And lastly, stocks at 52-week highs today. Look at Neogen Chemicals, that's one that's doing well. Chemical stocks, Sonal spoke about them yesterday, 7% higher on Neogen. Carousel, a positive brokerage note coming in, and some good moves on a lot of these small finance banks as well, Equitas and Tamil Nadu Mercantile.
Take that point, Hormaz. Thanks a lot for that. In fact, those are a bunch of stocks which are buzzing around. A lot of the real estate pack as well has found its favor once again. So Signature Global for one, decent update coming in. That stock up around 7%. We are seeing, jewelry stocks continue to do well. And the Nuvoco results have actually caused a flutter among all the cement stocks today. Nuvoco for the second day running has gained. So it's up around 20% for this week. But look at, the other cement names. Ultratech is obviously doing extremely well with a 2.5% gain. And in the broader markets, you have a lot of the cement stocks which are buzzing around, the likes of Dalmia Bharat, ACC, Ambuja, and the likes. So we'll monitor this space and more as we go along, and take a short break for now. On the other side, we have Manisha Gupta joining in with all the commodities action.
Welcome back. India's landmark trade agreement with the UK has come into effect today, paving the way for duty-free access to 99% of Indian exports while lowering the tariffs on products like whiskey and luxury cars. Abhimanyu joins us now with all of the details on the significance of this deal.
The India-UK trade deal coming into force aims to boost bilateral trade to over $120 billion by 2030. The average tariffs on UK's exports to India will drop from 15% to 3%, and duty-free access will be granted to over 99% of India's exports to the United Kingdom. The Double Contribution Convention, or the DCC, will save over $500 million a year for Indian working professionals currently employed in the United Kingdom. High export growth is expected in sectors like textiles, footwear, processed foods, cereals, marine products, automobiles, and machinery. Also, India's export share in the total imports of United Kingdom was just 1.6% in 2025, which indicates a huge potential for overall growth in exports. Now, for context, in 2025, the UK had imported goods worth $928 billion from the world, but had only imported goods worth $15.2 billion from India. Also, cars like Aston Martin, Bentley, JLR, McLaren and Rolls-Royce are set to get cheaper in India as import duty will be cut in India on 3.78 lakh conventional engine passenger cars from UK from 110% to 10% over a period of 15 years. Now, the duty cuts on cars will be spaced out over a period of 15 years and India is expected to have over 1 crore cars being sold at that point of time. Also, no duty cuts will be given by India in the first 5 years of the trade pact for British EVs, hybrids and hydrogen-powered vehicles priced below 40,000 British pounds to protect the mass market in India. India is also slated to cut the current 150% import duty on UK's whiskey and gin to 75% immediately, and gradually it will be dropped to 40% in the 10th year of the deal. Now, the duty cuts are expected to increase overall FDI in the liquor sector and bring British expertise in spirit making and quality control. Also, no duty concessions will be given by India on optical fibers, bundles and cables, smartphones, diamond, silver, TV camera tubes, base stations and plastics. India also reserves the right to retaliate in case a carbon tax is imposed in future and it impacts exports adversely.
Abhimanyu, thank you for that update there. Since we are on this subject, plenty of sectors and stocks also get impacted because of this, and Sudarshan is here to take us through just that. Sudarshan.
So over the last few months, India has signed FTAs with several countries, and one of those is United Kingdom, and that FTA between India and UK comes into effect today. So what exactly it does? It increases annual bilateral trade between India and UK by more than $100 billion. Also, it includes tariff cuts, improved mobility and market access guarantees. Average tariff of UK imports will now drop to around 3% from the current tariff level of around 15%, and 99% of exports to the UK will now enjoy zero duty access. So now talking about the sector, first sector that can be impacted positively is auto sector. So India is offered concessions on large ICE vehicles, or say petrol and diesel vehicles, and also EVs in the higher price range. No concessions to electric, hybrid and hydrogen vehicles for the first 5 years of the FTA. In EVs, market access for the vehicles that cost more than 80,000 pounds, and concessions and quotas on ICE vehicles include 3,000cc petrol and 2,500cc diesel vehicles. Some of the major stocks that can be impacted positively are Tata Motors passenger vehicle and also to an extent Mahindra and Mahindra. Coming to the next sector, that is the textile, duty-free access for 99% of India's apparel and textile exports, and some of the stocks that can be in the focus: Welspun Living, Gokaldas Exports and KPR Mills. Coming to leather and footwear, FTA eliminates tariff on nearly 100% of Indian leather and footwear exports. Marine products and food sector will be impacted positively as well. It eliminates tariff on over 95% of agri, marine and processed food exports. Alcobev sector that has been buzzing on this FTA news over the last few months. So India will reduce import duties on UK whiskey and gin. Duty will come down to 75% from 150% immediately and to 40% after 10 years. Last one is gems and jewelry sector. India's exports to UK for this sector is at $941 million, and UK imports $3 billion worth of jewelry annually, and India's exports are expected to double in 2 to 3 years once this FTA comes into effect. That's basically today, and both these countries are estimating a big surge in annual bilateral trade.
Take that point, Sudarshan. Thanks a lot for that. So those are a bunch of stocks which are on our radar. But the stock that is buzzing around, up around 9% right now, is L&T Tech Services, extending its gains on the back of steady quarterly results. Let's go across to Rima for more. Rima.
So LTTS is showing recovery in both revenues and margins, and that's what the street likes, and the share is getting rewarded for that. The company's revenue growth came in at 1.5%. Margins expanded 50 basis points quarter on quarter. In the conference call, management spoke about growth being better from here on. They reiterated that by Q4 FY27, that's the upcoming March quarter, EBIT margins will be mid-16%. The reason, why they expect growth to pick up is they also said that some of these large deals got pushed over from Q1 into Q2. They also reiterated their 5-year guidance, 13 to 15% revenue growth CAGR, EBIT margins in 16 to 17%. Now, Motilal Oswal estimates expects a very sharp EPS growth in the company. So according to them, the FY27 EPS growth should be 19%, followed by a 14% EPS growth. So if you go by their EPS estimates, stock is trading at 21 times. ISEC today has upgraded LTTS to an add, raised the target price to 3,590. But some of the analysts want to see stability in the performance, continued delivery, which is why JP Morgan and Nomura have a hold call.
All right, before we move forward, just look at Patanjali Foods. That stock has been on a tear downwards from the start of trade. And it moved into low single digits, from there moved into low double digits, and now it's down 15%. It's a big move, and it's an F&O counter, so I'm obviously, looking at some data out here as well. The volumes are, phenomenally high as well. 13, 14 times traded volumes on Patanjali Foods as against what we've seen in the last few trading sessions. And looking at some of the activity in the F&O space as well, it's a big jump that we're seeing in the open interest on Patanjali Foods. And as we speak, it's just the open interest is up 18.5%. Big volumes out there. Change in open interest also fairly high. And now the stock is cutting lower levels, like a hot knife through butter. I'm trying to figure out what the fundamental reason for this has to be. Turns out there is none. We can't see any, update coming in from any brokerage or any update that the company has given. In fact, if anything, their first quarter update also wasn't particularly bad. So that's what I'm looking at in terms of Patanjali Foods. It's a big gash that we've seen from its peak. It's corrected about 40-45%, but a large part of the cut has happened just today. We'll try and get more details on it, but now looks like a stray, big volume move, further exacerbated by the fact that it's an F&O stock, so down about 15%.
The biggest single day fall since June of 2024 for Patanjali Foods. The fact that the Lok Sabha election results day, the 4th of June, is the kind of move that you're seeing now, 15% lower on Patanjali Foods. You get you more details as they emerge. But going back to earnings reactions, Tata Elxsi delivered a margin miss in the April to June quarter. The stock is also reacting equally negatively to that. Let's go across to Rima, who's back with us to get all the numbers.
So for Tata Elxsi, in the current quarter, the problem is a very sharp margin deterioration. EBITDA margins down 340 basis points quarter on quarter as the company had to spend on large deal transitions, sales hirings in the US, subcontracting development. But there is a structural problem that Kotak also highlights. And they're saying the company underinvested in its sales engine and is now spending to build it. And the company's margins over the last couple of years have been coming down. In FY22, in the heydays of digital transformation boom, post-COVID, margins were 30% plus. In the current quarter, margins came down to 21.2%. And it's not that margins will immediately recover. Kotak highlights for FY27, their margin estimate is at 21.2%, which means lower than what they did last year, and only then the recovery starts. So Q1 was a big sharp margin contraction. In Q2, the company has a wage hike impact, so that will also hurt margins. Only it's in Q3 that we will see some recovery. And the other problem is that one of their revenue drivers, that's the automotive segment, has also been slowing down. Remember, KPIT Tech had also issued a profit warning. And if you look at the transportation segment of LTTS, on a quarter-on-quarter basis, things have been slow. And that's because large global automotive companies, especially European, they've been slowing down on their R&D spend because the situation is still unclear. There's aggressive competition coming in from Chinese companies, so many of them have paused on new development plans. Now, the stock, assuming an FY28 EPS of about 140 rupees, is trading at about 26 times. So it's still more expensive compared to these larger service companies.
Rima, thanks very much for bringing us that update. We'll slip into a short break, but when we return, we'll get you more on market technicals with Vinay Rajani of HDFC Securities. Also get his top trading ideas. Welcome back. Let's get you all of the action from the commodity space. You had Brent crude prices holding above $85 a barrel after Donald Trump threatened additional military strikes on Iran after reinstating a blockade against Tehran in the Strait of Hormuz. Manisha Gupta joins us now for a quick check on all the action there.
Well, thank you so much for that. It has been a whirlwind of a week, really, because we're looking at nearly 15% of gains come in for the crude oil prices, holding steadily above 85. Yesterday, at one point in time, we did see $88 a barrel come in the New York session as well. Well, as you said, the strength comes in as U.S. is threatening a multi-day campaign, and we've seen almost 4 days of attacks from U.S. on Iran already. The U.S. also has warned to attack on Iran power plants and bridges next week if Iran does not come to the negotiating table. That is a premium that the markets also are working with. And while, of course, U.S. has dropped the plan to charge 20% on cargo to all the vessels that are passing Strait of Hormuz, the U.S. has said that the Gulf countries have promised to invest in U.S. and that is something that the street will, of course, keep an eye on as well. So while the crude price is trading firm, with the markets believing that $70, which has been a near-term support, is the support to watch out for. On the higher side, crude perhaps is headed to $90 and beyond as well, if this just about continues. While the crude oil prices have seen some gains, the gold and silver prices actually have been under pressure. But today is the day that we are looking at some support coming for this one as well, and that is because the U.S. inflation data not just has it come in below the market expectation, but it is come in lower on a month-on-month basis as well, and that clearly has been a bit of a support into the markets there. The dollar index is holding around 101, below 101, and that also is kind of supportive into the markets. But it also has to do with the Fed's chair, Kevin Warsh's statement to the testimony to Congress, where he reiterated about restoring price stability. That is where the markets are taking cues from as well. Gold and silver, in the meanwhile, while have seen gains in the New York session yesterday, early in Asian markets right now, we're looking at some pressure coming back there.
Manisha, thank you for that update there. Well, 130 points higher on the index right now. marginally off the highs, if you could call it that, ever so slightly. But of course, still holding on to gains, and the fact that the broader markets is seeing a very, very strong stock-specific action. Vinay Rajani of HDFC Securities is now joining in for a quick chart check and some trading ideas as well. Vinay, good morning. Thank you for taking out time. Is still struggling at that 24,250, 24,300 zone on the index. Even though we are doing well today, that is one level that is still finding a lot of resistance. Do you believe that the index has some strength to cross that level by the end of the week? That, and of course your stock ideas for the morning.
Yeah, so good morning. So yes, 24,300 is a crucial resistance for the Nifty, and Nifty has been into a complete consolidation. On the lower side. It is finding support near its 20 days and 50 days EMA. So yes, it is a complete consolidation, but the way small caps have bounced back today, that is a very good sign. So yesterday we saw that some sort of profit booking was seen in the small cap, mid cap and micro cap indices, but today they have bounced back nicely. Small cap index is up by more than 1% today. So that is a good sign, and that gives us the impression that in the ultimately we are going to break out on the higher side only. So 24,300 definitely for Nifty traders is a key resistance above which we can see some bullish momentum coming back to the market. And the 8th July low was 23,800. Where we have already we have also seen some put writing happening. So 23,800 is a crucial support positionally. So unless we see a level below that, we have a hope that we will break out on the higher side only. And since we are getting good opportunities in these broader markets, it is good to have more exposures in the trading towards that particular space, and we can generate some alpha from that. So yes, so stock specific, sector specific bullishness is there, and we need to find opportunities there only. So ultimately we are expecting market to break out on the higher side only.
So Vinay, what would be your top stock picks for the day?
Yeah, so today I can see some stocks like Gravita India, so which broke out last week, and some sort of profit booking was there for last two sessions. Today again it is bouncing back. Nice technical setup is there. Weekly chart. On weekly chart there is a downward sloping trend and breakout, and looks very strong on the positional chart. So Gravita India around 18,401 can go long. I would suggest a trading stop loss at 1810. On the upside, I'm expecting a target at 1890. The second stock is from the pharma space, that is Alembic Pharma. The NSE code is APL Limited. That is looking good to me, and after some consolidation, the stock has broken out. So seems very good opportunity for the traders to go long here. Around 841 can go long. 825 should be the trading stop loss. On the upside, I'm expecting a target of 870 to 875.
All right, Vinay, thank you so much for joining in and giving us your call on the markets as well as individual stocks. We'll take a short break, come back, discuss market fundamentals. Nitin Raheja from Julius Baer joins in. Welcome back. Look at a couple of stocks right now. We do have Tata Elxsi, which is currently at the lower end of trade. Oil India as well. Now, it's surprising that Brent prices are still holding around $85 per barrel. And despite that, we are seeing some bit of sell-off in a couple of these upstream oil companies. And if anything, we're actually seeing some purchase in downstream companies. And we're seeing purchase in users of oil, companies. The likes of Interglobe Aviation, etc., is bouncing back as well. So let's see where that goes. And in the last few moments, we saw some bit of a sell-off in Dr. Reddy's as well. That stock has moved to the low point of trade. But the decline in Patanjali Foods continues. It's down about 15% odd. Cyient is the other one, which is currently at the low point of trade. And in the broader markets, even though there are more than twice as number of stocks which are advancing versus the number of stocks which are declining, we've seen a bit of a gash on a couple of these names like JSW Infra, etc. Physicswala is also moved to the low point of trade, and Bajaj Consumer, for the third straight session post its numbers, continues to decline, currently sitting with a cut of almost 2.5%. But let's shift focus to the RBI, which has proposed a new set of norms for big stake acquisitions in banks. Ritu joins in with more. Ritu.
Well, that's right. The Reserve Bank of India has put out this draft, which could make life easier for large institutional investors that want to hold, bigger stakes in banks. So under the existing rules, any large investor, say a mutual fund or an insurer, anyone basically crossing 5% ownership in a bank will need RBI's prior approval. And even if that holding ever dips below 5% and they want to go back up again, they again have to apply to RBI for that specific node. But now RBI wants to ease that selectively. So the draft proposes this one-time approval route specifically for regulated mutual funds, insurers and pension funds, and they are being classified as qualifying personals as a new category, and importantly, they cannot be part of the bank's promoter group to be eligible. Now, once RBI clears them, they will not need repeat approvals for subsequent stake increases up to 10% as long as they stay within the conditions that have been set by RBI. Now, there is a catch. The approval is not going to be unconditional. Ultimately, of course, RBI has the say, and banks will also get to weigh in with their formal comments before RBI's approval is granted. And even investors will have to flag any move in their shareholding above or below that 5% mark to RBI within just 1 day of the change, so that there is continuous monitoring, which doesn't get diluted, even though the process gets easier. Now, RBI has also made it clear that portfolio managers are now not going to be treated as indirect stake acquirers so long as the client owns the shares, holds the voting rights, and the manager is only giving non-binding advice. Remember, this is only a draft. Comments have been invited by early August, only after which the final directions could be issued.
All right, Ritu, that was, of course, the new RBI norms. Numbers from Grow at the bottom of your screens. Profits are up 7% to 735 crores. So numbers have started to trickle in as well. We'll get you more on that as more numbers get flashed. So 7% higher on the profitability front. Well, revenues are largely flat on a sequential basis. No major change there. The stock, up around 3% as of now. Still more than 100% higher than its issue price of 100 rupees. But there's an interesting note that Jefferies has put out on PSU banks. They are doing well, but the brokerage is saying that wage hikes could be the next major earnings overhang for the sector. Ritu, tell us more on that.
That's right. Jefferies is turning a bit cautious on the PSU banking stock, saying these wage hikes can be the next overhang for the sector. Now, in its last report, it says, the next industry-wide wage settlement, which is due by November of next year, that could weigh on the profitability, which is why it continues to prefer private banks over the PSU lenders. Now, they expect the upcoming revision to be broadly in line with the previous settlement, which was 17%. And they say it's because there's similar inflation levels and stronger profitability at PSU banks. Now, in the last wage settlement, provisions for the wage hike, they accounted for almost 12% of the staff cost for these banks. So if you look at the numbers between FY23 and 25, overall, PSU bank staff costs rose by 22%, while SBI stood out with a much lower increase of 12%, and PNB saw the sharpest increase at 44%. Now, looking ahead, Jeffrey says staff costs across these PSU banks will rise by another 19% during FY27 to 29, and they estimate that even a 5% increase in staff costs can shave off 3 to 5% of the FY28 pre-tax profit for all of the public sector banks, with SBI better placed than the rest. They expect PNB to be the most sensitive to these staff cost increases on the other hand. Now, they also warned that the shift to expected credit loss or ECL from FY28, because that could raise credit costs by another 10 basis points. Again, Jefferies estimates that a 10% increase in credit costs can reduce the sector-wide FY28 pre-tax profit by about 2%, and the hit will be harder again for PSU banks, closer to 3%. So they believe private banks are largely insulated from this risk, of course, from the wage hike. In fact, if PSU banks are forced to reprice loans to offset this higher staff cost and credit cost, it could also improve the growth and profitability for private lenders. They retain SBI as the top PSU bank pick.
All right, take that point, Ritu. Thanks a lot for that. PSU banks are the top pick as per Jefferies. That sector doing extremely well in today's trading session. Let's welcome Nitin Raheja of Julius Baer to join us to discuss market fundamentals, his top sectoral picks as well. Nitin, since Ritu spoke about the PSU banks itself, and the theme has been positive financials, I just wanted your thoughts on, whether you like financials at the current juncture, and what are your thoughts on PSU banks? A wage revision, if that comes, will that be positive?
Well, yes, we do think financials as a sector looks well poised. There are a couple of reasons why we believe so. One of them is that if you look at the cycle where we are in, I think the interest rate cut cycle is largely behind. With inflation being where it is, it looks very difficult for further rate cuts. And banks normally are, suffer initially as you have a rate cut cycle. From here on, it looks like at least, if not going up, the rate cycle is sort of bottomed out, which is good because that means the NIM compression that banks saw is behind them. The second element is that credit growth, as nominal GDP this year is expected to be more robust, more closer to 11.5%. I think credit growth is going to be extremely strong. So, both from a volume as well as a margin perspective, it works out well. Credit costs are well under control. So I think, and because of the aggressive selling by foreigners, valuations have come down to, multi-decade lows. So we like the entire sector. Within that, we like the private banks much, much better. The PSU banks have had a big rally last year based on a valuation which was very cheap and then has corrected upwards. In the short term, we think the impact of this wage cost the PSU banks are definitely going to be affected from their profit growth perspective. So our preference is for private banks.
Got that. Nitin, what about the IT pack? I mean, with all the correction that's happened, and today again, the pack remains under pressure. There's just, with the earnings that have come in as well, it's been a bit of a mixed pack. Tata Elxsi doing relatively better. The large cap, of course, Infosys yet to report. Wipro tomorrow. TCS has been sort of decent set as well. What's your expectations? Are the valuations now looking attractive, or do you see a further downside?
Look, we looked at the last 20 years in terms of how IT has traded. We, prior to getting into this cycle, IT was trading anywhere around 20, 21 times earnings, especially the large cap ITs, and the mid cap IT was trading far higher. If you look at 20 years, and whenever there has been periods of uncertainty, whether it was in 2001 when the last technology bubble burst, whether it was 2008-9, whether it was the taper tantrum of 13-14, IT has historically come down to valuations as low as 11, 12 times earnings. As we talk, we are trading around 14, 15 times earnings. So is there a potential for IT to come down in terms of historically low valuation? Answer is yes. You will see, however, on a longer term basis, I think more than AI, I think it's the threat of GCCs which is impacting IT. And that is a long-term story that is playing itself out. AI is going to have a revenue deflationary impact on IT. There is no question about it. I think, but IT will come back as you see the rollout of AI applications, as more and more people, adopt AI. You will need the IT companies and they will play their part, although with a revenue deflationary impact. So we do think, while IT companies are trading at potential dividend yields of 5% and 6%, there could be a downside possible only because in the historic cycle, they have traded at 11, 12 times. So could it go there? Answer is possibly. But I think the worst from a derating perspective, it's possibly done with.
Right. Nitin, you spoke about IT. The other defensive that generally gets spoken about in the same parlance is the pharma. And, the index, the pharma stocks have done fairly well in comparison to what IT has done this time around. There has been, if you can call that a sector rotation, most of these pharma names are at 52-week highs as well. The numbers are starting to show up. And a lot of these mid-sized pharma names have done even better. The contract manufacturers in particular, say Laurus, for example. Where does your preference lie in the pharma space? Larger pharma names, smaller pharma names, contract manufacturers, generic players, or maybe even the API suppliers?
So we think the opportunity resides across the sector. We think the generic guys are doing well because of a couple of large molecules which are presenting opportunities over the next few years. And commensurate to that, I think the API guys are also going to do benefit because of that. And, of course, the CDMO guys tend to be lumpy, volatile, but clearly things are moving in their favor. We think as a whole, even domestic pharma is something that we like. So we think as a sector as a whole, we find opportunities playing themselves out. So we are very positive on pharma.
Got that. Nitin, any thoughts on the renewable space? I mean, especially with that large Aditya Birla Shell deal getting announced, what sort of opportunity do you see in that sector? Any particular names to stand out?
From a renewable perspective, while we think it's very great from an India perspective, but, we are not completely convinced on the business economics because a lot of the renewable players, especially if you look at the equipment manufacturers, do well because of tariff barriers that the government has imposed from a China perspective and so on and so forth. And we generally don't like companies who are have tariff barriers helping them in their business. That has played out well for us because from the time of listing of a lot of these companies, valuations have come off. They all listed at 20 plus multiples, and now they're trading in the mid-teen multiples. So we've seen valuation corrections take place out there. We think they will continue to do well in terms of sector. But wherever there is artificial trade barriers put up, we are not great fans of that sector, and we do not generally invest in those kind of businesses. On the utilities part, I think the challenge for the utilities is going to be the fact that there is a huge amount of supply of solar that is coming into the system and will come over the next few years because it's the way. But I think we would rather play this whole sector through the transmission grid and all the investments that are happening in the transmission grid.
All right, Nitin, thank you so much for joining in and giving us your calls. We'll obviously have a conversation with you at a later date as well, post the earnings season, perhaps get a sense of how that is panning out. Let's also look at the trends coming in from the F&O space right now. There's been a bit of a bounce back on the market, no two ways about that. 24,200 on the frontline index. The Nifty Bank doing extremely well. The mid-cap index a step better. If you look at the small-cap index, that's even a shade better. And all of that is actually, visible in the way the advanced decline chart has moved. It's more advances, way more advances than the number of stocks which are declining to the tune of almost 2:1. And for the Nifty, however, we are seeing some bit of congestion at higher levels, which explains why at the 24,200 mark, there is a jostle between both bulls and bears. The 24,200 call and the 24,200 put comes up for you. 24,200 call has a premium of 150 rupees, telling you as we move towards 24,350, there is likely to be some supply which emanates, and that's something that we've seen earlier as well. And if you look at the 24,200 put, that has a premium of 150 rupees, telling you that there is support around the 24,050 mark. For those who are writing both the 24,000 call and the 24,200 put, they are playing for a 300-point range on either side. So broaden that range out for the one that expires next Tuesday. You have 23,900 at the lower level to about 24,500 at the upper level. So that's a 600-point range that the bulls and bears are looking at. In terms of individual stocks, a lot of long positions added on Hyundai Motors. Sudarshan has been speaking about a positive brokerage note out there. Fresh shots, Patanjali. We'll discuss more of that later in the show. And we have shots which are stuck on the wrong side on ABB, and that stock is flying even as shorts are covering their positions out there. With that, we take a short break, come back on the other side. We decode the story of our defenders stock in the mid-cap spotlight, MTAR Technologies. Welcome back. The stock that is buzzing right now at the high point of trade is Pidilite. There is a note this morning that has come in from HSBC. They've initiated coverage. They have a target price of near 1900 on Pidilite. That stock's moved higher, and they like the company's distribution network, brand strength, broad portfolio. Basically, the Fevicol moat that they really like and the strategic advantage that these companies have. Speaking about strategic advantage and moats, we have to speak about the defense sector, and this is our segment, Defenders of India. Every defense champion has an ecosystem behind it. MTAR Tech is one of those key enablers, manufacturing precision components for India's defense, aerospace and nuclear ambitions. A quick look at the company, its ownership profile, and all of that in our special segment, Defenders of India. Hormas.
Well, over the last half a decade, the one theme that has grabbed headlines, portfolios and attention, not just in India but across the globe, is defense. Now, in this special series, we'll bring to you companies who are now the defenders of our country. Featuring today is MTAR Tech, a stock that has nearly tripled in value already in 2026, is among the top gainers on the small cap index and is the top gainer on the defense index so far this year. MTAR Tech has been in operations for nearly 6 decades, catering to civil nuclear power, fuel cells, hydropower, and even aerospace and defense as business verticals. The company is known for developing complex mechanical subsystems like liquid propulsion engines, cryogenic upper stage subsystems, airframes, gearboxes, and a lot more. Now, to simplify these tongue twisters, MTAR Tech's products are used in ISRO's PSLV and GSLV launch vehicles, in surface-to-surface missiles, and Spycom satellites for our armed forces as well. Now, the company boasts of an impressive clientele, and they include the likes of GE Power, Bloom Energy, Weatherford, Thales, and many others, those that rely on MTAR for products to complete their finished products. Now, Bloom Energy is MTAR's biggest customer. Almost 55 to 65% of the company's top line comes from Bloom. Yes, revenue concentration is a concern, but the management does not mind that. Bloom has in fact raised its guidance for the year as well, meaning more potential work for MTAR Tech. And it supplies critical components to Bloom, and almost its entire clean energy order book comes from Bloom Energy. Now, at the end of the March quarter, fuel cells, Hydel and others, this is the segment that caters to Bloom Energy. It contributed to more than half of the overall 2581 crore order book. Civil nuclear power contributed to a quarter, while the rest came from aerospace and defense and other products. Now, this fuel cell, Hydel and others contributed to nearly 70% of its overall top line too in FY26. The rest had a smaller contribution to that 877 crore top line that the company reported for the full year. Now, the aerospace business, though, is scaling up. It has bagged an order for the main landing gear support under the ACMA program, and is also participating in various other tenders of structural assemblies for various fighter jet programs. MTAR is also expecting significant orders for actuator assemblies for the LCA Tejas Mark 1A. Now, not just aerospace, MTAR's other verticals are also in expansion mode. It is setting up a greenfield facility for its oil and gas clients, which is likely to be commissioned in September of this year. And the numbers are showing as well. MTAR sales have grown at a 29% CAGR over the last 5 years, while its stock price has grown at a 37% CAGR. Now, considering the sharp run-up in stock price, promoters sold some minor stake in the company during the June quarter, but they still hold over 30%. Retail has over 20%, while funds have 23.5%. The stock, though, is down around 23% from its record high levels, and most of that fall has come only recently, and that has pushed the indexes to put the stock under the additional surveillance measures framework. Now, under stage 4 of the ASM, you need to pay 100% margin up front. The daily price band is capped at 5%, and no intraday trades, only delivery. Now, despite this correction, MTAR is still a lot more expensive compared to its peers like Bharat Dynamics, BEL, and even Premier Energies if you go into the clean energy business, and even Vari for that matter. Now, that's MTAR Tech for you. The stock may be seeing some correction, but the management is bullish as ever. It has raised its revenue growth guidance for the year. It sees order book growing to 5,000 crores by the end of FY27, and while it sees the first half of this year to be strong, it sees the second half to be stronger. The defender is surely on the offense.
Indeed, the defender is surely on the offense. In fact, earlier we spoke with Deepak Krishnan, who's the analyst at Kotak Institutional Equities, and here's what he said on the defense sector.
It's more on valuations. We don't doubt the structural growth story, both the domestic optionality that is there, exports with Europe increasing GDP spend to 5% of defense of the NATO countries, as well as, drones, counter-drones sort of being a key growth driver. if you look at it historically, we've seen Indian companies, growing EBITDA in the 25-30% CAGR. We broadly think that sort of the range continues. But say if you look at forward multiples of Indian companies versus global peers, Indian companies are closer to 50 times 1 year forward versus global peers at roughly 40-50% lower. So it's primarily a call on valuation, but on the industry per se, we remain quite constructive. The market sort of changing. You're seeing, drones, counter drones, some new age technologies picking up, which were not historically there in the past, where you were largely focused on, say, aircrafts and big naval programs. So I would say the private sector share should keep on increasing. The newer areas, you will continue to see private sector gaining share. So probably I would say the next decade or so maybe belongs more to the private sector, with public sector holding steady in the areas that, they have natural forte or they have natural monopoly. So I would say incremental share moving towards private sector, more in the new age areas. Yeah, so I don't think near term, given the global situation, you're seeing wars across multiple geographies and continents. I think the spend is here to stay. As long as, if there is not, I wouldn't say even if there's fiscal pressure, probably defense is sort of one of the imperative areas. So maybe near term for the next 4 to 5 years, lesser probability that this spend really sort of comes off.
All right, let's step into a short break. On that note, we'll get you a lot more on the markets when we return.
Welcome back. Well, we are slightly off the highs of the day on the index, but what has stumbled or tumbled to the day's low is Patanjali Foods. And we just spoke about that a few minutes ago. It was down 15%, now down 19%, almost heading towards the 20% fall now on Patanjali. Mangalam, tell us more about what is the kind of data that you're picking up from Patanjali now.
The stock is at a 52-week low, a fresh 52-week low that we've seen. It's a big gash that we've seen. A 20% downtick, and as you had earlier pointed out on the show as well, is the biggest fall that we've seen intraday on the stock since June 4th, 2024. So it's over 2 years since when we've seen a fall this big on Patanjali Foods. And this has been backed by a lot of volumes as well. Today's volume so far is just the first half of trade. It's been 20 times 20-day average. There have been a lot of large trades as well. And if you look at it, it's an F&O counter. In the last revision, it was included in F&O. And as we speak, the open interest is up 3.14 crore shares, 60 lakh shares added as the stock has fallen about 20%, telling you that a lot of shorts have been built as well. If you look at, the activity on the exchanges, there's been no fundamental updates that have come by with high volumes. It only tells you that maybe there could be large players who are, perhaps active in the counter. And if you look at who owns what in Patanjali, you have promoters that own about 68% stake. Mutual funds own about 1.27% stake. In terms of institutions, we have LIC, which is 9.13%, GQG Partners, which is 2.89%. And this is data as of 30th June 2026. Now, if LIC's shareholding has been mapped over the last few quarters, it has stayed steady. But GQG itself has its stake in Patanjali coming down for the last 5 quarters. So June 2025, their stake was 4.56%, come down to 4.4%, 3.7%, and now as we speak, it's 2.89%. So maybe the inference is that if a large institution is active in this counter, it perhaps, as trend suggests, could well be GQG. So we'll obviously get more details on that one as well. But as far as, the management commentary is concerned and fundamentals are concerned, the last time the management joined us, less than a month ago, in fact, a couple of weeks ago, they said that delayed monsoon is likely to impact demand. But despite that, they will maintain their guidance on edible oils, and they are monitoring stress in rural demand for FMCG. So just to reiterate their guidance, FMCG business growth was 15%, foods portfolio growing between 8 to 10%. In oils, which EBITDA is a more important metric, they will maintain their margins between 2 to 4%. Volume growth in veg oils will remain in the ballpark of 3 to 5%. And for the full company, FY27 EBITDA growth target holds between 12 to 15%. And oil palm plantation, which is an annuity business for them, will continue to do about 50 to 70 crore in terms of EBITDA each year. So no major fundamental change that has been announced for the company. And the first quarter update has come by as well. But today's decline with high volumes appears that there could be some institutional activity which is taking place in the stock. So we'll monitor whether there are funds which are selling Patanjali Foods or not. As of now, down 19% today.
Just a small modification. Now that the stock is down 19%, it's now the biggest single day fall since January of 2020 for the stock. Now it's 19% lower on Patanjali Foods, extending its losses. Shifting focus to the macros now, the rupee had opened stronger, supported by softer than expected inflation. But Ritu is here with more on the macro signal. Ritu.
That's right, Hormaz. The rupee did open, stronger today against the dollar, and that was helped by the U.S. inflation data, which has eased some expectations of any immediate interest rate hike by the Federal Reserve, even though, these higher oil prices are continuing to weigh on the rupee. Currently, you have it around 96.19 against the greenback. Remember, it had hit an all-time low of 96.96 on the 28th of May before recovering slightly in the month of June, and now we're seeing this renewed pressure after oil prices moved up. For the oil prices, of course, they're extending their rally now for the third consecutive session, rising sharply thanks to what's happening in West Asia again. That is raising supply disruption fears, now at about 85.3 for the Brent, $97.67 a barrel for the NYMEX. The 10-year GSEC yields, they're hovering around 6.76%. That's about 3 basis points lower than what we saw yesterday. The movement is primarily driven by what's happening in oil prices and the currency as well. And the rising U.S. Treasury yields and that hawkish sentiment from the Federal Reserve officials that has also reduced the risk premium for emerging market debt. That's also weighing on the bond markets today. So that's as far as all the macro action is concerned. And on that note, Hormaz, Maglam and I take your leave on this edition of Trading Hour. Thanks very much for tuning in, but stay with us. Halftime report will take all the action forward.
Stocks perk up after Trump steps back on the Strait of Hormuz security fee. A soft US inflation print also aids the sentiment. Industrials and financials are the prominent gainers, while IT and utilities are the key drags.
L&T Technology Services climbs after pipping Q1 estimates and pointing to growth picking up, while Tata Elxsi slumps following a severe margin contraction on transition and on-site costs.
Hero Moto is looking to invest another 1,000 crores in Ether Energy via preferential issue. The investment comes on top of its existing 29.5% stake, which is worth over 14,500 crores in the two-wheeler EV player.
The India-UK trade agreement comes into effect today. The pact offered India preferred access for Indian textile footwear players, auto parts as well as food products, while British cars and premium spirits will get easier entry.
Hello and welcome to a halftime report live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Batran, with me Sonal Bhutra as well as Vinny Motiwala. Well, it is turning out to be a day where we are seeing some amount of upside. So we seem to have brushed off the concerns with regards to the higher crude prices. Remember, Brent hovering at around $85 per barrel, and separately the FII selling, though it is lesser than the day before. Nonetheless, so for the Nifty, we have the Nifty, which is at 24,186, and the Midcap index, which is managing to hold up with a gain of around 0.5%. Remember, yesterday the Bank Nifty was underperforming, but today it seems to be outperforming with a gain of around 1%. Let's see whether these levels sustain or not. Hi, girls.
Hey girls, good afternoon. As you pointed out, the markets are shrugging off any worries with respect to higher crude oil prices, continued geopolitical issues, and most of the reactions on a stock-specific basis is on the back of news updates, most importantly earnings. That is something I think the street is watching out for very closely. Rupee continues to be that 96 to the dollar. That is something which will continue to be a worry for the markets, and it has actually depreciated even further. So we'll be tracking that very closely. Appreciate it for now. But the Fed Bank Financial, that is on our radar. The financial space continues to do really well. So we do have Fed Bank, which is reacting to its numbers, up 8% in trade. We'll get more analysis on this one. There's a sharp spike on that one. So that is the stock that continues to be in focus. But it's the financials all the way, and a lot of sectoral movers in trade today.
Absolutely, a lot of sectoral movers. Earnings is what we'll keep an eye out on as well. While just a quick check in terms of the advance decline ratio, a bit more in the favor of advances versus declines in today's trading session. And a lot of moves that are coming in from the broader end of the market as well. Nuvoco, Vista, Ether Energy, Signature Global, all of them buzzing in trade. We'll talk about that through the show as well. So let's take you through what's on the show for you today. First up, we'll be putting the spotlight on the IT stocks as well. L&T Tech, Tata Elxsi, they are reacting to their Q1 earnings. We'll talk more in detail on that in our What's Trending segment. Then moving on, other buzzing stocks in trade today like Ultratech Cement, we have Just Dial, Hyundai Motors. We'll focus on all of that, and focus is also going to be on today's movers and shakers, which is KEC International as well as Nuvoco Vista. Why are they buzzing in trade? And as the world grapples with the supply shortage of critical minerals, we discuss with the management of Patriot Critical Minerals Corporation. So stay tuned in for that. We also have Maspe believes that it is the end of net 30 payments, and stable coins are here to stay. That's the word on the crypto front as well. So we'll take you through that conversation in our Crypto Corner segment today. But first up, we'll talk about the stocks that are moving around in the trading session as well. And let's go across to Vivek to take us through that. Vivek, afternoon.
Well, thank you so much for that. Well, the advance decline ratio very much in favor of the advances after the kind of sell-off that we saw yesterday. In terms of individual stocks, individual sectors, you can't look beyond the cement bank. After a long time, you're seeing most of the cement stocks doing very well in the session. And especially if you're looking at some of the names from or the mid-cap cement companies, they are the ones that are surging on very good volumes. Nuvoco Vistas, came out with its numbers, very encouraging set of numbers, and good commentary coming in there as well. Just Dial, remember, on the day of the results, that particular stock surged higher and hit the upper circuit, post which it's seen continuous upward movement today, up on good volumes, higher by almost another 3.7%. Hyundai Motors, this particular stock in focus on the back of the fact that Bofa Securities has gone ahead and upgraded the stock, higher by 3.5%, at least for the time being, ending the kind of underperformance that is seen. Aether Energy, this particular name, remember Hero MotoCorp, which is an existing shareholder, has said that they are planning to invest another 1,000 crore in this particular name, higher by 8.5%. And the new listing clearly stands out. Kusumgarh, extremely strong set, almost 46% higher. We had the management earlier, and they say that the earnings should rebound from this year onwards. On the other hand, not too many laggards, but you can't look beyond Patanjali. Still awaiting on news developments on this particular name, but with the top F&O drag, very high volume sell-off now extending to over 17%. So again, very important to watch what is the development out here. Mid-cap IT stocks, after the disappointment from Tata Elxsi and the overnight news flow, you're seeing quite a lot of sell-off over there. Names like Zensar, Sonata Software, Birlasoft, all of these names under a bit of pressure. And Delivery, one of the top drags in the F&O space, one of the company's arms are receiving a nod for registration as an NBFC. That particular name seeing a bit of profit booking. And lastly, JSW in front, higher volumes today, seeing a bit of profit booking at higher levels.
Okay, all right, Vivek, thanks very much for that. So those are all of the buzzing stocks that we're tracking. But Vinny, you're looking at KEC International. Tell us why.
Hi, so KEC International, we're keeping an eye out on this because we have an order win that's come in for the company, right? This order win is around a 1,200 crore approximately order win across businesses. So T&D business, that's a transmission and distribution business. They've secured orders across India, Middle East and America. Then this is renewables part is also seeing an order of around 200 plus megawatt of solar PV projects in Western India for existing clients and renowned private developers is what they're focusing on. We'll have the civil side also. They have secured orders on the civil front as well of 150 megawatt thermal power plants. What is that? The focus area coming in, and this is mainly in Eastern India. Now, YTD, what is the order book that stands for the company as of date now will be 5,200 crores is the order book. Do not forget, in the recent times we had on 29th of June, the announcement came in for the PGCIL, that's power grid orders, which they were not getting. And, they were excluded from that. Now they can participate in that as well. So that was something interesting when we spoke to them also. They highlighted positive signs coming in on that front and participating in those orders. So that's a positive trend that we'll keep an eye out on. And as of now, obviously, we're seeing in the last 5 days, the stock is up around 3 to 4%. And as of now, specifically today, the stock is up 3.6% as well.
All right, that's about KEC International. But we do have Biocon, which continues to be in focus, was a big gainer yesterday. And today, a lot of notes on the back of that big deal that we saw yesterday. Ekta, different opinions.
Well, yes, absolutely. So different opinions coming in from the likes of Bernstein as well as from DAM Capital. So I'll start with Bernstein, which has an underperformed rating and a target price of 326. On the block deal, what they've said is that Viatra's got a safe exit, but barely changes the company's earnings trajectory. Street optimism seems to price in resolution of financial stress and smoother succession. They believe that the innovation spend on Biocon's biologics and Syngene business is yet to convert to top line. Innovation spend is yet to convert into top line to support that $1 billion deleveraging on the balance sheet. Policy shifts also are lowering the competitive barriers, diluting the moat that protected the biosimilar franchise, according to Bernstein, and the company probably needs around 4 to 5 years to cross that $2 billion revenue threshold. Now, DAM Capital says they have a buy and a target price of 495 odd rupees, so they are bulls on Biocon. They've said that the Mylan exit removes a long-standing overhang on the stock. 3 other investors were issued shares as a part of restructuring. So some investors are expected to possibly monetize stake going forward, but timing is uncertain. Second half of FY26 was mixed, but the biosimilar business, according to them, has turned the corner. Meaningful strengthening in the biosimilar business is expected from the second half of FY27. The biosimilar business is expected to be driven by a scale-up of a couple of key biosimilars, including Aspart, and the biosimilar business is expected to be driven by the launch of Alferbercept as well within the biosimilar space. So they're expecting FY26 to 28, 15% revenue CAGR and 26 to 27% in terms of EBITDA margins is what DAM Capital is focusing on when it comes to Biocons. That stock in focus continues to be in the past couple of days.
Okay, Biocon is something we'll watch out for going forward as well. But on that note, we're going to step into a very short break. After the break, we'll come back and focus on the IT sector. So stay tuned in for that.
Welcome back. You're still tuned into Halftime Report, and it's the time for our What's Trending segment. And today we are focusing on the IT space. Shares of IBM fell 25% in a single day, marking its biggest single-day fall since 1968. The company states that clients have shifted spends away from software to purchase servers, chips ahead of expected price increases. So let's talk about our own markets. We do have two stocks which are on our radar. L&T Tech Services, which extended gains on the back of steady quarterly results. Let's go across to Rima for more details on this one. Rima.
So LTTS is showing recovery in both revenues and margins, and that's what the street likes, and the share is getting rewarded for that. The company's revenue growth came in at 1.5%. Margins expanded 50 basis points quarter on quarter. In the conference call, management spoke about growth being better from here on. They reiterated that by Q4 FY27, that's the upcoming March quarter, EBIT margins will be mid-16%. The reason, why they expect growth to pick up is they also said that some of these large deals got pushed over from Q1 into Q2. They also reiterated their 5-year guidance, 13 to 15% revenue growth CAGR, EBIT margins in 16 to 17%. Now, Motilal Oswal estimates expects a very sharp EPS growth in the company. So according to them, the FY27 EPS growth should be 19%, followed by a 14% EPS growth. So if you go by their EPS estimates, stock is trading at 21 times. ISEC today has upgraded LTTS to an add, raised the target price to 3,590. But some of the analysts want to see stability in the performance, continued delivery, which is why JP Morgan and Nomura have a hold call.
Okay, Rima, thanks so much for that. But, wait on, and Tata Elxsi, that also delivered its numbers, a miss in terms of margins in this Q1 FY27. Talk to us more about the numbers and what is it looking like now?
So for Tata Elxsi, in the current quarter, the problem is a very sharp margin deterioration. EBITDA margins down 340 basis points quarter on quarter as the company had to spend on large deal transitions, sales hirings in the US, subcontracting development. But there is a structural problem that Kotak also highlights. And they're saying the company underinvested in its sales engine and is now spending to build it. And the company's margins over the last couple of years have been coming down. In FY22, in the heydays of digital transformation boom, post-COVID, margins were 30% plus. In the current quarter, margins came down to 21.2%. And it's not that margins will immediately recover. Kotak highlights for FY27, their margin estimate is at 21.2%, which means lower than what they did last year, and only then the recovery starts. So Q1 was a big sharp margin contraction. In Q2, the company has a wage hike impact, so that will also hurt margins. Only it's in Q3 that we will see some recovery. And the other problem is that one of their revenue drivers, that's the automotive segment, has also been slowing down. Remember, KPIT Tech had also issued a profit warning. And if you look at the transportation segment of LTTS, on a quarter-on-quarter basis, things have been slow. And that's because large global automotive companies, especially European, they've been slowing down on their R&D spend because the situation is still unclear. There's aggressive competition coming in from Chinese companies. So many of them have paused on new development plans. Now, the stock, assuming an FY28 EPS of about 140 rupees, is trading at about 26 times. So it's still more expensive compared to these larger service companies.
Okay, all right, Rima, thanks very much for that. Well, before we get more perspective on the IT space, those are the Union Bank numbers which are flashing on your screen. Up 2.5%, 3% reacting to its numbers because it's a strong profit growth, which is coming at around 29.6%. NII also doesn't look too bad. It's up around 10% this quarter, with a gross NPA improvement, at least in terms of the ratios at this point in time, to 2.65 versus 2.82 on a sequential basis, and the net NPA at 0.47 versus 0.48. Let's wait by for the details, but as of now, prima facie, it looks like Union Bank has delivered a good set of numbers. We'll wait by to see what the provisions look like this quarter, as well as the operating profit this time, which could have possibly helped the net profit, which is up around 29% this time. But let's get back to the IT space then. Earlier, we did speak to G.V. Giri of IIFL Capital Services. Listen in to his views.
I think the Indian IT companies will reinvent themselves in some new form. But until such time, I would probably like to place my bets on the smaller IT companies like Persistent and Coforge. I think the 1Q results haven't really shown yet the signs of stress that the sector is going to see.
All right, that is the update coming in from the IT space. GV Giri likes the mid-cap space more than the large caps in the technology sector. Time for a break now. Ajit Mishra of Religare Broking will join in with some trading strategies on the other side. Stay tuned for that. Welcome back to Halftime Report on CNBC TV 18. We have more earnings coming in on the screens as well. We had Steel Strips that's reported its numbers, revenue up 27%. We're seeing EBITDA seeing a growth of around 34%. And 162 crores is what the EBITDA has come in at, a sharp spike in the stock once the numbers were reported. The stock is trading with gains of around 6.3% improvement overall. We're seeing a bit in terms of the operational performance of the company. As of now, the Nifty on that note also overall standing on at 24,190 levels. But let's get an update this afternoon in the world of F&O. Mangalam is here to take us through that. Afternoon, Mangalam.
Good afternoon. So the Nifty is, meandering around the 24,200 mark, and that's the kind of moves that we've seen. It's led by the Nifty Bank. We've seen some amelioration for the lows for the Nifty IT index as well. And the mid-cap index and the small-cap index are doing a shade better, and which is something that we can see in the advanced decline as well. Nearly twice the number of stocks which are in the green as against the number of stocks which are in the red right now. But because there's this jostle for space around the 24,200 mark, we have both the 24,200 call and the 24,200 put equally active. So those who are writing the 24,200 call, they're hoping for some supply to emanate at around that 24,300, 24,350 mark. But those who are writing the 24,200 put, they are expecting some support to come in at the 24,300 24,000 to 24,050 mark as well. And those who are writing both the 24,200 call and put are playing for a 300-point range on either side of 24,200, which gives you a broad range for the frontline index for next Tuesday between 23,900 to 24,500. So if you're looking at a broad range for options that expire next Tuesday, it's the Nifty positioning is between 23,900 to 24,500, whereas a narrower range would be 24,050 to about 24,350, thereabouts itself. A lot of individual stocks are robust. We'll talk about that as we move forward.
Okay, all right, Mangalam, thanks very much for that. So that's the setup of the F&O space. We have Dharmesh Shah of ICICI Securities joining in to discuss the technicals of the market this afternoon. Then Dharmesh, hi, welcome to the show. Well, for the Nifty, it's managing to be quite resilient in today's trading session. What would your call be on the index as well as specific stocks?
Yeah, so good afternoon. Absolutely, I think so the way the market seems to be behaving, if you look at the market for last 3 weeks, we have been trading in this range of 23,800 to 24,500, 600 range. We believe, I think the market is likely to continue this consolidation range going forward also. At 24,600, again at 200-day extension moving average remains to be the very strong resistance for the Nifty. The one interesting thing to be highlighting this current trading last 3 weeks has been that if you look at the market where the percentage of the stocks trading about the 200-day moving average of total CNX 500 has improved from 43% to 53%. So this shows that there is something of broad-based buying happening in the market, and it's clearly visible in the midcaps and the small caps, where the midcaps already made a new high, and the small caps is just away 2.5% from the lifetime high. We believe stock-specific actions likely to continue going forward with 23,800 being again a 50-day moving average. Remains to be the very strong support for the Nifty. And any dip towards 23,900 to 800 should be looked as a buying opportunity for a target of 24,500 on the Nifty.
Okay,
as far as stock specific is concerned, yes, we will be constructive, positive for the NBFC space again, where Shriram Finance is something one which we like from the current levels. If you look at the weekly as well as the monthly chart for Shriram, I think so the stock seems to be on the verge of a breakout, and it looks like, I think, with the strong sense of volumes, we believe the stock is likely to head towards 1134, even a stop loss of 1,010. Apart from Shriram Finance, again, on the chemical space side, we like Aarti Industries. Now, if you look at the chart from the weekly perspective, it seems to be on the verge of a breakout after the 8 weeks of consolidation in this range of 500 to 420, 440, 425. It looks to be on the verge of a breakout above 500 with strong sorts of volumes today. Look for a target of around 545 with a stop loss of 483. So Shriram Finance and Aarti Industries remains to be a top pick.
All right, Dharmesh, thank you so much for joining us. And those are some technical bets coming in. But one stock in the broader markets which is seeing a sharp cut is Patanjali. The stock is off around 15% from, it's down actually around 16.5% right now. Let's get in the management of the company. Sanjeev Asthana of Patanjali joins us now. And we have Mangalam Malu, who's joining us to take this conversation forward as well. Mangalam.
Well, thanks a lot for that. You know, it's been a big gash that we've seen in Patanjali Foods, down about 20%, and big volumes as well, 20 times what we've seen on a 2-week average. And there has been selling both in futures as well as cash. What explains this kind of gash? We haven't seen any update come by on the exchanges lately, apart from the fact that the company has just said that, you know, there is nothing fundamental which has changed. We do have Sanjeev Asthana with us. Mr. Asthana, you know, just let's get the worries out of the way first. What is it that explains this big cut that we've seen in the stock price? Anything in the business which has changed?
So, Mangalam, thanks for having me. So, absolutely no change in the business. Our business is robust. Our performance has been there in the stock market. There's absolutely nothing that has come either through regulators or any adverse impact that we've had. And the balance sheet is strong. The business is going exceedingly well. So there's absolutely nothing, which I could even report that which might be remotely connected to the sell-off that we're witnessing in the marketplace. And that must be, the investors' prerogative and how they're seeing it and how they're working on it.
Right. No, because I'm, looking at a lot of things that are taking place in the marketplace right now. And obviously demand concerns were there because of the monsoons, etc. And you had alluded to that being challenging as well. Has that played out? And when you speak about regulatory action, I mean, a lot of the plants, etc., there is no FSSAI or any sort of other regulatory action that is taking place out there?
We are governed by multiple different regulators who supervise Patanjali Foods. Not one regulator in last 1 week or 15 days is anything adverse or anything that either has been alluded to or notices received. So that part is entirely out of the way. In terms of the business fundamentals, they continue to be robust, very strong. In terms of the growth momentum that we have in the system and the way things are progressing are exceedingly positive. So while the stock market may act what it has to, the management has its work to do, and that we are very focused on in terms of driving that business. We continue to remain debt-free. Other than the working capital limits, there's a very large reserve on the balance sheet, both in terms of reserves and surpluses. It's upwards of 5,000 crores. So there's absolutely nothing, Mangalam, that I could say that which could be even remotely connected to anything that might be adversely reported.
If you look at a lot of the data points from a shareholding standpoint, it looks like of the institutions that hold stake in your company, one of them in particular is GQG Partners, which has been, paring stake in the company for the last few quarters as well. Have you ever had a word with investors on what's underway out here?
We talk to investors constantly. That's part of the exercise that we do. And investors have reposed very good faith in us. And the investor in particular that you mentioned, they were significant, shareholders, and they continue to be there. And that is the way it is right now. And we will certainly have a conversation with all our major investors. And we've already put out our clarification, even though none was sought, that there's nothing adverse which is there. We will reach out to the investors as well. But through you, I want to convey that to the investors and everyone who's watching, our stakeholders, that there's nothing adverse and everything is positive. And we are very confident that we will continue to perform and outperform, our peers, and the company will continue to be in a very good shape.
All right, just a final question before we let you go. And since you are pretty positive on the business going forward, etc. as well, the stock which is corrected over 45% from its 52-week high at a time when consumption is looking up. Is there any, a vote of confidence which is coming in from the promoters? Maybe if institutions are selling, are the promoters or strong, holders of the stock picking it up? Because over the last many quarters, the institutional selling has been absorbed more by retail rather than promoters or other institutions.
So, Mangalam, you do know that the promoters continue to hold little more than 68%, nearly 69% stake in the company. They have had, and which is fairly strong and large shareholding, with nothing has been diluted in last almost year and a half. And that itself is a strong advocacy for the company. We are a dividend-paying company. We continue to retain the confidence of our investors. Yes, investors may have a choice in how they exercise that. So there is nothing to report on that front as well. But we will, through both exchange and through yourself, we've reached out, and we will be talking to investors as well, that whoever is coming.
Right.
But we don't watch the stock market on daily basis. That's the results that count.
Since you spoke about, the regulatory action and there being none from multiple regulators on business, could you give us a sense on whether any of the financial regulators have, made any inquiry, any sort of raid? There are, there is the ED, there is the IT department, there are multiple revenue departments, etc. Any word coming in from them? Are there, raids or something that are taking place right now?
No words coming. There is no raid. There is no notice also. And there's absolutely nothing adverse. Just to confirm that to you.
All right. Our job to keep asking from all angles. And, you've clarified on that. Thank you. We take that point. Thanks a lot, Mr. Asthana, for joining in.
Thank you.
All right. Back to you.
Okay, thank you so much, Mangalam, as well as Mr. Asthana for joining us. As of now, business is robust, no change in the business, balance sheet is strong. They're saying that there is nothing happening in terms of raids or notices or anything adverse, even from the financial regulators as well. But Patanjali, as of now, still trading with cuts of 17% in trade. Thanks so much for that. On that note, we're going to step into a very short break. After the break, we'll have Manisha Gupta, who will join on with a conversation with Brody Sutherland of Patriot Critical Minerals Corporation, and stay tuned in for that conversation.
Welcome back. Joining us on the show now is Brody Sutherland. He's CEO at Patriot Criticals Mineral Corp, and he joins us on the show. Brody, hi, thank you so much for joining in. How would you define the overall rare critical mineral market and the recent global supply chain shocks, also the way forward from here?
This is something that needs to be addressed as quickly as possible. We're starting to see changes in the space. However, this is mining. It takes time to bring things online. So what we're seeing is a shift. We're seeing more of a focus on Western allied countries. And that's, again, it's going to be a time component to bring these projects online and make it viable because of the dominance that China's set out in the space.
Brody, also, China controls roughly nearly 80% of global tungsten supply and has severely restricted exports. With tungsten prices having surged dramatically, how much higher do you anticipate the global prices climbing as Western defense and semiconductor industries scrambling for non-Chinese supply?
Yeah, we've seen a massive shift over the last year. We've seen the price of tungsten go from $300 a metric ton unit to over $3,000 over that time span. And that's because the Western world's trying to figure out where can they get tungsten and other critical minerals. China has dominated the space. Like you said, 80% of production for that one metal. However, again, you need to be able to bring other things online very quickly to fill that gap. China dominated the space, over 60,000 tons produced on an annual basis. The next biggest producing country is Vietnam at 4,000. So there's a huge disparity there. It's going to take time, and that's why we're seeing the prices lift right now, is that everyone's scrambling to find the metal, and they'll pay anything for it. It's a unique one. It's hard to replace. So this is a very unique time that we're seeing, and I think we'll continue to see prices rise.
Oh, wow, Brody, we hear you. $300 a ton to $3,000 a ton for tungsten is how the prices have surged. Are you also seeing structural changes or increased volatility in rare and critical metals being priced globally? Also, how much price change are you anticipating from here on?
Yeah, I think what we're seeing is a structural change right now. We're seeing a step increase for a lot of these commodities. They've come up in price. They have not come down. Typically in the past, you'll see it in a very sharp rise followed by a very sharp fall. We're not seeing that this time. I think this time what we're truly seeing is that, one, you have China that's dominated the space. Their production has slowed down. So that's a clear sign that they're starting to run out of the metal. Now you're looking at the rest of the world trying to scramble to catch up to them and fill that gap. That's going to take time. So that's why I feel the prices will continue to rise. They seem to be stable at these levels. So that's the new step that's come up. But I do think it's going to continue to rise from here because new production of scale will not come online for the next 2 to 3 years. So we'll continue to see those prices increase. There's going to be increased demand for them. It goes well beyond the traditional uses of the metal. There are now new technological advances that utilize it, and that just means more need. And but we'll see where things come from here, but I've got a good feeling that things will continue to rise for it.
Brody, Patriot's development of the mega tungsten project in Nevada, the largest tungsten resource in the U.S. How are you looking at escalating trade restrictions, geopolitics, friction, and concrete corporate timelines as you deal with the mining there?
Yeah, the clear thing is that there's been zero production of tungsten in the United States for over 15 years. We control the largest deposit that has a compliant resource on it. And we feel that it can be the cornerstone for domestic supply for the United States. So that means no longer reliance on other countries to import, because right now everything is imported. Our mine that we're looking to develop, we've got a 3-year time horizon to get it into production. It's an aggressive one, but it's one that's needed desperately. And it's got scale to it. We foresee a 10 to 12 year life of mine on it. We think we can extend that out even longer. However, this is just solving part of the problem. This mine would produce a quarter to 20% of what the U.S. needs. We need much more. And so this is just solving part of the problem. Longer term, we're looking to grow our company to continue to support the supply chain for the United States and North America and see how we grow beyond that.
Brody, tungsten has evolved far beyond basic applications into highly specialized semiconductor, aerospace and nuclear fusion sectors. You are in talks with defense contractors or global semiconductor manufacturers right now for multi-year agreements?
We're in conversations with any end users of the product right now. We do foresee future production as sacred. This material is desperately needed. It's needed by the U.S. government. So we don't want to give it away to anyone. But if it makes sense to have an agreement in place to provide this product to them, whether it's in aerospace or military manufacturing, or even just stockpiling, having a reserve of it in the United States, those are all options that we're looking at and willing to support. And so we'll see how those conversations continue, but we do see that offtake as sacred and something that we want to control.
Brody, a final question then. India is establishing dedicated rare earth corridors, but heavily lacks raw material extraction, infrastructure, etc. Can Patriot's upstream assets serve as a pipeline for allies like countries like India?
Absolutely. I mean, it starts with this asset for us in Nevada. We're looking to grow beyond that. It does have size to it. We can provide material internationally, although we feel that this deposit's best suited to stay within the United States, that material. But we can utilize our skill set in that technology and implement it in other countries. And India is not alone on that front. There is much need for infrastructure to support these types of projects. And we're going to see, I think, every country that has those resources in-house looking to develop those. So an exciting time across the globe for these metals, and it's time to take control back.
Point taken. So the only mining or resource company in tungsten and starting to start mining very, very soon. And at this point in time, Brody, of course, tells us that US is going to be their more major focus area, but looking to talk to downstream companies, countries, and even India for that matter. But with that, let's slip into a short break. Up next, we will connect with Jan Gruszkowski of MassPay on cryptocurrency trends.
CNBC TV 18 presents Crypto Corner, powered by Binance.
Welcome back to Crypto Corner now, and joining us now to speak about cryptos is Ran Grushkowski. He's CEO of MassPay. Ran, thank you so much for joining in. You recently wrote about death of Net 30 in terms of favor of instant payouts. The kind of scenario that we are in where the corporate liquidity is kind of tight, how would you look at moving from Net 30 to Net Minutes?
Well, the demand for real time is a real thing, and it's both driven by consumers and businesses that serve consumers. And that's why we believe that stablecoins and the growing propagation of real-time rails globally is starting to meet the demand. There are obviously issues or challenges with meeting real-time demand of liquidity globally, specifically cross-border. And that's why companies like myself, MassPay, exist to try to streamline the process for businesses so they can move money efficiently. What it means to those businesses is that you mentioned less strain on financial operations. They have more liquidity in the system because they don't have to wait to receive the money. And it's trickling down to the consumers who do not have to access capital through lending. So we believe we're going to see some maybe shrinking of the demand for lending because people are going to have access to their earned wages, if you will, faster.
Ran, stablecoins as an overall volume and the market, how do you look at that? If we have seen quite a bit of a gain in the recent few quarters, that is, a cross-border speed hedging tool as well. How are you looking at the markets overall now moving towards stablecoin when it comes to cross-border payment systems?
So stablecoins are here to stay and are definitely growing in demand. And the fact that, at least in the US, there's more established legal framework that enables the institutions, the financial institutions, the banks to participate in it is only going to accelerate the utility of it. The reason it's going to be growing tremendously is because now the banks, who are really the gateways for safe storage and transmission of funds, are not participating, which means we're going to see a lot more businesses accessing it. The challenges are still both from a compliance perspective and operations perspective, and that's why at MassPay we participate in both the fiat and the crypto world to really become the bridge between them. We see a tremendous growth in countries that are more sensitive to fluctuation of exchange rates, like India, and that's why we believe there's going to be more commerce happening using stablecoins, and then that allows the local businesses to convert it to local currency, in the case of Indian rupee, whenever the FX is more favorable. So we believe there's going to be a lot more businesses in, again, countries like India that prefer to receive funds through stablecoins because it's going to be faster. They're going to peg it to the US dollar, which tends to be a more stable currency, no pun intended, and then convert it to local currency at a favorable timing, optimizing for exchange rate. Whereas today, they get paid maybe for a Swift wire, very, very late or very long to receive the funds, less trackable, and you don't control the exchange rates. Here you're going to have the benefits of both worlds. And now that the banks are participating in it, we're very confident that globally more central banks are going to recognize that this is a more secure way, a compliant way, and gives real-time availability of funds. So we're very bullish on the growth of stablecoins.
Currently at MassPay, and how many currencies globally are you handling? And what is your sense? What is the kind of infrastructure that is being used? Especially, I'm assuming the rapid Forex volatility is something that you're watching out for right now.
So at MassPay, we are supporting virtually any currency, a tradable currency around the world. The number of currencies keeps on increasing every day because there are new stable coins being issued. There's a recent one that was issued in the US by Visa and some other institutions. So there's always growth on propagation of different currencies. It's our job to make it easy for whomever our clients want to pay to choose the preferred way for them to get paid. And that's why we try to support however somebody wants to get paid. So in the case of India, whether it's UPI or a stablecoin, it's our job to ensure that people have the optionality whenever they receive and for our clients, whenever they send.
Well, those kind of initiatives and gains at MassPay in sense of growth, how are you looking at 2025? What's your plan now for 26? And how are you going to be moving ahead when it comes to fintech routing efficiencies and various other plans that you would have as a CEO in this year?
So I can now share that Q2 of 2026 was another record quarter for us. We grew over 400% year over year. So tremendous growth. We foresee continued growth. Our pipeline is tremendous. We keep on doubling our volume and our revenues in a really lightning speed. So we are really forecasting continuous growth. We've just forged partnerships with Circle and with Coinbase that we're very excited about. It's going to continue enabling a growth. And overall, tremendous year for us and our partners. And we're very, very excited for the rest of 26 and what to come in 27.
Right, almost every business is now looking at making huge use of AI. How is MassPay using AI to grow more efficient going ahead?
So we've been an early adapter of AI, not just from an organization tool for our various teams, which we've done a tremendous job with that, and even created a reward system for our employees to adapt and utilize AI. We've actually embedded AI into our core. We have partnership with some of the leading AI companies, which enables our system in real time to make certain determinations around compliance, around data routing, transaction optimizations. And what it enables us to do is provide faster, more reliable optimization of transactions, getting transaction paid faster, which is ultimately what we care about. At MassPay, we only charge our clients for successful transactions. So we are really incentivized to make sure people get paid efficiently and fast. But the other thing that it enables us to do is reduce cost. We can grow a lot faster, process a lot more transactions. We're already processing billions of dollars. By the end of the year, we're going to be at tens of billions of dollars in volume. And in order to do it with a smaller footprint, you need to leverage AI. And I'm very excited about the work that our team has done in adopting AI, both from the system perspective, but also as an organization. And we're seeing tremendous results with it.
All right, Ran, very interesting times and very efficient work, as you said, you've been doing, especially when it comes to stable coins and cross-border payment system, which apart from banks is also being done via blockchain.
Okay, all right, Manisha, thanks very much for that. And for the markets, in fact, it's holding up quite steadily. We have the Nifty, which is up around 0.3%, and the Bank Nifty, which is managing to outperform with a gain of around 0.7%. The advanced decline ratio is positive, so around 2,300 stocks advancing to around 1,700 stocks declining. Just watch out for specific stocks. So there is no intraday recovery, which has taken place in stocks such as Patanjali, where the management did clarify that there are no raids, businesses on as usual at this point in time, and they will be engaging with their investors. That stock has not seen any kind of recovery despite the clarifications coming in. And however, there are many other stocks which are managing to buck the trend and do well. So Ether Energy would be case in point. That stock is at the high point of the day. Union Bank also has seen NIM improvement this time round. Well, on that note, it's a wrap on Halftime Report. Business Lunch will take all of the action forward. Stay tuned.
Stocks are off the day's high after Donald Trump steps back on the Strait of Hormuz security fee. A soft US inflation print was aiding sentiments in the first half of the trading session. Industrials and financials were the prominent gainers. IT and utility are the key drags. L&T Technology Services climbs after pipping Q1 estimates and pointing to growth picking up, while Tata Elxsi slumps following a severe margin contraction on transition and on-site costs. Hero MotoCorp is looking to invest another 1,000 crore rupees in Ather Energy via preferential issue. The investment comes on top of its existing 29.5% stake, worth well over 14,500 crore rupees in the two-wheeler EV player. The India-UK trade agreement comes into effect today. The pact offered India preferred access for Indian textiles, footwears, auto parts and food products, while British cars and premium spirits will get easier entry. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Hormus Fatakia. Well, if you are a bull, you will not be very happy looking at the screen. The markets for a very, very brief period had slipped into the red, and from levels of around 24,200, we are now almost 150, 160 points off the highs of the day. So, well, some very choppy moves seen on the markets in the last few minutes of the trading session. At one point, the index was above the mark of 24,200. That has not it has not managed to sustain at those levels yet again, and the principal culprit behind that is the Nifty Bank. That too, after reclaiming levels of 58,000 earlier in the day, has come off the highs of the day, almost a 400-point drop from the day's high, still above the mark of 57,500. So still a better looking screen for the Nifty Bank compared to the Nifty, if not more. There are plenty of stocks that have reported results in the last few minutes. Just pull up Union Bank. The stock had seen a spike after the numbers were out, but as granular details have emerged, the last few minutes have been very volatile. Still around about 2.5% higher for Union Bank. Grow came out with results during trading hour, and since then the stock has managed to hold on to gains of around about 4%, still about 4% higher for Grow. And Steel Strip Wheels, that too came out with numbers just a few minutes back, and that too is reacting to its results, 7.5% higher, slightly off the day's high, but still holding on to those gains. And Fedbank Financial Services, or Fedfina, the unit of Federal Bank that had gone up as much as 12% after its results, has come off the highs, now trading with gains of around 5%. So plenty of earnings still to track. The HDFC group companies are still to report numbers. AMC, Life, HDB Financial, all of them during the course of the day. Keep you updated with them as they come. Now, India's landmark trade agreement with the UK has come into effect today, paving the way for duty-free access to 99% of Indian exports, while lowering tariffs on products such as whiskey and luxury cars. Abhimanyu is here with more details on this. Abhimanyu.
The India-UK trade deal coming into force aims to boost bilateral trade to over $120 billion by 2030. The average tariffs on UK's exports to India will drop from 15% to 3%, and duty-free access will be granted to over 99% of India's exports to the United Kingdom. The Double Contribution Convention, or the DCC, will save over $500 million a year for Indian working professionals currently employed in the United Kingdom. High export growth is expected in sectors like textiles, footwear, processed foods, cereals, marine products, automobiles and machinery. Also, India's export share in the total imports of United Kingdom was just 1.6% in 2025, which indicates a huge potential for overall growth in exports. Now, for context, in 2025, the UK had imported goods worth $928 billion from the world, but had only imported goods worth $15.2 billion from India. Also, cars like Aston Martin, Bentley, JLR, McLaren and Rolls-Royce are set to get cheaper in India, as import duty will be cut in India on 3.78 lakh conventional engine passenger cars from UK from 110% to 10% over a period of 15 years. Now, the duty cuts on cars will be spaced out over a period of 15 years, and India is expected to have over 1 crore cars being sold at that point of time. Also, no duty cuts will be given by India in the first 5 years of the trade pact for British EVs, hybrids and hydrogen-powered vehicles priced below 40,000 British pounds to protect the mass market in India. India. India is also slated to cut the current 150% import duty on UK's whiskey and gin to 75% immediately, and gradually it will be dropped to 40% in the 10th year of the deal. Now, the duty cuts are expected to increase overall FDI in the liquor sector and bring British expertise in spirit making and quality control. Also, no duty concessions will be given by India on optical fibers, bundles and cables, smartphones, diamond, silver, TV camera tubes, base stations and plastics. India also reserves the right to retaliate in case a carbon tax is imposed in future and it impacts exports adversely.
Abhimanyu, thank you for that update there. Let's now go across to Sudarshan. He will take us through the sectoral impact of this trade agreement. Sudarshan.
So over the last few months, India has signed FTAs with several countries, and one of those is United Kingdom, and that FTA between India and UK comes into effect today. So what exactly it does? It increases annual bilateral trade between India and UK by more than $100 billion. Also, it includes tariff cuts, improved mobility and market access guarantees. Average tariff of UK imports will now drop to around 3% from the current tariff level of around 15%, and 99% of exports to the UK will now enjoy zero duty access. So now talking about the sector, first sector that can be impacted positively is auto sector. So India has offered concessions on large ICE vehicles, or say petrol and diesel vehicles, and also EVs in the higher price range. No concessions to electric, hybrid and hydrogen vehicles for the first 5 years of the FTA. In EVs, market access for the vehicles that cost more than £80,000, and concessions and quotas on ICE vehicles include 3,000cc petrol and 2,500cc diesel vehicles. Some of the major stocks that can be impacted positively are Tata Motors passenger vehicle and also to an extent Mahindra & Mahindra. Coming to the next sector, that is the textile, duty-free access for 99% of India's apparel and textile exports, and some of the stocks that can be in the focus: Welspun Living, Gokaldas Exports and KPR Mills. Coming to leather and footwear, FTA eliminates tariff on nearly 100% of Indian leather and footwear exports. Marine products and food sector will be impacted positively as well. It eliminates tariff on over 95% of agri, marine and processed food exports. Alcobev sector that has been buzzing on this FTA news over the last few months. So India will reduce import duties on UK whiskey and gin. Duty will come down to 75% from 150% immediately and to 40% after 10 years. Last one is gems and jewelry sector. India's exports to UK for this sector is at $941 million, and UK imports $3 billion worth of jewelry annually, and India's exports are expected to double in 2 to 3 years once this FTA comes into effect. That's basically today, and both these countries are estimating a big surge in annual bilateral trade.
Sudarshan, thank you for putting that together. A lot of sectors, a lot of stocks that get impacted / benefited due to this India-UK FTA. Now, shifting focus to the latest updates on the West Asia conflict, the US carried out fresh rounds of strikes against Iran for a 4th consecutive day and also reimposed a naval blockade to prevent ships from sailing to or from the Iranian ports. Now, the development comes hours after US President Donald Trump backtracked on his threat to heavily tax ships passing through the Strait of Hormuz. CNBC's Dan Murphy joins in with the latest.
All of this happening less than 24 hours after declaring America the guardian of the Strait of Hormuz and also demanding this 20% toll on every cargo crossing it. President Trump now abandoning that plan. He says he's going to be replacing this with trade and investment deals from the Gulf states instead, after what he called highly productive conversations with Middle East leadership. But our sources say no new deals have been announced. And in fact, the president is likely referring to the trillions of dollars in investment that have already been spent and planned by Gulf allies who are now trying to decipher exactly what the president's strategy is here. The Energy Secretary, Chris Wright, weighing in earlier. Take a listen.
No, that's off the table. That's off the table. Look, President Trump, he's this master negotiator businessman with very unique communication skills. He puts things out there. The United States has carried that load for the whole world for a long time. He sent that message to everyone. The United States is carrying this load, and we got to find some creative ideas to share that load. And of course, it led to a great place, and we got the right answer. But there will not be tolls through the Strait of Hormuz.
Chris, right there. And of course, the Gulf allies have already sent a message. They've already told the president that the toll wasn't workable and would only drive energy costs higher. And of course, what we've also seen is President Trump's own Secretary of State, as well as his UN ambassador, saying that these tolls would have been illegal in the first place. And of course, the Iranians are also pushing back here as well. We've also seen strikes ramping up in the last 24 hours too, with CENTCOM confirming only in the last couple of hours that it had completed an additional round of strikes inside Iran. So the hostilities here on the ground continuing, the future control of the Strait of Hormuz still very much hanging in the balance, and the MOU that was being negotiated between the United States and Iran now effectively in tatters, as this war, which started over Iran's nuclear program, now centers back in on one single issue, which is flows through the Strait of Hormuz. It seems as if the Iranians have the Americans exactly where they want them. With that, it's back over to you.
Dan Murphy, thank you for those updates there. Take a short break. Back with more on the other side. Welcome back. Some very interesting data has come out from Prime Infobase with regards to what mutual fund activity was in the month of June, and there are some consensus trends that have emerged. There has been buying almost across the board in a lot of the private financial names, and there has been selling across the board in a lot of metal names. Let's start off with the largest fund house, SBI Mutual Fund, and in the month of June, they have doubled down on their stake in HDFC Bank, ICICI Bank and Bajaj Finance. NHPC is an interesting addition here, but look at the selling here. Tata Steel Steel, Hindalco, NTPC, Adani Power, Metals, power names getting sold from SBI Mutual Fund. They have made fresh purchases in a lot of these smaller names. CMR Green, of course, is a recent listing. Bosch Home Comfort, Vintage Coffee, West Coast Paper, and they have made a complete exit from names like Nazara Technologies and from Rolex Rings. HDFC Mutual Fund has also increased its stake in companies like JSW Infra, Eternal, Craftsman Automation, and Indigo for that matter. They have made reduced their stake in a lot of these metal names, Tata Steel, Jindal Steel, Hindalco. Fresh purchases have been made in stocks like Corona Remedies. NSDL is a fresh purchase here, Kansai, Nerolac, and a lot of these Vedanta demerged entities have seen selling here, a complete exit, including names like Just Dial, which have been buzzing off late. Kotak Mutual Fund's biggest increase has come in names like Bajaj Finance, Ajanta Pharma, Maruti, and Lenskart among the recent listings. They've brought their stake down in these capital goods names like GE Vernova and in names like Indus Towers as well, along with BSE being their top reduction. Fresh purchases have been made in the CMR Green, while a complete exit was made in stocks like Heritage Foods and Quality Walls. ICICI Prudential has also doubled down on private financials like HDFC Bank. Vedanta Aluminium is an increase from them. Reliance Industries is where they have increased their stake. Tata Steel as well. But look at the reduction here. L&T, Bajaj Auto, Vedanta Oil and Gas, Vedanta Iron and Steel, and ITC as well is where they have reduced their stake. They have made purchases in a lot of names like Pondy Oxides, recent listings like Turtle Mint and CMR, and in Rallis and in NSDL as well, along with making a complete exit from smaller names like Jamna Auto and auto ancillary peers like JTE, KT. Now, Axis Mutual Fund has seen an increase in HDFC Bank as well. Bajaj Finance, Eternal, Indigo find a mention here. They have made reduced their stake in names like TCS and Infosys and MCX as well, along with metal names like Hindalco, where fresh buys have come in PN Gadgil, while they have made a complete exit from these Vedanta's demerged entities and from names like Electronic Smart. And lastly, LIC Mutual Fund. The interesting list of additions here. Eicher Motors and Navin Fluorine are their biggest stocks where they have increased their stake. They have reduced their stakes in names like Maruti and Infosys and in names like MCX as well. While new purchases come in stocks like Ather Energy, and this is despite the stock having risen 80% already on a year-to-date basis, and in names like Aavas Financiers and Quality Power, they have made an exit from stocks like CMPDI, which is the Coal India subsidiary that was recently listed, and all the demerged units from Vedanta, along with names like CCL Products and ISGEC Heavy Engineering. So private financials are finding favor yet again amongst the mutual funds, but some trimming down of stake is happening in a lot of these metal names as well. But moving on, the Reserve Bank of India has proposed a new set of norms for big acquisitions in banks. Ritu is here with more details on this. Ritu.
That's right. The Reserve Bank of India has put out this draft note that can make life easier for large investors that want to hold stake in banks. Now, under existing rules, any big investor like your mutual funds or insurers or anyone crossing 5% ownership in a bank will need RBI specific prior approval. Even if their holding dips below 5% and they want to go back up again, they again have to apply to Reserve Bank of India. Now, RBI wants to ease that, but selectively. So the draft proposes this one-time approval route specifically for regulated mutual funds, insurers, and pension funds, which are now being called the qualifying persons. And importantly, they cannot be part of the bank's promoter group to be eligible. So once RBI clears them, they will not need repeat approval for subsequent stake increases up to 10%, as long as they stay within the conditions set by RBI. But there is a catch. The approval is not going to be unconditional. Ultimately, it will be up to the RBI, and banks will also have to weigh in with formal comments before the approval is granted. And investors will also have to flag any move in their shareholding above or below the 5% mark to RBI within just 1 day, so that there is continuous monitoring and that doesn't get diluted even though the process gets easier. Now, RBI has also clarified that portfolio managers are not going to be treated as indirect stake acquirers so long as the client owns the shares, holds the voting rights, and the manager is only giving non-binding advice. Now, this is still a draft. Comments have been invited by the 4th of August, after which final directions will be issued.
Ritu, thank you for that update there. Take a short break. Back with more news on the other side. Welcome back. Now, the rollout of the second phase of the India Semiconductor Mission is inching closer. Ashmit is joining in with more details on this. Ashmit.
Well, what we are picking up is that all policy decisions, everything is in place, all moving parts of this phase 2 of the India Semiconductor Mission are in place. It's likely to have been taken up for the cabinet approval earlier today, and that approval is likely to have come as far as this ISM 2.0 is concerned. Bear in mind, we're looking at an outlay of 1.25 lakh crore rupees. That's substantially higher than the outlay that we had seen in phase 1. The phase 1 allocation was 76,000 crore rupees. One of the key difference, of course, is that ISM 2.0 will focus substantially beyond just fabs, beyond just fabrication facilities. It will focus on the entire semiconductor supply chain. It will focus on materials. It will focus on designing here locally so that the IP rests here. So a much broader focus here of the ISM 2.0. But that's one of many important decisions that are likely to be taken up by the cabinet. Another one of them is a push towards mobile manufacturing. This has been a long-standing demand. What after PLI 1.0? What after that initial scheme to push electronics manufacturing, specifically mobiles, which has been the poster child of electronics manufacturing here? Other than that, there's also likely to be considerable focus as far as urea is concerned. Again, urea will be in focus. New investment policy, extension of the subsidy scheme, energy policy as far as urea plants are concerned. So a whole host of important decisions are awaited. But of course, the big one being ISM 2.0, 1.25 lakh crore rupee allocation. That's nearly double of phase 1. Likely to be a much wider push towards the broader semiconductor ecosystem that the government is likely to go for.
Ashmit, thank you for those updates there. Now, the Navi Mumbai International Airport has hit an important milestone with its first international flight taking off today. Madhya is getting you the latest. Madhya.
So in the last 7 months, the Navi Mumbai International Airport has connected 46 domestic destinations. Indigo, Air India Express and Akasa Air are the domestic carriers that operate flights from this airport. The airport has handled over 2.3 million passengers so far in the last 7 months, and there are 150 aircraft movements every day from this airport. So while things look up good and the airport is expanding its operations, there is one pain point for passengers, and that is reaching the airport, how to reach the airport, because the last mile connectivity continues to be a pain point here. If you don't have a private vehicle, if you don't stay around the airport, you will end up paying a lot more and spending a lot more time on the road if you rely on cab services like Ola and Uber. So that continues to be a challenge, but once you're inside the airport, this is the departure area after clearing immigration and security. This is where passengers wait to board the flight. This is the first time that the boarding gates here are going to handle and the counters here are going to handle passengers for an international flight. So yes, the first international flight from Navi Mumbai International Airport, Abu Dhabi is the first destination. Air India Express is the first flight. The next questions: which is the next destination after UAE that Navi Mumbai International Airport will connect? Which Indian carriers will come forward to launch international flights from this airport? And when will we see an international airline launching flights from the Navi Mumbai International Airport? But for now, Air India Express, first flight from Navi Mumbai International Airport, first international flight, and Abu Dhabi is the first international destination that Navi Mumbai Airport is connecting.
The first of many from the Navi Mumbai International Airport. Madhya, thank you for bringing that to us. Well, the monsoons have remained uneven so far, and that is showing up in both reservoir levels and in Kharif sowing as well. While India's overall water storage is still above the long-term normal, it's well below the levels seen at the same time last year. Maharashtra is also trailing last year's reservoir levels, and in Mumbai, lake storage is also significantly lower than what it was last year, although it remains comfortably above the levels seen in 2024. On the agriculture front, Kharif sowing in Maharashtra has covered about 60% of the normal area, compared with 84% by the same time of last year. The state government's preliminary assessment shows that 6,673 hectares of crop have been affected by heavy rain, strong winds and hailstorms this month. Even so, field conditions are improving, with paddy retransplanting underway in some areas, sowing gathering pace, and newly sown crops progressing from germination to the seedling stage. From the monsoons, taking a quick detour to the world of sports, the Spanish national team is through to the FIFA World Cup 2026 final. It was a dominant 2-0 win over France in Dallas, and that has now put them just one match away from glory. Mikel Oyarzabal found the net first, with Pedro Porro doubling the lead shortly after half-time. France, meanwhile, had no answer for the tournament's toughest defence, with France's leading scorer Kylian Mbappe failing to find answers to his Barcelona counterpart's defence. Now all eyes shift to the second semi-final, with England taking on Argentina, and the winner of that will meet Spain in the finals. And that we take a leave on this edition of Business Lunch. The markets continue to remain choppy, but from me and the team, thank you so much for watching. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra with me as always Vivek Iyer. Vivek, good afternoon. What a fall in last couple of minutes from the highs. The Nifty is up 150 points from the highs of the day, very close to that 24,050 mark. 24,000, remember, is a very crucial support for the Nifty. Across the board, be it banks, be it mid-caps, there are big cuts coming in, and that is something we'll be tracking, and watch out for what's happening in the global markets as well.
That's right. Good afternoon, Sonal. So we started off, Asian markets started off quite positive. We were, in line with them, but what we've actually seen a very sharp cut, especially in the last half hour or so. But a lot lined up on the show, so let's start off with the top headlines. Market sees sharp cuts, trades near the day's low. Nifty trades around the 24,000 mark. IT, FMCG and realty lag, while financials, oil and gas gain.
Slew of stocks reacting to results. L&T Tech gains on the back of steady Q1 earnings. Lower other expenses aids in over 200 basis points margin expansion. For Grow, on the flip side, we did see, on the flip side, Tata Elxsi's auto segment lead weakness and dent Q1 results. Stock sees selling pressure.
Patanjali Foods bleeds in the afternoon today. Company posts its biggest single-day fall since June of 2024. CEO clarifies on the sell-off. Sanjeev Asthana tells CNBC TV 18 that the business continues to grow well, adds that business is governed by multiple regulators and none have flagged any issues of late.
A bullish BofA note sends shares of Hyundai Motor higher. BofA Securities upgrades the stock to a buy, setting a target of 2,400 rupees a share. Brokerage cites a new SUV cycle, robust export mix and margin repair story as the rationale behind the stance.
A strong D-Street debut for Kusum Girls. Stock lists at a 37% premium over its issue price, following a bumper 128 times subscription between July 8 to 10. The stock lists at 569 rupees a share on the National Stock Exchange.
Okay, all right. These are the top headlines that we are tracking. The biggest headline being the sharp fall in the Nifty from the highs of the day. As I pointed out earlier, the Nifty is off 150 points from the highs of the day and trading at the day's low for now. It actually slipped into the red as well, but made recovery from those levels. The Bank Nifty too is off from the highs of the day. A lot of these financials are putting pressure on the Nifty from the highs. If we talk about, and usually we do talk about the mid caps, but it is of course a large cap led pressure that we are seeing. We do have the likes of Kotak Mahindra Bank, there's Grasim, ITC, Jio Financials, all these stocks putting a lot of pressure. Even the advanced decline ratio for now is in the favor of declines.
That's right, advanced decline ratio in favor of the declines, and quite a lot of heavyweights have moved to the day's lowest point. A couple of exchanges, BSE and MCX2 in focus. A couple of articles mentioning, quoting sources mentioning that there could be some curbs as far as trading, as far as the weekly contract expiries are concerned. So both of these stocks too under a bit of pressure have cooled off from the day's highest point. But this is our special segment, Midcap Movers. Upasna joins us from the big wall with all the midcaps that are moving around in the session.
Well, certainly, if you look at the mid-cap index, it's up just about 0.2%. Let us first focus on the top gainers in today's trading session. The first up on the list is Apar Industries, is up nearly about 4%, followed by Century Inca, which is one of the key volume buzzers today. Volume up more than 51 times, followed by Carousel. Even this is seeing some strong volume upsurge. The stock is up nearly about 3% as we speak. Followed by Ola Electric, the stock is up more than 4%. And lastly, HFCL continues to remain in focus with a sharp surge of nearly about 5%. Now, let us look at some of the stocks that are in focus on the back of Q1 FY27 results and updates as well. Stocks like FedFina Bank, Union Bank, even for the likes of Grow, Signature Global on the back of its Q1 update, and Tata Elxsi, all of these counters in focus on the back of their Q1 results and updates. Now, on the flip side, let us look at some of the top losers in today's trading session. Topping the list is Patanjali Foods. Certainly continues to remain in focus since morning, and management has also clarified that the business is doing exceedingly well for them. The stock is down nearly about 14%, followed by Delivery, down about 3%. Even Zensar Tech has seen a cut of nearly about 3%. Physicswala also continues its declining move, down nearly about 2% as we speak. And lastly, it is Balrampur Chini, which is down nearly about 2% in today's trading session. So all in all, these are the stocks on our radar today.
Okay, all right. Thank you so much for joining us with that list, Upasna. We'll keep tracking market moves because it has come off sharply from the highs of the day. For now, we'll slip into a short break. When we come back, we'll address some of the stock-specific news and the buzzing stocks as well. Welcome back. You're still tuned into Midcap Radar on CNBC TV 18. Let's get a technical check going. Markets have come off sharply from the highs. Ajit Mishra from Religare Broking is joining us for that. Ajit, good afternoon. Thank you so much for joining us. Explain to us what are the next moves that you're expecting on the Nifty from a technical viewpoint. Do you expect further pressure by the time we are done with trade today?
Good afternoon, Sonal. Sonal, yes, the tussle is on. Means we are seeing that earlier the range was slightly broader, 23,800, 24,400. Now it's 24,000, 24,200 band. So the major challenge is that the crude is still at the elevated level, 85, 86. Rupee is still signaling there's no sign of respite. Still, we were seeing that market made an attempt of a recovery thanks to the buying interest in the heavyweights, especially from the banking and IT pack. Broader markets are still holding strong. So, Sonal, I believe that consolidation in the index is inevitable. Means we will continue to see this kind of struggle, at least in the near future, until we decisively surpass the long-term averages around 24,400 mark. Having said that, banking looks okay. IT, which was earlier witnessing noticeable pressure, has also stabilized. So I guess broader markets are doing well. So all this indicate that while the index consolidates, the stock-specific approach is something that you should be focusing on.
Okay, Ajit. So stock-specific focus, that's what you're looking at currently. What are the stocks we should focus on?
Yeah, Vivek. So the first that we have on the list is BAIL. The result is due in some time, and it's been almost like 2 months of consolidation after a strong directional move. So we believe the stock is set for the next leg of the up move. So with the stop at 396, one can go long in BHEL at current levels with 428 as a target area. And then we have Sun Pharma, means pharma healthcare basket. It's relatively stronger. So here we are anticipating 2090 target for Sun Pharma with stop at 1880.
Yeah, Ajit, thank you so much for joining us. So those are some technical bets in the markets. The stock that we are tracking now is our mid-cap spotlight segment, Grow. It has gained around 35% this year. April to June quarter results of Grow indicated revenue was in line with what Street was anticipating. But let's go across to Divyani with the take on these numbers. Divyani.
Well, it was an operationally good quarter for the company, with a drop in equity derivatives activity that was offset by a strong surge that was seen in the commodities turnover, roughly around 150% on a quarter-on-quarter perspective. Strong growth in the cash market activity as well as continued scaling of the MTF business of the company. Now, from a financial standpoint, the Street was expecting a flattish quarter this time, with a drop in market activity that was observed after a robust March 2026. Now, revenue was largely flat at 1,501 crores. crores, in line with street estimates. EBITDA came in at 963 crores, up 4% on a quarter-on-quarter perspective, with margins expanding over 200 basis points as a result of operational efficiencies in spite of the higher employee costs that was seen this time around. Now, lower costs and higher other income aided in PAT growth this time, which reached 735 crores, and the street was working with a flattish PAT growth, so this beat street estimates. Now, what does Grow do though? Grow is India's largest retail broker with over 2 crore users on its platform. It makes money primarily when people trade and with over 50% of its revenue coming in primarily from the equity derivatives activity of the company, the cyclicality is definitely something that the company faces. Now going forward though, it is focusing on diversifying its business away from the traditional broking business itself, utilizing its large customer base to grow its wealth management business as well as its AMC platform. Now valuation though against peers, Grow trades at a valuation of roughly around 64 times its FY26 PAT as against its closest peer, which is Angel, which trades at 34 times its FY26 PAT. So there is a big difference in the way that these companies are valued, and the growth needs to actually justify this particular premium that Grow trades at.
Well, thank you so much, Devyani, for joining us and giving us all of the dope as far as Grow is concerned. Well, moving on, a couple of financials are in focus on the back of results. Fed Bank Financial and Union Bank, both stocks reacting strongly to the results. Ananya joins in with the fine print.
Well, banking earnings have kicked off on a pretty strong note. If you can see, Fed Bank Financial Services and Union Bank both delivered pretty strong numbers. Now, let me first start with Fed Bank Financial Services. Now, if you can see, was clearly the standout on growth, with AUM rising 35% year on year, led by a remarkable 77% surge in the gold loan segment, which now accounts for more than half of its portfolio. Now, this strong momentum translated into a 53% rise in profit, along with sharp improvements in ROA and ROE. Now, your asset quality remained comfortable, although the sequential decline in disbursements and moderation in capital adequacy needs monitoring going forward. Now, let us look at Union Bank. Good set of numbers, with net profit rising 30% year on year, operating profit growing 16% and NII increasing to 10%. Now, earnings quality improved further as fee income surged 45%, while lower operating expenses brought the cost to income ratio down to around 45.3% here. Now, NIM recovered to 2.8%, supported by a sharp decline in deposit cost. Asset quality improved further and provisioning coverage remained strong. Now, your credit growth was healthy, but weak deposit growth pushed the credit deposit ratio higher. So all in all, you can see good set of numbers from them.
Okay, all right. Thank you so much for joining us with all those details, Ananya. And long before India's EV revolution took off, before charging stations became commonplace, and before electric mobility became the next big investment theme, Hero MotoCorp placed a bold bet on Ather Energy. Started with a 205 crore investment in 2016, nearly a decade and multiple funding rounds later, the stake is now worth close to 14,000 crore rupees. Let's go across to Sudarshan with all the details on this one. Sudarshan.
The year 2016, electric scooters were still a novelty, charging stations were rare, and the EV ecosystem was years away from becoming mainstream. But now, talking about the Hero MotoCorp, it saw the future and invested rupees 205 crore in Ather Energy, becoming the startup's first strategic automotive investor. The rupees 205 crore investment was just the beginning. As Ather grew, it's doubled down, participating in almost every funding round when electric mobility was still a nascent market. Today, Hero's cumulative investment in Ather has crossed 2,400 crore. And now Ather Energy is valued at nearly 50,000 crore if you consider today's stock surge, making Hero MotoCorp's roughly 30% stake worth close to rupees 15,000 crore. Against a cumulative investment of just rupees 2,400 crore, Hero is sitting on an unrealized gain of more than rupees 12,000 crore, translating into a return of nearly 6 times its investment. Ather stock has also rewarded public investors. From an IPO price of rupees 321, the stock now trades for much above rupees 1,300, a gain of more than 300%. In just over a year, making it one of the strongest performance new age listings. Hero's investment wasn't only about financial returns. It gave the company early access to battery technology, charging infrastructure, software, and connected mobility.
Knowledge that has helped shape Hero's own Vida electric scooter strategy. And Hero is not heading for the exit. In fact, the board has approved another investment of rupees 1,000 crore in Ether, signaling that it sees even more upside ahead. Hero MotoCorp's investment in Ether was become one of the most successful strategic bets in India's automotive history. And as India's EV race gathers speed, Hero is making one thing clear. It's not done betting on Ether just yet.
Well, thank you so much, Sudarshan, for joining us and giving us all of the information regarding Hero's investment as far as Ether is concerned. But important flashes at the bottom of your screen. ICICI Prudential Life has come out with its Q1 FY27 numbers. And when you're looking at the new business premium coming bang in line with its CNBC TV 18 poll of 4,866 crore. What, however, stands out clearly is the value of new business margin, that is the VNB margin, coming in at 26.7%. versus the CNBC TV 18 poll of it being just 30 basis points higher on a year-on-year basis at 24.8%. So a clear beat coming in as far as the VNB margin are concerned. What, however, has been slightly muted has been the APE, or the annualized premium equivalent. That has come in slightly below what the CNBC TV 18 poll was concerned. And when you're looking at the VNB, it has come in at 571 crore versus our poll of 757 crore. We'll go across to Yash in just a bit. He will be tracking those numbers closely. But at this point of time, the clear positive surprise being the VNB margin coming in almost 200 basis points above what we were anticipating.
Look at the stock price. There's a sharp surge. When we started the show, it was up around 2.5%, a 5% uptick on ICICI Pru Life. Also expecting HDFC Life's numbers, so we'll be tracking that for you as well. Just pull out that stock, actually, HDFC Life, maybe on the back of ICICI Pru's numbers. There could be some stock reaction on that as well. That is the other one that will be on our radar. HDFC Life is the stock that I'm talking about. That is also in focus. Reports numbers today, and a slight uptick, not a big one there, but these are the stocks which will be on our radar. Slip into a short break, come back with more on the markets and stock-specific action on the other side. Welcome back. You're still tuned into Midcap Radar. Well, Nuvoco Vistas is a stock which is buzzing in trade. Let's go across to Nigel with the analysis.
Well, Nuvoco's numbers beat expectations on stronger pricing and better margins, which has excited the street. Let's dive a little bit deeper into it. Well, volumes came in at around 5% growth on a year-on-year basis. That's a little lower than industry growth, but the management has maintained that for the year, they'll grow by around 7 to around 8% guidance, which is more or less in line with what the industry is likely to grow for this fiscal year. The standout was realizations. That surged by close to around 7% on a sequential basis, while costs per ton as well were up by close to 200 to around 250 rupees per ton. But the company offset the pressure by cutting the pet coke usage to around 27% from around 37%, which helped the EBITDA per ton to expand by around 80 rupees on a per ton basis sequentially. Brokerages, they have turned more constructive. Most target prices are higher than the current market price, and the consensus expects a soft second quarter of FY27. However, they are bracing for a very strong rebound in the second half of this fiscal year. Valuations are also attractive at a sub $65 per ton odd, and EV upon EBITDA, it trades at around 6.5 times. A key trigger, though, to track from here on will be the ramp-up of the acquired Vadraj assets. In terms of the read-through for the industry, well, the biggest takeaway is pricing. Nuvoco's realizations were 4% ahead of Nomura's expectations. That was driven by higher non-trade realizations. And non-trade, remember, accounts for around 30% of industry volumes. Nomura, now they see an upside to earnings estimates, particularly for companies that have a high exposure to East India. And some of those companies should come up for you on the screen. Nuvoco obviously has the highest, but you have Dalmia Bharat, Shree Cement, Ramco, as well as Birla that are top of mind out there. Additionally, in East India, there are some green shoots that are showing up. Orissa Cement's offtake, well, for the state itself, the cement offtake was up by close to around 14% on a year-on-year basis from January to May of this calendar year. So that's good. Bihar demand remains resilient. West Bengal is expected to see a bit of an uptake post the elections. So DAM Capital now expects the East India cement demand to grow by around 7.5 to around 8% over the next few years. Utilization levels as well should pop up to around 74% from around 70%. To sum things up, Nuvoco's numbers reinforce pricing environment in East India is improving, and that's what could translate in better earnings for the company as well as for the region on the whole. Good earnings beat coming in from Nuvoco.
Okay, all right. Thank you so much for joining us with all those details. So that's about Nuvoco, but we did have ICICI Pru Life's number flashing for you just a while back. Yash is joining us with his initial take.
Well, there were all indications that the product mix for ICICI Prudential Life would work in the favor of strong margins. That's exactly what has panned out. I'll just first speak about the numbers on a year-on-year basis. Very strong growth shown by the company on all parameters, starting with new business premium that has grown at a little over 21%. The number which has come in is about 4,866 crore rupees versus 4,012 crore rupees. Annualized premium equivalent, again a strong growth, about 15% growth there at 2,136 crore rupees. And VNB, the value of new business, that has also seen a strong growth of 25% at 571 crore rupees. Remember, this strong growth of VNB of about 25%, came because there was a shift towards protection portfolio for the company, which has given better margins and a better value as far as the business itself is concerned. The company had seen a 25% growth when it comes to sum assured in the month of June. The similar trend was seen in the previous 2 months as well of the quarter. That number showing in terms of VNB for the company. Now, the most important number to look at, that is VNB margin. That has seen a very strong growth of 26.7% versus 24.5%. There were various reports and the chat was that, the margins will be tested for life insurance companies in the quarter. ICICI Prudential Life Insurance has started the quarter on a very strong note when it comes to margin, gaining by about 300 basis points on a year-on-year basis. It is ahead of the CNBC TV 18 poll as well. The poll was anticipating the margins to be at about 24.8%. The number has come in at about 26.7%. Apart from that, all numbers are bang in line with what CNBC TV 18 poll had suggested.
Okay, all right. Thank you so much, Yash, for joining us and explaining those numbers to us. That's about the insurance space, but let's talk about the biggest sectoral gainer for the month, the Nifty Realty Index. Let's talk about it in greater detail because the index is up around 11.6% this month itself. As I said earlier, it's one of the biggest gainers this month, but now the markets have, of course, come up from the highs, and so has this particular index. What has driven this big move in the Realty Index when it was an underperformer at the start of the year? The pre-sales numbers that are reported by the companies. For instance, Raymond Realty saw 129% growth in Q1. Max Estates 500%. Soba did see 74%. We had TARC, which is an NCR-based player, seeing 300% growth. Purvankara also saw 28% growth. Kalpataru, Mumbai-based player, single-digit growth, up 6%. But there were companies which did not see strong growth as well. So we do have Keystone Realtors, which saw a decline of 42%, and Signature Global seeing decline of 25% on a YOY basis. But Signature Global was a stock which was buzzing in trade on the upside. Let's talk about that, and it reported numbers last night. Their pre-sales are down 25% on a YOY basis, but they're up on a sequential basis, and that's the reason the stock could be seeing some positive momentum on the upside. Company maintained their cash and bank balances to the tune of 2,522 crore rupees. And if we talk about the average sales realizations as well, it stood at 17,093 rupees per square feet versus 15,250 rupees per square feet. And their debt increased on a YOY basis or on a quarter-on-quarter basis to levels of 390 crore rupees. As I said, this space in general has done really well. Taking a look at what the stock moves have looked like this time around, Prestige Estates is up 9%. Lodha has been a big mover, 23% higher. It's been a CLSA's technical pick going forward. There's Brigade Enterprises 12.5%, Signature Global up 21%, Godrej Properties up 13%. Keystone, however, continues to disappoint on the back of disappointing quarterly sales as well. So that stock is absolutely flat. But it has largely been a good month for the realty space, and that's why those massive moves that we are seeing across the board. But with that, we'll do one thing. We'll take a leave on this edition of Midcap Radar. Stay tuned. We'll come back with your stocks.
Hello, good afternoon. You're tuned into Your Stocks, coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motivala, and thank you so much, as always, for tuning in. In terms of the markets, we've given up those morning gains, right? We were holding on to good gains in the trading session, but today now we have come off that. We're trading almost near the day's lowest point when you look at it for the Nifty. A slight bit of that positive bias is what we are holding on to, but near the day's low, 24,080, around that mark is what the Nifty is holding on to as of now. We have the Nifty Bank. Let's pull that up as well, right? We had a lot of bank earnings that came in, Union Bank, among some of the names that were reported today. But
But Nifty Bank also has come off from the day's highest point. So the drag coming in is also from the Nifty Bank side. Apart from that, we have IT that's trading in the red. We had overnight in the US markets, your IBM's numbers, then we had in India, LTTS, Tata Elxsi, all these reported their numbers as well. So we'll watch out for the IT pack in the trading session as well. And apart from IT, the top sectoral loser today is also the metals pack. So keep an eye out on Hindalco, Adani Enterprises. You have JSW Steel, SAIL, all of them are seeing a bit of a red on the screen. A lot of movers obviously coming in on the broader end of the market on the back of their earnings as well. So let's watch out for that. But overall, advance decline ratio today, we've seen a bit more in terms of, it started with advances, then we've seen a bit more in terms of declines increasing as well, and those lines are nearing each other. So let's keep an eye out on that, because declines have moved up from the day's start, and whether this lines crisscross in the second half or the last hour of trade specifically will be key to watch out for. But let's keep it going and let's get answers to all your stock-related queries. To do that, we have Somil Mehta of Mirae Asset Sharekhan as well as Asta Jain from Hem Securities to answer those queries. Somil, Asta, good afternoon. Thank you so much for joining us on the show. Let's get started with the first query for today. We have Sarma, who's writing to us from Kolkata. She's holding 657 shares of NMDC Steel. Bought it at 51.25, making a loss in this one right now. The next stock that she's holding is 50 shares of Bajaj Finance at 995 rupees per share. So wants to know whether to hold these or sell and book out profits in Bajaj Finance and maybe book out the loss in NMDC Steel. Asta, good afternoon. What's your view on this one?
Hi, good afternoon to everyone out there. First of all, talking about NMDC Steel, I think there are various positives which are working well for the company. And first of all, they have got a very strong raw material advantage. Unlike the other steel companies, they have got a very strong access to iron ore. So this is what I believe is their key advantage, because they got it access from their parent company, right? Secondly, I feel about NMDC is that now they have got a very strong capacity expansion plan, and there is a large green field steel plant is there in the pipeline. So looking after all these factors, it is still looking a long-term story to believe on. And hence, my idea here is on the basis of the fact that we are believing it to get turnaround soon. NMDC is a stock to worth stay invested in. So idea here is just stay invested in this counter. Now talking about the Bajaj Finance is also looking good to us. Both of these counters are a strong counter to remain invested in on the basis of the large NBFC franchise which this company is having, and we all know that the kind of business they are into, their consumer finance business and other business.
Okay. Okay. Hold on to the levels over there was the word on the fundamentals. We will connect back with Asta. But Somil, on the technical front, NMDC Steel as well as Bajaj Finance, how are they looking like? Should the viewer book out their losses in NMDC Steel, or do you expect it to see a run up, and Bajaj Finance also?
Good afternoon to everyone. NMDC Steel, that one does not look great to me on the charts in the very short term. However, in the very long term, the structure still remains positive. There has been very strong support around 34, 36 levels, and it is trading exactly around 200 daily exponential moving average. So I think it may spend some time here. However, the structure overall remains positive. So I'll be positive in the long term. So hold on to this stock, and and also the metal sector cycle is looking very positive to me in the long run. So you can hold on to this one. Bajaj Finance, definitely a great stock to be in. It's a good stock to be in right now as a portfolio stock. Higher top, higher bottom formations on the monthly, weekly charts, trading above the short-term averages, long-term averages. So I'll hold on to the stock. Keep trailing your stop losses. Around 994 is my short-term stop loss, but in the medium term, 950 would be my stop loss, and you can hold on to the stock. In fact, you can add more from here.
Okay, that's a word coming in on both the names over there. Metals you're positive on, and maybe can look to add from here on as well for Bajaj Finance and the levels. Keep an eye out on that. Let's move on to the next query then for today. We have Manjunath, who's writing to us from Bangalore, holding 2,000 shares of IRFC. Price is at 176 rupees is the buy price. So they're making a loss on this one. They're holding it since June 2024. The other one is 2,000 shares of ONGC, bought it at 300 rupees per share. So wants to know whether to hold or sell. What is your view on this one, Somil, on the technical front, IRFC as well as ONGC?
The IRFC definitely negative. The trend has been negative for a very long time now. Since mid 2024, it has been in the downtrend. Now it has already retraced a lot from the highs of 220, and it's already at 88 levels. I'm still expecting the downtrend to continue till 80 to 83 levels. That's the level I'm looking for on the downside. So I would say that there would be a little bit of pain still in the near to medium term, but in the long term, I think the retracement is already done from the levels of 220 at 80 levels. I think it's a good buying opportunity once it gives you a positive monthly candle. That would be a good confirmation point. But if you have already invested, hold on to it. I don't see the stock going below 80 to 83 levels. ONGC, definitely hold on to it. ONGC has been on the downtrend for a little while now. I can see that ONGC has taken support around 226 multiple times. So that levels remains very crucial. And you can keep a stop loss around 220 and you can hold on to the stock. I'll be expecting, the uptrend to start very soon.
Okay, that's a word coming in for ONGC, positive on ONGC, can expect an uptrend from here, but not too positive on IRFC on the technical front. Next query for today. This is coming in from Runal, who's writing to us from Mumbai, holding 200 shares of Reliance Industries. Price is 990 rupees per share. She's a long-term investor, wants to know whether to book profits or stay invested in this one. Soman, Reliance Industries, what should we be doing here on the technical front?
Absolutely hold on to it. I'm absolutely positive. It may see sideways correction or a time-wise correction around 1200, 1250 levels on the downside. That is the worst case scenario I'm looking at. However, at this point of time, there's a very good level to, in fact, add more. I'll be expecting the stock to go above 1400, 1450 levels very soon. So yes, it has been forming an ending dangle pattern on the daily charts. Once that is completed, the formation is completed and we get a breakout out of that pattern, I'll be expecting a very good rally. So hold on to it, probably add more from here.
Okay, hold on to it, probably add more from here. That's the word on Reliance Industries, positive there. Next query for today. This is on two IT companies, actually three IT companies. Subramanian is writing to us from Bangalore, holding 20 shares of HCL Tech. We have the next one is TechM. He's holding 100 shares of TechM. And Wipro also is what he's holding. 100 shares of Wipro and 20 shares of TechM is what he's holding. They've not mentioned the buy price, but they're saying, is it time maybe to switch to something like an Infosys or a TCS or any other stock with a 2-year time horizon, or continue to hold these names? What is your view on these names? IT Pack as a whole and HCL Tech, Wipro, TechM is what they're holding, looking to switch to maybe an Infosys or a TCS. Somin?
Yeah, I think there are three stocks which I like on the IT side, and it has started moving up now very recently. And I think this is the right time to be a little positive. HCL Tech, Coforge, and Tech Mahindra. These are the three stocks which I really like in this pack. HCL Tech, it has started forming higher tops, higher bottom. It is trading about 20 daily moving average. Of course, it's been in the downtrend, but it has retraced significantly from the highs of 2000, and it has made a bottom of around 1000. So good levels to buy. I'll be expecting this bounce to continue till 1350 levels for HCL Tech. Tech Mahindra, it has been very resilient. It has not fallen from the highs of probably 1600. It's been consolidating around 1300, 1400 levels, and it has started making higher tops now. So I think hold on to it. In fact, you can add more in Tech Mahindra. Keep a strict stop losses on IT stocks, which is because it has been a little uncertain at this point of time. But yes, Tech Mahindra, HCL Tech, and Coforge would be my top picks.
Tech Mahindra, HCL Tech and Coforge would be your top picks, but you're saying that do keep that stop loss, strict stop loss as well, given what we're seeing in terms for the IT pack as well. But that's a word for the IT sector. Actually, on that note, we're going to actually sip into a very short break. After the break, we'll come back and solve more of your stock-related queries, so stay tuned then. Welcome back to your stocks on CNBC TV 18. As of now, Nifty is inched up a bit in terms of few points from when we started the show, trying to make that comeback. Let's see whether we see that recovery coming in the last hour of trade will be key to watch out for. But as of now, 24,100 level is what we're keeping an eye out on, right? Whether we come back to that mark. So let's watch out for that. But let's move on and keep it going with all your stock related queries. We have Saumil Mehta and Asa Jain also here to solve all those queries. Asa, this next query we have is coming in from Hema Shah, who's writing to us from Coimbatore, holding 300 shares of HG Infra Engineering. Price is 1,490 rupees. So they're making a significant loss on this one. She can hold this for the next 2-3 years, long term, but does it merit holding this stock? Or maybe it is better to move to another name?
But I find the order book is very strong in this counter because they are having the order book of around 10,127 crore. I'm sorry, 10,147 crore. So I mean, the order book is very strong, which I believe, and they are riding on the infrastructure theme. So my idea here is, although the losses are high, but let's wait for the results to come in, because now they have started trying to diversifying from the roads also. So previously they were purely into the road, but now they are started trying to diversifying into the railways, renewable energy, etc. So I think all these factors are signaling towards upside, which can be seen in case if they show very good set of numbers. So just wait for the numbers to come in. Till the time, hold is the strategy from our side.
And on the technical front, Saumil, what should they be doing? You know, they bought it at 1,490, a significant loss here right now.
Absolutely. It has been in the downtrend for a very long time. And however, in the last 1 quarter, we've got a positive close. That's a positive sign after 5 to 6 consecutive negative close. Now, as we've got a positive close on the daily charts, is been forming a flag pattern. Now, I'll be expecting this flag pattern to break on the upside, and my targets on the upside would be 690 levels. 200 daily exponential moving average is at 690. A close above that, and if it sustains about 200 daily exponential moving average, I think the medium term confirmation will come in. So I would suggest to hold on to it. Keep a strict stop loss around 510, 505 levels, and you can hold on to it.
Hold on to it. That's a word you're saying coming in for HG Infra, but keep a stop loss on the technical front. That will be key also. Next query for today. We have Kaushik, who's writing to us from Chennai, holding 16,000 shares of Greaves Cotton. Price is 210 rupees, making some bit of a profit on this one right now. He would like to know the prospects of his investment from the short term as well as long term point of view. On the long term, what is the suggestion here, Asta?
Long term is looking positive for the Greaves Cotton because first of all, they are working on the e-mobility ecosystem, which is working very strongly for them. Secondly, if I believe that now the engine and the powertrain businesses is also working well for the company, and now the kind of retail network Greaves Cotton is having is looking very, very strong. In fact, their FY26 financial performance was also strong because I think they have shown the growth of around 18% in their top line. So on the basis of all these factors, I believe it is a long-term story to believe on and remain invested is what we can suggest for this counter at this point of time.
Okay. And on the technical front, Greaves Cotton, what should they be doing? Greaves Cotton, I beg your pardon, short-term and long-term targets?
Absolutely positive on the stock. There are supports. I'll give you a support levels. 20. Apologies. Just give me a second. Okay, so the 20 weekly moving average is around 195. So that becomes a base for the stock. I don't expect the stock to go below 195 levels. Now, the medium term targets for me would be around 310, 315 levels. And the long term targets probably would be above 400, 10 levels. So these are some, levels. However, keep your stop losses intact. Keep trailing your stop losses and trade in the long term, with a long term view, not with a medium term or short term view. I do not suggest a short term trading ideas on these stocks.
Okay, better to have a medium to long-term view on this one as well. That's a suggestion coming in on the technical front. Next query for today, we have Sangeeta, who's writing to us from Mumbai, holding 20 shares of Zen Technologies. Price is 1,889 rupees per share. Long-term prospect, asking if, continue to hold this, and also wants to know on Inox India, is it a good time to buy the stock? Your suggestions coming in for Zen Technologies as well as Inox India, Asta.
So Zen Technologies is a defense company, basically into the anti-drone system, defense system, etc. So the key growth driver for the company at this point of a time is their anti-drone system. So I believe that is one of the major point. And in fact, defense simulation business is also working well for the company. And I think these are some of the things we should look upon, like their drone and now combat robotics they are working on. Financial performance was also decent. So overall, my idea here is if anyone wants to play on a unique defense story, then this is one of the counter which one can look upon. And hence, my idea here is stay invested in this counter for the price target of around 2,000.
Okay, and Somil, what's your view coming in on Zen Technologies as well as for Inox India? Is it a good time to enter this one?
Both very positive. Zen Technologies, I think the story has just started. It was in the basing out pattern for a little while. It was correcting as well towards 1400, 1300 levels. But now it has broken out of that basing out pattern and started making higher top, higher bottom formations on the Zen Technology. Now it has been forming a triangle pattern on the daily charts, which is a short term pattern. Keep a stop loss around for short term. Keep a stop loss around 1700, and for medium term outlook, keep a stop loss around 1550 levels. Very positive on the stock. My target would be around 2250 in the medium to long term outlook. In Inox India looks great as well. It has been in the uptrend. I'll be expecting this trend to continue. It has taken support at 20 daily moving average right now, forming a triangular pattern. I'll be expecting a target of around 2300 on this stock in the medium term outlook. Keep a stop loss around 1750. Keep a very strict stop loss because these stocks are very volatile. So keep your stop losses very strict.
Okay, surely we'll watch out for that. I'll just look at the flashes at the bottom of your screens, right? We have some update that's coming in from Aether Energy. The board has approved some fundraise of around 1,200 crores. This is going to be via issue of warrants. You can see it at the bottom of the screens for you all right now. This is going to be through the India-Japan fund that is already an existing, investor there. So I believe that is what they are looking to sell, and that is what there'll be some issue of warrants that will come in. We'll wait out for more flashes on that front. But as of now, yes. Issue of 16 lakh equity shares to India Japan Fund, I beg your pardon, and this is going to be at 1,230 rupees per share. So this is what they're going to be issuing the shares to, and the fundraise is going to be for up to 1,200 crores. As of now, the stock has been holding on to gains since the get-go that we saw today, 7% gains as of now for the stock. Let's move on to the next query then for today. We have Joyanta, who's writing to us from West Bengal, holding shares of Crompton Greaves, and actually she's looking to buy. This is an investment query. So at current levels, Crompton, is it a good bet? 259 is what the stock is trading at. Asta?
So we believe on the Crompton Greaves story as well, and I believe that yes, one should definitely look after it if anyone wants to go into consumer electrical business, because what we believe that their segments like fan business or lighting business are working well for them, and in fact they have got a very strong brand and a very strong distribution network. One more thing is that now they are catering towards the rural and the housing areas. Definitely the growth story is looking very positive. So yes, one can make an entry into this because the balance sheet is also in a very good position. The only thing is that right now the stock is not in a very uptrend momentum. So maybe buy on dips is a better strategy for this counter. So one can enter into this counter at the lower level of around 240, 235.
Okay, we'll keep an eye on those levels over there. But that was the last query for today. Saumil as well as Asta, thank you so much for joining us on the show and helping viewers get answers to all their stock-related queries. And viewers, thank you so much for sending us your query. Remember, you can always send us queries on the phone number at the top of your screens as well as the email ID. So do send them and we'll solve them on Monday, Wednesday, Friday on your stocks at 2 p.m. But the last hour of trade is still there. So don't go anywhere. You have closing bell up next for that.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Now today, Asian markets have opened up fairly on the positive side right now.
They said we'd love to do it a different way. We'd love to invest in the United States with billions and billions of dollars.
The India-UK trade deal coming into force aims to boost bilateral trade to over $120 billion by 2030.
Oil is at about $86 just under 86 this morning.
Common trend among most of the fund houses this month has been the fact that they've doubled down on a lot of these private financial names.
24,100 on the Nifty, about a 0.25% higher.
We've been underweight on IT. Recently, we've reduced that underweight a little bit.
Fed has not reached its inflation target for 5 years. And they're getting very frustrated by that.
I would say we are reasonably positioned as, as at least one of the, if not the market leader.
Seen recovery already. If it continues to ameliorate from here on and perhaps at some point move into the green.
Balance sheet is strong. The business is going exceedingly well. So there's absolutely nothing, which I could even report.
What a fall in last couple of minutes from the highs. The Nifty is up 150 points from the highs of the day, very close to that 24,050 mark.
Today, Hero's cumulative investment in Ather has crossed 2,400 crore. And now Ather Energy is valued at nearly 50,000 crore if you consider today's stock surge.
So it was up around 2.5%, a 5% uptick on ICICI Pru Life. Also expecting HDFC Life's numbers, so we'll be tracking that for you as well.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. It's a very special Closing Bell coming up because I'm joined by Mangalam as well as Sonal. Guys, good to have you all on the show. Exciting 60 minutes coming up and we have got plenty to discuss.
A lot to discuss indeed. What's interesting is right now the market, the range that we've been talking about for so long, right? 2,400 at the lower level to 24,250 at the upper level. Today, exactly that played out. If you look at the Nifty, the low on the Nifty, 24,010 and the high, 24,220.
Well, the look that Sonal gave you was like maybe she has something to say even post-market hours. That initial look, bro, just be on high alert.
No. I think I was just going to say, okay, I was going to talk about the Nifty levels, but Mangalam has done that. So let me talk about the sectoral moves for now. We do have the PSU banking index, which is still, one of the big gainers in trade today, 0.7% higher. A lot of banking earnings that we'll be discussing on the show today. In fact, we do have the oil and gas space, which is one of the big gainers, but a lot of pressure coming in from metals. We have IT, which is not doing so well. But this is something we'll discuss through the course of the show. Let's tell you what's lined up on Closing Bell today. Stocks trim gains. Benchmark Nifty drops to the day's low to test 24,000. Broader market indices outperform larger peers. Metals and FMCG counters top drags in the final hour of trade. Life insurers, they are also in the spotlight. Steady Q1 results lift shares of ICICI Pru Life. Nifty major HDFC Life 2 is all set to report results later today. Let's talk about the earnings fine print along with what is expected of HDFC Life. All those details coming up in just a bit. Let's talk about bumper market debut for Kusumgar, the stock listed at a 37% premium to its issue price. A deep dive into that business coming up on Closing Bell. Second straight day of gains for Nuvoco Vistas on the back of steady Q1 earnings. A quick read through of what the results mean for the business going forward.
Right. How should you then position yourself in the last hour of trade? Bonanza portfolios. Mitesh Thakkar now joins in with some closing strategies. Mitesh, the range on the Nifty is continuously playing out. What do you do?
Yeah. So, as you rightly said, I think, the Nifty, and I've been highlighting as much that the Nifty broadly remains very ranged. And the levels are 24,300, 350 on the upside to roughly about 23,800 broadly on the downside. So I think on the index, that's still not showing any signs of a directional move. I think it could be a market which might not do much. Similarly, on the Bank Nifty also, it's trailing around the 58,400, 58,500 mark. So that's another, worry of the Bank Nifty also not lending any kind of momentum or strain to the Nifty, and therefore it is likely that we might be in this range for some time to come.
Okay, got that. A bit of a range on the headline index, but what about individual stocks, Mitesh?
Yeah. So I have a buy on Dalmia Bharat Cements. I think that's where some kind of a small breakout has taken place. The stock was not getting past levels of around 1800. It's done that today. So that's a buy with a stop below 1795. And look for a first target of 1870, though I suspect we might even look at targets in excess of 1900 here. And the other stock is ICICI Pru Life. It gave a breakout day before yesterday. Yesterday was some kind of a pullback day. But today, I think it's regaining momentum. So that's a buy as well. Keep a stop below 514 and look for a target of 555.
Okay, Mitesh, thank you so much for joining us with those technical trades. In fact, Mitesh spoke about ICICI Pru Life. It is spiking following a decent set of Q1 earnings. Value of new business grew 25%. Let's go across to our colleague Yash for the fine print. Yash?
Well, it's been a very strong start to the quarter with ICICI Prudential Life Insurance presenting its first quarter results. We've been talking about how the top line growth for life insurance companies in the quarter is expected to be strong. What the big question would be is that if the margin expansion happens, forget about the expansion, if sustenance of that margin happens and there's no negative impact because of various reasons, right? ICICI Prudential Life Insurance has really presented that strong number on the margin front. As far as VNB margin is concerned, that's come in at about 26.7% versus 24.5%. So that's the key highlight as far as the numbers are concerned. Apart from that, the numbers have been strong overall. New business premium, that has grown at 21%. Retail APE, that has seen a strong growth. APE is grown at 14.6%. Also, the value of new business has grown at about 25%. So overall beat, but of course the highlight remains is the value that the company has been able to derive out of the strong top line growth, that is in the form of VNB, higher by about 25%, and margins up about 220 basis points on a year-on-year basis, and similar kind of expansion from what the street was anticipating.
All right, Yash, stay on, but moving on from ICICI Pru Life, HDFC Life is slated to report its first quarter earnings in usually just a bit towards the end of trade is where it comes. Tell us what is expected.
Well, around 3:20 p.m. or it could even spill over to post-market hours. HDFC Life will present its first quarter numbers as far as the expectation goes. Again, strong growth expected as far as top line is concerned. So new business premium, that is expected to grow by 16%. The number that we are looking at here is 8433 crore rupees. AP expected to grow by 7% at 3459 crore rupees. Retail AP with a growth of 5% at 2922 crore rupees. The big question again here would be what is the kind of value which the company is able to derive out of the top line growth, because there is a negative impact of GST ITC not being present. VNB, what we are expecting is a 4% growth at 842 crore rupees, and margins are expected to decline by about 80 basis points. The number that we're looking at is 24.3% versus 25.1% last year, same quarter. Brokerages, they expect moderate AP growth due to weakness in the bancassurance contribution. VNB margins are expected to decline, as I said, due to the GST impact. Product mix likely to tilt toward traditional products from the ULIP products. Quickly on the stock, it's down 8% in the last 3 months, up 2% in the last 1 month. It trades at 2 times FY28 price to embedded value.
Okay, all right. Thank you, Yash, for joining us with that take. That's the HDFC Life's numbers expected anytime now. Let's go across to Siddharth Khemka, Head of Research Wealth Management at Motilal Oswal Financial Services, joining us now. Siddharth, good afternoon. Thank you so much for joining us. You heard Yash. ICICI Pru's numbers were better than what the street was working with. We're expecting HDFC Life's numbers in just a bit. What's your take on the entire space, and valuation-wise, how do you look at this?
Yeah, I think if you look at Sunil, the ICICI Pru numbers, there is a 9% VNB beat to our expectations. The VNB margins have expanded by 220 basis points. So overall, if you see the gross premium, that was in line and the AP was in line. But I think clearly the VNB margins and VNB, that has the profitability has been much ahead of expectations. So overall, if you look at insurance space, I think within the life insurance companies, the numbers for both the insurance, life insurance as well as non-life, that had come for the first 2 months. But I think now we are seeing a gradual recovery for life insurers April started on a strong note. May was a bit kind of, you can say, kind of subdued, but I think again the next month, that is June, we saw again strong growth. So overall, the margin story is that we are expecting this quarter to be where while the AP growth expected to be steady around 10% for the quarter, I think the margin expansion across the companies, that will be a key for the life insurance space. So within life insurance, I think SBI Life, which continues to remain our preferred pick, but I think with these kind of strong numbers, ICICI Pru should also do well from here.
All right, you are positive on the space. I wanted your thoughts in particular on two IT companies. One is L&T Tech Services, which is buzzing on the back of its numbers, and the other, on the opposite side of that, is Tata Elxsi, which is down about 5% post its numbers. You read the numbers, how do they look, and what's your call on these stocks?
Yeah, hi, Mangalam. So if you look at the two companies same time, I think one did very well in terms of numbers, better than expectations, although the new order wins, that was not that great compared to some others. But I think still, if you look at L&T Tech, revenue grew 1.5% on a Q-on-Q basis in constant currency terms, which was in line. The surprise was on the EBIT margin front, which was above our expectation. We had an expectation of 15.4%. The margins came at 15.7%. And again, I think the third company which said that the management expects recovery from here on. So I think the entire commentary from be it TCS, HCL Tech, and now L&T Tech, I think one thing is very clear for the tech space is that we are closer to, so the worst is behind, and I think from the next 1 or 2 quarters we should see marginal recovery. Valuations being at the comfortable zone for the entire sector. I think there are the long only funds that have started buying on this space. From a retail perspective, I think there is still 1 or 2 quarters away where the sector can see some consolidation before the actual growth comes. With regards to L&T Tech, currently we have a neutral rating, largely because of the higher valuation and the slower growth expected in FY27. FY28 could be much better, but FY27 USD revenue growth of about 7%, and hence we have a neutral rating. Tata Elxsi, clearly, I think a big miss, margins disappointed. We had a sell rating, and I think we continue to maintain our negative view on Tata Elxsi. Q1 does little to change the broader growth picture. Margins came well below our expectations, plus the transportation, which is a key vertical for Tata Elxsi, that remains a key monitorable. Any recovery there could kind of give some support to the stock, but I think till that time, we believe that the current valuations leave limited room for upside in Tata Elxsi. Hence, we have a sell rating with a target price of 3,100.
Okay, got it. Let's move on then. The stock we're tracking on Midcap Spotlight today is Grow. The stock has gained close to 35% this year. The April to June quarter results as well were in line with what the street anticipated. But Divyani joins us to help us out with a quick analysis of those numbers. Stock at the high of the day. Divyani.
Well, it was an operationally good quarter for the company, with a drop in equity derivatives activity that was offset by a strong surge that was seen in the commodities turnover, roughly around 150% on a quarter-on-quarter perspective. Strong growth in the cash market activity, as well as continued scaling of the MTF business of the company. Now, from a financial standpoint, the street was expecting a flattish quarter this time, with a drop in market activity that was observed after a robust March 2026. Now, revenue was largely flat at 1,501 crores, in line with street estimates. EBITDA came in at 963 crores, up 4% on a quarter-on-quarter perspective, with margins expanding over 200 basis points as a result of operational efficiencies, in spite of the higher employee costs that was seen this time around. Now, lower costs and higher other income aided in PAT growth this time, which reached 735 crores, and the street was working with a flattish PAT growth, so this beat street estimates. Now, what does Grow do though? Groww is India's largest retail broker with over 2 crore users on its platform. It makes money primarily when people trade and with over 50% of its revenue coming in primarily from the equity derivatives activity of the company, the cyclicality is definitely something that the company faces. Now going forward though, it is focusing on diversifying its business away from the traditional broking business itself, utilizing its large customer base to grow its wealth management business as well as its AMC platform. Now valuation though against peers, Groww trades at a valuation of roughly around 64 times its FY26 PAT as against its closest peer, which is Angel, which trades at 34 times its FY26 PAT. So there is a big difference in the way that these companies are valued, and the growth needs to actually justify this particular premium that Groww trades at.
Okay, all right. Sid, what do you make of this one? Groww, people thought it was expensive at 150, 160, 180. It's at 215 rupees. What do? Expect it to grow from here?
Nigel, I think company continues to surprise. The numbers were far better than expectations. So we were working with a 74% kind of PAT growth, and PAT growth came in at 94%. So there's a 12% kind of PAT beat from our expectations. I think revenue was in line, but I think this is one stock which continues to surprise on the growth side. So both on the revenue growth, I think there is a rising user adoption of all products, plus the user activation. So while the brokerage business is gaining market share across segments, they are also entering other segments such as MTF, commodities, which will only add to overall growth. So I think while the valuation discussions can happen with this kind of growth that the company is reporting, I think there is room for upside. Currently, we are working with a target price of 240, but I think post these numbers will get revised, and we could see even further upside for Groww from here on.
All right, we take that point, further upside from Groww from here on as well. But this week definitely belonged to stray moves in a lot of consumption stocks. So let's just round all of them up for you and tell you why these stocks moved a certain way and what are the triggers that we're tracking going forward. Patanjali Foods, let's start with that one. It's off the lows, but it's still down about 13%. In fact, at its lowest point, it was one of the biggest single-day falls that we've seen in the stock all the way since 2020, with big volumes backing that as well. We're trying to figure out what the reason was. Nothing fundamental, says the management. In fact, we spoke to them. They said that business is robust, no change in underlying fundamentals. There haven't been any regulatory inquiries, visits, or even, financial regulators, raids, etc. on the company. They continue to remain debt-free, and reserves and surplus for them are at 5,000 crores. So what is it that is key to track from here on? One, institutional shareholding in the company. Has there been any pairing of stake by some of the key institutions that hold that stake? And secondly, you will obviously look at the fundamental first quarter performance and commentary from the company on that as well. Kalyan Jewellers, on the other hand, up 41% this month, continues to do well at the high point of trade right now as well. And the reason for that, strong first quarter update, and then the valuation gap with Titan was what took the stock higher. So just to reiterate, what will be the key things to track for Kalyan Jewellers from here on when it comes to valuation discount versus Titan? If you look at it, at its trough, it was around 70% from where the stock started moving. Now it's around 50%, and at its peak, it's been about 35%. So this is something that we will be tracking. Kalyan Jewellers currently trades at around 26, 27 times as against Titan, which trades at 55 times. And finally, we have Bajaj Consumer as well, which over the last 2.5 trading sessions posted its numbers down around 13%, 15% actually. And we pointed out that, ahead of those numbers, the stock has rallied about 190% and trading at 35 times. So the key to track now will be any sort of outperformance that comes in on the current base. The last 4 quarters, the company enjoyed the benefit of a new leader and a high base. Now, easy pickings have been done for Bajaj Consumer. What happens from here on will be crucial to track. So that's about the consumption space and the stray moves that we've seen over the last few trading sessions. Let's actually hear out what the management of Patanjali told us this afternoon when we caught up with Sanjeev Asthana.
Absolutely no change in the business. Our business is robust. Our performance has been there in the stock market. There's absolutely nothing that has come either through regulators or any adverse impact that we've had. And the balance sheet is strong. The business is going exceedingly well. So there's absolutely nothing, which I could even report which might be remotely connected to the sell-off that we're witnessing in the marketplace. And that must be, the investors' prerogative in how they're seeing it and how they're working on it. In last 1 week or 15 days, there's anything adverse or anything that either has been alluded to or notices received. So that part is entirely out of the way. In terms of, the business fundamentals, they continue to be robust, very strong. In terms of, the growth momentum that we have in the system and the way things are progressing are exceedingly positive.
All right, that was the management of Patanjali Foods. The stock recovered about 7.5% from day's low, still sitting with a cut of almost 13% and at near 52-week lows as well. Sid Khemka still with us. Sid, on the three stocks that I mentioned, do you have any thoughts? You have Kalyan Jewellers, which has seen a big jump. Then there is Bajaj Consumer, obviously good performance coming in, but the stock had run up. And then now you have Patanjali Foods, where the management is saying there's no fundamental problem, but the stock continues to see a sell-off.
Yeah, Mangalam, I think Kalyan is something that we track. The numbers, at least the pre-quarterly business update came in. I think the jewelry sector has, across stocks, have been reporting strong numbers. Kalyan, for its part, even Q4 was pretty strong. However, I think there were some concerns with regards to valuation, and now some overhang now be getting removed. I think now the stock has started performing. Q4 was exceptional. I think the company has a diversified presence, strong customer liking as a brand franchisee, which is expanding across regions, and we are seeing it as a 20-22% kind of a CAGR growth. I think in this quarter also the sales growth of 38% is pretty strong. India business was 38%. I think that was international business also was up about 35%. So I think all round strong growth. We are currently working with a target price of 525. I think the stock has seen a sharp rally, but I think again we'll need to see the full numbers whenever the company announces. But as you rightly highlighted, there is a big discount compared to Titan. While the discount may not be bridged too soon, I think, but the discount can definitely narrow with the consistent performance that the company has been delivering quarter after quarter. So I think from here on also, if any dips can be utilized as an opportunity. So we remain positive, but I think stock has run up sharply in the last 1 month and closer to our target price right.
Okay, all right, Siddharth, thank you so much for joining us with your take on individual names. So those are some stocks that are on our radar. Grow, by the way, some conference call commentary coming in. They've been talking about good fundamental continuing, but we'll get you more flashes and more updates from that conference call, the stock at the day's high. Time for a break now. On the other side, we'll be joined by Amit Jeswani of Stallion Asset as part of Alpha Managers. Stay tuned for that. Welcome back. You're still tuned into Closing Bell. Let's talk about the auto space. There are a lot of buzzing elements in that sector. And long before India's EV revolution took off, before charging stations became commonplace, and before electric mobility became the next big investment theme, Hero MotoCorp placed a bold bet on Ather Energy. It started with a 205 crore investment in 2016. Nearly a decade and multiple founding rounds later, Hero's stake is now worth close to 14,000 crore rupees. Let's go across to Sudarshan on the big wall, and he's joining us with all the details.
The year 2016, electric scooters were still a novelty, charging stations were rare, the EV ecosystem was years away from becoming mainstream. But Hero MotoCorp saw the future and invested Rs 205 crore in Ather Energy, becoming the startup's first strategic automotive investor. The Rs 205 crore investment was just the beginning. As Ather grew, Hero doubled down, participating in almost every major funding round, even when electric mobility was still a nascent market. Today, Hero's cumulative investment in Ather has crossed 2,400 crore. Now, Ather Energy is valued at nearly 50,000 crore, making Hero MotoCorp's roughly 30% stake worth close to 15,000 crore after a sharp move that we have seen in stock price today. Against a cumulative investment of just Rs 2,400 crore, Hero is sitting on an unrealized gain of more than Rs 12,000 crore, translating into a return of nearly 6 times its investment. Ather stock has also rewarded public investors. From an IPO price of Rs 321, the stock now trades above Rs 1,200, a gain of almost 300% in just over a year, making it one of the strongest performance new age listings. Hero's investment wasn't only about financial returns. It gave the company early access to battery technology, charging infrastructure, software, and connected mobility. Knowledge that has helped shape Hero's own Vida electric scooter strategy. And Hero is not heading for the exit. In fact, the board has approved another investment of Rs 1,000 crore in Ather, signaling that it sees even more upside ahead. Hero MotoCorp's investment in Ather has become one of the most successful strategic investments in India's automotive industry. And as India's EV race gathers speed, Hero is making one thing clear. It's not done betting on Ather just yet.
Got it. All right. Thanks a lot for that, Sudarshan, and very, very interesting investment out there. But you'll have all been waiting for Amit Jaswani. Barely makes any TV appearances nowadays, but he's the founder and CEO at Stalin Asset who joins us on the show. Hi, Amit. I recall you were talking about Make India Great Again, MEGA, and hopefully things are going to get better from here on. But I want to ask you about how's the portfolio doing? What I understand is that our markets are still 10% away from the peak that we saw towards the end of 2024. But your portfolio, your investors seem to be quite happy because I think you're already at all-time highs. Is that correct?
Good afternoon, Nigel. Thank you so much for having me on your show. Yes, we are back to lifetime highs. The God's been super kind to us, and the portfolios are rocking, to be honest. And my read is clear. We've entered a bull market, Nigel, and this stays for the next at least a year's time.
Okay. Got it. All right. Amit, my colleague Mangalam has been talking about Kalyan Jewellers and what's going on there, and with regard to the valuation gap with the Titan and how that narrowed. Is that something that y'all are quite optimistic on? Is Kalyan that one of those stocks that y'all have been loading up on?
I don't know. I am not allowed to speak stocks, Nigel.
You can give it to us in some way that we get the message.
So me, my clients, we run a PMS. Me, my clients, my family, we've got vested interest in whatever we speak, and these are not recommendations at all. But we dabble around the portfolio. See, this is like the companies that you're speaking, gold jewelry companies in general are doing very well, be it the market leader, be it the second tier guy, and ROCs are moving higher in these kind of names. I cannot say much on the companies, Nigel, this time around, but we might or might not have positions here. I can't say.
I mean, if you've bought it and it's disclosed, then there's no harm in saying it, right? I mean, it's not that someone's, held you by your collar and said, no, you can't take any names and all of that and stuff. I understand that. It's all done with due disclosure. And obviously, with the fact that you may or you may not own that position. And at the same time, this is not investment recommendation or advice. But if something's done good for you, there's no harm in disclosing that, okay, this is what particularly did well for us. So if you could, in that light itself, tell us, what's delivered returns for you? Is it something from the logistics space? I mean, I recently remember, unpacking the business of delivery for our viewers. I wonder whether you have unpacked some gains for yourself on that one as well.
So in logistics, there's a lot of consolidation which is happening. Now you have only 2.5 players which are left in the logistics industry. The third-party express logistics side, Mangalam. So I see. So a lot of players have gone bankrupt. Expressbees went bankrupt. Ecom got acquired. FedEx went bankrupt. Ecom got acquired. So there's a lot of consolidation which has happened in this sector. Now there are only 2.5 players left, and I remain bullish. So I think there'll be a J-curve in profits. If you see both players which are listed, there might be a block which might come in one of the listed players very soon, or both the listed players. But I believe that consolidation has happened. Think of this as the telecom moment which is happening in the logistics side, where there were multiple guys, multiple players, and now the industry is getting consolidated. On jewelers, I would say that we buy growth. We have a pattern of investing, and across patterns, we keep investing in companies who are delivering well, who are executing well, and we like promoters who are executing. And as long as they are executing, we are with the stock, and if they stop executing, we move out. That's been our philosophy at Stallion. And that is not just across jewelry, it's across every industry. We do the same thing. We bet aggressively on execution. And Mangalam, I'll just tell you one thing. When I just finished my CFA, I would only bet on a good business because that is what we were taught. So that is where I started the concept of learning dhanda. That dhanda acha hona chahiye, and then we'll make investments. When we met so many people and so many promoters, I came to an understanding that sirf dhanda nahi hota hai. The more important thing is banda, and banda acha hona chahiye. Later on, now that we now more in the industry and more in like in the markets and cycles, the third most important thing is waqt. So now we bet on all three things: dhanda, banda, and waqt, and we keep doing these things, and we keep following a framework of investing, and it works well for us.
We could well be sitting in a mushaira right now, the kind of words that you said, dhanda, banda, and waqt.
You have a troika in the studio as well. We are the...
I guess that's what returns and, the bull market does. That's a very good thing. And, you spoke about the logistics space. Yes, delivery, one of the, concerns is that with the kind of institutional holding that it has, at some point or the other, there is always some or the other institution which is looking to, move. But since you spoke about dhanda, banda, waqt, it's waqt to give it to Sonal. Sonal, you have a question?
Well, yes, Nigel spoke about jewelry, must be buying that. We have Mangalam talking about delivery, so a lot of e-commerce transactions happening there. But let's talk about the realty space as well, Amit. What do you make of that? It's been one of the biggest gainer this month, Nifty Realty up around 12%. The pre-sales numbers have been quite strong. We haven't got some of them, but Godrej Properties, the largest developer with the largest pre-sales in FY26. What do you make of that? Anything else that you like from this space? Or do you think we are done with the peak demand that we saw in this particular sector?
So Sonal, we at Stallion, we have some investments in the AI cycle, okay? And we wanted to have some anti-AI bets. So real estate is a great anti-AI bet. So a lot of concerns were there on the real estate sector that real estate will not be able to grow because of if AI comes, there'll be job losses, etc. But we have a lot of investments on the fiber side, on the AI side. So we just hedged our portfolio because we don't want to be beta on just one side of the party. We want to make money, but regardless, I think real estate, if you have the right kind of players, the cycle, very high probability based on our research, that the bottoms are done in the realty side, and decent players. There are about 3-4 good players. You saw one player getting 8,000 crore demand in one day in the NCR market, and the prices
like that particular player, or do you like Godrej, which is a pan-India player? Because a lot of them are very specific to geographies, right? We do have Godrej, which is there across the country. Do you think that is a bet that you like?
We like real estate as a segment. Stocks I won't be able to take, Sonal. So sorry this time. But we like what is happening in the realty space, and we think the bottoms are in place. See, think about it. That is happening in the IT services space as well. Look at what happened with the ADRs yesterday. But stocks today are not down at all. So the markets are somewhat signaling probably that I don't know if they rally hard from here. I'm a AI bull more than a IT services bull, but I think the bottoms may be in place, and the right kind of players will start rallying hard in the IT services. So right now the sell-all trade in the IT services maybe sell-all trade gets over here. That's what I think. I don't know. We don't have enough evidence, but that is what the screen is telling for the last few days. That no bad news. Yesterday, IBM was down 27%. All your ADRs were down. All tech services were down. But today in India, the tech services seem okay. And so I looks like we are at the end. So these are typically distribution ending phases. So you're ending your distribution, but of course they will not rally. If they grow at 2%, 3%, guidance of 0 to 3% will not make them rally. Till now, no one was even looking at numbers here. And it was like a full sell-on narrative. Right now, the narrative, if now a company starts growing at 20, 25%, and there will be IT services companies that will grow decently, they will use AI as an opportunity. I believe great compounding looks ahead in decent IT services. So 0 to 3% IT services will not do well. But the ones that grow at 20, 25%, I think the bottom is in place.
All right, Amit, what about people say India doesn't have the AI trade, but you all found something that has something to do with the AI trade, right? I think you all were playing it via the fiber players. And you're caught, I think, closer to the bottom of various stocks. If I'm not mistaken, I think HFCL is something that you all liked. And those results could look very, very good. And that's what the street has been baking into the stock price as well. How much of the good news is in the price? HFCL, I'm not sure whether Sterlite Tech as well was something that you all played.
So Nigel, I would say that if you see what is happening in the AI world, you've got companies like Meta, Amazon, the hyperscalers, basically the four companies. The capex that they did in 2024 was $220 billion. Government of India's capex is $120 billion. Government of India does around 11 lakh crores of capex. One company, Meta, is doing $125 billion of capex this year. Google is doing $185 billion of capex. Amazon is doing $200 billion. Microsoft is doing $200 billion. This year, hyperscaler capex is $725 billion. We have never seen this kind of capex. If you think about the capex bubbles in the world, and this is my very strong belief, and there are phases to play this. We saw choke-a-blocks because the capex is so fast. We saw choke-a-blocks which happened in memory, and SK Hynix and Samsung did profits of now. Their profits this year should be around $400 billion. Next year, since they're already sold out, the profits will be $500 billion. I am expecting choke-a-blocks to happen in India as well. There will be some choke-a-blocks in India as well, and we need to trade those. So it may not be a great dhanda or banda, but the waqt is right now in favor of these kind of companies. This AI cycle, let's see what happens. We'll have to see data quarterly, but I see this as one of the largest disruptions. Just think about all the capex cycles we've seen. The largest capex cycle the world saw was in railways, where you could only sell things in a 4 or 5 kilometer radius with horses or with ships. And railways changed the entire world. But railway companies didn't make money. The money was made by companies like Rockefeller got created, Standard Oil got created, Carnegie got created, US Steel. If you look at like refrigerators, when refrigerators came new, everyone was buying coolant and refrigerator stocks, etc. But no refrigerator company made money. The money was made by Pepsi and Cola, the users of the refrigerators, right? The same thing happened in fiber as well. When fiber came and Capital Comms, etc., so many companies did hyper capex, but money was made by internet companies. Think about it, Jio. Jio enabled internet in India.
So we understand that, money. Yeah, we get that paucity of time, Amit. Just a minute before we speak to you, HDFC AMC, strong numbers coming in. That stock's spiked about 3.5%. EBITDA margins of around 78%, net profit growth of about 12% as well, overall revenue growth of 14%. Just before we let you go, I wonder where this sits in your Banda Waqt framework, EMS companies, because our colleague Ashmit just tells us that the cabinet has approved the other mobile manufacturing incentive that was expected and that's come by. Are you playing the EMS plays right now? Because everyone's speaking about manufacturing as a good dhanda. Obviously, with the EMS, the new incentives coming in, Waqt is nice. And all the players here, they aren't particularly bad, right? There's Dixon, there's, there's Amber, there are many others.
So we like the space a lot. We have made investments in and out of these players at different points of time, but we don't have large exposure towards EMS right now, but we like the space a lot. I think the total profit pool, but there'll be newer players. If you think there's an automobile player who's coming doing a very large, like a global automobile player who's doing a very large capex on consumer side. Consumer electronics, the total Indian profit pool of consumer electronics right now space around 2,000, 3,000 crores. I believe this goes higher multiple times in the next many years because this is one space. So if you take defense also, if you have BEL kind of... So.
We managed it.
We managed it.
But electronics as a space makes a lot of money from here. This is one space which is secular, which you have great dhanda, you have great entrepreneurs running the show, and Waqt will always be good for the next 10 years in this space.
I think if we had a longer conversation, we would have understood your entire portfolio, Amit. But
we got some color. I think Kalyan Jewellers from the jewelry pack, maybe delivery from the logistics pack, consolidation playing out there. Godrej Properties could be one that was a little undecided. And BEL, I think we've got that one as well out of the way. And
we don't have exposure in BEL.
No exposure in BEL.
Maybe he's considering exposure
and others
in BEL.
Also, we don't have exposure. I don't know.
Thanks a lot for joining in, Amit. Always a pleasure talking to you. And MEGA, right? Make India great again.
MEGA. We will happen. This is a bull market. I'm confident.
Your portfolio is already at all-time high, so your investors would be rather higher and happier. So we look forward to chatting up with you soon, Amit. Thanks a lot for joining.
Thank you so much. Thank you so much.
Okay, all right. At that part of the show, then when Nimesh joins us, tell us what is he picking up in D-Street Chatter. Nimesh?
Hi, Nigel. Another lackluster day of trade. Again, intraday we saw a big fall. And looks like there is a bit of consolidation happening in the Nifty at current levels. I've been highlighting for a while now that on the upside, 24,300, 400 is a very strong resistance on the Nifty, and that's really playing out. And again, looks like there is a bit of sector rotation as well, in various sectors. So capital goods stands out today, big move on those names. And the other side, IT is under pressure, and so is metal as well to some extent. From a flow perspective, again, a mixed day of trade, not big selling, but neither large buying as well. So again, it's quite softish from a flow perspective in today's market as well. And again, looks like the broader market participation is quite strong, and there are a lot of selective names which are outperforming on a consistent basis. So broader market doing good, but looks like at the Nifty level, there is a bit of resistance on the higher side, and the sector rotation is likely to continue in this earnings season.
Okay, and what about individual stocks, Nimesh?
So the first stock on my list is Bandhan Bank. Again, big move on that name and on large volumes as well. There is very strong FII buying, but I believe even a leading HNI investor has an active buyer in Bandhan Bank of late. So that's the buzz there. The second name is Vedanta, the holding company, which is at around 265, 270. You've seen a very large selling pressure in Vedanta today, and maybe that's the reason why that stock is under pressure. So expect high volumes, but on the sell side in Vedanta today. The third name is Sudarshan Chemical. Within the chemical name, this is really outperformed in the last couple of weeks. And now I believe at these levels, there is a bit of institutional interest as well. At least I understand one leading domestic wealth company has been trying to accumulate Sudarshan Chemical at current levels. And the last is a couple of names where there is buying today. Bajaj Finance in the financial name and Nykaa. Both stands out. So expect high delivery volumes on the buy side in those two names.
Right, Nimesh. Thanks a lot for that. So those are a bunch of stocks that we will be tracking as we go along. With that, we'll take a short break. And as always, we'll get you buy today, sell tomorrow calls from our technical experts.
Welcome back. Well, the headline index is holding with a gain of only around 20 points or thereabouts. But from the broader markets, there are a couple of stocks that are bucking the trend. Ganesha Ecosphere, just pull up the intraday chart out there. That one has now spiked to the high point of the day. Remember, this is a 2,000 rupee stock that had half from the top. And now, in fact, regulations are moving in their favor with regard to recycling. So Ganesha Ecosphere now spiking to the high point of the day. And in the last 1 hour or so, Hind Rectifier, a stock that doesn't have very large volume. There are more than 1 million shares that are traded. And that one's locked at upper circuit, up close to around 20% as we speak. So we'll keep an eye out on that one. Most of the trading session was flattish. And then at around 2 p.m., it's suddenly seen a very, very sharp spike. And now there are pending buy orders as well. We'll have to see whether or not there is a name that comes about in that name as well. Mitesh Thakkar is back with us. Mitesh, couple of fresh trading ideas?
Yeah. Nigel, I think Swiggy is something, which has completed a pullback to its averages, bouncing back. So BTSC there with a stop at 267, 267 for a target of around, let's say, about 275, 276. And the other one is SBI Life, which is a BTSC with a stop at 1856 for target of around 1880 to 1885.
All right. So those are the calls for tomorrow. We had a stellar listing today on D Street, Kusumgar. It was up around 40% at open and thereafter continued to see some gains. Devyani joins in to tell us more about the company and what the management spoke to us here on CNBC TV 18.
Well, Kusumgar Limited is the latest stock market entrant, and it's a manufacturer of woven, coated and laminated synthetic fibers. It serves 4 key high entry barrier segments, and those include aerospace and defense, which brings in 55% of the revenue in FY26, which is its largest segment, industrial and automotive business, which brings in 24% of its revenue, and lifestyle segment, which has been its fastest growing segment since FY24, which brought in 19% of its revenue in FY26. Overall, revenues came in at 692 crores in FY26, growing at a CAGR of 18% since FY24. EBITDA came in at 188 crores, growing at a CAGR of 32% since FY24. And PAT came in at 98 crores, growing at a CAGR of just about 8% since FY24. Now, the issue was oversubscribed by about 129 times, and it listed at a 36% premium over its issue price of 419 rupees at 569 rupees per share. And the management of CNBC TV 18 seemed very optimistic post-listing. It is set to resume its growth path after a brief pause that was seen last year, with major breakthroughs that the company has seen in the stealth solution segment. So this could be a key growth driver going forward. That said, the stock is currently trading at 64 times its FY26 price to earnings. So growth going forward will be a key monitorable.
Devyani, thank you so much for bringing us all those details. So that's new kid on the block. But let's talk about Hyundai now. The stock is up and buzzing in trade. Sudarshan is joining us now with what BofA is making of this particular name. Sudarshan.
So Hyundai is today one of the top mid-cap gainers after BofA Securities has come out with a note upgrading the stock to buy and target prices increased to 2,400 rupees per share. It said that new SUV cycle, export, mix and margin repair set up the company for a strong 29% EPS CAGR over FY28-29 after a decline that company has seen over last 3 years. New launches that company has made over the last few quarters, BofA Securities believes that it has been underappreciated by investors. Now mid SUV plus compact e-SUV can add market share in the range of 100 to 150 basis points going forward, with potentially more market share gain from MPV and hybrids after FY27. Now, they believe that there can be a recovery in operating leverage that a company can see in H2 FY27. Lastly, on the valuation front, it says that at 23 times FY28 estimated P, it's reasonable if the company manages to see a rebound in the earnings, what BofA Securities is estimating.
Right, Sudarshan, thanks a lot for that. We also have Mayuresh Joshi, Director Research at MarketSmith, joining in. Mayuresh, what do you make of the auto space? It's been a buzz in today's trading session, in particular Ather Energy. Then you have, a couple of these two-wheelers doing well too. And add to this, you have the four-wheelers, Hyundai, doing well too. Brokerage is liking it.
I think the autos have been on a roll to a large extent, and therefore I think from the auto pack itself, I think the auto ancillary space is something that we have liked for a length of time. Obviously, we owned a few OEMs, the targets got achieved a few months back. Ather Energy has a run on its own. They're also probably looking at some news items suggesting in terms of a stake sale or a fundraise of sorts. And then the consistent growth that they've probably reported holds it in good stead. However, our own sense is that Auto Angs as a space probably looks a tad bit better placed. We had very strong takes on stock like Sansera Engineering as an example, Shriram Piston Rings, which are part of our portfolios as a clear disclaimer. And they've really done well over the past few months. A recent addition which we've added in the auto ink space in our swing portfolios has been MM Forgings. Our own sense is that the numbers that MM Forging has reported, top line growth has been a record for the year gone by. EBITDA margins close to 19-20 odd percent. There will be some element of leverage kicking in the second half of this year. The machine part, specifically, I think the machine components that they're probably doing, and the value-added portion within that as well, I think that part is probably increasing every passing quarter as we speak, which makes us believe that the EBITDA margin performance might continue and in fact can get accentuated on the higher side as we speak. Very strong management, decent balance sheet, and expectations of operating leverage getting paid out. So Auto Angs, Mangalam, I think is the way we are looking at the auto industry.
All right. Auto Angs is the way you're looking at it. What we'll do is take a short break, come back. We'll line up more market talk with you on the other side. Stay with us. Welcome back. You're still tuned into Closing Bell. A lot of stocks in the broader markets which are buzzing on the upside. Yes, the Midcap index has come up from the highs of the day, but some of them are still at the highs of the day. Philatex India is one of them, up 15%. The UK-India FTA is finally in place. So we do have some of these textile stocks which are buzzing on the upside. Finiotex Chemicals is the other one. The stock is up 7.5%. This year itself, the stock has done really well, 56% higher on that one. Fedback Financials reported numbers just a
while back. It has been a decent set. The stock, though, has come off from the highs of the day. Let's go back to Mayuresh Joshi, Director Research Market Smith. Mayuresh, what do you make of some of these textile names? Anything that you like from this particular space? And is this a big opportunity that these players are tapping now with this UK-India FTA in place now?
Afternoon, Sonal. No, I think the opportunity is pretty large, so there is no two ways about it. And the expectations in terms of the competition intensity, specifically when it comes to our neighbors, whether it's Pakistan, Bangladesh, Vietnam, I think the pricing probably comes far more competitive in India's case with this agreement probably coming through. And therefore, I think the expectations in terms of a lot of measures that the government had probably initiated, they've done the road step initiative, which probably gave a large boost to the industry as a whole. And this obviously acts as a kicker and a tailwind in terms of additional volumes, realizations, and numbers coming through. Obviously, I think the impact is going to take some time. I think it's not that it's going to start from tomorrow itself. But I think in the second half, you'll probably see a gradual recovery happening in terms of cotton pillows, bed sheets, cotton sheets as an example, which we are clearly lagging in terms of our neighboring countries on trade. Having said that, I think the integrated players, Sonal, are in a far advantageous situation when it probably comes right from yarn to fiber. And because of a deficient rainfall that we're probably witnessing at this point of time, cotton or kapas prices probably are expected to remain very, very volatile. And therefore, integrated players like a Vardhaman, like a KPR Mill, like a Gokuldas as an example, SP Apparels is something also I'll toss in, can actually have the benefit in terms of the integration that they've probably got. That can probably take care in terms of the input cost volatility. And with expected volumes expected to come higher, I think exit 27, 28 numbers will probably look far, far better as we speak. So I think these select integrated players, in my opinion, over a longer period of time can obviously do well with this pack coming through.
All right. I recall we put out a piece actually on Editors Roundtable on textiles. It was ignored at that point in time. I think it was 3 months or so ago. Covered stocks like KPR Mills, the points that you had mentioned as well. And we had, breakthrough with regard to the India-US trade deal. And some of the stocks have done very, very well, whether it's Gokuldas, Welspun Living that you spoke about, also KPR Mills as well. But Mayuresh, what about cement? It was ignored. And it's a monsoon season, but people are getting optimistic. Why? Because Nuvoco, a stock that listed at $550, came down to 300 rupees. Suddenly, the results look quite good. And in the non-trade vertical, the cement prices have gone up by $20, particularly for East India. Now, the street is looking at a read-through. They believe that maybe companies like Birla Corp that have good amount of exposure there, Dalmia Bharat that has close to around 40% exposure to East India, and Ramco can replicate a similar model. Hopefully that works out for them, for those that think that's going to play out. But Novoco's numbers are good, and that's what set the cat among the pigeons. Your view on cement?
Constructive, Nigel. And again, I think as a mechanism that we follow at Market with India, I think we do follow market leadership stocks within the individual spaces itself. And therefore, I think JK Cement, Ultratech is something that the ratings and rankings as we see it look extremely, extremely strong. I think the arguments are absolutely in place. What you've probably seen in terms of consolidation for the industry will play out for market leaders like in Ultratech, who've got a very, very strong presence across the length and breadth of India. JK Cement with a good mix in terms of white and grey cement as well. And with expectations at some point of time in the second half, pet coke prices, coking coal prices expected to remain stable and also probably expected to dwindle lower, might actually lead to a better absolute and a relative EBITDA per ton performance as well. Let's also not forget, I think the kind of energy requirements that are now getting created in-house, I think a lot of captive power that is probably getting consumed reduces the overall burden in terms of power and fuel costs. And the plants that they've probably got are very, very close in terms of delivery centers, reducing the overall stress in terms of the margin headwind. And therefore, I think constructive on the industry as a whole. I think leadership stocks like JK, Ultratech, in our opinion, over a longer period of time should continue.
All right, take that point, Mayuresh. Hang in there. We'll leave our conversation on closing bell as of now, but you stay on for Markets Forward in 3 minutes from now. In 3 minutes from now, we'll have the market close as well. If we start wrapping up right now, we'd see, the Nifty is up around 33 odd points. Could have been a lot more, could have been a lot less, but it's right in the middle of the range. The low of the today's trading session was 24,000. The high was 24,200. We've seen the Nifty manage to eke out some gains. The Nifty bank higher by about 0.6%. If you look at among the top sectoral losers, we did have the IT pack, which did not do particularly well. The metals also fell about 1%, and the FMCG pack as well was lower by 0.5%. The broader markets, we had about a third of a gain coming in for the Midcap index. Among the top Nifty gainers today, we have Eternal, Ultratech, HDFC Life ahead of numbers, Aisha Motors, Shriram Finance. And on the stocks that did not do too well on the Nifty, we have Hindalco, Powergrid, Tata Steel, L&T and JSW Steel. But I guess the mid-cap end was a lot more colourful.
It was. In fact, we did have the small caps that did really well, 0.7% higher on the Nifty small cap index. And we did have a couple of these chemical stocks that ended sharply higher. I spoke about Pheniotex Chemicals just a while back. Gujarat Fluorochemicals also ended higher by 5.5%. We do have the Jubilant Pharmova, which is up around 5%. Aarti Drugs higher by 4%. There's Alembic Pharma. So a lot of these mid-cap and small-cap pharma and chemicals names are buzzing on the higher side. We do have refiners as well, which did well. Standalone, the likes of MRPL, we do have HPCL, which is also in focus. So that was also up around 2.5% in trade today.
Yep, and if you look at some of the notable movers, right, we had the result reactions. L&T Tech Services up around 6.5%. Billion Brains was up around 6% as well. Grow did extremely well in trade. And then alongside that, on the way down, Tata Elxsi obviously on their numbers was down about 5%. We had Patanjali Foods, a top volume loser today, down about 15%. Delivery was down about 2.5% as well. And Vedanta from the metals pack was lower by almost 3%. If you look at some of the bigger gainers in the broader markets, we had Nuvoco, which continued its run, now about 18% higher for this week. RPG Life was the other one, which was up around 8%. PC Jeweler, the jewelry stock, continued to do well. And we had an 8% gain that came in for Ather Energy as well. Heroes Investment doing well for them. Bajaj Consumer continued to decline, now down 15% post its numbers, down about 4% in today's trading session as well. We also saw some decline coming in for names like Physicswala and Go Digit. Patanjali Foods obviously saw the biggest gash, down 15% on the back of volumes. And then we had DLF, which was lower by about 2% as well. Amidst all of this, we had a strong debutant. We had, Kusumgar, which listed with a 40% premium and ended with a premium as high as well. All in all, a range-bound trade for the frontline indices, but a lot more colourful action that took place beyond the markets.
Okay, with that, it's a wrap on Closing Bell. Stay tuned. Markets Forward comes up next. Markets end the session with modest gains. Nifty holds about 24,000. Sensex gains 149 points, while broader markets outperform.
It's a strong start to the earnings season for lenders. Fed Bank Financial's profit surges over 50% with assets under management crossing 21,000 crores, while Union Bank reported double-digit growth in net interest income.
ICICI Prudential gains after beating estimates in the first quarter. New business premiums grow over 21%, while margins expand. HDFC AMC also surges after profit grows 34% on mark-to-market gains.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all of the key data points to gear you up for the next trading day. I'm Ekta Batra and with me is my colleague Sonal Bhutra. Well, it turned out to be a session where there were no complaints. We could have built on gains, but nonetheless, we just about consolidated for the Nifty. By the end of it, we were just about higher by around 26 odd points. And the Bank Nifty did see some amount of a recovery as compared to yesterday's underperformance. So the Bank Nifty went home with gains of around 0.5%. Advanced decline ratio was positive. So that's a key statistic to watch out for. 2,500 stocks advancing to around 2,100 stocks declining. And the Midcap index ending with a gain of around 0.3%. Hi, Sonal.
Hey, Ekta, good afternoon. Well, while the mid-caps did do well, we did have the small-cap index, which was up around 0.7% in today's trading session. A lot of buying in chemicals that continued. We did see some of the realty names, seeing a reaction to their quarterly updates. So Signature Global was one of them, though Nifty Realty ended at the day's low. But all in all, we came up from the highs of the day, and the range that we've been talking about continued to be in focus. 24,000 on the downside and 24,250 to 24,300 on the upside. But while we do that, let's also tell you what we do have as lineup on the show for you. We start with top movers and shakers of the day with Vivek Iyer. From earnings to investment bets, we break down the key developments that were in the spotlight. Last but not the least, we delve into the key market events to watch out for tomorrow's trading session. And to our first segment of the day, Vivek Iyer joins us now from the big wall with the top movers and shakers of the day. Vivek, over to you.
Well, thank you so much for that. Another session where we actually saw quite a bit of volatility, but towards the end of the day, advanced decline ratio in favor of the advances. In terms of individual stocks, individual sectors that did quite well. Can't look beyond the cement pack today. Most of the names, after a while, were buzzing in the session. Nuvoco Vista's numbers giving a bit of a fillip. So names like Ultratech, Dalmia, most of the cement stocks up anywhere between 3 to 10%. The other stock that did very well was Grow. This particular company, Billion Brains Garage, also known as. Very good set of numbers, despite the volatility and the dip as far as F&O and equity derivative volumes are concerned. That was offset by a very strong 2.5%, 2.5 times rise as far as the commodities turnover is concerned. Now, the other name on the radar was, of course, Hyundai Motors. BofA Securities went ahead and upgraded the stock, ended higher by almost 2%. And Aether Energy, on back of the fundraise and the fund infusion coming in from Hero Moto, that particular stock too did very well in the session, higher by 3%. And lastly, Kusumgar, that particular name, when you're looking at that, a strong listing day, ended the day higher by 44%. Remember, it was oversubscribed significantly well too. In terms of stocks that saw significant negative news flow and negative reactions, Patanjali, can't look beyond that. The management did join us, told us there's absolutely been no development, a bit of a recovery, but still low by over 14%. The entire mid-cap IT space, after the muted results coming in from Tata Elxsi, most of the names took a bit of selling pressure today, and also overnight news flow ensured that most of the stocks as far as mid-cap IT were under pressure. Metals, especially in the second half of the trading session, names like Vedanta, Tata Steel, Hindalco, all of the stocks saw a bit of selling, 1 to 3% low across the entire metal universe. And JSW Infra, within the mid-cap IT, within the mid-cap basket, one of those stocks that sold off on significantly higher volumes.
Okay, all right, Vivek. Thanks very much for that. Let's take a look at some of the earnings that we got today. Fed Bank Financial's profit has surged over 50% with assets under management crossing 21,000 crores, while Union Bank reported double-digit growth in net interest income. Let's go across to Ananya for a detailed breakdown of the numbers and the key takeaways.
Well, banking earnings have kicked off on a pretty strong note. If you can see, Fed Bank Financial Services and Union Bank both delivered pretty strong numbers. Now, let me first start with Fed Bank Financial Services. Now, if you can see, was clearly the standout on growth, with AUM rising 35% year on year, led by a remarkable 77% surge in the gold loan segment, which now accounts for more than half of its portfolio. Now, this strong momentum translated into a 53% rise in profit, along with sharp improvements in ROA and ROE. Now, your asset quality remained comfortable, although the sequential decline in disbursements and moderation in capital adequacy needs monitoring going forward. Now, let us look at Union Bank. Good set of numbers, with net profit rising 30% year on year, operating profit growing 16% and NII increasing to 10%. Now, earnings quality improved further as fee income surged 45%, while lower operating expenses brought the cost to income ratio down to around 45.3% here. Now, NIM recovered to 2.8%, supported by a sharp decline in deposit cost. Asset quality improved further and provisioning coverage remained strong. Now, your credit growth was healthy, but weak deposit growth pushed the credit deposit ratio higher. So all in all, we can see good set of numbers from them.
Thank you so much, Ananya, for getting us this lowdown. To take the discussion forward, we are now joined by Mayuresh Joshi of MarketSmith India and Shrikant Chauhan of Kotak Securities. Gentlemen, good afternoon. Thank you for joining us. Mayuresh, let me come to you first up, because slew of earnings today, banks, our financials, I would say, did well. What did you make of it? And do you think after this rally that we are seeing in some of these names, there's still room for more upside?
No, absolutely. I think NBFCs have anyway given a very strong update for quarter one. And what they're probably exhibiting as we speak seems to be on the same track. FedFina had a fantastic set of numbers, in my opinion. The AUM growth was stellar. The asset quality pressures have started coming off year on year, quarter on quarter. GNPAs stand at 1.6, net NPAs stand at 1% as we speak. And because of this growth stage 2 and growth stage 3 assets, specifically when it comes to gold loans, which forms 52%, that is very, very marginal and minuscule, even in terms of the stage 2 and stage 3 count as we speak. And therefore, I think the PCR that they've probably got, the improvement in the return ratios, ROEs in excess of 15%, and valuation still reasonable. I think there is still headroom for more, in my opinion. So I think select NBFCs so that might continue going.
Okay, all right. Well, Shrikant, what's your thoughts on the Bank Nifty, which was supported by a lot of the momentum in the financial space today? But what would your strategy be on the Bank Nifty and individual stocks within that space also?
Good afternoon, everyone. So while looking at the overall formation of Bank Nifty, then there we are seeing range-bound sort of activity. It is finding difficulties to sustain above the mark of 58,000, but at the same time, at 57,000, 56,500, the Bank Nifty is having good amount of support. Currently, we are seeing range-bound activity not only in the Bank Nifty, but also in the other indices, especially in Nifty 50 and a few more indices. So whenever we see such type of activity, we need to be more and more stock specific, and similar sort of trend we are witnessing. So for the time being, we are specifically focusing more on private banks. There we like HDFC Bank, ICICI Bank. We also like Axis Bank to buy at current levels. But few small, like we can say, small size banks, there also we are bullish, and there also we are expecting upward activity like Equitas Small Finance Bank or FedFina Bank. I think this type of banks can do really well in this particular quarter.
Okay, take that point. Gentlemen, hold on. We do have Yash joining us because shares of ICICI Prudential Life Insurance surged nearly 5% after company reported strong set of numbers in the first quarter. Yash, tell us more. How did the numbers look?
Well, the numbers for ICICI Prudential Life Insurance look strong on all parameters from top to bottom. As far as the top line growth is expected, it was, anticipated that it will remain strong, and that's what came in the form of numbers. Also, new business premium that grew at 21%. Your total annualized premium equivalent, or APE, also saw a growth of about 14.5–15%. So that was strong there. In terms of retail APE, the growth was about 9%. So top line remained growth. What came as a positive surprise surprise for the street was the value which the company derived out of that strong top line growth. So your VNB that grew at about 25% at 571 crore rupees. And most importantly, what came as a positive surprise was the margin, which grew at about 26.7% versus 24.5%, almost a growth of about 220 basis points. Similar kind of outperformance was also seen on margin front with respect to the poll which CNBC TV18 had put out. So of course, top-down beat, but of course the positive surprise remained the operational performance which the company was able to deliver.
Okay, all right, Yash, thanks very much for that. So that's on ICICI Pru. But HDFC AMC gained after profit zoomed over 30% on mark-to-market gains, while Grow also delivered steady numbers. Reacting to its conference call takeaways, Devyani joins in with more on both these stocks. Devyani, over to you.
Well, let me start with the HDFC AMC first. Now, it was a good set of numbers from the company. Revenue jumped 5% quarter on quarter to 1100 crores. Expenses grew 19% quarter on quarter, leading to an operating margin dip this time around. But it still remained healthy at 77% on a quarter on quarter perspective. Now, mark-to-market gains were the real highlight. They gave a big boost to the PAT with other income bringing in 263 crores in quarter one against just 12 crores in quarter four. Now, coming to Grow, they were operationally a good set of numbers. A platform saw a 150% surge in commodities turnover and revenue was in line with expectations, but PAT was what exactly beat expectations this time around. Now, revenue came in largely flat at 1501 crores. EBITDA was at 963 crores, up 4% quarter on quarter, while PAT jumped 7% to 735 crores with lower costs and higher other income that aided this particular quarter.
All right, thank you so much, Devyani, for joining us with all those details. Let's go back to our guests, Mayuresh Joshi and Shrikant Chauhan. Shrikant, let me come to you this time. Grow has seen good growth this time around, fundamentally looking good, but what are the charts suggesting, or anything from the capital market space that you think is looking strong from a chart viewpoint?
Yeah, absolutely. I think from the capital market space, number of stocks, especially from the AMC side, they did well, and there we are expecting further more activity. But in that specifically, we like this particular stock, that is Billion Brains Garage, that is Grow, which is currently trading around 216, 218. Today we saw a big jump in the stock. But even if we consider its overall technical pattern, then I am of the view that gradually we can see the levels of 245 or 250. It will take some time because the stock is having low beta, but eventually the stock is heading higher. That's the overall view. We also like HDFC AMC, which is currently around 2750, 2770. There also we have a target of 3000, 3050. And on dips, definitely we will also keep a watch on Nippon India as well as Nuvama. I think these are the stocks on which we can keep a close watch.
All right. Well, Mayuresh, we're going to have a lot of numbers from the entire financial and banking space this Saturday. It's going to be a blockbuster Saturday in terms of financials. What's your sense in terms of what could probably surprise on the upside? Anything that you'd be looking out for in terms of trends?
So two aspects, I think. One, I think in terms of the overall business environment, obviously advanced deposit ratio actually playing out for most of these large banks. I think that will be very, very interesting. The second obvious impact is obviously going to be how asset quality is going to play out for all these big lenders. Third, I think we are very comfortable in terms of their PCRs and the provisioning that they've probably done on their balance sheet so far. And therefore, I think the slippages ratio is something that will be extremely pertinent for a large part of this financial pool. And if slippages is under control, if asset quality is under control, somewhere down the line, I think the underperformance, specifically of the large private banks, should start coming back very, very strongly. In my opinion, again, I think a large part of the large private sector pool has probably been under circumspect because of how deposit growth will probably play out. But if that's probably steady state, I think and the earnings are probably in line with estimates. I think Monday might be a blockbuster day. Let's not forget, Ekta, that Friday evening, even Reliance is reporting numbers. So I think all the heavyweights will probably start coming and weighing in on Monday.
Oh yes, it is going to be a very heavy Monday next week, considering almost 38 to 40% of Nifty is reporting numbers on Friday and Saturday. But let's move on to the next stock. Hero MotoCorp is looking to invest another 1,000 crore rupees in Ather Energy via preferential issue. The investment comes on top of its existing 29.5% stake worth over 14,500 crores in the two-wheeler EV player. Sudarshan takes us through Hero's bold bet in the company.
The year 2016, electric scooters were still a novelty, charging stations were rare, the EV ecosystem was years away from becoming mainstream. But Hero MotoCorp saw the future and invested Rs 205 crore in Ather Energy, becoming the startup's first strategic automotive investor. The Rs 205 crore investment was just the beginning. As Ather grew, Hero doubled down, participating in almost every major funding round, even when electric mobility was still a nascent market. Today, Hero's cumulative investment in Ather has crossed 2,400 crore. Now, Ather Energy is valued at nearly 50,000 crore, making Hero MotoCorp's roughly 30% stake worth close to 15,000 crore after a sharp move that we have seen in stock price today. Against a cumulative investment of just Rs 2,400 crore, Hero is sitting on an unrealized gain of more than Rs 12,000 crore, translating into a return of nearly 6 times its investment. Ather stock has also rewarded public investors. From an IPO price of Rs 321, the stock now trades above Rs 1,200, a gain of almost 300% in just over a year, making it one of the strongest performance new age listings. Hero's investment wasn't only about financial returns. It gave the company early access to battery technology, charging infrastructure, software, and connected mobility. Knowledge that has helped shape Hero's own Vida electric scooter strategy. And Hero is not heading for the exit. In fact, the board has approved another investment of Rs 1,000 crore in Ather, signaling that it sees even more upside ahead. Hero MotoCorp's investment in Ather has become one of the most successful strategic investments in India's automotive industry. And as India's EV race gathers speed, Hero is making one thing clear. It's not done betting on Ather just yet.
Okay, all right, Sudarshan, thanks very much for that. Shrikant, would you have a view on Hero as well as Ather?
Yeah, I think, see, like for Hero Motors, upside looks very difficult. Like at these levels, whenever we are seeing any bounce back towards the levels of 5,000, we are seeing good amount of profit taking. But at the same time, downside is also limited. So for the time being, the stock is not going to show any significant upward or downward activity. That's my view. So it is better to stay away. But yes, for Ather Energy, there we have a bullish view. Based on technicals, the stock is forming higher top, higher bottom. Whenever the stock is crossing its previous swing high, we are seeing good amount of participation. It is crossing high with good amount of volumes. So based on its technical formation, we are of the view that the stock is heading for at least 1,400 or 1,450. It will take some time, maybe a few weeks, months, but the overall trend is positive for the stock.
Okay, a positive trend for the stock. What about you, Mayuresh? Fundamentally, what do you make of this stock or anything that you like in the auto space?
I think it's outperformed the market, honestly, I think. And therefore, I think the kind of numbers that they're probably posting and the innovations that they're probably bringing onto the table, I think steps in the right direction. And if they continue doing so, I think there is a huge market in front of them as the EV penetration improves even further over the next few years. Obviously, I think the bigger players will get their own models and platforms as well. But Ather has created their own niche as we speak. So yeah, I think the momentum might continue. And on a personal note, I think my wife uses the Ather bike. So love continuing to spend.
Okay, all right. Mayuresh, just staying with the space, if you had to pick out one of the auto companies to bet on in terms of numbers for Q1, which one would it be?
I think, in my opinion, Mahindra & Mahindra should post a very strong set of numbers. And in the second half itself, I think that trend should probably continue. So I think from the core OEM space, I think M&M might have a very stable show. But as a construct in our portfolios, I think we are a little bit weird towards auto ancillaries as a factor. But M&M, I think, should stand.
Okay, all right. M&M should report good set of numbers. But today, this particular space did really well. Hyundai also was hard in trade on the back of a BOFA upgrade. So a couple of these names on our radar. But thank you, Mayuresh and Shrikant, for joining us as always. With that, we'll slip into a short break. And when we come back, we'll get to the top corporate poises along with the key market events to watch out for on the other side. Welcome back. You're still tuned into Markets Forward. It's time for some big corporate voices that spoke to the channel today. The management of Patanjali Foods told CNBC TV 18 that there has been absolutely no impact on company's business, adding that operations remain robust and the balance sheet continues to be strong. The management emphasized that the company is regulated by multiple authorities and said no regulator has raised any concerns over the last 15 days. The clarification came after the stock declined over 15% in trade today.
Textile manufacturer Kusumkar made a strong D-Street debut today, listing at 569 rupees per share on the NSE, nearly 36% above its issue price of 419 rupees. Speaking to CNBC TV 18, the company's CEO said that the company sees strong growth opportunities ahead, backed by innovations in lightweight materials and an expanding presence in the aerospace and defense segment.
And before we wrap, we'll bring you some of the key market events to watch out for. We do have Upasana standing by with the key events in focus for tomorrow's trading session.
Well, first up, let me highlight some of the important results for tomorrow. Starting is Wipro, TechM, BHEL, Polycab, Seat, Piramal Finance, all these important results that we'll be tracking for tomorrow. Now, next up, in terms of stocks, PC Jewellers, the board to consider fundraising via QIP, hence that stock will also be in focus. In terms of IPO listing, mind you that the Laser Power IPO listing is scheduled for tomorrow, so we'll be watching out for that as well. And SBI Funds Management Limited IPO closes for subscription tomorrow. Kirloskar Electric will also be in focus as the board to consider fundraising plans, hence that is something we'll be keeping an eye out on as well. Now let us move on to the global economic cues. First up, UK will be reporting its GDP and trade balance data for the month of May. So key important metric there as well. US will be reporting its advanced retail sales data for the month of June. Now, in terms of important global earnings scheduled for tomorrow, the one tops the list is the GE Aerospace, Netflix and even ABB Global. All these counters will be reporting their numbers. So certainly important one to keep a track on. And last but not the least, FIFA World Cup semi-final 2 will be scheduled tomorrow night. So that is something we'll be watching out for. So all in all, looks like quite an eventful day tomorrow.
Well, yes, absolutely. I think the semi-final would be top of mind for everybody in terms of England versus Argentina. But nonetheless, for the markets, we ended the day quite quiet, you'd have to say, at least for the frontline indices. We had the Bank Nifty, which did better. So let's see whether that kind of momentum continues into tomorrow's trading session. The broader markets also did their thing in today's trading session. So the Midcap index was up around 0.3%. The advanced decline, like we mentioned, was in positive terrain. But we had a lot of specific stocks which were in focus on account of earnings, on account of brokerage notes, etc. So that seemed to be really the theme of the day, which panned out. But on that note, it's also a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side. Stay tuned.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. US and Iran exchange fire for the fifth straight day. President Trump threatens to target Iran's civilian infrastructure if Tehran does not return to the negotiation table. Iran warns it could block more energy routes if Washington continues to try and control maritime corridors. Crude oil prices hover around the $85 mark as US reinstates the naval blockade of Iranian ports. Trump backtracks on his plan to charge a 20% Hormuz transit fee, seeks trade and investment commitments from Gulf nations instead. Sensex and Nifty end with minor gains. Midcaps outperform. Rupee weakens marginally against the dollar to stay above the 96 mark. The 11,700 crore rupee SBI Funds IPO is fully subscribed on the second day. Total bids for India's largest fund manager near 3 times the shares on offer, led by non-institutional investors. Cabinet approves the second phase of semiconductor mission with an outlay of nearly 1.3 lakh crore rupees. Also approves a mobile phone manufacturing scheme with an outlay of 62,500 crore rupees. India's free trade agreement with the UK comes into force. Average tariffs on UK exports will drop from 15% to 3%. 99% of India's exports to the UK will get duty-free access. British luxury cars and Scotch whisky set to become cheaper in India. UK also exempts Indian workers and their employers from paying social security contributions for 5 years. US lawmakers unveiled an updated version of the Russia sanctions bill championed by late Senator Lindsey Graham. The bill eases the proposed tariffs on countries like India and China that buy Russian oil from 500% to 100%. RBI proposes easier bank stake acquisition norms for mutual funds, insurers and pension funds. While prior approval remains mandatory for initial acquisition of 5% and more, one-time approval may cover future stake purchases of up to 10% in bank. Payments company Stripe and private equity firm Advent make a joint offer to buy PayPal for $53 billion. Reuters reports the offer was submitted earlier this month and values PayPal at a 28% premium to Tuesday's closing price. The Aircraft Accident Investigation Bureau files an affidavit before the Supreme Court on the Air India crash in Ahmedabad, which killed 260 people. Seeks dismissal of the petition filed by the father of the deceased pilot. Says cockpit audio cannot be released to the public and probe will be completed in 6 weeks. Draft report is expected by October. Hero Motor is looking to invest another 1,000 crore rupees into Ather Energy through a preferential issue. Hero Motor already owns more than 29% stake in Ather, which is valued at over 14,500 crore rupees. Spanish Armada sinks the French Legion at the World Cup semis to enter the finals for the first time in 16 years. Defending champions Argentina face England, who will be eyeing their first final berth in 60 years. All right, to the top story this evening. Tensions in West Asia continue to escalate as US and Iran continue exchange fire for the fifth straight day. Here are the latest developments. President Trump has threatened to target Iran's civilian infrastructure if Tehran does not return to the negotiation table, but he has dropped plans to charge tolls in the Strait of Hormuz. Speaking to reporters at the White House, President Trump said that Gulf states are now going to make investments in the US instead. This as US airstrikes on Iranian coastal cities and Tehran's military targets near the strait continued. According to a US military statement, the strikes were part of a 7-hour-long effort to degrade Iran's ability to threaten commercial shipping. US forces also resumed naval blockade in the waterway, claiming it only exists for vessels transiting to or from Iranian ports. The US military also claimed that Iran has attacked 7 vessels in the strait over the past 7 days. Iran has warned it could block more energy routes if Washington continues to try and control maritime corridors. Tehran also continued to target more US bases across Bahrain, Kuwait and Jordan. The Kuwaiti army said that Iranian airstrikes also hit civilian facilities in the overnight attacks. In the oil market, Brent crude prices hovered around the $85 mark. According to ship tracker firm Marine Traffic, 62 vessels have transited through the Strait of Hormuz in the last 24 hours. That's a slowdown in crossings compared to last week. Here's what President Trump said about the continued strikes against Iran.
I was called by different people, different countries, kings and emirs and all of the people that we all know. And we all love, and they've been very strong partners. And they said, we'd love to do it a different way. We'd love to invest in the United States with billions and billions of dollars and continue our record setting, because there's never been a time like this for the United States, with the factories, with the plants, with everything else. And we would like to invest tremendously in the United States as opposed to charging a fee. And I like that, actually, because I don't think anybody should be able to charge a fee for the straight or for any other straight relationship in terms of other sections of the world. I don't think anybody should be really in that position. But we were doing it as a reimbursement. The Gulf states are going to invest a tremendous amount of money into the United States, and that was very satisfactory to me.
They'll continue until I say it's enough. I mean, they'll continue. They've been, the word the military likes to use is degrade. They've been degraded to a very low level. I'll save the energy targets for last, but ultimately we'll hit energy targets, yeah. But we're going to hit them very hard tonight. We're going to hit them very hard tomorrow night. We're going to hit them very hard the night after. And then next week it gets really bad for them, because next week comes the power plants. Next week comes the bridges. We're going to knock out all their power plants. We're going to knock out all their bridges unless they get to the table and negotiate.
All right, let's talk about the stock market action now. Sensex and Nifty ended with marginal gains. Nifty continues to hold above the 24,000 mark. Sensex also managed to stay above the 77,000 levels. Midcaps managed to relatively outperform the blue chips. Bank stocks led with gains, and the Nifty Bank Index added nearly 300 points. Mangalam Malu is here with the day's market wrap.
Well, it was a day of range-bound moves for the frontline indices. The Nifty opened well. Thereafter, at one point, was closing in on the 24,200 mark to only see a swift decline from there, but managed to hold some gains. The Nifty Bank as well as the Midcap Index. The broader markets did a lot better today, and that was reflective in the kind of advanced decline moves that we had. But the range that we've been speaking about, 24,000 at the lower level for the Nifty, seeing some demand, and the 24,200 mark at the upper level is what the day's low and the high for the Nifty were. If you look at the gainers on the frontline index, they were a broad-based names. We had Eternal, which was the top gainer. Ultratech also did well. HDFC Life ahead of its numbers, and Shriram Finance too. Auto stocks in particular stood out. We had Eicher Motors, Bajaj Auto, Hyundai, all of them putting on some strong gains in today's session. But if you look at the losers, you had the likes of Hindalco, Power Grid, L&T, Infosys. IT for most part of the opening was lower. Thereafter saw some amelioration, only to end marginally in the red. And speaking about IT, the two stocks from IT result reactions, we had obviously L&T Tech on the way up and Tata Elxsi on the way down. Cement was one pack that also stood out after two consecutive days of gains that we saw on Nuvoco. Today, that was caught on by names like Dalmia Bharat, ACC and Ambuja as well. And among the other big movers today, Patanjali Foods really stood out with a near 13-14% cut, despite the management clarifying of no fundamental moves in the company. Big volumes on the way down for that one. Ather Energy, more investment coming in from Hero. That stock did well. And on the back of stellar results, Billion Brains or Grow did well as well. And amidst all of this, we had a stellar debut too, which was in the form of Kusumgar, which ended with about 40% added to its issue price.
Right, thank you, Mangalam, for that. Let's talk about the money market, where the rupee weakened marginally against the dollar. The Indian currency remains above the 96 mark against the greenback. 10-year bond yields prices rallied in trade, and the yield softened to 6.7%. The 11,700 crore rupee SBI Funds IPO is fully subscribed on the second day. Total bids for India's largest fund manager, near 3 times the shares on offer, led by non-institutional investors. The QIB and the retail portion have also been fully subscribed. The RBI has proposed easier bank stake acquisition norms for mutual funds, insurers and pension funds. Ritu Singh joins us now. Ritu, please take us through the key highlights from the Reserve Bank proposal.
That's right. The Reserve Bank of India has put out this draft note that can make life easier for large investors that want to hold stake in banks. Now, under existing rules, any big investor like your mutual funds or insurers or anyone crossing 5% ownership in a bank will need RBI specific prior approval. Even if their holding dips below 5% and they want to go back up again, they again have to apply to Reserve Bank of India. Now, RBI wants to ease that, but selectively. So the draft proposes this one-time approval route specifically only for regulated mutual funds, insurers and pension funds, which are now being called the qualifying persons. And importantly, they cannot be part of the bank's promoter group to be eligible. So once RBI clears them, they will not need repeat approval for subsequent stake increases up to 10% as long as they stay within the conditions set by RBI. But there is a catch. The approval is not going to be unconditional. Ultimately, it will be up to the RBI, and banks will also have to weigh in with formal comments before the approval is granted. And investors will also have to flag any move in their shareholding above or below the 5% mark to RBI within just 1 day, so that there is continuous monitoring and that doesn't get diluted even though the process gets easier. Now, RBI has also clarified that portfolio managers are not going to be treated as indirect stake acquirers so long as the client owns the shares, holds the voting rights, and the manager is only giving non-binding advice. Now, this is still a draft. Comments have been invited by the 4th of August, after which final directions will be issued.
All right, thank you, Ritu, for that. Moving on, PayPal shares surged after Stripe and Advent International reportedly made a joint offer to acquire the payments firm in a $53 billion deal. Reuters has reported that the firms are planning to buy PayPal for $60.50 per share. That's a 28% premium to its last closing price. The offer is backed by about $50 billion in committed financing from banks. Now, Hero Motor is looking to invest another 1,000 crore rupees into Ather Energy through a preferential issue. The company already owns more than 29% stake in Ather, which is valued at over 14,500 crore rupees. Sudarshan Kumar reports on the bet that's panned out for the company so far. Sudarshan.
The year 2016, electric scooters were still a novelty, charging stations were rare, the EV ecosystem was years away from becoming mainstream. But Hero MotoCorp saw the future and invested Rs 205 crore in Ather Energy, becoming the startup's first strategic automotive investor. The Rs 205 crore investment was just the beginning. As Ather grew, Hero doubled down, participating in almost every major funding round, even when electric mobility was still a nascent market. Today, Hero's cumulative investment in Ather has crossed Rs 2,400 crore. Now, Ather Energy is valued at nearly 50,000 crore, making Hero MotoCorp's roughly 30% stake worth close to 15,000 crore after a sharp move that we have seen in stock price today. Against a cumulative investment of just Rs 2,400 crore, Hero is sitting on an unrealized gain of more than Rs 12,000 crore, translating into a return of nearly 6 times its investment. Ather stock has also rewarded public investors. From an IPO price of Rs 321, the stock now trades above Rs 1,200, a gain of almost 300% in just over a year, making it one of the strongest performance new age listings. Hero's investment wasn't only about financial returns. It gave the company early access to battery technology, charging infrastructure, software, and connected mobility. Knowledge that has helped shape Hero's own Vida electric scooter strategy. And Hero is not heading for the exit. In fact, the board has approved another investment of Rs 1,000 crore in Ather, signaling that it sees even more upside ahead. Hero MotoCorp's investment in Ather has become one of the most successful strategic investments in India's automotive industry. And as India's EV race gathers speed, Hero is making one thing clear. It's not done betting on Ather just yet.
All right, thank you, Sudarshan, for that. US senators have unveiled an updated version of the Russia sanctions bill, which eases the original proposal's tariff threat on importers of Russian oil. The bill now proposes 100% tariffs on the top 5 purchases compared to the 500 proposed earlier. Senate aides said there were 26 co-sponsors for the bill. The bill was championed by the late Senator Lindsey Graham, exempts 15 European nations that buy gas from Russia from the tariffs. Now, India's free trade agreement with the United Kingdom came into force from today. Prime Minister Modi and his British counterpart K.S. Starmer had signed the agreement in July last year, following 14 rounds of negotiations. UK has called it their biggest and most economically significant bilateral trade pact since leaving the EU. Prime Minister Modi said the deal will provide a boost to India's farmers, entrepreneurs and the MSME sector. Abhimanyu Sharma decodes for us the key contours of the FTA.
Huge opportunities are expected to increase for India's exporters as the India-UK FTA gets operationalized. Now, India's current share in the total import market of the United Kingdom is just 1.6%, which itself indicates the huge possibilities which are going to increase for India's exports, which are not now going to get duty-free access for 99% of total exports. Now, several sectors, several labor-intensive sectors like agricultural goods, textiles, footwear, as well as machinery and electronics are going to get benefits from this free trade agreement. Also, cheaper British cars, cheaper Scotch whisky from Britain would be available for Indian consumers, and several safeguards have already been kept in place in the FTA to ensure that the mass market, either for Scotch whisky or for automobiles in India, does not get adversely impacted. Also, the DCC, which has been agreed upon, that is the Double Contribution Convention, is going to save over $500 million for Indian working professionals every year, which used to be given as part of social security contributions when they were working in the United Kingdom. Overall, several sectors are expected to gain as both the sides are looking to double their bilateral trade by 2030 in the next 4 years. Apart from that, India is going to cut 150% import duty on UK's whisky and gin to 75% immediately, and subsequently it will fall to 40% in the 10th year of the deal. It's expected that due to this larger availability of the Indian market to UK Scotch whisky, there would be possibly more capacity addition, more value addition and investment from Britain into India.
Right, thank you Abhimanyu for that. Time for a short break. Coming up, Cabinet approves the second phase of the semiconductor mission with an outlay of nearly 1.3 lakh crore rupees. More details when we return. Welcome back. The Union Cabinet has cleared the second phase of the semiconductor mission with an outlay of 1.3 lakh crore rupees. The Cabinet has also cleared a mobile manufacturing scheme with an outlay of 62,500 crore rupees. Ashmit Kumar is here with the details. Ashmit, please tell us more about the two schemes that have gotten the green light.
Well, two big ticket announcements coming in. Aggregate, both these schemes and the outlays put together adds up to almost 2 lakh crore rupees. So that's the quantum of the commitment that the government is looking to make with respect to one, semiconductors, number two, with respect to mobile phones. Let's first talk about semiconductor scheme. The total outlay as far as this semiconductor scheme is 1.27 lakh crore rupees, just as we have been reporting. In fact, we were the ones to report that this is likely to be taken up in the cabinet as well. That news being confirmed, 1.27 lakh crore rupees. In aggregate, we're looking at a cumulative production of 4 lakh crore rupees. We're looking at exports of 1 lakh crore rupees. Significant numbers these as far as the ISM 2.0 is concerned. This is the big takeaway as far as the semiconductor outlay is concerned. Talking about the other major scheme that has been approved by the government, that is, of course, the mobile manufacturing scheme. Bear in mind, we're looking at an outlay of over 62,000 crore rupees. This is substantially higher than the 40,000 crore rupees that had been provided under the PLI scheme. What we're given to understand is that what Ashwini Vaishnav, speaking to the media only moments back, told us, he confirmed that this will be linked towards exports. They're looking at expanding on the ecosystem that they've built here in India for mobile manufacturing. The government is keen on growing that and is now also looking to not just cater to the domestic market, but also cater to exports. Not just that, another important subset of this mobile manufacturing scheme is a push by the government to have a local champion, to have a national brand coming out of the mobile manufacturing ecosystem. So clearly a big thrust being laid here by the government on both semiconductors as well as mobile manufacturing. On ISM, again, the focus now goes beyond fabs. So far the focus had been on fabs, had been on OSATs. Now the focus goes into designing. It goes into IP. It goes into the broader ecosystem, the supply chain, whether that's chemicals, whether that's materials. So clearly a much stronger push coming in. The government hoping that this translates, this yields returns that had been seen in phase one of both the ISM as well as the mobile PLI.
All right, thank you, Ashmit, for that. Meanwhile, the Delhi High Court has agreed to hear a petition seeking the hospitalization and medical intervention for activist Sonam Wangchuk, who has been on a hunger strike for 17 days. He is demanding action over alleged irregularities in the examination system and resignation of Education Minister. In international news now, China's economic growth has hit its weakest level in more than 3 years. GDP expanded 4.3% in the second quarter, below expectations and down from 5% in the previous quarter. A sharp slowdown in investments and weak consumption have put pressure on Beijing to roll out more policy support. In an exclusive conversation with CNBC, billionaire Warren Buffett explained the rationale behind stopping donations to the Gates Foundation amid allegations of links to Jeffrey Epstein. Buffett has donated nearly $50 billion to the foundation over the last 20 years. Here is Buffett speaking to CNBC's Becky Quick.
You're talking about hiring decisions, maybe who you're associating yourself with. And there were certainly some questionable decisions on that came up in the release of these files. But there was also other, personal information.
Yeah, no, which he admitted to.
Yeah.
Yeah. No, and there again, I would say that, I've known some pretty wonderful people, and I still know some wonderful people. I don't think they've made every decision correctly.
So why, if that's your opinion on it, why are you no longer giving money to the Gates Foundation?
I reevaluated my whole situation. It's just like I've been doing since I was in my 20s, and we'd gotten married, Susie and I, and we didn't really have any money, but we did know that we intended to live fine, and we intended to have a family, and but we did not have aspirations of, having 6 houses or a 500-foot yacht or anything of the sort. So even then, we talked about what we would do philanthropically. Mm-hmm. But my idea and conviction was that I would compound money at a better rate than society generally, and that Susie would give it away better than 99.9% of the people that were giving it away, and she would get involved personally with the gifts, whereas I like to do things wholesale and she liked to do things retail. So we had a plan, but we didn't have any money.
Why did you change your plans?
Well, we changed plans because of what I've said out here. The money began to pile up.
No, but you changed your plan now. In 2024, you said it was a lifetime pledge to the Gates Foundation. Now in 2026, you were saying that's not the case. What happened?
Yeah. Well, what happened was that I gave the Gates Foundation a great deal of money.
Maybe $47 billion in total.
And I had no, and I thought that was a good decision. I think it was a decent decision. But I did not think my kids were in any way ready to give away vast sums of money. We'd started, Susie and I started with them. I think we may have given them $100,000 each.
This goes back 30 years at this point or longer?
That's about right, yeah. But they were growing children. I mean, they had children of their own by that time. But still, I don't think they were ready for it.
So then is it fair to say 20 years ago in 2006 when you made this decision, you trusted the Gates Foundation more than your children, and now you trust your children more than the Gates Foundation?
No, the amounts were different. It isn't to say that I trusted them differently, but I felt they were capable of handling it. I was certainly not going to turn something over to my kids and then pull it back from them. I mean, and the Gates Foundation has turned out to earn far more money than they expected to do. They spend more money than anybody in.
Right, with that as a wrap on this edition of Business 360. News and updates continue right here on CNBC TV 18. Thank you for watching.
Let's talk money.
Hello and
and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Precious metals, they're always in the limelight. At the start of the year, all the headlines were about the breathless run in gold and silver. And now, as we've completed the first half of this calendar year, the headlines are talking about the precipitous fall in precious metals. Yes, gold is down almost 30% from the peak. Silver has halved from the peak. And there are plenty of macro and geopolitical concerns out there. So this week on the show, we're going to talk about what is causing this precious metals meltdown. Is it more or less done? Are we halfway through? And as investors who want to have enough diversification in our portfolios, how and when should we start building in adequate exposure and our adequate positions? That's the talking point. But before I introduce the guests on the show, it's time to go to our resident in-house precious metals expert to get a quick crash course in everything that's happened in the last few months. Manisha Gupta is with me in the studios. We are stealing Manisha away from the breaking news headlines for a second, because this is completely phenomenal, Manisha, right? This kind of decline that's happened, and it's almost been a, pretty much a one-way fall. So just sum up the last 3-4 weeks and the reason why both gold and silver have fallen so much.
Oh, well, thank you so much, Surabhi, for having me on the show. Well, to begin with, it was a one-way rally as well. And the markets were thinking that it's not, it's overplaying the kind of fundamentals that we saw earlier during that time as well. So January was an all-time high at $5,600 an ounce. For the Indian markets, we saw 1,80,000 therein. And gold has seen 4 years of constant gains. Last year was a 70% of a jump up. In this year, till time, we are negative 7 to 8% therein. But the decline clearly comes in on the back of profit taking. Remember, January, almost everybody was buying physical, ETFs, funds, whichever way you could lay hands on gold, people were trying to buy gold. Ditto goes for silver as well. That is because the markets believe that there is a safe haven buying that gold was doing, and then the expectation that going forward, we could be looking at a cut in US interest rates. And that is something that really seems to have turned around. The street still continues to watch out for the kind of debt that US is holding. The global debt is $350 trillion right now. I mean, you would want to buy gold. And the major reason to buy gold also was the central bank buying. Almost every central bank that the World Gold Council did survey with did say that they would continue to buy gold. Yeah. China has been buying for 20 months direct. The profit taking then came in on the back of strength in US dollar index. The central bank, which were buying, did start to sell a bit as well. But that is the whole idea, really, because we saw selling for gold come in from Russia, from Poland, from Turkey in some sense as well. And then because the market started to stabilize, there was no interest really. And then we saw redemptions come in the month of March and April, and we saw gold decline.
No, absolutely. I think now the market's quite split in terms of what is happening with inflation and interest rates. I keep hearing that come up again and again in conversations. Every time we see the expectations of interest rates going up, we see a fall in gold and vice versa. So you look at, commentary from around the world. So who is saying what on gold? Are people still calling for 6? I remember in January, there were a lot of global banks saying 6,000 is going to happen. Yeah. Abhi kidhar hai?
Yeah, the banks who were saying that 6,000 is going to happen were called the bearish banks, because most of the other banks also believe that $8,000, $10,000 an ounce is a probability as well. But a lot of banks that I speak to right now have kind of stabilized, cut down, or revised their outlook on gold slightly on the lower side. So you have Goldman Sachs talking about 4,900. They had earlier spoken about $55,000 and $6,000 an ounce as well. You have Citi talking about 4,000. I was talking to Citi the other day on CNBC TV 18, and they said 3,500 first and 5,000 later. So that's the kind of pullback that they're anticipating in case of gold prices. You have Morgan Stanley, Deutsche Bank all talking about $4,300, $4,800 an ounce. So from where we are trading right now, their outlook is slightly higher, but accumulation levels perhaps are yet to come in. The street is looking at some consolidation. And then the other important thing, Surabhi, is, and we must talk about that, is that India is one of the largest consumers. Absolutely. And with PM's clarion call on not to buy gold also did make an impact. And then India also saw import duty gains. So while, of course, India doesn't make such a big dent, but all of this sentiment clearly has been seen by the other banks as well.
Yeah, and I think our tonnage is also now kind of stabilized. We're not importing, as much as we were in the last couple of perhaps years. Got that, Manisha. Thank you very much. It kind of gives us a backdrop with which we'll open up the conversation, and we'll ask our experts now what investors should be doing. So let's quickly get to it. Well, joining me are Chintan Harya of ICICI Prudential AMC and Kunal Shah of Nirmal Bang. Gentlemen, thanks so much for joining in. So it's a very interesting debate, and I think it's a good time to have this debate. 30% down on gold, 50% down on silver. Now, every time I've spoken to Kunal, he's been bullish. He's a perma bull on gold. Are you or are you not, Kunal?
Yeah, I've been bullish, but the kind of euphoria what we saw in January, that was not really making sense at that point of time. And now with the correction, I'm still bullish.
Okay. Opening thoughts, Chintan? A lot of people are wondering कि क्या हो रहा है.
So I think
no one saw this kind of an immediate drop.
This is probably the 6th or 7th time I'm doing a show with Kunal, together on gold and silver. So probably we are the Pied Pipers of gold and silver. But in Jan, when we did it together, we were like, it's getting overheated and there should be a correction, which has already happened. It will happen 40-50% in silver. We did not know. But after the kind of correction that we've seen, probably silver is making sense for those who have the appetite for risk. Gold, I think everyone has in their portfolio enough and no one sold. So I think gold is in no man's land right now.
Sure.
As Manisha mentioned, central banks are not going to buy much now. And individually, it's become a little expensive to buy, especially with the increase in tax also. It's made it 10% more expensive in India.
Because of the import duty.
Because of the import duty, yes. So I think gold will probably consolidate now after the kind of stellar rise that is there. Silver is probably providing an opportunity for those who have that risk-taking ability and did manage to sell on the higher side.
I want to take a step back to just understand what has happened, the peculiar nature of the last couple of months. Because, Kunal, this is a question that I know that we've asked a lot of times and, you and other experts have answered. Gold is always supposed to rally in times of conflict and war. Now, sure, one argument is that it already rallied so much as before we got into the war. But this whole bit on the relationship with inflation, the recent fall has also been attributed, Chintan, to the fact that, the inflation expectations are on the higher side, interest rate expectations are on the higher side. So, Kunal, you go first on this. Is this a bit of a peculiar behavior in this particular war because it's linked to oil prices? What have you made of the price action in the last few months?
Okay, so it's a very good question, because all the traditional parameters or the factors which generally account for the upside or the downside in the gold, they all have been put into big question mark ever since last 3-4 years. So they say that the stronger dollar leads to lower gold prices. We've seen a scenario where the dollar index was 105, 107 and gold prices were also moving up. They say that the inflation, whenever there is an inflation, gold prices should move higher. So you saw what happened. Inflation was 4.2% and gold went down from $4,800 to $4,000. So all of these traditional equations, all of these traditional factors are no longer playing a major role in determining the outlook of the gold, because the major catalyst for gold right now is the diversification play, which is taking place across the globe. And I believe that in next years to come, this will be the key factor for gold prices to remain either on the upside or on the downside, which is central banks still have no choice. Because if you look at what is happening with the US debt, so US debt as compared to 1 year is higher by almost $3 trillion than what it was last year. So this is a very difficult scenario where central banks are left with no choice but to buy gold or to dump US Treasury. So we are at that cusp right now that what is happening with Bank of Japan and Federal Reserve. So now the way yen has weakened, the Bank of Japan sooner or later will have no choice but to reduce their US Treasury holdings. And that makes gold very interesting going forward. We believe that gold prices can really form a good base around these levels. No one can predict the bottom and top. But I believe that we are at that curve right now where from here, the downside risk is very limited. We are not of the view that central banks can aggressively hike the rates going forward, because there is so much debt. So you cannot service this debt at a higher interest cost. So even though Mr. Walsh, he's known to be a very hawkish person, but if they hike rate by 25-50 basis points, the US housing market will eventually witness an unbelievable scenario. The prices will start crashing down. So either there are two ways. One is the way towards inflation. From here, they will inflate things, or they would destroy the demand and there will be recession. So I think the better scenario in this too will continue to be inflation. So they will continue to inflate things. They will continue to print money going forward, no matter what happens. So gold at this level is very interesting. And I believe that, like I said, no bottom fishing can be done, but this is the right time, one should start reallocating, because in India, when you say 1,40,000 today is the gold price, you remove that 10% duty. So gold prices are almost trading at 1,26,000, 1,27,000, which was 1,80,000 in January. So I think these are good levels, to start rebuilding your position.
But how to remove the duty, Kunal? Not in our hands. At the end of the day, we look at the net of duty price. I take your point. I take your larger point that after the cool-off, things are looking interesting.
That is a value. What I'm trying to say now, that even though the spike will not be as aggressive as 5,000, 5,500, but at these levels, if you ask me, gold is still poised to give you 10% CAGR return. My answer is yes.
So, Chintan, you tell us, what sense have you derived from all of this cross-asset movement in the last couple of months?
So I think the money which has come into ETFs or gold ETFs globally, as well as you saw in India also, we've touched 3 lakh crores of AUM in gold and silver. That was phenomenal. That kind of led to a significant increase in gold and silver prices till Jan 2026. And then the correction, post-correction, it's kind of slowed down in terms of flows globally. And what has picked up as a theme is the AI theme. So apart from whatever Kunal mentioned in terms of the reasons why gold went up and now it has kind of corrected, I think a significant portion of it is the flow of money going towards a certain sector, which is essentially semiconductors and artificial intelligence equivalent, which has taken some sheen away from gold and silver. Currently, if you look at it, yes, interest rates are likely to probably go up in US. That probably is being factored in the gold price. But the sheer reason that gold went up from almost $1,200, $1,300 to $5,500 was a significant rise. And the correlation is with the money supply, right? So money supply in US expanded massively. And gold's market cap, so essentially all the gold mined in the last 250 years, if we look at it, it used to be about $7.5 trillion. And today it has come to $30 trillion. And the money supply is around that itself. So when the money supply and gold match, normally gold tends to stall for an elongated period of time. Till the time the fresh money supply happens, as Kunal was mentioning, they'll have to print money, the global banks will have to print money. So till that happens, we'll probably have to have a certain consolidation phase in gold. Silver obviously is something which we consume. It's not, it's consumed in solar power, etc. It goes away. So silver may have a different trajectory. Silver is not a safe haven. It's not a bullion, so to say. It's an industrial metal. So after the 50% fall, probably silver may make sense for those who have the risk appetite, like I mentioned. But gold is probably in no man's land right now. It can consolidate for a few quarters before it shows us which path it's going to go.
Okay, so maybe some consolidation for gold. On silver, why do you say that this could be a good time for people with slightly higher risk appetite to get in now? What gives you that confidence and conviction?
So I think if you look at silver, once it broke the $50 mark, it went to $100, which obviously became an overshoot. And at that point of time, many of the applications become, let's say, too difficult to manage in terms of, let's say, the solar panel cost. Silver became about 15 to 16% of the solar panel cost. And then you have substitution with copper and aluminum, which can kick in. Now with the fallback on $55, $58, it becomes a good price where silver can again be utilized as it was earlier. And with the supply chains being where they are and the demand for silver being stronger than the supply of silver for the 6th year in a row, silver is a metal which can be looked at for those who have risk appetite, because traditionally it's supposed to be a very volatile metal, and we've seen that in the last 6 months. So hence those who have the risk appetite, and brilliantly those who are able to sell at higher price, this becomes a good time for them to look at silver.
Kunal, come in on this. On gold, you said 10% CAGR should be easily doable. What about silver?
So I agree with Chintan bhai. Even silver from this level looks very attractive to me. So like again, I will give a caution that we don't know the bottom. We cannot find the bottom. So nobody actually, if you ask me 2 years back, if you say that will gold be 5,500 or silver be $125, no one had that maths, okay? But now with the correction, okay, the interesting thing which I would like to add to the previous discussion also, that earlier the world was a globalized economy. Right now, the world has turned from the globalized economy to the multipolar world. So in this multipolar world, the intrinsic value of the commodities have grown up significantly higher, because now we are thinking from the point of view that each and every country is trying to secure their own supply. They want to have their own natural resources. So in this kind of scenario, commodities like silver, which is used in data centers, clean energy, solar, I mean, battery packs. People are talking about the silver ion battery right now, So now, in this kind of scenario, the intrinsic value of this commodity is much higher than the price. Forget about the price for a moment. So if silver have corrected from $125 to $55 right now, this is again an opportunity because the market continues to remain in a deficit. So after the kind of price rise what we saw, the supply side haven't responded the way it should have. Generally, what happens when you see this kind of rally in commodity, the supply side aggressively responds to the overall demand and the price. But this is the time that all the most of the silver's production comes from the secondary mine, primary and secondary, let us say 50%. So in this, secondary production also have not increased, and primary production of silver is also not increased. So market will continue to feel the deficit, remain in the structural deficit where the demand is growing at a very strong rate, in some of the section double-digit growth rate. So these are good levels to accumulate, and even if it goes down. Target, okay.
Yeah, that is the most important point. If someone's buying at 55 now, what is the upside they can expect in how much horizon?
Okay, so silver is a higher, the beta is pretty high for silver, and I believe that silver is poised to give you 20% return in a 1 year's time, 20 to 25. It may take 1 or 2 days also to get those kind of returns. But so conservatively, 20-25% return is very likely going forward. And $25 again, we can see going forward by February, March. And it is presenting all this fall in commodity because of the higher inflation, higher rate, this narrative, in next 2 to 3 months, I'm expecting this narrative to flip going forward, because rates cannot go up beyond a point, and there has to be a U-turn by central banks. This is my key reason for that. And hence, commodities still will continue to be a strategic asset class. We have seen a good consolidation, good correction, profit taking, whatever terminology. But now it is a good time, you start getting into commodity, because going forward, it's going to be the real asset trade, which is again going to be active. And at that time, you should own gold and silver in your portfolio.
I'm giving you a new title with your permission, Kunal, Commodity King. Absolutely, always rooting. But this time, you've got very solid arguments. So I completely understand where you're coming from. You've had a good price correction. So if you have a strong heart, then maybe silver. If you're a little more, risk averse, want some, caution in life, then maybe it's time to buy gold. Take that, Kunal. I know you have to rush, so we'll let you go. Thank you very much for joining us. We have to take a quick break, but after the break, the nuts and bolts. Now, we know both our guests have told us that it's good time to start building some exposure to precious metals. The question is how? We'll discuss that after the break.
Let's talk money. talk money.
Welcome back. You're with us on Let's Talk Money. And this week, we're talking about the precious metals meltdown of 2026. Imagine, same year, start of the year, we're talking about a bumper rally, unheard kind of levels. And now here we are, middle of the year, and things have cooled off quite a bit. You just heard both Kunal Shah and Chintan Haria tell us that it's probably a good time to start building some, good positions in both these commodities. Chintan, now the question here is that, gold ETFs, obviously they've been growing and they've been coming of age. We see more and more inflows coming in. But tell us, from an investor's perspective, just in terms of liquidity, curbing the day-to-day volatility, because the SEBI also sort of came out with some rules around that. Gold and silver ETFs, if someone is investing, what are the nuts and bolts to keep in mind?
So I think it's a very evolved market now. Silver was launched January 2022. Gold is 15 years in presence and more. Very liquid markets. And in terms of nuts and bolts, the viewers should know that every investment that you make in gold and silver is backed by physical gold. Globally, there were certain cases heard where the backing is not of physical gold or physical silver. But in India, as per mandate regulatorily, we need to have physical gold backing the ETF investments that they do. So that's something which investors should keep in mind. It is regulated by the regulator. And if you look at from an investment standpoint, it is very easy. And from a taxation standpoint also, ETFs after 1 year have long-term capital gains tax benefit, right? So if you're investing in a gold and silver ETF, you get that benefit because they are listed instruments. So taxation-wise, liquidity-wise, ease of investing, of course, during the market, whenever you basically are able to sell that, you'll get the money the next day. So I think that's the kind of ease which we are talking about, and that's why it's picked up. Like I said, it's a 3 lakh crore industry, and it was a very small industry maybe 2 years back. So I think it's also to do with the fact that mutual funds in India in general have expanded to almost 80 lakh crores. And as part of their asset allocation, we keep on talking about asset allocation, that 10% should be in commodities. Now people are talking about 10 to 15% should be in international. How fruitful it will be, I'm not sure. With the kind of rally that has happened in international, I definitely prefer India over international right now. But gold and silver definitely are forming a 10 to 12% part of the financial markets, which traditionally used to be on the physical side, on the jewelry side.
No, absolutely. I think the one lesson that 2025 taught us was diversification. I mean, don't forget everything else while you continue your love for Indian equities. Absolutely. But Chintan, there's one more product now that's come on the horizon. Earlier, we used to talk about digital gold. It was offered with the same convenience that you can buy on your mobile, buy small quantities, but it was not regulated by SEBI. Now we have something called these electronic gold receipts, which I think the National Stock Exchange has launched. So isn't that going to be a competing product? And, how should investors think about it? Because they both have the ease. You can buy both on your mobile phone.
Yeah, I think whatever suits the investors most in terms of their convenience. Some people are used to buying on the exchange, like just buy it on the exchange. Like you buy a share, many people are investing in equities. Similarly, you get to invest in ETFs of gold and silver. If on the EGRs, they find it easier, whatever is convenient, because both are backed by physical gold. And from a convenience standpoint and from a taxation standpoint is what investors should probably need to see. If it is a listed instrument, it will have a long-term capital gains tax. If it is not a listed instrument, you will have to wait for 2 years before you get the capital gains tax benefit. So I think both are okay. Sovereign gold bonds were brilliant, of course. They were the
gold standard, so to speak.
They were the literally gold standard.
In
they
gold
were the
investing,
best. But now with sovereign gold bonds not being issued, I think ETFs and whatever is convenient for the investors. The thing they should remember is it should not become a disproportionately large part of their overall allocation. Not at the wrong time for sure.
So speaking of allocation, last quick question, 10 seconds. For someone with a medium risk appetite, 5-10 year horizon, investing horizon, in such a portfolio, how much allocation would you make to gold and how much to silver?
I think maximum 3 to 4% in silver and the balance 6 to 7% in gold is fine.
Overall 10%.
Overall 10% within that 3 to 4% in silver. If you have the risk-taking appetite, it should be fine.
I have a lot of food for thought. I think I should think about my portfolio after this conversation for sure. All right, Chintan, thank you so much for taking out the time and joining us in person. This was a very helpful conversation. I had a good time, so really appreciate it.
Thank you so much. Thank you.
All right, well, with that, we're out of time. Hopefully, you found this conversation useful. Do tell us what you think. Leave us your comments, thoughts, and of course, we'll see you again with another theme next week. Thank you so much for watching.
Let's talk money.
Hello and welcome to News Center. I am Ashmit Kumar and we have with us today the big breaking news, one that confirms an earlier break that we had put out right here on CNBC TV 18. We're talking about ISM 2.0. We're talking about the mobile manufacturing scheme going forward. Let's dive in as to what the details and the nitty-gritties are. As far as CNBC TV 18's news break is concerned, we're given to understand that the Union Cabinet has approved Phase 2 of the India Semiconductor Mission with a massive 1.27 lakh crore rupee outlay. Also approved a 62,500 crore rupee mobile manufacturing scheme for 5 years. The second phase marks a major shift in strategy from focusing primarily on chip fabrication to building a complete domestic semiconductor ecosystem and reducing India's dependence on imports. The allocation is significantly larger than Phase 1, which had an outlay of 76,000 crore rupees. The new program now has a much longer term horizon and is expected to attract investments worth nearly 4 lakh crore rupees, generate semiconductor production of 2 lakh crore rupees and drive exports about 1 lakh crore rupees. Now launched in December of 2021, the India Semiconductor Mission aims to position the country as a global hub for semiconductor manufacturing and design. Electronics and IT Minister Ashwini Vaishnav said that several large companies are keen to participate under the design-linked incentive scheme. He added that startups will receive grant-based support while large companies will be offered a royalty-based incentive framework. The minister also said that Tata Semiconductor facility in Tulera is on track to begin commercial production by 2028. That's a couple of years down the road. The government, meanwhile, expects mobile manufacturing scheme to generate mobile phone production worth nearly 39 lakh crore rupees, significantly boosting exports and creating around 60,000 direct jobs. Mr. Vaishnav also said that both the India Semiconductor Mission 2.0 and the mobile manufacturing scheme are expected to be notified within 20 days. Now, to help us decode what these two schemes mean, what the road ahead looks like, is with us Mr. Ashok Chandak, the president of ISA as well as SEMI. Also joining us virtually is with us Mr. Pankaj Mohindru, the chairman of ICEA. To both the gentlemen, thank you so much for joining us, being a part of this conversation. Mr. Chandak, you were right here moments back. We were hearing together from what the minister had to say with respect to the big outlays. First, let's talk about ISM 2.0, 1.27 lakh crore rupees. Has the announcement met your expectations, the industry's expectations?
I would say it's definitely met the expectations. This is very unprecedented move and decision today. And to me, it's not only a question about the quantum, but the point here is I call 3 C's. We are moving from credibility, which is established under Semicon 1.0, the previous policy, towards the capability, which will be the outcome of this Semicon 2.0, with the policy continuity. And today, biggest differentiator is the policy continuity, because semiconductor projects are usually long gestation projects that needs the huge amount of investment, 5 billion, 15 billion, 20 billion kind of a stuff. And to do that, the global companies have to participate, they have to come, because India does not have the manufacturing technology. Nothing wrong in that. So if global companies have to come, either directly on their own or through joint ventures or partnership, then this policy continuity is one important aspect. And second is the ecosystem. So when we started a few years ago, that time the ecosystem was not there. Now with this policy, the entire ecosystem get addressed, right from design, the talent, the R&D, the OSAT, and also in addition to fabs, the equipments which we call as the machines and materials. There are more than 200 types of gases, chemicals, materials, those are required. Those are also getting addressed over here. So that way ecosystem gets developed, and that makes a highly conducive environment for both global and Indian corporates to invest into this sector.
Well, speaking of a conducive environment, let's also get in Mr. Mohindru, who's joining us virtually. Mr. Mohindru, let me get your thoughts. Phase 1, there was a focus clearly towards fabs, OSATs, OTMPs. That focus continues. It's not going anywhere. But additionally, ISM 2.0, from what Minister Vaishnav was telling us, wants to build on these strengths. So whether that's design, and as Mr. Chandak was pointing out, whether it's capabilities in terms of chemicals, materials, what will this continuity of government support do in terms of widening the ecosystem? So far, we have one fab and about 11 OSATs, ATMPs. What is next on the card for India's semiconductor aspirations?
I think this momentum will continue. I just want to correct one thing on your, this is showing that the output will be 2 lakh crores. That is only in the scheme period. The actual output out of this stimulus and the investments in this period will be far more because these will continue for 15, 20, 30 years. So the actual output will be much more and the actual export will be much more. This was just the period mentioned, which is this 5-6 years period. But coming back to semiconductors, I think the greatest focus will be design and also, both our own designs, which will be owned by Indian companies. We'll have a very large number of designs coming out with the intellectual property here. They will both be fabricated and packed here, and they could be packed outside. And also in AI compute, we'll be entering. But it will be a complete 360 industry by 2031, and we'll have all the capabilities. Also, the missing link so far, which is display, we should be having display fabs also coming out. Coming to mobile manufacturing, I think that has given us the respect in the world that India is actually able to produce at scale high quality products, precision products. So this trilogy, which is the continuing of the mobile phone scheme, which will 39 lakh crores is the output envisaged, and this is in spite of the tailwind we have. I think we should be able to cross this output over the next 5 years. And export of 15 lakh crores, that will really make us almost 30 to 35% of the global manufacturing, which will, this is an example which other industries have to follow, that we cannot be resting at 2, 3, 4% of the global output. Mobile manufacturing has shown that India can deliver. Currently, we are around 15% of the global manufacturing, which makes us quite unique in manufactured products. But at 30-35%, we'll be real heavyweights. And I think the other verticals, other sectors have to take a cue from that so that India becomes a major manufacturing destination for the whole world across the board. And so mobile manufacturing, the ECMS, semiconductors, these are all layers of a complete ecosystem which is coming in. And we are really very happy that, but let me tell you something.
Mr. Mahindra.
In spite of the huge tailwinds and the huge success of PLI 1, the rigor with which we, the industry and MIT had to work with various verticals of the government to convince them that the investment is fruitful. I mean, that rigor was quite incredible. And you have been hearing it, you've been a part of it. So I think, but it's a very happy day. In fact, I've just come to Goa to relax for
These
a
are developing conversations, Mr. Mahindra. As you correctly pointed out, this has been a developing journey as far as the electronics ecosystem coming to India is concerned. I'll just come back to you in a moment, but before we do that, Mr. Chandak, a word. One of the issues that was flagged as a part of the cabinet briefing was, what about the lower capital support? In phase 1 of the India Semiconductor Mission, for the fabs, for the OSATs, we had the government saying on a pari passu basis, 50% of the burden we'll take. Now, that's diluted a little. It's somewhere between 30 to 40%. Is that something that will maybe give the industry some food for thought, that why is the government giving us lesser support? Perhaps that should have continued as well?
I think there is no brainer on that, actually. The industry is quite proactive now. They are also looking forward to, surely the government support is important, but industry is a key stakeholder and they are willing to invest and they are willing to put the skin in the game. The point we should know now is 5 years ago when we started this journey, we had nothing actually in terms of the semiconductor manufacturing. Many companies, many countries were doubting whether this announcement will finally happen something. Now things have changed. As I mentioned before, we have already earned the credibility. The plants are operational, manufacturing is going on, that's already done. Number two, we should know now currently the entire semiconductor industry is in, I call as the investment upturn.
Sure.
There is a huge amount of investment which is going on because there is a demand led by AI and memories and other stuff. There is a huge demand and there is an investment going on. Day before yesterday, we as a SEMI released one global report which indicates that the equipment demand is going to go to $230 billion by 28.
Sure.
So that's 2 years from now. So equipment demand is going up means what? The manufacturing is stepping up. We are, I would say, this policy announcement is an opportune time. We are at the sweet spot for all our plants. Those were already in execution. They would definitely find the market. There is no struggle they are going to face.
Lower capital support is not an issue.
And then second thing here, because of this activity which is going on, and second point there is the overall 360 topic as a supply chain.
Sure.
Entire stuff of the supply chain gets clear, because if you make a wafer fab and still you have to keep importing several things,
right,
it's not going to work out actually in a long run.
Sure.
So once these additional things are, building blocks are made locally, the machines, the materials, the chemicals, the gases, the design inputs, the OSATs assembly, the fabs becomes more viable to run. The OSATs become more viable to run. So that way I would say, they may be, yes, people would make noise, they would say, because if you take out something money from the pocket, they would say that. But I don't see this is going to be kind of a showstopper. So there's one more point if I want to add, if you give me 30 seconds. The way I see right now, the government methodology and the architecture is a very holistic architecture.
Right.
So in our industry, we have been always talking about that what is the value addition in the electronic sector.
Right.
It has grown up. Definitely it has grown up, but it's never enough. We used to be 2-4%, now maybe 18-20%, but still, with this all things moving together,
right,
the Semicon 1.0, which is ongoing, Semicon 2.0 coming up, then this mobile phone PLI, completed new PLI comes in mobile phone, 62,000 crore plus.
Right.
And the ECMS scheme on a component side, there is a RDI scheme and there is an electronic manufacturing cluster.
Right.
All put together creates the great fabric and which is going to help us to move this electronics towards the about 40% of those value addition we have been aspiring for. So that $400 to $500 billion industry we are talking, $400 billion as a manufacturing, $400 billion as an industry, this all schemes put together is going to play a very, very important role, and we are very bullish.
Well, in fact, just adding up those numbers, the ones that we have from ISM, 1.27 lakh crore rupees, 62,000 crore rupees for the mobile scheme. We have ECMS as well. We're looking at support of in excess of 2 lakh crore rupees that the government is extending. But on the back of that support, Mr. Mohindru, let me come back to you. One missing link has been an Indian champion. When we heard about the electronics journey, there was talk of developing global champions and having a local domestic champion as well. What's missing from this equation? Because that's clearly a big thrust area from the cabinet decision. India wants, the leadership wants an Indian champion in the electronic space and the mobile space.
If you take the example of our neighbor, they first built scale. And by 2012, almost all their domestic brands had failed. They hardly had any share, 2-3%. So this is a really tough one because we do have Indian champions as EMS companies and people who are now stepping into design. But we do not have brands, not only in mobiles, but we do not have brands in other sectors also. We do have some brands in air conditioners and refrigerators, but we don't have brands in this. But this will be a very tough journey. And I think it has to be supported by R&D and design. And the scale which is coming up, the ECMS, which is developing the supply chain, I think in the next 5 years, we will have competitiveness because the scale will be bigger. We will have, the disabilities are much lower. There is support from this 62,500 crores. So definitely there is an aspiration, but this is going to be a very tough one to crack.
Well, there are tougher nuts that the industry has managed to crack over the last few years. This, of course, is the latest challenge, the latest gauntlet that the government has thrown, that not only does the government want the mobile industry to grow and focus now on exports, but also there's a big thrust coming in from the cabinet announcement for having a local champion, an Indian brand. I'd like to thank both Mr. Mohindru as well as Mr. Chandak for sharing their time and their insights to help us unpack some of the big announcements. Again, just for summarizing for the benefit of our viewers, we've just heard from the cabinet approval granted for a semicon scheme, the ISM 2.0, 1.27 lakh crore rupees, and a mobile manufacturing scheme of over 62,000 crore rupees. With that, it's time now for slipping into a very short break, but don't go anywhere. We'll come back in just a few moments. Of course, the other big story to unpack is the India-UK FTA taking force from today. We'll be back in just a moment. Welcome back. And the other big story that we're tracking today, of course, is the India-UK FTA coming into force today as of July 15th. That's when the CETA now begins to take effect. So what will that look like? That's the question that many of us are asking now. The deal has slashed the average tariff on UK imports into India to 3% from 15% earlier, while 99% of Indian exports will now enjoy zero duty access to the UK market. For luxury car enthusiasts, imported British brands like Aston Martin, Bentley, Jaguar, Land Rover, McLaren and Rolls-Royce are set to become cheaper as tariffs are phased down. Fans of Scotch whisky and gin will also benefit, with duties set to fall over time, reaching 40% after 10 years. The agreement is also expected to boost India's gems and jewellery exports, with industry estimates suggesting exports to the UK could double over the next 2 to 3 years, thanks to duty-free access. The government believes the pact gives India a competitive edge over China, which does not have a free trade agreement with the UK. Now, Commerce Secretary Rajesh Agrawal said that Indian exporters stand to benefit from that advantage. Experts say that the FTA could open the floodgates for trade and investment opportunities, but they also caution that while tariffs have been lowered, the non-tariff barriers will now be the next major challenge. Now, to help us unpack what some of these opportunities and challenges could be, we have with us Mr. Puneet Kaura. He's the chairman of CII Northern Region. Also with us is Mr. William Bain, the head of trade policy with the British Chamber of Commerce. To both of our guests joining us virtually, appreciate your time. Mr. Bain, let me come to you first. The UK FTA, India-UK FTA rather, coming into force. The aspirations are high. The target is about $300 billion of bilateral trade by 2030. But in the near term, in the immediate aftermath of this treaty coming into effect, what, to your mind, is the near-term impact in, say, about 6 to 12 months? What increase in trade are we likely to see in the near term? Mr. Bain.
It's a very good point, and the scope and potential of this exciting agreement is that we can raise our bilateral trade between UK and India by around 22%. if we just look at what's happening today, you know, £400 million worth of tariff reductions from India for UK goods entering India from today, covering sectors like industrial goods, pharmaceuticals, cars, food and drink. And of course, in terms of goods coming from India into the UK, 99% of tariffs being removed today. And that is going to have a huge impact on things like the textiles and clothing and footwear sectors, as well as those which you mentioned in the introduction. And in a world where we've seen tariffs go up in the last 18 months, having a big statement from two of the world's largest economies that tariffs can come down and that trade can go up is an important statement to the world about the ambitions of both of our countries.
Well, that's clearly, again, high on aspiration. Of course, we'll have to see how this pans out as far as execution is concerned. Mr. Kaura, let me come to you for an Indian perspective. Tell us, again, 99% of the tariff lines, again, the tariffs being cut. So a big boost expected, at least in terms of the tariff differential. But tell us, when it especially comes to labor-intensive sectors, whether that's textiles, garments, footwear, how is India, after this FTA, positioned against competing countries such as perhaps Bangladesh, such as Vietnam?
Thanks a lot for having me on your show today. And it's very clear that this current agreement that India and UK have signed would really enhance the labor-intensive sectors in India. I think the main thing that will differentiate us would be obviously the tariffs, which would basically create a bigger market for us in the UK. But more importantly, I think what's going to happen is when I look at the labor-intensive sectors, which are actually looking at partners like UK for markets, while we have such stiff competitions from countries like Bangladesh in the sectors like textile and so on, this particular India-UK FTA would basically create that differentiator, that kind of a enabler for our sector of textiles and in similar sectors where there's a lot of labor that can basically, benefit from the current agreement. And I feel that this is just the beginning. We would see more benefits peering in as there are so many sectors which are covered in this particular agreement. And it is a very vast agreement which covers not only the sectors which you mentioned, but multiple service sectors and high technology sectors and so on and so forth.
Right. Well, speaking of the areas that the agreement covers, let's also talk about auto. There's a lot of chatter anytime there's a conversation on the India-UK FTA. Mr. Bain, let me get your thoughts on it. This is the first time that India, under a trade deal, has relaxed the duties when it comes to fully built-up cars. Of course, what that means is that, subject to very strict conditions and quotas, there will be British cars that will now enter the Indian market. What does that look like? Will it be predominantly luxury cars? What will that do to India's luxury car market? Mr. Bain.
Well, India is the fourth largest car market in the world, so it's exciting that UK companies will have new opportunities from today to access that market at a much lower cost, drive more trade and sales than ever before. So, of course, the names which are very, very prominent to Indian consumers right now are Jaguar Land Rover, Aston Martin, Rolls-Royce, Bentley and Lotus. And Jaguar Land Rover assembles vehicles within India using pre-manufactured kits. So there will be jobs created for Indian workers in terms of their activities. But there are big opportunities to raise sales, not just of finished vehicles, but kits for assembly, such as Range Rovers and Jaguar. So high-end vehicles, but increasingly also mass market vehicles as well, will benefit from the increased cooperation that this trade agreement brings in. We know also that there will be further tariff reductions in terms of electric vehicles and parts that will be implemented as the agreement matures. So it is good news for the high-end sector, but for mass market cars and the big, big growth area in global automotive electric vehicles. We estimate that there could be a long-term increase in UK exports in this sector to India under this agreement of 310%. So that shows, again, it's a good deal for both sides.
Right. I have to just reiterate that this, of course, is subject to very strong thresholds, quotas, as far as any imports are concerned. But nonetheless, the first time India is giving a relaxation. Mr. Bain, a word on Scotch as well. The duty falls from 150 to 75%. Is this being seen as an opportunity by distillers based out of the UK to penetrate the India market, or are there non-tariff challenges in the form of local state regulations here in India?
Well, absolutely. I mean, I joined many Scotch whisky producers at an event in Edinburgh a couple of weeks ago, led by the UK's Department for Business and Trade, and the excitement that now India is the largest export market in the world for Scotch and for gin was palpable in that room. And the deals being formed, the contracts made. So it's not just that Indian consumers will be able to enjoy at lower cost products like Chivas Regal or Ballantine's, Johnnie Walker's or Dewar's, but many of the independent whiskies that are produced right across Scotland. So huge opportunities here. And I think this demonstrates that the UK and Scotch whisky industry sell 192 million bottles of Scotch each year to Indian consumers. So there will be a glass raised to the strength of this deal and the growth in that consumer market.
Well, that's clearly one reason that our social media chatter tells us that people would be celebrating this FTA in high spirits, if I may add. But here's another question is, when it comes to challenges, Mr. Kaura, I'll come to you. There are very strict rules as a part of this FTA when it comes to rules of origin, obviously to check any instances of transshipment. What does that mean for SMEs in terms of compliance burden, in terms of what it may require, in terms of documentation, in terms of audits? Are the SMEs geared from day one to actually be a part of this FTA journey, or will that take some perhaps time with some initial teething issues?
Is this a question for me or?
Mr. Kaura, if you can hear me, I just want to get a sense of how the SMEs are geared to handle the compliance challenges, the documentation challenges that comes with very strict rules of origin.
I think definitely there is going to be, when you have a new, it's basically playing the same game but with different rules, and the rules are actually more in favor of India, if I can say that. So when it comes to SMEs, obviously it's a heart of our basic industry, and a very large chunk of our industry is in SMEs. So I'm very confident that they will come up with a lot of interesting and opportunities for themselves when it comes to looking at the opportunities that get created with this FTA that is being signed. Having said that, yeah, obviously there would be some challenges in kind of understanding the fine print of this FTA, and I think a lot of it is already being done by institutions like ours, like CII, which educate and basically talk to our members, which are a big chunk of that. More than 70-80% of that is basically SME sector. And I think they are looking forward for benefits that will arise from this deal. But at the same time, I think we would probably need some education and some handholding. But there is definitely a big play that will happen for them. And I'm very sure about that.
Right. Clearly, there's a lot to unpack as a part of this FTA. We'd like to thank both of our panelists, Mr. Bain, Mr. Kaura, for joining us to helping us decode what this FTA will translate to. But that's unfortunately all the time that we have. We wish both of our guests the very best. But with that, it's a wrap on this edition of News Center. More news and updates will continue right here.
say that Bush he cares about the country. And I think that's been true of a good many. It doesn't mean their decisions are always great, but because sometimes the decisions are so tough. I mean, imagine Paul Volcker getting, death threats all the time, and others just think they know more than they do.
But you think Kevin knows a lot and is a...
I think he's a very, I think he was a good choice.
Okay.
Which probably means the president will be mad. Future presidents will be mad at him because future presidents are looking at the next election, and he's not supposed to be looking at the next election.
We also got the chance to speak with Warren Buffett about his views on the markets, and we'll have more on that coming up in just a little bit. Joe?
Quebec, thanks. We are watching the shares of health insurers. Elevance Health reported earnings and revenue beat estimates, raised its earnings guidance above consensus, but the stock had been under pressure before the report after the Centers for Medicare and Medicaid Services proposed some changes late yesterday to Medicare's decades-old payment system. The change would strengthen the oversight of billing practices.
Welcome to a very special Indianomics. My guest is economist and equity expert Neelkant Mishra, who has just been appointed executive director to the World Bank. Neelkant, of course, has been our go-to expert to connect the dots between markets and macros. He is very much a private sector professional, currently, of course, still with Axis Bank, and before that in Credit Suisse. But he has also been very active in policy making. He has been member of the Prime Minister's Economic Advisory Council and also currently part-time chairman of the UIDAI. Neelkant, thank you very much. We are very proud that this is your first media interaction after the appointment announcement.
Thank you.
Though I guess you're taking over next week only.
Yes.
Okay. So still with Axis. And therefore, I will stick to the questions you will answer because of your Axis role.
Thank you.
First, let's get through with the earnings season. We've got about 4 or 5 important results. What is the sense you're getting? Is it going to be better than expected? Is it going to be double-digit earnings growth?
Double-digit should happen because there's been significant rupee depreciation. Quite a few of the firms benefit from that. There is significant revival in credit growth. So at least our expectation is that the banks we cover should be showing 12% plus earnings growth.
If Indian Bank is an example, then it should be very good.
Yes. So credit growth is fine. There's some NIM compression, but otherwise, again, no reason to have high provisions. There are some sectors where there would be margin pressure because input prices did go up, and I don't think the companies had the clarity, and very rightly so, for taking prices up in the end market. And therefore, there is some. So while volume growth in autos, for example, is very strong, there is also a fear of margin compression. So, but I do think that double-digit earnings growth in the quarter should be possible. But in market, right? I mean, if the from the market's perspective, June quarter is priced in.
Quarter is priced. No, that is true. But what about from the FII perspective? That is the more important worry for us, not so much domestic investors who have kept the faith. The outflow has clearly stopped, but is there a growth magnet?
So more than the reported earnings growth, I think what FIIs will respond to is earnings revisions. See, because markets will always be forward-looking. I mean, it's not that the fund manager has suddenly changed their stripes. So so I do think that the 1% plus earnings cuts that we saw in April and May each should slow down. So June was slightly better. We still had some cuts, but very, very minor. And with these results, I expect to start seeing some upward revisions as well. But frankly, we don't need that. In fact, the fact that in the month of June, I don't remember which particular day, but on a 30-day period, there was significant outperformance of the Indian market. And almost all of it came from the growth in forward earnings. So if we stop seeing cuts, then the forward earnings start looking much better. FII's inflow, though, I think we should not anticipate for a while. See, the world, and you're seeing that, even when the ceasefire happened, there was apprehension that all of us had that this looks very shaky. And there are too many moving parts on all sides, and therefore it can break. And with that kind of uncertainty, you must have seen the dollar index is shot up.
Yes.
And the yields in the US are moving around unexpectedly.
Yeah, 4.6 also.
Yeah. So so in this environment, it is very hard for someone to choose emerging markets as an asset class. And especially as I think most people realize that the boom that is happening in Korea, in Taiwan, which has led to the outperformance of the EM basket, is also deeply cyclical in its nature. So by nature. So I think EMs as an asset class may not see much of inflow. India's steady reduction in weights in the benchmark should stall now. Maybe we start seeing some upturn. But I'm not banking on a significant inflow from FIs.
Okay, I'll come back to the FPI question later, but the more important flows that we are expecting are FCNR. Now, every now and then we get some news, UAE is doing this, Britain is doing this, but is the 50 billion guess of the market something you'll back?
I think so. I think there is a possibility it can be significantly more.
There are some who are betting on 80.
Yeah, we are among them.
Okay.
But see, a lot will happen closer to the date. So if you think about it from the savers perspective also, you would want to see where the yields are, what are the options. I mean, why would you commit to a certain return even before you see where the markets are, right? So even like say, own personal investment, if you have liquidity, you would say, oh, you know what, I think the market to correct. And if the market corrects a lot, maybe I'll put the money in there. So that means that all parties, not just the savers, but the banks, the global banks who have to provide leverage, the regulators who can, fine-tune the offerings by giving some clarity or removing some clarity or reducing. So there is a calibration possible. There is clearly from what we see in the initial demand that the demand the inflow can actually be significantly higher if we want it to be. But for now, I think 50 billion seems to be a safe number to work with.
No, I would admit, I think many banks are also believing that September would be the big flow time, or maybe late August. What about, let me come to the earnings season before I get angry mails that you're not asking about markets. First, IT sector. We've got TCS and L&T or LTM already. What is your sense? Do you think IT is going to be the dog in the house, or do you think you're going to see AI earnings? Just how will you invest in that space?
So our team put out, so we have had a coverage transition. The new analyst has put out a very deeply researched note on what really is the role that IT services firms play, and how much is the disruption that these large language models can bring about. And so the conclusion that he has, which I broadly agree with, is that there needs to be a significant transition in how these firms work. But at the same time, this is not the death knell for Indian IT. Having said that, I must say that from a PE multiple perspective, I don't think the uncertainty is going away. See, when you talk to people who are experts, so like just this weekend, I was spending time with my college buddies, 4 of them, and as you know, my formal training is computer science.
Yes.
They're all very successful tech entrepreneurs, all of them deeply involved in AI. And so some of the changes that have happened, like so December, January onward, some of the models that started coming up on code generation have improved dramatically. So it is very hard for anyone to have a very firm view on what are the things that AI can actually take over. So this does not mean that that IT services firms don't have a role to play. You look at Microsoft and all of these tech firms saying we will have FDEs, like the forward deployed engineers. What is FDEs? IT services.
Yeah.
So and if Microsoft is putting through FDEs, IT services firms can put up equally qualified and maybe a lot cheaper FDEs as well. So there is an opportunity, there is a business. My concern is that from a market perspective, the PE multiples for someone to go and bet on a trend, you either need very low PEs where you say, okay, this prices in all the uncertainty, or you say that, look, let me wait for clarity. So, and I'm afraid the P multiples are not low enough. Okay. So there could be volatility around earnings. So people may get excited that, you know what, the damage is not that serious, which frankly is true. Even in the month of April, there was 15% plus growth in IT services exports in dollar terms. Yes. A lot of it from GCCs, of course. May it fell to 3%, but after 7-8 months, generally there is a month where it is weak, so there is nothing much to worry about. So I think that services exports are still continuing. The concern for IT services firms from the market perspective is what business model, who will evolve first, and all of these uncertainties are reflected in the low price to earnings multiple. Okay, okay. So, so that P multiple revival, I think, will take longer.
Okay, so price is the uncertainty, not really business survival. Yeah. Which sectors should investors bet on now? I mean, again, there is a price which has made defense and some power expensive. But otherwise, which are the sectors that now look that can pull in the indexes up?
See, when you are looking at market positioning and your time horizons is at 3 to 12 months, you have to be less fundamental and a lot more tactical. Okay. Meaning that you know what, consumers look beaten down. Any point, say 3 months, 6 months later, you could see, I would say 6 months later, some serious chatter about the pay commission coming up.
No, but consumers do look beaten up. If you looked at Marico's guidance, it looks far more convincing than the Ps we are giving to some of the...
exactly. And the fact that, there is people started talking about pay commission, I think, way too early. Okay. But once the clarity emerges on, how this is going to play out, and around this time, you also see a significant improvement in the real estate market. Because if you visualize a very large set of people with fixed salaries and pensions who suddenly see a significant bump up, what are you going to spend on? Yeah. So you're going to spend on housing, you're going to spend on cars, you're going to spend on maybe not clothing, right? Because clothing and food, etc., are generally established, or maybe schooling. So this drives a pickup in momentum, and so these are the sectors that, as of now, both real estate and consumption look fairly beaten down to me. But that's more a 12-month view. From a tactical perspective, maybe even IT can rebound, given further, given that everyone is sitting negative. Okay. So even a minor positive development can actually drive a flare-up.
Okay, let me ask a key question and then come back to, because there are other sectors I want to speak with you. Where are you on this, since you speak to policymakers, on this, where are you on this entire debate of taxing debt versus equity? I mean, my sense is that debt has been treated too much like a stepchild with, slab rates, and equity gets a far better treatment. Is there an argument to bridge, to bring it somewhat closer? Because equities attract, people are investing in equities without any other thought, what age you are, what is your risk appetite, nothing. It is only the taxation which seems to be guiding. And it is also leading to overvalued equities, foreign companies like Hyundai or Whirlpool or Prudential wanting to sell out. So is there a case to bring the taxes closer?
First, I don't think the outperformance of equities, or the fact that even 2.5, 3 years back, I went on record saying that Indian equities seem to be considered safer by the market than even G-Secs. And that observation is still to some extent true. While P multiples have come off and equity risk premium have gone up, I would say that can still be said. But I'm not sure it's all tax.
Okay.
Because it's about the plumbing. So given that the SIPs and the mutual funds have actually done an excellent job, and there's some serendipity, just confluence of positive developments, like post demonetization, everyone wanted to put money, they put in money, and then monetary conditions were too tight, so economy was slowing, and then post-COVID there was a massive rebound, and everyone made money. There's a good feedback.
Yeah.
The same treatment on the bond side has not happened. Now, is it all because of tax? I'm not so sure. Should coupons be taxed at marginal rates? I think those are deeper questions. But again, the underlying concern that people seem to have, which I think is totally misplaced, that because interest is charged or taxed at or deposit at the slab rates, that's why banks are not getting deposits. It's like, I think that's totally wrong, and it's conceptually wrong. Because deposits in the system are a macro variable. It is money in the system. Now,
it is the cost at which it comes.
Yeah. So
and you are chasing deposits because it's not the most attractive.
No. So do the banks, given that we just discussed that credit growth is picking up and profit growth is picking up, provision levels are low, everyone is sitting on a lot of tier 1 capital. So is the objective to boost bank earnings or bank EPS, which maybe there is merit in thinking like that, but it is not about that, deposit growth is only 12% and credit growth is 17%. And so if you do that, deposit growth will pick up. That's the point I'm trying to address.
Fair enough. Okay, I want to belabor that point a little more, Neelkant, but for the moment, we have to take a break. But after the break, some very important questions on both this taxation, the India growth story, and Neelkant's role in the World Bank, which he will take over shortly. Welcome back to the Special Indianomics. I have been speaking with the Executive Director Designate to the World Bank, Neelkant Mishra. Thank you very much, Neelkant, for staying on. Well, before going to the break, we were talking about this unequal capital gains tax on equity. So your sense is that going forward, you're not expecting those taxes to change?
It's the government's prerogative.
Yeah, but if you were to advise, you wouldn't?
Given that some of these major changes were made only 2-3 years back, see, the worst recommendation would be for policy to become volatile. So you have to give predictability, because the policy uncertainty also has very negative effects on the economy and investor behavior. So the taxes are at a certain level, let them stay at a certain level, you see the pattern for a couple of years, and then you go and change. Because the moment you change, I'm sure there will be some other part which gets disrupted, and then you want to go and change again. So this, I think the current system is has been reasonably well thought through.
And therefore
clearly,
should be given.
There can be given some room to play, and then go and revise it as a policy. But the question of whether coupons are the same as fixed deposits or interest on fixed deposits is a much deeper and fundamental question. Are bonds the same as debt? Is a fundamental question which I think perhaps needs to be debated a bit more. But that's the only point where maybe
that's a more minor issue. I would assume that going by the positive response to the tax, removing the taxes on withholding and capital gains for debt investors, the same would come for equities. Is that a good assumption?
No, that's not a good assumption. On the debt side, there is strong precedence that in order to support index inclusion, even countries like China have actually given exemptions. So that the funds that come through India, because see, for the country, this is really cheap capital. So one of the concerns and one of the reasons we are having to issue FCNR and sort of explore how to, because our balance sheet is strong, but there is some liquidity stress, and we are trying to counter that. The whole reason for that is that a reasonable part of our current account was financed by capital which is very costly. So if a private equity fund brings in $1 billion and then compounds at 15%, most people say not, and 10 years later takes out say $4 billion. that's a lot of outflow.
Yes.
And whereas if you get money through the bond funds, there is a 7% flow and it's reasonably sticky. So if we can somehow encourage that to happen, and index inclusion, and we do the necessary stuff, which I think seems to be happening in terms of having much more efficient clearing, having better technology and all that. So all of those things are starting to fall in place. And so if that index inclusion happens, there is a significant flow that can happen. From an FPI equity perspective, does that mean that a significant amount of new money will come in? As I was saying earlier, I don't think it is tax driven.
Yeah, what equity investors look for are very, very different. Yes. Let me come to the growth story, therefore. Even when earnings were not doing well, like in 24 and 25, we saw GDP growth doing well. How are you looking at the current year? The RBI is standing at 6.7. Most estimates in the street are with the 6 handle. I am at the 7 handle. Where are you?
I would be higher than that. So our full year forecast was 7.5. When we noticed that, because then this war was going on and on and on, and we waited that, okay, it's going to end, and didn't. We said that, look, let's assume a higher price of oil, $85, $90, and then that means that there is a drag on growth. Let's assume that this skirmish ends again and the oil prices start averaging 70 again. There's no reason from a 12-month forward perspective that we shouldn't be at 7.5% growth.
Okay.
Look, the momentum going into the war, which we have discussed on your show earlier as well, was extremely strong. So cement volumes are doing well. I mean, can you believe, while I understand GST cuts are not in the base, but 25-30% growth in car sales. See, as much as just the car sales and the production itself will be a big boost. What is important is to understand the people who are buying it. Yeah. They must be seeing significant growth in revenue to be committing to a large capital purchase. The cement volume growth. So all of these things point to a very robust economy. I mean, 18% credit growth is not coming from the supply, right? So
it's coming from the appetite to grow.
Yes. So people are wanting to borrow, which means very significant risk appetite. So all of these are very important cyclical indicators. Here, I'm quite confident that once this oil prices normalize, we are staring at a 7.5% growth, not 6.5.
Okay. Oh, no, I would definitely agree with you. Even exports did well.
Yes.
May and June. April and May, 16% growth.
People say that, I can't see the growth. I said, boss, have you seen that services exports incrementally are now 1/4 of GDP growth?
That's true.
So services, no one seems to look at it. Look at the commercial real estate leasing activity.
Fair enough. No, you're convincing the convinced on this issue. Now, finally, your new role. I believe you're taking over on 20th July at Washington. What do you see is the role?
First is that there is the board position. So India is a meaningful shareholder of the World Bank, and the executive director represents. Of course, I represent 3 other constituent countries as well. So the interests of all those 4 countries. And this is not just in the big loan decisions that come to the board, but also the policy direction. The World Bank is also changing policy. It's reorganizing. It has 5 different parts. There is much. So the new president is bringing about a lot of change in how the bank operates. So that is that role. There is a second role that I see in channeling the World Bank's expertise in working across the world in low-income and middle-income countries in terms of the work it did with China, say, on urbanization, the work it has done. For example, say, some of our eastern states have per capita incomes like low-income countries. And so and they also have weak state capacity. Are there lessons that we have learned from other countries and so these experts, if they come in, they can be a supplementing of state capacity in some of these states. So that's, I think, also a at least for now, these are the things that I think are going to be important.
Okay, we will look forward. Also, that you will be able to bring a different perspective when you're working out of Washington and looking into India than looking out. Really looking forward to speaking to you after you take over as well. Thank you very much for spending time with us, and all the very best in your new position.
Thank you for having me.
That's it on this special edition of Indianomics. Thank you very much for watching.
Hello and welcome to IPO KYC. This is a special one. Rima and I are here at the offices of SBI Funds Management, the company behind what all of us know as SBI Mutual Fund. I think
Welcome back, everybody. Berkshire Hathaway now holds a more than $31 billion stake in Alphabet. That's a position that the conglomerate started to build in the third quarter of 2025, but it really ramped up this year after Greg Abel took over as CEO of Berkshire. In fact, just last month, it added $10 billion as part of a private stock purchase of those Alphabet shares. Now, there's been a lot of speculation as to who decided to purchase those shares, with many pointing to the stake as a sign of how Greg Abel will be putting his mark on the Berkshire portfolio. I asked Buffett whose idea it was to buy the tech giant.
I initiated it. I mean, I normally wouldn't give you an answer on something like that, but I will, because I am not doing anything that he doesn't approve of. He's not doing anything I don't approve of. We talk all the time. Well, every day. I mean, but he is the decider. And getting back to Alphabet or Google, it's probably number 5 or 6.
Well, I thought it was number 3 if you consider the $10 billion private placement that would go along with that, because that would put it north of $31 billion.
Yeah, but we've got the Burlington Northern Railroad, which is certainly worth far more money than that.
So you're counting fully owned companies as well.
You know, I mean, we are always making the choice between whether we'll buy marketable securities or the company. We look at it the same way. There are some minor exceptions to that. We can't set dividend policy, for example, if we don't own it. But the chances of those being material, the important thing is to buy a good business and to buy it on the right terms and to get a right person to run it.
Okay, let me ask you, though. Forever, people have thought of you as somebody who doesn't invest in technology. And by the way, you've described yourself as somebody who doesn't invest in technology. Obviously, the biggest position in the Berkshire portfolio is Apple, a position that you put on, but at the time you called that a consumer company. Google, you just called an AI company. So what happened?
Google, the real question with Google and all of its competitors now, because they're all laying out hundreds of billions. I mean,
they're big capex spenders.
So, yeah, and that's real money. I mean, if our railroad were to lay out 300 million or billion or 200 billion, you know, that kind of money wasn't even put in the railroad business, you know, in terms of developing it. So, and that's the game they're playing now. They weren't playing that game with computer software.
No, so when they were asset light, you didn't like them, and the markets loved them. Now that they are
I made a mistake.
Spending heavily on capex, a lot of shareholders don't like them as much because
I think they're more likely to be a winner based on the record than probably 90% or 95% of what gets merchandised through Wall Street, because Wall Street is interested in whether they can sell something. And I can't recall a report on Wall Street that really gets into the internal rates of return that a business is actually earning. What's more important than what a business is earning? But they ask all these questions about what will happen next quarter, or, you know, it's just, it's ridiculous. But, you know, investing is coming up with, well, probably there's close to the most successful long-term investor was Rockefeller, but look at what oil and gas has done over 150 or a couple of hundred years. So he kept compounding at a very good rate, not as good a rate as Geico would have achieved in his early years, because it's easier to do when you're small. Getting to do it when you're large is, you got the whole world looking at you, trying to figure out, you know, how come those guys are doing it, we're not doing it.
Why do you like Alphabet above all others, and what made you initiate this position? What was the eureka moment?
I would say that I don't like it as well as at least 4 or 5 other businesses that we own.
They say you can't teach an old dog new tricks, but that Google acquisition is proof that at age 95, Buffett is still evolving and changing his thoughts on businesses. We also talked about Berkshire's largest portfolio holding, Apple, and what he thinks of the company now that Tim Cook is leaving and John Ternus is taking over as CEO.
There's no move they could make that would replace Tim that I would have liked. I mean, you know, if you got somebody, you know, Stradivarius playing the violin for you, yeah. I mean, don't spend the next 300 years looking for another one. I mean, you've got one already, and of course, Wall Street thrives on the idea that convincing you that if you just listen to them, they've got something that nobody else has, well, which can't be true. I mean, it's ridiculous, but it works because, well, in general it works because America has been a wonderful place to invest money, and the Dow Industrials, when I bought my first stock, had just crossed 100. And now it's 52,000 or something, and you've got dividends in between and all kinds. Well, I mean, the village idiot could have made it from that point forward. And so I've been in the right game. If I'd been in wheat speculation, I mean, wheat's gone from, you know, I don't know whether it's gone from $3 to $5 or something over 200 years. And it's a very simple business, as long as you keep remembering that it's simple and that making it complicated it's just crazy. At that point, you're gambling.
But do you still like Apple?
People's enthusiasm for gambling is enormous.
You've talked about that over the last many years, probably since COVID. But you still like Apple. Back to the point.
Yeah.
Gentlemen, we brought you the news here yesterday that Warren Buffett has made his annual donations, and this year, for the first time in 21 years, that list does not include the Gates Foundation. I sat down with Buffett to discuss his current relationship with Bill Gates, how he came to the decision to cut the foundation from his giving plan this year, and whether that is a permanent decision, meaning that the Gates Foundation will no longer ever get any more money from Warren Buffett.
That's correct. But in interpreting that, I would point out that I read a great deal since January 1st in terms of what happened with Bill and Epstein. And I read his remarks to Congress given under oath. And I read cross-examination. And while it's distasteful, while he made mistakes, I made mistakes in hiring all kinds of people or choosing friends and then finding out later that one way or another they weren't what I thought they were. And so I found nothing in there that was beyond what I could see, I could picture myself doing, and you know, he ended it, and I've had situations where I made mistakes about people, or people felt I made mistakes about me, but they, you know, life goes on, and no one bats 1,000 in the business of choosing people.
You're talking about hiring decisions, maybe who you're associating yourself with, and there were certainly some questionable decisions on that came up in the release of these files, but there was also other, you know, personal information.
Yeah, no, which he admitted to.
Yeah.
No, and there again, I would say that, you know, I've known some pretty wonderful people, and I still know some wonderful people. I don't think they've made every decision correctly.
So why, if that's your opinion on it, why are you no longer giving money to the Gates Foundation?
I reevaluated my whole situation. It's just like I've been doing since I was in my 20s, and we'd gotten married, Susie and I, and we didn't really have any money, but we did know that we intended to live fine, and we intended to have a family, and but we did not have aspirations of, you know, having 6 houses or a 500-foot yacht or anything of the sort. So even then, we talked about what we would do philanthropically. But my idea and conviction was that I would compound money at a better rate than society generally, and that Susie would give it away better than 99.9% of the people that were giving it away, and she would get involved personally with the gifts, whereas I like to do things wholesale, and she liked to do things retail. So we had a plan, but we didn't have any money.
Why did you change your plans?
Well, we changed plans because of what I've said out here. The money began to pile up.
No, but you changed your plan now. In 2024, you said it was a lifetime pledge to the Gates Foundation. Now in 2026, you were saying that's not the case. What happened?
Yeah. Well, what happened was that I gave the Gates Foundation a great deal of money.
Maybe $47 billion in total.
And I had no, and I thought that was a good decision. I think it was a decent decision, but I did not think my kids were in any way ready to give away vast sums of money. We'd started, Susie and I started with them.
Like this, there's a long litany of things that people attribute to you, all the milestones, all the success that you've achieved. What are you, Kiran Mazumdar-Shaw, the proudest of today?
Well, I think I'm just proud to have pioneered biotech in India. That really, to me, has been something I've really been very proud of. And I think to see so many women entrepreneurs in the biotech sector is also something that makes me very inspired.
But I want to talk about that, Kiran, because one of the objectives I remember when you started Biocon was that you wanted to create an environment, you wanted to create a space where women scientists would flourish. As you look at what Biocon has been able to achieve and what you've been able to do to create that environment, how do you feel about that today? And how do we replicate that success across other organizations?
So one thing that I'm very proud of in Biocon is that 50% of our research employees are women.
Big round of applause, ladies and gentlemen. That is true equity.
And that's one division where we have gender parity, which tells you the role women can play. And this is not about, having an affirmative action. These are smart women. These are women who have made it by merit. And I can tell you, every time I meet these women, I just feel so good about the fact that what I had aspired for, what I wanted this company to represent is happening right before me. And I think what we need to ensure is that we create a boundaryless world for women to enter, because I think there are too many boundaries even today. I mean, when I look at just the shop floors, it's still not very apparent that there's gender parity. And I know that it was the shop floor that turned me away from those brewing jobs, because they felt that this is not the right environment for women. And I think that psyche still exists even today. Because I know that even in Biocon, we haven't been able to get that gender parity on the shop floor. So I think there's a lot to be done there. Of course, it started with the fact that women were not allowed to function in second and third shifts. That's changed. I think many states have changed that policy, but it still becomes very onerous on companies to have women in night shifts because of the kind of security measures that you have to provide women. But I think this is the boundaryless world that we need to create, so that women can participate in every aspect of corporate India or startups or anything. Another thing that really excites me today, Shireen, is the fact that when I look at startups, especially in Bangalore, I see so many smart women as co-founders, as team members, and they're all, pursuing very exciting new ideas. That's, I think, something which we need to celebrate and build.
We do need to celebrate, and we've got many of such founders here with us in this room, and we will be celebrating their stories in just a second. But Kiran, you've often spoken about the fact that there is a credibility challenge which gets exacerbated if you are a woman, and you face that. Of course, as you grow and as you encounter success, the credibility challenge also starts to diminish. Has it changed though? You're talking to young women founders, you're talking to young female entrepreneurs who are looking at starting up. Does the credibility challenge still get in the way? How much of a deterrent is it today?
I think, unfortunately, there still is that credibility challenge. I mean, I constantly have to mentor young women who are starting companies to basically help them through their challenge of raising capital. For some reason, I think banks and financial institutions and venture funds are very reluctant to really invest in women. I mean, that's something which I've found. I think men have it easier. I think maybe they hustle their way through. Women don't hustle their way through. So I think it is unfair. And I think women have created some wonderful companies, but they're just not able to access the capital the way men can. So I think there still is that sort of old boys club, because unfortunately the money is still in the hands of men. There are very few women who are investing as venture funds into women. And even the women who are investing in businesses often have teams that are sort of populated by men. And so they might be leading the fund, but unfortunately their team is not very gender sort of equalized. And so I think, again, when they take these decisions, I think women get a raw deal.
women get a raw deal, and we'll address this issue with women here in the room as well as investors or former investors here in the room. But Kiran, what I want to talk to you about now is the overall environment that we're seeing here in India. There's a lot of focus on the fact that as we move faster and faster into this AI world, it's going to be about IP, it's going to be about innovation. You don't hold back. You've basically been on this tirade for several years now, saying that regulation needs to make way for innovation, regulators need to make way for innovation. Have we moved on that curve? How are we doing on that front? Are we ready for innovation and for IP?
The world doesn't wait for us, and we are moving too slowly. I think we need very rapid regulatory reforms, and I think we need to understand that if we want to play in the world, and if we want to catch up with others who are sort of beating us to that game, we should do it fast. And the reason I say this is that we don't lack talent. We don't lack resources very often, because let's face it, the government is also investing in innovation in a big way. We've heard so many new announcements.
Of the RDIF,
Yeah, and PRIP and BioShakti and what have you. So I think there's enough money coming into the space for backing innovation, but I think the regulatory reforms that I'm seeing to really leverage that innovation and I mean leverage that the incentives to really translate into big successes is not there. So I feel we need regulatory reforms. I mean, I think you and I had a chat that if you look at the kind of the virtuous cycle of investment, an idea needs risk capital, seed capital to go to proof of concept. And the government is doing its bit to do that. But then you need follow-on capital to scale that idea. And that has to come from venture capital. And once you take that idea to the market, when VCs exit into the capital markets, they reinvest, and that's how you create the virtuous cycle. Today, we are very good at taking it up to proof of concept, but the follow-on venture capital is not coming through because of the poor exits that venture funds have into the capital markets. And then investors are not backing innovation the way they should because they are risk averse. So I think the risk appetite of the country has to really grow. We are too comfortable and, we are too used to low risk, predictable returns on our investment. We are not willing to back new ideas. We are not willing to basically get excited about, blue skies ideas like SpaceX. It would have never done well in India, You
don't think we could do a SpaceX in India because we can? Because we don't have the risk appetite to be able to value it the way.
Yes,
but
that's what I mean.
Is that your frustration, Kiran,
yes,
as far as the stock markets particularly are concerned? And do you believe that the kind of pressure on delivering quarter on quarter, has that stymied or stifled innovation? Does that continue to stymie innovation, you think?
See, we've created an investment climate where investors are very happy with getting dividends and getting share buybacks. I don't think investors are getting excited about denying themselves with either dividends or share buybacks and investing that money into creating new technologies. So I think that's what I mean by saying that we have to change the way we think about investing. If you invest in, in new ideas, in innovation, your share value should go up, and that should be your return. That's the way I look at it. You have to invest in, companies that think ahead of the curve. You have to invest in companies that come up with new ideas. And I can tell you, I'm mentoring a number of startups today who have the coolest ideas. But will they be valued? Will they be able to grow their, ideas into very, very large, impactful global businesses? Big question mark.
Big question mark. But you also firmly believe, Kiran, that biology is the future. You're willing to make big bets as far as biology is concerned. But biological intelligence, in the world of artificial intelligence, where does biological intelligence come in, and what are the plans for that?
So if you look at it, biology holds the answers to many of the challenges we have in artificial intelligence itself. So if you look at all the, the neural network models that have helped to build AI, I think we are just scratching at the surface. Because if you look at the way the human mind actually generates information, stores information, and retrieves information, that itself is so efficient compared to what we're doing in data centers. With 20 watts, we are able to do much more than what a data center can do, consuming huge amounts of energy and rare minerals on top of that. Think about a data center based on DNA chips, okay? That's going to be very energy efficient and no rare minerals. Now, that's blue skies thinking. But we have to start seeing how we can build those models. And that's where I think we need to have innovation that is sort of invested in a big way. Because we have to think differently. And, when I think about even if you think about DeepSeek and the way it sort of created a language model that completely disrupted the LLM and the cost of developing LLMs, I think we have to think that way. Because today, innovation is about disrupting the status quo. And that's what I believed in. I believed in basically looking at the pharmaceutical market and seeing how to disrupt any expensive space. I did that with, of course, biosimilars. I did that with cell therapies. And I'll keep doing that because you have to keep questioning that status quo, that wrong economic model which denies access to many of the patients who need it. So the same thing holds true for AI and for any of these new technologies because everyone, like a herd mentality, is pursuing one model. Is there a way of disrupting that model? I'm sure there are many ways of disrupting that model. And biology is one area which you can leverage to see if you can do something smarter. And I'll tell you why. Because as a biologist, I know that before AI came into existence, before data science came into existence, it was an iterative science. It was a very primitive science. We didn't know enough about biology. And when you just look at the immune system, we hardly understood the immune system. Today, thanks to technology, you have got deeper insights into biology, right? DNA. How do genomics work? How does gene signaling and regulation work? How do chemical signals, electrical signals, enzymatic signals, how do they all work? I mean, that's the beauty of biology, which is so multifaceted and interconnected that it gives you a quantum view of what information technology should look like.
So Kiran, you talked about being a disruptor. Would it be fair to say that if I were to ask you what the Kiran Mazumdar-Shaw legacy would be, it would be Kiran Mazumdar-Shaw, the disruptor?
Yeah, that's a good way of describing me.
But, I want to, for the benefit of everybody who's watching here in this room, but also people who are watching online and on TV, take me through what you believe today on the back of the lessons and your own experiences are crucial to an entrepreneur's success. How do you deal with failure? How do you manage failure? How do you learn from failure? Because that's equally important. Learning from success is important, but learning from failure is also important. And I know it was your late husband, I think, who said that Biocon's story has a lot to do with aggressive scientific bets, but also with frugal financial discipline.
Absolutely.
And that's what I want you to talk to us about as well.
Yeah, so that was John's great line, because every time I used to get excited about a new scientific idea, he says, go for it. But remember, don't spend too much money. But anyway, apart from that, I would say that, yes, I think every entrepreneur has to go through failure. If you don't make mistakes, if you don't learn from your failures, you will never be resilient. So that's why I think you need to be resourceful and resilient from learning from failures. In addition to that, I think I want every entrepreneur to start with an idea. Translating that idea is the most important part of entrepreneurship. So it's not about having a great idea, but have you translated it into a commercial success? That's the way you judge yourself. And if your idea remains small, you have failed. If you can scale up your idea, that's success. And then for me, the big opportunity that we have in India is basically to take it to the world. That to me is the ultimate sign of success. So I think I've always tried to build Biocon as a leading biopharmaceutical company from India for the world. And that is about making that global impact. You know, that's why I wanted to be a global company where I understood how I could actually make a difference to global healthcare. So I think that's just in my case, but I think every young entrepreneur today has to think about the big picture. How big can I take this idea? That's what it's about. And I find that a lot of entrepreneurs get stunted because they get frustrated, they don't have access to capital, they don't have people who believe in what they're doing, and it's a hard struggle. And therefore, a lot of great ideas get destroyed. And I'll give you a very good example in our own city of Bangalore. The Simputer, which was the idea of a handful of scientists in IISc, was a great invention. I mean, it was an idea ahead of its time. Because it was a multilingual, handheld computer, right? Which actually could connect with GPRS, and the whole, objective was to make it into a teaching tablet. It was ahead of Palm Pilot. It was ahead of iPad. And what happened? There were no takers. There were no backers. There were no investment. And ultimately it died. And yet that could have been India's story. That could have been India's tablet for the world. We never did that. So there are many such examples where we've had these kind of failures because we didn't invest enough. We didn't have the risk appetite. We didn't have confidence. We didn't believe in our own technologies. That's another problem, Shireen. We don't believe in our own technologies or in our own capabilities, and we have plenty of it. When you speak to young people in Bangalore, you said every time you come to Bangalore, you get excited. I get excited every time I meet these young entrepreneurs, these young startups. Everyone has a cool idea. And I'm just thinking to myself, I would have never got that idea. So I'm just saying there's so much talent here, there's so much energy, but it needs to be backed with venture capital, with capital, period, And I think we need to allow these ideas to translate into commercial successes. That's what I'm hoping for.
We're all hoping for that. But Kiran, as a woman entrepreneur, and there is a difference, and that's what I want to address with you now. As a woman entrepreneur, what advice would you leave young female founders with? Kiran Mazumdar-Shaw has been pretty fearless. If you've seen her on Twitter, she's one of the very few people who's still tweeting away, calling out all kinds of bad behavior. But, self-belief, that is something that often gets in the way. We've spoken about the imposter syndrome and so on and so forth. To women entrepreneurs, what would you say on the back of what you have learned to do over the years?
You started by saying, look where women have come. Right, all these years. I mean, I know that when I started Biocon, there were hardly any women I could even relate to, right? Today, I get inspired by so many women in every field. I mean, you mentioned sports, you mentioned whether it's, the Paralympics, Olympics, cricket, football, you name it. I mean, women are there inspiring us. Rocket women, the rocket scientists, the satellite scientists. Of course, in my own field, there are so many brilliant scientists and engineers. I don't think there's a single sphere where women are not present. I mean, and they're doing great things. But the problem is, we are only able to call out the ones who are recognized because they've done something so exceptional. But there are plenty of women below them who are doing a pretty good job. So I would say to young women today, listen, this is your time. India has started accepting you. Don't feel shy. Come and join the game. Come and join the race because you shouldn't be left behind.
You've never been shy about asking for things, right? I mean, how many times has somebody actually said no to Kiran Mazumdar show?
Many, many times.
Really?
Many, many times. I'm telling you, lots of people have shut the door on me. Many people have said no to me, but I don't give up. Because I know someone somewhere will say yes. And so I want to tell all the young women here, don't give up. Someone somewhere will say yes.
You know, we have all of these wonderful photographs of you, Kiran, from back in the day. What are some of the core memories of actually building Biocon from that garage with 10,000 rupees, from Bengaluru, and making it today a global biopharma company from India? What is that core memory?
Well, sometimes I have to pinch myself to say, have we done all this? But, it's been a great journey. It's been a long journey, and I haven't done it myself. I've got a great team of people that's kept growing and growing and growing over the years. But yes, the early days were always very difficult. And I know the number of challenges I faced, where credibility challenges were huge. I mean, no one understood what I was trying to do to begin with. Biotech, what the hell is biotech? You're too young to be a businesswoman. You're too young to run a company. You don't have money? What collateral are you going to give us? I have none. Now, these were the kind of things I was up against, right? I mean, so I know what it is to build credibility. And I think a lot of women have to have that confidence that there are many more women today than there were in 1978. So I don't think there's any reason why you should not have that confidence and that, that aspiration and that ambition to come and do whatever you want to. And I always believe that women must aspire. They must be ambitious. I've been often told that, women are not risk takers. I said, really? Please look at me. I think I've taken the biggest risk in the pharma industry in India.
Yeah.
So I think it's not true. These are myths. You have to bust those myths. Because I think every woman has potentially that risk-taking ability, that ambition and the drive to achieve whatever she wants. But I think you have to break free from societal stereotypes.
Societal stereotypes, as well as often the obligations that we put ourselves into. But Kiran, you've now announced that you have a successor that you've identified. Claire Mazumdar is going to take over the company when you decide to step away. But you told me that you're not hanging up your boots anytime soon. So, so take me through your thought process of actually securing the future of Biocon by putting a succession plan in place.
So,
and that's a hard thing for people to do, especially in India.
Well, no, because, I always used to think that I will never age. And I always used to think that, am I really 50? Am I really 60? Oh my God, I'm 70. So I think when I reached the age of 70, I said, oh my God, I better think about who after me. Fortunately, I have a very, very talented family. Okay, I have Claire, who's got everything and more than what I have in myself. Because, she's a biotech entrepreneur who's very successful. I handed the reins of the company to her in Boston. She's made it into a great success. She's, from credentials point of view, she beats me hollow because she's an MIT undergrad. She's a PhD from Stanford in immuno-oncology. She's done her MBA from Stanford. She's worked in Third Rock Ventures. I mean, she has a great CV. But I said, the CV is not enough. Let me see how you build a company. And so that's why I told her, earn your stripes. And she's earned it. So once she did that, I felt she is the worthy successor. And I also have a brilliant nephew who is an AI guru from Caltech. And we all, I said, this is what I want to do. How do we work it out? And everyone said, look, Claire is the worthy successor. So I just felt that rather than leaving it till the end, I think Claire needs to first get onto the board and then basically, spend several years with me understanding the Biocon business, the Biocon culture, and making sure that she delivers on what I will leave behind.
What is the thing that you would say to investors who are watching, since you are frustrated or often frustrated with the lack of vision as far as risk-taking abilities are concerned? What would you tell investors and how they should look at India's potential and the biopharma industry's potential, not just specifically Biocon's potential? Is this a breakout moment? Is it an inflection point for India?
I think, the government has given the biggest opportunity for the pharma sector to move into biopharma. And I think the country cannot just have one Biocon. It must have many, many more such companies who build a very strong biopharma ecosystem. I'm very confident it will happen over the next 5 or 10 years. I hope in 5 years. And I think the message I would like to give to anyone listening to this is, as a country, we have so much potential. We have so much talent. There are new technologies, and we must be amidst those new technologies, driving the future for this country. And for that, we must have a much greater risk appetite to invest in these new areas, these new technologies, because that's the future of India, that's the future of the world, and we can't miss it.
And we can't miss that. That is a bus we cannot miss. I want to end, though, by narrating a story, and this is something that N.R. Narayana Murthy told us when we were honoring Kiran with the India Business Leader Awards, and he said, she's many things. She's an entrepreneur, she's a successful business leader, but what you don't know about her is that she's the ultimate party girl. So, Kiran Mazumdar Shaw, the element of fun.
No, I am an element of fun, but you know why he said that? Because Sudha and I always go out together and don't include him.
So he's feeling left out.
So I think Sudha and I, he keeps thinking that we are having a party. And we do. I mean, we do get together because she's as much fun as I am. And we have great times together. And I think he's a bit envious. So he keeps calling us party girls.
But, and I want to focus on this because the ability to...
But I do enjoy people. I do have a lot of friends. And of course, I'm a lot of fun.
You are. I will vouch for that. You are a lot of fun. But, this is what I want to end with. That very often as women, you're sort of boxed into templates, into stereotypes of what you should do, what you can do, what you shouldn't do. There's so much scrutiny, there's so much judgment. How have you sort of bypassed all of that? Did it bother you in the initial years? Does it bother you today?
I think every one of us has to be authentic. I am me. I mean, that's the way I am. Take it or leave it,
That's a good line. I'm me, take it or leave it. The inimitable Kiran Mazumdar Shaw, thank you so much for joining us, and congratulations on all that you've done for Biocon, all that you've done for the Indian biopharma industry, and we look forward to the bigger, bolder bets that you will take in the future. Kiran, an absolute pleasure. Ladies and gentlemen, a big round of applause. Thank you so much.
Thank you so much, Shireen. It's a pleasure. I'm a big fan of Shireen's, by the way.
No, thank you. That's very kind of you to say. Thank you, Kiran.
Thank you so much, Kiran, for joining us here on stage, and thank you, Shireen, for taking us through that conversation. Up next, our next conversation celebrates the entrepreneurs and the leaders who are redefining what's possible. Now, across industries, we're seeing a new generation of women founders and business leaders who are not just building successful companies, but reimagining entire categories. Whether it's insurance, jewelry, home services, mental health, rewards, content, or even the capital markets, they're identifying unmet needs, solving real-world problems, and creating businesses with purpose and scale. Now, their journeys are a powerful reminder that when women have equitable access to opportunity, capital, and leadership, they don't just build successful enterprises, they expand markets, create jobs, and inspire the next generation of innovators. Now, this town hall explores how inclusive leadership, bold ideas, and diverse perspectives are powering new possibilities for business, for communities, and for India's growth story. To take this conversation forward, I'm tossing it back to you, Shireen.
Thank you very much, Arundhati. I promised you, ladies and gentlemen, that we have a room full of very, very bright, young, successful entrepreneurs, founders who are creating businesses, who are running businesses. And what we really want to piece together, and you heard from Kiran, but what we want to piece together is what is driving these founders, what is inspiring them, and more importantly, the kinds of bets that they're willing to make. Let me start with the youngest on our town hall today, all of 23. Anjali, what made you want to start up when you were in college, and today you've raised, how much money have you raised already?
60 million.
60 million, and she's only 23. That does deserve a big round of applause. Okay, very quickly, take us through what you decided to do with Pronto and how that idea came about.
Yeah, I think when I was in college, I spent a lot of time thinking about the markets and specifically labor markets. And I think one of the most interesting things is what are problem spaces that you can build in which are super high impact and are win-win-win businesses, right? And what I mean by that is that every stakeholder involved should be able to win. And I think that solving labor market inefficiencies happens to be one of those spaces. And I think I was thinking a lot about labor markets in India in college, and I became very fascinated in thinking about how, especially if you think about the unskilled or low-skilled ends of the labor market, especially ones where women make up a huge part of the workforce, a lot of them are deeply inefficient. And so you see, while your end consumer of the labor isn't able to get the services they need, but moreover, the workers in the segment suffer from underemployment/unemployment, income instability, and lack of dignity, safety, respect, access to financial infrastructure, all of these problems. And so I thought this was a very interesting space to build in, and one that we can drive a lot of impact in.
Okay, so when you decided that this is what you wanted to do, you decided to set up Pronto. A, what was the reaction that you had from your family? B, what was the first investor pitch like?
So the context of this is that I was born and raised in Virginia, which is right outside Washington, D.C. And so my parents, my mom left India 51 years ago, and my dad left India in 1984, so 42 years ago. So there was quite a bit of shock, is what I'd say. Right? So I went to Georgetown, and after undergrad, I started the company, and I flew home from Boston, where I was living, to DC to tell my parents, and told my dad.
But I'm packing my bags and moving to India and starting a company that focuses on, well, the quick commerce of labor.
Yes, so my dad, he was in the car when I was telling him, and he almost veered off the road when I told him. So it was quite a bit of shock. I think my mom and dad are generally very supportive people, so they appreciate risk taking, and so I think they've been a huge help.
What was the first investor pitch like? Now that you're 70 million down, you can take us through what the first few were like.
Yeah, I mean, it was rough. I can't lie. I think, so Ajay Agarwal, who is the partner at Bain Capital Ventures, who led our seed round, I'm not sure what he was exactly expecting. I think he was just excited to work with me, and he says, quote, be in business with Anjali. So that's why he backed us, but I would say it was a total mess.
Okay, so now that you've sort of raised the money, the business is up and running, you're in how many cities today? How many cities does Pronto service today?
10, but I'd say 60% of the business is NCR, where we started last year.
And what's been the biggest lesson so far from starting up?
Oh, there's so many. I think it's you just have to keep going. That's it. Just keep going.
Just keep going. What would you tell a kid in college, maybe a possible female founder? What would you tell them? What would your advice be on the back of what you've been able to do?
I think there's only 2 ingredients you need to start a company. One is conviction, right? You need to be a true believer in your own vision of the future, and then just determination to say that I'll do whatever it takes to make this happen.
And what's the vision for Pronto?
I think we want to organize and formalize all unskilled informal labor in India, and then obviously outside India as well.
Okay. So all of 23, ladies and gentlemen, give her a big round of applause. Let me go across to Kirtika Reddy. And Kirtika, for those of you who don't know Kirtika was the first employee for Facebook in India. She led Facebook's operations here in India, moved to SoftBank, where she was actually investing across a bunch of companies for SoftBank, and today has decided to join the AI bandwagon. So Kirtika, it's great to have you join us here on Future Female Forward. First, a 23-year-old there raising 70 million. wasn't brought up in India, decided to move to India to address India's labor market. What do you make of that story?
Well, I think it's so inspiring and so heartwarming and really an inspiration for all of the next generation of entrepreneurs. So give it up for her one more time. Yes.
But Kritika, you know, as a former investor, as somebody who was part of the big Facebook network, as you look at India today and in this era of AI, what are you attempting to do now? How do you differentiate yourself? How do you take the big, bold ideas forward, to Kiran's point?
So, the stats do tell the story in that today, globally, like 4% of deep tech founders are female. In India, it's like 1 of 10 are female. So I looked at those stats and I said, okay, I can do something about this. And if not now, when, if not me, who? The problem that I'm solving, having helped brands with a last shift to social and mobile and helping them be relevant there, building a business that's now a $7 billion business. I'm now helping with the new shift where consumers are going to ChatGPT, Perplexity for everything from skincare to which enterprise software to buy. So we are building a platform that helps brands like P&G, L'Oreal, Glance is one of our clients as well, make sure they're optimizing their presence in AI by using our platform and setting up a whole autonomous growth platform. So that's what we're up to, and we're just getting started.
Just getting started. So what's the plan? What's the vision from here on?
I think back about the last technology disruption with social and mobile and brand new companies that were built. So I'm excited about how this new technology, AI, will help a new set of entrepreneurs, a new set of companies being built, and how is it that our platform can enable that, and also help the dominant brands who look forward into the future, continue to grow their presence and connect with.
Do you believe it's going to actually provide a more level playing field for women entrepreneurs, Kritika? And I know that you do a lot of work with women entrepreneurs as part of the AI Kiran program as well. So do you believe this will democratize entrepreneurship specifically for women?
I think it absolutely has the opportunity to, but we have to be intentional. We are sitting at a point where gender equity gap, World Economic Forum says we're over 100 years to close that. That won't happen in my lifetime, but what we can do in our lifetime is to do everything we can at the very beginning of this AI revolution to make sure that women are there at equal measures in all parts of, whether it's CEOs, engineers, research, every single aspect, how can we enable more women? I'm very excited about the AI Kiran initiative that enables.
Kritika, Kiran was lamenting about the fact that there isn't enough capital that goes to female entrepreneurs, to female founders. You were at SoftBank. That clearly also tells you the story of what's wrong with the ecosystem. Why do you think that's still the case? What do you believe will break that?
We do need to have more women in every part of decision-making and ownership, whether it's founding companies, whether it's investing. If you look at the stats of the number of women in angel investing, that's even more dismal than the 1 in 10, right? And so I would encourage women to, one, jump in, own things, and people feel that they have to have a very big bank balance to do that. My first seed round was a $9 million raise, and the smallest check size that we took was $3,000 from a woman who said, I really want to put my savings into this. And I said, please, startups comes with risk. But she says, no, I want to have ownership in what you're building. So I would encourage women to jump into all forms of ownership. So that's one. And I do think the venture capital industry has to be conscious of all of the unconscious biases and address those effectively, because there is real unconscious bias in the investing area.
Conscious and unconscious bias both. But Kritika, on the back of everything that you've experienced in your own career, through the careers that you've seen around you, what is the thing that you would tell entrepreneurs, and specifically female entrepreneurs, the one thing that you would tell them to do and the one thing you would tell them not to do?
I would say really leverage the community around you. In India, there's the female founders group. It's such a vibrant group of entrepreneurs who are all helping each other. What you're doing with Future Female Forward. So really leverage community. Surround yourself with people who almost believe in you even more than you believe in yourself. And as Kiran said, don't take no for an answer.
Don't take no for an answer. And someone who hasn't taken no for an answer is also here with us. Ruchi, it's great to have you join us here at Future Female Forward. Ladies and gentlemen, not one, but two startups, one unicorn, now soon to be listed as well. ACO, an insurance company, digital insurance company. And you've decided now to start up all over again, Ruchi. So take us through that, the experience of starting a company, making it a unicorn, possible listing sometime soon, and now starting up all over again.
Yeah, I mean, I probably a nutcase, but I tell this to all my friends and I mean people I interact with, that be careful of wanting to be an entrepreneur because it just doesn't end. You know, you just like, I mean, you become unemployable. So be careful, please. Okay. So yeah, I mean, ACO, I mean, when I left ACO, before I started ACO, the whole reason I stepped out and I said, oh, I have to really build something was not because I had this great idea or I was looking to change the world or I was thinking, oh my God, I'm just going to create this kick-ass consumer product and people will go crazy. This is 2015, honestly. So, you know, it was very early days of even Indian entrepreneurship in that sense. I mean, Flipkart and all were just coming up. For me, it was all about wanting to do something for myself. You know, I had worked in financial services for about 8 years with Templeton and then private equity Matrix. And I stepped out, I said, I have to do something for myself. And just ACO happened along the way. You know, Varun, my co-founder, we met, we interacted. And, you know, the whole challenge of actually trying to get an insurance company license as a non-promoter was a family, so let's just do this. And interestingly, actually, I had twins the same day we incorporated ACO. Literally, yes. Literally, like I signed the papers, the term sheet, and I went to the hospital. It was literally like that. But yeah, so I think almost 10 years that we built ACO, Unicorn, all of that. And I started to feel a little old because we have this large team. We were building at scale. There was a shitload of capital. And there was nothing to worry about because you could throw money and people at any problem. And suddenly, like, somebody said, you know, very soon you're going to become chairman emeritus. And I was like, shit, I'm not that old. And I'm feeling like that because, like, one day at 3 p.m., I was like, what do I do right now? Like, it's a little bizarre. Like, you know, as a founder, I should be like, everybody has stuff to do. And I'm, like, literally just delegating. And that's when I was like, okay, I hope I don't stagnate. You know, I have maybe 20 years to run around and push myself and go through the grind because I had like for 10 years with twins and, you know, an insurance company. Building that was a hell of a grind and I love it. So that's when I said, okay, you know, when I started ACO, the thought was I want to do something for myself. And this line actually from this movie, Zindagi Na Milegi Dobara, I'm sure everyone's seen it. Farhan Akhtar, he goes to meet Nasiruddin Shah and he says, what do you do? And he says, I'm a poet. Oh, what do you write? Jingles. Oh, really? Like, what do you do for yourself? Apne liye kya likhte ho? And that thought has always been like a huge driving force in my life, that aap apne liye kya karte ho? Of course, in that process, you will build something big, something that changes the society, the world, and a lot of those things. But I mean, for me, it was that. And then I looked at the problem statement. I love fashion. Is that the next big brand happening? No, there's nothing. What do we do? Can I also build a company on my own? That was a thought process. So we are fully bootstrapped 3 years now. And it was an investment decision. I mean, I had made some money and the question was whether I should listen to my wealth manager and put some of that in an infrastructure fund or capital market or whatever. I said, no, I'm going to put that on myself again. And that's how it happened. So yeah, and like I said, grind is what I love. I love going through the grind. And it's not that I have let go of, looking after the family or the kids. I mean, I'm a very hands-on mother. I love that. And I think that's how I want it. So yeah, it's been one hell of a journey.
Has been one hell of a journey, and congratulations on Jolene.club, which is the new venture that Ruchi is backing. But you know, you said something which is very interesting there, of course, picking up from Zindagi Na Milegi Dobara, aap apne liye kya karte ho? And I think this is a question that many women choose to ignore in the quest of doing many things. And you know, we pride ourselves on being these multitaskers and so on and so forth, but we forget to put ourselves on our own to-do list, on our own priority list. Do you think that this is a casualty of high-performing women?
I mean, there are casualty when there is a high-speed car on the road, right? So there's bound to happen. But we have to find, and that's how it has worked for me. Like, I always look at every opportunity, every situation as what is it in it for me? Like, I'm trying to build a unicorn, let's say. Okay, what is it in it for me? Like, I love raising my kids. I'm very hands-on. So, you have to find that love for yourself. And that's not selfish at all. Trust me, that is the secret sauce. That is how you will realize that you are able to power through and through, So you have to find that in you.
Yes, absolutely. That is not doing something for yourself is self-interest. It's not selfish. Ruchi, thank you very much for reminding us about that. Let me come to the only man on our town hall today, Amitabh. Thank you very much for joining us. The chase for capital, the quest for capital, and especially as far as female founders are concerned, I think there is unanimity that things haven't gotten significantly better. They've gotten slightly better, but not significantly better. But from a startup ecosystem point of view, India's had a great year in 2024. We have actually seen exits. We've seen liquidity. Do you believe that we're now at a sort of inflection point really for this ecosystem to get its next leg up?
Sure. I mean, we have seen the startup ecosystem evolve, mature in a way that all stakeholders, investors, vendors, entrepreneurs, supply chain kind of participants, everybody has seen and gone through a cycle whereby you've seen the ups and downs of it. Investors have seen down rounds of investments happening. We have seen listed tech companies or the first phase trade below their IPO price and then see a re-rating in them because they made the changes, and there are a bunch of names out there. Paytm has gone through its own journey. Nykaa is a classic example, and again, led by a woman entrepreneur, and has been a profitable model out there. So I think even the investors have learned to appreciate different model. And as Kiran has said, that we need a lot more patient capital coming out there. Even capital markets have learned that if you stick with it, with the right kind of a model, it does pay dividends in a medium to long-term basis. And that's where I believe that the 2.0 version of the next wave of tech companies coming in will be at least far more aware of the lower threshold of tolerance that the cash burn of business that investors are now ready for, and they would want to see a path to profitability a much faster basis rather than what they thought was earlier. Valuation metrics have moved from sales multiple to EBITDA to an earnings based, and that also has kind of happened. So I think a lot to learn, and in a good way. Tough times for those who had to go through and set those precedents for the ones that they can kind of take it from there.
The lessons that we're picking up from what's happening globally, Amitabh, at this point in time? Kiran brought up SpaceX. I mean, we're giving it moonshot valuations quite literally, but in this sort of race towards AI and what AI is going to do, the big IPOs coming up for companies like Anthropic, OpenAI, what will all of that mean for the Indian startup ecosystem, for the Indian capital markets as well?
So look, you can fight the tide for a while, but you can't fight the tide forever. And clearly right now, the investors are more driven by the AI wave. And I mean that not by virtue of just as a trend, but there is clear winners coming out of that, both from companies, but even geographies and markets. I can tell you, and my wife makes the investment decision in our family, and we went to Korea and Taiwan rather late. And I've kind of seen the kind of outcome out there, even though it's a little concentrated there. But those are the trades where the markets are appreciating right now. And I mean, there's a re-rating right now, but won't say that. So clearly, data center, semiconductor, AI, and somewhere they are linked to each other in terms of the value chain. But it is, and which is one of the reasons why India has always, at least in the current environment, seen a bit of adverse reaction, saying we don't have an AI play, but it's more of a consumption of those services which is there. So we are trying to improvise and we're trying to see that. But this is for real, and it will only grow for at least for the time being, till somebody proves it wrong.
You're absolutely absolutely right. We are seeing that re-rating happen across the board. But is India only about AI consumption? Can we actually deliver AI services? We have somebody here to talk to us about that. Mansi, thanks very much for joining us. And of course, all of you Bengalurians will know InMobi. It's one of the OG startups that's been part of the Indian startup story for very long. Mansi, AI and whether India is only going to play the consumption game or India is also going to drive AI services. Take us to what you're doing at Glance AI. How confident do you feel about India's role in the AI race?
So I think when we started Glance, we were actually with InMobi. When InMobi started, I think the idea was how do we build global products from India for the world? That has always been, I think, the ambition and the vision of the founders of InMobi. And Glance also started with the same vision, that why should India be only, using AI or consuming AI as consumers and not building for the world? So with Glance, I think that's the ambition. We want to build AI for the world. We want to change how consumers will shop and build it from India. And that's what makes us proud.
Take me through what you've been able to achieve now as far as Glance is concerned, because like Kiran said, we need more Indian companies that are servicing the world. Glance is trying to do exactly that. It's made in India, made from India, but for the world. Take me through what you've been able to do on that front so far, and how is shopping and commerce going to be disrupted on the back of AI?
So we started almost like 18 months back, and within last 18 months in US, in Japan, and in India, I think we have been able to scale to millions of consumers. Our vision is actually to, the overall vision is how can we make AI accessible at population scale, and also B, how do we actually change how consumers shop and bring intelligence to it? Really take away the cognitive load of shopping away from consumers and make it very simple yet intelligent. And with that, I think we are already seeing great engagement from consumers. We have already started to see a lot of consumers starting agentic platforms like Glance as the starting point for shopping. And we believe that agentic commerce is going to be the next wave of shopping. E-commerce disrupted shopping 2 decades back, and agentic commerce will do so in this decade.
We're talking about agentic workforces, hybrid workforces, and I think there is a lot of fear on what this will actually do as far as the human workforce is concerned. As a leader in this space, how are you addressing that issue? I was having a very interesting conversation with the former CEO of HCL Tech, and he said, this nonsense of sending out emails at 7 in the morning saying you're fired, this nonsense has got to stop. Stop worshipping AI. Humans created the machine. Have some self-respect. So as a leader today in the AI world, how do you address issues around the workforce and the role that people will play?
No, absolutely. I think we truly believe that, I think with AI, what people are supposed to do will change, but humans are still at the heart of creating, of building. I think AI is as good as how humans build it. So what we believe is, for example, our engineers, they don't have to write code anymore, but they have to design systems.
So are they not writing code anymore?
So a lot of the engineers, they're writing codes. A lot of the codes are on AI. But I think what the work has changed is actually building systems, designing systems, rather than actually just writing AI. So I'll say what people are supposed to do will change, but what humans bring will never go away.
Well, we certainly hope so, and I believe that human imagination is probably our trump card, no pun intended at this point in time. But Mansi, we've got IIT Delhi, we've got somebody else from IIT Delhi there, Joe on the other side as well. And to Kiran's point that, we have this paradox where we have so many women coming through the STEM pipeline, but we have enough leadership of these women who go through the STEM pipeline. What do we need to do to change that?
I'll say there are two things. One is that women should definitely, I think right now, if you think about right now, with AI, the barriers to actually build is breaking. And women should right now grab it. I think we believe, especially, let's say if you look at technology, women building technology bring a very different perspective. Empathy actually leads to building great consumer products. And I think we underestimate what empathy, like at least in Glance, we believe, empathy can be the new intelligence, because that's what's bringing great consumer perspective to products. So I'll say women have to remove the barrier of AI being something that only men can build. I think women can build very, very global products and a very, very human AI product out.
empathy is the new intelligence, and I think there is actually something to be said about that. But Deki, let me come to you now and talk to you about what you're doing, but more importantly, the impact that you're hoping to make with a very special bunch of women that you're working with. Take us through that as well.
Sure, Shireen. So what I'm doing actually right now, apart from running Reward 360, my company is, I'm also the head of AI and digital skilling for the FICCI Ladies organization nationally.
Come on, FICCI ladies, what's going on there? We need some more energy in the room.
So we are actually working on a very interesting project, and it's been pretty successful in the last few months. In fact, last year when I was the chairperson of the Flow Bangalore chapter, I was actually sitting in a meeting with my most incredible social initiatives team, and some of those lovely ladies are here today. And we were actually deliberating on what kind of skilling programs we can do for women from underdeserved communities, right? And at that point of time, we were actually skilling women to be bakers, mehendi walis, cushion making, etc. But we questioned ourselves thinking, are we limiting the ambitions of these women? And at that point of time, India was looking at what drones were doing on the fields, on the farms, on our borders because of Operation Sindoor, what drones did during the floods and cyclones that happened across the country last year. And that's when we thought that let's put our women from the modest communities in a very nation-building, tech-forward skilling program, right? Because if you step back and look clearly, you can see that the Industrial Revolution has created various winners, right? The first rewarded people who owned lands, the second rewarded manufacturing, the third was software, and the fourth that we're living right now will be rewarding intelligence. So artificial intelligence, autonomous machines, drones, right? And people actually think drones is just a flying machine. But it is not. It is a flying data platform, because every time a drone takes off, it collects data and intelligence from cities, from railways, from mines, from our highways, etc. And when you see this revolution, then we question saying, why should half our population, our women, be sitting on the sidelines, right? Why should they be just the consumers of this technology? Why shouldn't they be creators, operators, entrepreneurs, or leaders, right? And that's how this drone project came up.
And you have some of those special ladies here with us this evening, so why don't you call them out?
Yes, actually we do have. I mean, they're all sitting here. We actually have, what we also did was we trained not only girls from, government colleges, but also the Karnataka Police Women Force. And I'm really happy that we actually have the head constables from...
All of you joining us here, please join us here.
All of them, of course, have been trained by us. They're all certified, DGCA certified drone pilots, and you could actually ask them what they're doing with it. And we've, in fact,
We've brought the drones. So can we get the drones out? Radhika, can we get the drones out as well? So let me ask Shilpa Shri. Shilpa Shri, आप DGCA certified drone operator है. कैसे चलाती हैं? क्या करती हैं? आप surveillance करती हैं? Survey करती हैं? क्या करती हैं?
Good evening, everyone. Shilpa Shri DN, Karnataka State Police Wireless Unit. ನಾವು ಬಂದೋಬಸ್ತ್ ಟೈಮಲ್ಲೆಲ್ಲ ಡ್ರೋನ್ ಯೂಸ್ ಮಾಡ್ತೀವಿ. ಏನಾದರೂ ಪ್ರೊಟೆಸ್ಟ್, ಪ್ರೊಸೆಷನ್, ಏನಾದರೂ ಕ್ರೌಡ್ ಜಾಸ್ತಿ ಇದ್ದಾಗ ಡ್ರೋನ್ ಯೂಸ್ ಮಾಡ್ತೀವಿ.
Okay. Can someone translate this for us? You will. Okay.
So what she mentioned is, you know, in her role and after she was certified as a drone pilot, the kind of, apart from just being a constable, she has also, with the help of drones, she has done a lot of surveillance, crowd management, and of course protecting the city. Yeah. And it has incredible opportunities because drones is truly a national infrastructure. It's not just a gadget, right? And it's really in the central of our Viksit Bharat vision.
And it is now being used, as you pointed out, in law enforcement, and of course it is the future of warfare as well. Let me come across to you. So, do you also operate these drones?
Yes.
And how many hours did you train on them?
I think for 3 days we had hands-on session on the drones, and we were able to fly drones. So I'm Joshika from Nifty Sensex College, studying in aeronautical engineering 4th year. So this drone pilot training was really helpful for us, as since we didn't get much exposure to the industry. So this was something new, and yeah, we enjoyed.
So now, after the fact that you've been doing this, you've got this certification, what is it that you want to do?
Probably I thought like maybe open a company in the drone sector only, and then maybe use it for, you know, like normal daily life purposes.
So start a drone company yourself. That is the vision of some of these young women who are here with us. What has your experience been like, and what would you like to do?
Okay, I'm Bindu. I'm from Nifty Sensex Institute of Technology. So the drone pilot training experience was very fun, and right now I'm doing my swarm drone technology project in my college. So we can apply those swarm drones to defense, and I'm also planning to open a drone manufacturing company with my dad.
Wow, look at that. We've got lots of young women with big aspirations and big dreams. Thank you so much for joining us here. Ladies and gentlemen, please give them a big round of applause. Our future entrepreneurs and all of our wonderful people in the law enforcement who are doing this wonderful work for us. Thank you so much for joining us here this evening. Well, I promised you that we've got more founders, and let me come to you, Joe, and talk to you about the wonderful work that you're doing. And of course, another IITian in our midst. But in the world of AI, you decided to focus on mental health.
I decided to focus on mental health, and it brought me to AI. The objective when I started, I think, the way I think, typically in whatever I do is that, you know, by God's grace, I have somehow come this far, but what will happen beyond me? Like after this, what would really change in the world that this wouldn't happen again? So when I went through my own depression and I came out of it, I said, what would change in the world as a result of me coming out of it? And I decided to try to solve for access to mental health support, and that took me to AI. So 10 years ago, we built Wiser. We were the pioneers of AI in mental health. We are today the world's largest in that space. And we are the ones who are pioneering how it actually is therapeutic. Today, about 27% of all users use ChatGPT, OpenAI, you know, all of these platforms for mental health support. So it is the top use case for AI for users across the world. But how do you make it safe? How do you make it therapeutic? How do you actually make sure that it's helping them? That's something that we've figured out in the last 10 years.
10 years is a long journey, and as you said, the world is now moved to OpenAI and Claude, and I think the fear for any entrepreneur at this point in time is, will you be Claudified or not? So as an entrepreneur in this space, you know, how do you stay ahead of the curve?
So you solve the unsolved problems. We see it as a great opportunity. You know, again, if you don't think of yourself as a mental health app and you think of yourself as an entrepreneur trying to solve global mental health, then it's a great opportunity that the world is now turning to AI to solve mental health. Is AI being able to solve mental health? No. Have we figured out how to solve it? Yes, and we've proven it. So there's a role for us there. But even more so, there are problems that are unsolved today, which we are focusing on in our impact work in India. So a lot of our work is especially around adolescent girls. We got the largest grant from Wellcome Trust in digital mental health for 5 years of work in proving how digital mental health with AI can actually support adolescent girls in rural India. Because for us, that, if you can solve that layer, then that girl is the one who's going to bring up the next generation, bring together the family. If she can learn how to articulate what her feelings are, manage them, regulate her emotions, how can we use AI? That girl drops out of school to take care of her siblings. And how can you use AI to actually get her to get a qualification? She's not chilling out, she's working. How can you use AI to make her qualified by the time the boys are getting a 12th class pass degree? How can the girl also get that? Those are the things that, main apne liye kya karti hu? I do that. I figure those things out.
No, but that's exactly, and I thank you, Ruchi, for every Future Female Forward session, we do get one statement that sparks a conversation, and you provided that today. So, aap apne liye kya karti hain?
This is it. I ask what will change in the world as the result of what I've done, and a lot of things come up. When you don't just think of yourself as limited. I do feel like I have these face marks which says this is my purpose, this is my glory to God, and they're making me do what. And these are the women who came before me and the women who will come after me. So I'm one piece of that puzzle, and what do I want that piece of the puzzle to mean is what I keep going back to. And today it means, how do I change how mental health happens at a global level, and how do I change the life trajectory of adolescent girls in India?
And both very important issues, but I want to go back to the STEM paradox and the transition, problem that we were talking about with Mansi as well. And again, from IITs, of course, the representation and the percentage of women has gone up considerably over the last few years, which is great. But how do we bridge that leadership gap? How do we address the leadership crisis and the leadership challenge?
So the first time when I had what will change as a result of me having done this was because I became the first dramatic secretary. I became the first secretary to be elected in IIT, when men didn't think that women could actually have a vote. They were 1993. There was no vote for the girls' hostel. The girls' hostel would vote for their boys' friends' hostel. So each girl would vote independently. And as I was coming out of my being a secretary, I said, what will change as a result of doing this? So I said, okay, we're going to make, and in fourth year, I was in fourth year, and first year, Ramya, who now runs Center, Ramya Venkatraman, and is also changing the teaching profession. So she was coming into first year, and I said, this girl could be General Secretary of IIT. And we set aside a whole plan of 3 years of women to create that leadership and change the mind of the men. And 3 years later, Ramya was at that table. So we created a vote. All of that, you have to fight. You don't take no for an answer, but you also have to believe. There are all of these preconceived notions. Nobody's going to come and change them for you. You have to change it for them.
You have to change it yourself. Saroja, I want to talk to you about how you've been able to create Melora. We just heard there from Ruchi about what she's trying to do as far as fashion is concerned, and you're attempting to disrupt the jewelry industry and the jewelry business with Melora. For somebody who spent many, many years as part of the legacy incumbent businesses working with the big boys, what made you want to start up?
It was my experience, in fact, working with legacy companies and the risk-averse behavior that they demonstrate. So I guess when you are an incumbent, you very quickly want to challenge that and become a challenger yourself, because challengers become incumbents very soon, right? So that's what started me. Yes, I was part of the leadership team at Tanishq, and that was a great journey in of itself. But I couldn't do many of the things that I wanted to do, and that's what started me with Melora, because I mean, anything that you do, you have to start with questioning everything about the industry you're in. And the funny thing about me is that, 23-year-old founder, and when I started Melora, I was 45 and a woman. So I had everything going against me to raise money. And,
The experience didn't help. The experience didn't help.
It did, but funnily enough, I think what got me funded, and I hear the stories of how women get rejected, was because I was a woman, I got funded. And the interesting story here is that the partner of the seed round venture capital company that invested in me said, we looked around the world and we saw that in your industry, there are only male founders. And this is not just true for India. This is true for across the world, that the only male founders, there are very few women founders. And this is in jewelry, Shireen, you know. So that's really got me the funding, ironically, that I'm a woman entering an industry that should have been run by women. And it was not just that men were running the jewelry industry globally, it was, I'm sorry to say, no offense to anybody, old men. And, you know, we know men don't understand women, and old women understanding young women, forget about it. So that's how I started Melora, as a, you know, tribute to the young women of India who have no caps, no filters. It's just been a wonderful experience serving them.
And that's very important, and we see this across not just the jewelry business, even FMCG, mostly run by men. I won't get into the ages, but what has been the consumer insight that you've got from running Melora that has been, you know, the